think you're going to get addicted to that? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you say to people who, you obviously don't have this problem that much anymore, but in the past, there may have been people who kind of trash talk trading and saying, oh, that doesn't work or whatever. So what would you tell them?
That's funny you say that. I was actually thinking about this earlier today. I was thinking about like how you can tell a lot about where someone's at by what they say, basically.
Yeah.
So for example, and I was thinking about sometimes you'll see like people post nasty comments on YouTube or whatever, and I often think where is this coming from? Where do you know what I mean? Like,
What's
it's
behind
kind of
that?
it's kind of yeah. What's behind that? I mean, I think it's pretty obvious and easy to see. I don't like to get into those kinds of fights and things, but I think it's kind of interesting that because it's sort of the same thing. I almost feel like with what you're talking about, it's a little bit different. So if you're more of a public figure like you are in trading, like you can attract attention and detractors and things like that. Okay, and that's one thing. And I think everyone can kind of, with a little bit of thinking, figure out where that's coming from.
Yeah.
Pretty simple, whatever. If people want to spend energy on that, whatever. But what you're talking about is a little bit different, which is like people in your circle, I believe, like in your life, were basically saying, why are you doing this? This is a waste or whatever. And I'll never forget, I was, when I first moved to Australia, I sold everything in the US. I went to Australia, and I had one friend that I knew in Australia, and I convinced him to move from Melbourne to Sydney and basically become roommates, because I wasn't sure if I was going to be able to make rent. And his sister came out, came up to visit him, right? And she was like, she saw me, and I was sitting in this, like they're called Adirondack chairs, and these chairs that are like made out of wood. And they're from the Adirondack Mountains, and they're really famous, but they have kind of like this, they're made out of wood, and they have this big armrests, and they have like kind of like arching footrest that you can put. Anyway, I had one of these set up, and I had my computer set up like in the kitchen or whatever. And she watched me, and it was like late at night. I was watching the London session, and she was like watching me at the computer, and she goes, do you ever think you're going to get addicted to that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And I was like, and I got really defensive, I was like, oh no, I never, no, this is investing and blah, 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 and all this stuff, I was like, all this, you know what I mean? And I was thinking, but she was right, you know what I mean? And that's what can happen when people kind of like try and drag you down and say, hey, like you've been doing this for 4 years, it's not working. Why do you keep doing this? Like, don't you want to just, try something else? Like, let's go flip some houses or whatever, like it's on TV, everyone's doing it, or whatever. Like, but I don't blame those people when they say that, because I actually think a lot of it comes from our programming. So we've been taught that there's certain things, that like you do this, you get a job, you save your money, you put in an investment, a retirement account, and that, stocks is a sure thing, that's like wild speculation, that currency trading stuff. And so I understand that, like why people say that. And I don't actually fault people when they try and detract and say that like tell you as a trader, like I don't know if you should be doing this. Because I think it comes from a good place. I just think that in their minds, they're trying to they're trying to help you. They want to pull you out of this, like that. Like my roommate's sister, who said, hey, do you think you ever get addicted to that? That was coming from a good place, you know what I mean? Like, she wanted to help me. And so, to me, that's okay. I think the issue though is that it affects you as the trader. So if your wife thinks that you aren't going to be able to pull it off, you get that. Even if she doesn't say it, she doesn't even have to say it. Like, know what she thinks about it. You know what I mean? So that's kind of the tricky part. And so I think sometimes what you can do is you can leverage that. You can go, well, what if I understand what you're thinking and I understand where you're coming from. What if I showed you what I'm doing? And we can, and basically you're like, your wife or whoever the person is, your significant person in your life is like the one who's concerned. Maybe you bring them in and show them your plan, right? That forces a couple of things. It forces you to be accountable, right? And to show that you're actually sticking to your system, kind of like a trading accountability partner. And two, it forces you to come up with a plan. Most people don't, most people don't have either. They don't have a plan, and they don't have anyone to be accountable to as a trader. And that's the issue. And so, and so if you can map it out, and when I say a plan, I don't mean like a 12-month plan. I mean like a 5-10 year plan, saying, okay, we're going to do this, and then when this happens, I'm going to do this, and then I'm going to do that. And you want to give, you know what I mean? And so you're kind of like, they're on your team now. And so they can cheer you on, and every week you can say, look, this is, you know what my strategy is. You see my back testing numbers. This is what happened this week. This is why I think, this is why, you know what I mean? So it's more about empowering that person instead of what the natural instinct is to brush them off, like I did with that my friend's sister, who was like, are you going to get addicted to that? I just kind of immediately got defensive. So I think you can kind of flip it, and it's better for all parties in that way. But I don't know. I mean, that's the best thing I can come up with, because I know traders that have had that issue, that say, look, my wife doesn't think I'm going to, she's got no faith in me. What do I do? And so the best thing I can think of is to leverage it that way. I mean, I was really lucky because I was single when I was trying to figure out trading. So I didn't really have anyone to, you know what I mean? Like, I didn't really have anyone to just friends and stuff. And they were all, I had a friend who was actually really good at it. So that kind of gave me hope and stuff. So so I don't know. I mean, it's a tricky thing. I mean, have you run into that in the past?
No, I've been pretty lucky also. Like, I haven't had to deal with that so much. And if I did, it was like online stuff, right? So you can just kind of ignore them or whatever. But but I think it stings also a lot sometimes, because there's an ounce of truth in there, right? Like, this might be addictive. So, you might, so you think about it and you're like, oh, maybe I shouldn't be doing this. But then, I think you're right. At the end of the day, I came to that conclusion also. Either you bring them in or you don't talk about it around them. And then just because you're hanging out with that person for a reason. So go hang out with them for another reason, and just don't bring the trading into the relationship, right? So
yeah, that's a great point. It's, it's funny how people who are close to you feel like that, they have a license to give you advice. Like, it's one thing to ask, right? You can ask, but you can also, you can ask and say, I know people, and I'm not, people that have gone and sunk a lot of money into mortgages and done things that I thought, just looking at the charts, just looking at the housing charts is a bad idea. But I never ever say, hey man, are you sure you're not over leveraged on that? Or are you worried about the fact that money is free now and everyone's got a lot of money? Do you not think that there's an everything bubble going on here? So I don't say that. And if I'm asked, I will tell, but I don't want to be that guy. You know what I mean?
No, same here. Yeah. I used to do that a lot when I was younger. I'm like, and then when I got the other end of that, I'm like, okay, not so cool. So stop doing that. Right?
Yeah. I think that's safe. Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
Right now I have a bunch of trades on, right? And one of them doesn't look good. It looks like it's probably going to get stopped out. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, so I'd be interested to find out what goes through your mind as soon as you lose a trade.
Well, that's a good question, right? Like, other than the usual, damn.
Yeah, yeah.
Yeah, I think my perspective's changed over the years, I suppose. Like, I read once a trader who wrote something that I respect this trader, but I totally disagree. And he said that every time you have a losing trade, I truly believe the markets are trying to tell you something. Like, there's a lesson there. I can see that angle. Like, I can see where you would say that, but I disagree.
Yeah.
I don't think so. I think, like, it's like, if you think about it, like genetics, like it's kind of like genetics. Like, some of your genetics you're probably happy about, like the hand you were dealt with, the dice that came out in terms of your DNA. And then some of them you're probably not so happy with. And I think of the same with trading systems. So the number one thing I want to make sure of when I have a losing trade is that I did the right thing. By taking the signal. You know what I mean? And obviously, I don't have this problem anymore. I used to have the problem of moving my stops. So I ended up with a different trade. So I had a trade where I was risking 2%, for example. And then because it got so close to my stop, I'd move my stop. And then I ended up risking 3, 4, 5% on the trade because I wanted to be right. So I don't do that anymore. And then I kind of swung the other way where, as soon as the trade kind of went against me, like 50, 60, 70%, I would bail out of those. And I found out that my testing had shown that it's actually more profitable to let it ride. So that's kind of how I trade now, is I let it ride. But the number one thing I want to make sure of when I have a losing trade is that I didn't fail in the execution. That's really it. Because that still can happen, right? Like, you get in late, or you take a signal that's not really that good, or, those sorts of things. I'm sure you've had experience with those as well.
Yeah. I mean, that's the number one thing I look for. Like, I go to the journal, take a look at the before and after screenshot. 9 times out of 10, it's going to either be like a 1, or, like it was a poor trade, a poor entry, or it's going to be a 4, like an excellent entry. So even if I have a losing week and I have like 2 or 3 ones there, I'm okay, because those are just poor trades, so I can improve on something. But if I'm losing and they're all 4s, then there's something to look at, right?
That's right. I mean, I think you've nailed it. That's where I think the major gains are made in trading, is by just keeping your eye on the ball, which is execution. I really do believe that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
The other thing I wanted to say was, like, for right now, I have a bunch of trades on, right? And one of them doesn't look good. It looks like it's probably going to get stopped out, okay? And I think I have 5 on right now. So I was looking at this morning, actually, thinking about, like, what did I... And, like, all the other ones look fine. It's just this one,
Yeah.
And people would probably call them correlated too. Like, people would say, why are you selling the Aussie Swiss and the New Zealand Swiss and the Aussie dollar and the Kiwi dollar? Well, actually, it's not, obviously, because one of them's probably going to get stopped out. Maybe it already has stopped out while we're sitting here. And the other ones don't look like they're really going to get stopped out. So, you know what I mean? Like, I always consider them to be independent. And so as long as my execution is right, I feel like I'm doing the right thing. And I don't necessarily think that, like, I missed out on a lesson. Like, I didn't see something that the market was trying to show me. I think that's the road to over optimization, and I think that's dangerous. So
yeah. When I first started, also, that's a good point. Like, I would think that every losing trade had a problem, so I would, like, beat myself up over the losing trades. And if I didn't really look at it closely, but if I went back to it, probably 50-60% of them were good trades, but I was just beating myself up over a loss, and it was, I wasn't there to learn anything. It's just a losing trade.
Yeah. And that's because when we first start out, I believe when we first start out, our self-esteem, like our trader self-esteem, comes from our win rate, right? And what I'm trying to say is I'm trying to shift that to execution. I want my self-esteem, my trader self-esteem, my confidence to come from how far am I straying from the optimal execution point, And so that's a different focus, right? And if you look at the free forums, like all the free factory forums, people they're always like, it's almost always about win rate, and it's everything is about, this is a high win rate, this is a great system. It's like, they're not really, in my estimation, they're not really zooming in on the thing that's going to help them the most. I think if you stick with it long enough, you'll get it, but it's just a bit tricky in the beginning.
Yeah, for sure. Cool. All right, thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I don't really do any trading early in the morning. It's more about just babysitting the charts, making sure that, everything's going well. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I'd be interested to hear about your morning routine if you have one.
Sure, yeah. So what I like to do in the morning is first I will wake up and I will go and see if the kids are living. And they're not beating up on each other or anything like that. As we're recording this, we're in Australia, we're kind of like on lockdown or whatever, like most places in the world. Yeah, so just making sure that they're all right, that they're fed and they're happy and stuff. Then what I'll typically do is I'll go and look at my charts. So where I live in Australia, the daily candles, the 5 p.m. New York time daily candles, they kind of shift over in the morning. Depends on the time of year. Sometimes it's 9 a.m., like in the summers down here, which is the winters in the northern hemisphere. And right now, which we're going into winter, it's autumn now in Australia. So it's actually earlier at 7 a.m. So all I really want to do when I check the charts is I want to make sure that nothing crazy happened. So I'll check the charts, make sure that nothing crazy happened. So there's two ways to look at it. So in the morning, if I have a trade, I will check the trades, right?
Mm-hmm, yeah.
If I don't have a trade, I will scan the markets that are on my watch list, and I have like a method of highlighting those pairs, and I will see how they're looking, right? Mm. And that's basically it. And later on in the day, what I'll do is I listen to my hypnosis and I listen to my brainwave entrainment. And I will usually do that if I'm doing any sort of back testing or if I'm actually entering my orders. I usually enter my orders. So the Asian session, I'll be 9 a.m., 8 a.m., around there, London time. And again, that shifts depending on the time of year. But that's when I will kind of like do my, quote, trading routine where I put my brainwave entrainment on. Sometime during the day, I try to find 25 minutes to do my hypnosis. If I'm back testing, I definitely do brainwave entrainment before doing my back testing. So that's more of my routine for back testing. I feel like traders need to be really careful and vigilant with their back testing. So I try and treat it as much like a trade taking process as my normal. So I don't really do any trading early in the morning. It's more about just babysitting the charts, making sure that, everything's going well. Like if I have my trailing exits activated, just making sure that the virtual private server, the VPS are actually like on, because sometimes they'll reset and you have to turn on your MetaTrader and all that all over again, like just to make sure that it's on. But that's basically it. I don't really do any trading early in the morning. I do more just checking, and then it's for me where I live, because I want my trades to get kicked in during London or New York. It's actually kind of later in the day where I do my major trade, which is basically when the kids are having dinner. So it's really, it works out well. I can kind of duck off and go and do my stuff. Yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
What about you? What's your method?
For me, it's get up in the morning, take a shower. I do the cold shower thing. After that, do a little meditation, and then check the charts. For me, it's a little bit different because you're just coming out of New York in the morning for us. Yes, same thing. It's more like, do I move my stops to break even if something hit? Is the EA or the management working right? Stuff like that. And then kind of go along with my day. And then towards like at night, then look at trades and look for potential like setups and stuff like that. So
yeah. I often think like if I lived in the States, it's so hard. Like the West Coast is such a hard time zone because
I think it's the toughest one.
It really is. I can't get around it. Like I would almost want to live in the Virgin Islands or like the Eastern. I used to live close to the easternmost point, or I would get up early. See, the thing is, I really like getting kicked in during London, though. That's the thing. So really, you have a couple of choices if you live on the West Coast. If you live on the East Coast, you can just get up early, and you're probably going to be okay. Like get up at 5 a.m., 4:35 a.m., just kind of live on that kind of schedule, and you'll probably be fine. Yeah. But if on the West Coast, I almost think this is what I ended up doing when I lived on the West Coast of the U.S. is I would just kind of stay up late as I could to put my orders in around midnight, 1 a.m., and then go to sleep then. You know what I'm saying?
Yeah.
So that's how I do it. So if you're trading the daily charts, it's pretty Like I just don't want to be triggered during Asia. That's the biggest thing I'm worried about.
Yeah.
So I try and wait as long as I can through Asia. But yeah, I mean, it's what you want. It depends on what you want to do, I guess.
Yeah, what you make of it, right? Yeah.
Exactly. Yeah, and your style too. Like, for example, look, if I were a reversion to the mean trader, I like to trade a lot of breakouts and trends. But if I was more of a reversion to the mean trader, I would actually probably just trade and so I was trading lower time frames. So I would probably just trade like New York Open, or I would trade like Asian session even, or Fridays, when you get like a Friday retracement, which is pretty consistent. Like that's what I would probably do. That would be, in some ways that would be easier. Like if that was my bread and butter, reversion of the mean, I could actually, because the good news about that is they happen so like predictable. Like, a lot of times when New York comes in, it's going to revert, or when London comes in, it's going to revert, or when New York closes, it's going to revert. Like there's these typical times where Fridays, end of the week, it's going to revert. Like it's really Asia, almost always, not always, but a lot of times it's going to kind of drift one way and revert. So in some ways that's kind of I wish I had that mindset where I wanted to trade that way, because it's kind of like it's good if you're time poor. Like you can set aside certain blocks and go, okay, well, this is when it should happen, right?
Yeah. That's true. Yeah, I do the same thing. I stay up till like 1 or 2 and then put the trades in. But even Hawaii was better.
Yeah, even Hawaii. Exactly. Even Hawaii is better. Yeah. I actually think if I had to choose, I would say the best time zone would be like Thailand, Indonesia over there, because what happens is London, it starts kind of in the afternoon there, like, 3 p.m. or 2 p.m. Like that's pretty cool, because you can see London open, and then later on you can see New York open. It's just like that would be the best. Yeah, that would be the best. Like Thailand, Indonesia, right around there. You could live in Bali, get a big fat house for like nothing.
Yeah, exactly.
Yeah.
All right, cool. Well, thanks for sharing.
Thanks.
All right. All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. I recently stopped watching Netflix. I realized the programming was a lot of gloom and doom and end of the world kind of stuff.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, let's talk a little bit about the media and that effect it can have on your mindset.
So for me, the biggest thing about the media is that the guys that you listen to on those business channels who talk about the markets and stuff, at least half of them are wrong. And sometimes, and sometimes more than half. Like, you have situations like, especially where there's a roaring bubble or something, it's really hard to find the dissenters. Like they're very few, and sometimes they don't get any airplay. Peter Schiff comes to mind. So people who follow Peter Schiff would know, he was one of the lone voices, in 2006, 2007, saying that the housing market was going to crash in the US. And he was literally laughed off the TV. Like all the other guests thought you were an idiot, literally. And he ended up being right, of course. And so, I think it's easy to read newspapers or like The Economist or, whatever Sky News or CNBC in the States or whatever it is in your country. Like it's easy to kind of get locked into that. And I think that's a mistake. Even, FX Street is interesting because at least at FX Street, they have multiple points of view. Like in other words, like fundamental points of view and technical points of view, which is I think really good. Usually when you're looking at the TV, you're only going to get the fundamental point of view. Yeah. And that's why when I talk to people about trading that don't know anything about it, they often go, wow, how do you keep on track of all the world events and stuff like that? Like they always talk about that because they assume that's what it is.
Yeah.
And that isn't really necessarily the case for a lot of retail traders who are technical like I am and you are, So, so I think the problem with that is the social proof. Like you get into following that cognitive bias called social proof, and you guys can look that up. But essentially, following what everyone else does.
Yeah.
And I think that's the issue with the media. For me, like that's the biggest one, is that you can kind of get sucked into that mindset. Well, if everyone says the euro is going up on TV, it's going up, right? Like there's all these reasons why, or it has to go up, or oil has to go up. It's almost at zero or whatever. Yeah.
Mm-hmm.
So.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. I mean, I guess I can't fault a lot of traders for doing that, because when you're starting out, you kind of need that frame of reference, right? Something to look at. But yeah, it definitely can affect. And you never know what the agendas are behind some of those tips or whatever, right? So
yeah, that's a good point. Like in Australia, the number one advertiser in Australia in all the papers, all the newspapers and stuff, it's the real estate market. So the local newspapers, they're reticent to talk about anything in terms of like a bubble or anything like that, because that's their livelihood, right? They literally make their money. Like if it weren't for real estate agents advertising, I don't see how they would exist. Like it's just crazy. So these newspapers, you have to keep that in mind. Like where are they getting their money from? And same thing. Like every time you see someone on CNBC or whatever on those business channels, a lot of times they're fund managers, right? And that's why I think they're supposed to disclose, right? They're supposed to disclose like, oh, I don't hold any positions of United Airlines or or whatever. Yeah, because they know that they can kind of sway opinion, which is crazy when you think about it. Like these they can sway opinion just by a 15-minute presentation on TV and a quick little 5-question interview, and like all of a sudden that changes, the demand for a stock or something like that. So it's
it is crazy.
It's pretty crazy, really. Yeah.
Maybe we can take it one step further. Also, like I recently stopped watching Netflix. I realized the programming was a lot of gloom and doom and end of the world kind of stuff. So what do you think about that? Like just the overall general media?
Yeah, it's so funny you say that. I have a friend from high school, and she's like an exec at Netflix, and she posted something on her Facebook, and I'm like, dude, what is that? Like what? And she's like, oh, she was at Nickelodeon, and then she jump shipped to Netflix. And she's like, oh, that's like a show on Nickelodeon. I'm like, oh, like it was the character, like a cartoon character or something. I'm like, but someone drew it on the ground or something, or like in concrete or something, like wet concrete or something. I'm like, dude, what is that? It looks like a dead horse or something. And she's like, no, that's like a cartoon that I worked on at Nickelodeon before I went to Netflix. And it's interesting because I think if you follow the money and see where, like who owns what, it's really interesting to see. Like there's some really good books on this. Maybe we can post them in the show notes. But some really good book. Yeah, they're really, really good books on which corporations own which. It's a kind of a giant shell game, and you can kind of see like what the agenda is. Like what would happen if you become fearful of a certain thing? What are people likely to do? What are they likely to buy? What are they likely to seek? All those sorts of things. And we know, for example, like if you blast a headline on the internet or on a newspaper that says something really great, like, oh, amazing, girl who lost legs can walk again with bionic legs, right? You put that on there versus, girl dies in a tragic car accident last night and her family's so sad. Like, you know what I mean? They know which one is going to get more eyeballs on it. They know that it's the gloom and doom, right? And it's so interesting. Like the people that I know who don't spend a lot of time, and I don't watch TV. I would say though that it's hard, even when you're on the internet a lot, it's hard to kind of switch off that news sometimes because it kind of comes into your face. Like they make it really easy. So yeah, that's difficult. But the people I know who don't spend a lot of time watching TV, like they seem happier. You know what I mean? Like it's obvious.
I noticed that too. Like I'd stop watching for a week and then I'd watch for a week and then I was noticeably like a little bit not depressed, but just like not as happy.
Yeah, it's so weird. It's like they need it. They need that fear to make you pay attention. Like fear makes you pay attention more than and I think that's kind of how we're wired. I don't fault them because that they do that, because if you think about it, like, when do you really want to get healthy? Well, when you have a health scare, right? Like, people don't walk around going, oh, I don't want to get fat. I don't want to get fat. I don't want to get fat. Or I don't want to get heart disease. I don't want to get heart disease. I don't want to get heart disease. What happens is they get a scare and the doctor says, dude, you got to lose 20 pounds or something happens to your heart or whatever. And then you're like, holy crap, I need to get healthy. Like, it's always you know what I mean? Like, your doctor gets paid when you're sick, right? The doctor doesn't get paid when you're healthy, sort of thing. So yeah, I think that's kind of how we're wired. We just think that things are going to keep going the way they are until something scares us. And that kind of shocks us out of our sleep. And we go, whoa, what's going on here? We have to pay attention to that. And I think it's kind of inbuilt the way the way we're wired.
Yeah, that's true. And that's what sells. So, that's what keeps them in business or whatever. So I get that too. Yeah. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Holy crap, this guy made $7,000 yesterday, before he ate breakfast. and the reason why he did is because it's all demo. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, today we could talk about performance envy.
Performance envy.
Like, you look at all these traders that are supposedly successful or whatever on Instagram, or like you see some actual results or whatever, and you get envious and you're kind of trying to catch up or whatever. So what are your thoughts on that?
Yeah, that's a really good point. There are two things I would say about that. Number one, do you know the old, you've probably heard of this, but it's the old, what they used to do for like stock tip newsletters. There was a trick that they would run to get subscribers. Have you heard of this? It's
No.
like where they send. So what they do, and this, they can do this online too, and I'll talk about that. But basically what they used to do, and the reason why I'm thinking of this, because my friend just asked me this question this week. He's getting into trading, and he's like, man, these guys are new. They just started trading last month, and they're already making this amount and all that. And he's like, what's going on here? And I said, well, you got to know the old stock tip newsletter hack. So what they would do is they get these mailing lists, right? And they would send out free stock tips, buy Apple, buy Google, whatever. But half of them would get a buy recommendation, half would get a sell. And then the ones that did well, they would keep sending them. And they would split it buy and sell. So basically what happened is that after a few months, they would have a certain fraction of their mailing list that had like unbelievable, like 100%, you know what I mean? Like everyone, they couldn't go wrong. So then they signed up for the paid subscription. And that's what people do online too. So here's a couple of tips. So when you look at these guys like on Instagram or Facebook or whatever, and to a degree also on YouTube, what you'll see is like these guys posting these outrageous, screenshots, right? And so what a couple of things to look for are, I think in MetaTrader, if it's a demo account, I think the order number starts with a 1. So if you see that, right away, that's bullshit, right? Okay. Yeah. And the other one is like, you'll get these guys that are doing like 100-lot trades. Okay. If you have a 100-lot trade and there's no slippage, like it's bang on hitting your 9-pip profit target or whatever they're going for, then it's also like that's not real, right? That's a demo account. So it's only on a demo account that you don't get the slippage, because 100 lots is about as much as you can do in retail Forex.
Yeah.
It's really hard to get those through, you know what I mean? So yeah, I mean, you can go current X and stuff like that. You can step it up, but really, if you're looking at these, especially on Instagram, like they're famous for it, right? And Facebook, you'll see these guys and they're posting their screenshots like, holy crap, this guy made $7,000 yesterday, before he ate breakfast. and the reason why he did is because it's all demo. And they can do the same thing that I was talking about, the stock tip newsletter thing. What they do is they have multiple demo accounts. Buying the euro, selling the euro, and they just keep doing that. And then eventually they'll have like a demo account that's like unbelievable, right? Because they just keep, and so that's the same thing. So you just have to be wary of that, I think. And I mean, it's like finding a friend, right? Like if you're trying to find a friend, there's certain things that you like in them. And I think that's the same thing with your trading mentor. Like there's certain people that you kind of jive with and you're like, I get where this person's coming from. It makes sense. This is what I need to work on, right? I mean, that's what it is. It's not, I mean, I'm not here to bag against other mentors. There's some really great mentors out there. They just have different approaches and they have different personalities and they structure their lessons in a different way. So it's really more about you finding a good match based on that, rather than looking for the guy with the best demo account on the internet. You know what I mean? Like that's not going to help you, right?
Yeah.
So that's my thought anyway.
Yeah. I mean, it's actually really easy to just also cherry pick only the winning trades, right?
Of course, yeah.
So like, I mean, that's what I see a lot in the accounts. Like, oh, this guy's winning every week, but he has no losers. What the heck? So
yeah, it's so funny, man.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And as far as the jealousy part of it, I guess, which is the other thing you're talking about, I think that comes with a lot of self-reflection, like knowing who you are. Like it's easy for me. For example, I've had a bunch of losing trades in a row the last couple of weeks. Although yesterday I got one that looks like it's going to work out, which is great. You know, it's great to get back on the horse and all that. But, you know, it's easy sometimes when your confidence is low, when you're in a losing streak, to think things like, oh, man, if I was just trading, you know, the 1 hour chart instead of the daily chart, I would have been able to get in and out, and, you know, and those sorts of things come up, you know, especially when your confidence is low. So I think for me, it's really more about knowing who you are as a trader and locking into that rather than trying to be someone else. And so, you know, you really want to early on define, okay, look, I've got a job. I'm home at 7:30 p.m. So that means I'll check the charts, you know, at 9, you know, from 9 to 10, I'll check the charts. I'll put my orders in. The next morning at 5:30, when I get up in the morning, I'll check my trades, maybe move to break even or whatever I need to do to manage them. You know, you kind of have to set your life around that. Or you're like, oh, I'm retired. You know, I'm 65. I've got all this time. Maybe I will trade the New York Open, and maybe I will get up early in the morning and just, you know what I mean? So it's really more about, you know, knowing yourself, knowing what kind of lifestyle you want to have as a trader. Because it's hard to trade the lower time frame charts. Like, it's hard. It's not only is it addictive and that affects your brain, but also it's hard to like maintain that much focus for that long. You know, it's like being a pro athlete, literally. Like, you have to be so on it all the time. That's why a lot of those people who trade the lower time frames, they take big breaks. They take breaks during the day. They take breaks during the year. They take a lot of time off where they just unplug because they realize the importance of being really on it, on their game when you're executing. Execution becomes so critical when you're trading those in and out trades, you know, those scalping type trades that everyone thinks are so sexy. Yeah.
And I think they also limit themselves, right, to like 1 or 2 hours a day sometimes.
Yeah.
Absolutely.
Yeah.
Also, I think trading seems deceptively easy. Like, people think, oh yeah, you just learn the system and then you just make all this money. But then in reality, it's not that simple. And then you beat yourself up about, oh, I can't make the system work, and then you go down that rabbit hole, right?
Yeah, you're right. You're absolutely right. That is the biggest misconception of trading, I think, is what you nailed it. Is in the beginning, it's about the system. It's not. It's about you. Like, it's about you and how you execute the system. So that's why, for example, you'll go on the Free Factory forums and you'll find people saying, someone gets on there and says, this system works brilliant. I've been making lots of money, blah, blah, blah. Here it is. Hey guys, do you want to make it into an EA or, you know, or improve it or something? They usually say, I want to improve it, or I want to, you know, automate it because I hate sitting around the chart, you know, looking at the charts all day. That's usually how it starts. And then other people get on there and they'll look through it. They'll test it out. They might even trade it live. And they'll go, dude, this sucks. It doesn't work. Okay, why is that? You know what I mean? Like, why? How can we both have the same thing and not in that? And that's the same reason why you can't go by the trader that has the best track record and say, that's what I want to do. Because they might not trade in a way that makes sense to you, and you might not have enough time to trade the way they do or whatever. Or maybe they're trading the London Open and you're sleeping during the London Open or what, you know what I mean? So it really comes down to you are the system. And so, you know, as you know, a lot of work you do is going to be on making sure that you follow the rules, that you are in a good mindset, that you are in a situation where the easiest path for you to follow is to actually follow the rules of the strategy. Like that's what you want. You don't want it to be where a different path is easier. Yeah.
Yeah. And like you say, I think it really comes down to knowing yourself and taking control of the situation. A lot of times, I think too many traders try to pass the buck onto the system or the mentor or the trading buddy or whatever. But if you take responsibility, then that's when things start to change, right?
Yeah, it's not the broker's fault. Exactly. It's not your mentor's fault.
They're not
It's not
your
the
spouse.
system's fault. Yeah, exactly. Yeah,
All right,
that's
cool.
right.
Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, and it also helps you cut out what you don't want to do in your life.
Yeah, that's true too.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So I know I've done this before, and I don't know if you have, but sometimes you tell somebody, just snap out of it. As we both know, it's not that easy. So, or there's some other steps you can do or help somebody with to get them out of a situation or a mental like block or whatever, instead of just saying snap out of it.
You know, I think that's a good point. One of our friends that I've worked with, her name's Nicola, and she's a great trader. She was saying she went through the trading psychology course that I created, and she was saying that her turning point was that. She's like, I remember, in one of your videos, you were saying you just need to take responsibility. You know what I mean? Which is basically what you're saying, and that's really it. And so there's a couple of different ways to do that. Like you can, if you're journaling and you have a list of your trades, like you can literally pinpoint what went wrong on each trade. And when I'm talking about losing trades here, so if your answer is anything but it was bad luck, it was bad luck, it was bad luck, it was just a loser. If it's anything other than that, then that means that you're like there's something else that's impacting your trading, right? It's not the random sequence of winners and losers. So, and another way you can do that is so you can look in your journal and find it, right? You go, okay, well, I keep doing this. I keep missing the trades. I'm always an hour late, so I'm getting in late. My stop loss is too far. I'm risking too much, and that's affecting my reward risk ratio, for example, or something like that. Or every time I have a signal at this time, I miss it because I'm on my way home from work. Or every time I have a signal after 4 losing trades, I don't take it because I'm worried it's going to be another loss, for example.
Yeah.
Those sorts of things, whatever can creep up. That's one way to see it is in your journal if you're journaling. But another thing is to ask why. It's called like the 3 whys. I don't know if you've heard this. So what you do is you go, the reason why I'm trading is, or the reason why I'm having trading challenges is blank, whatever it is. So you write it down. Okay. But why does that happen? Right. So for example, like the reason why I'm is because I'm getting in my trades late. Okay. All right. Well, why are you getting in your trades late? Well, I'm getting in my trades late because I'm on my way home from work, and that's when the 4-hour candle prints, and I can't do it because I'm on the train or whatever, and I don't have phone reception, or I'm on the BART or whatever. You know what I mean? Like, I can't do it. And so by the time I get home, it's too late.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Okay, well, why is that happening? Oh, well, the reason why I'm on the train when I'm going home is because that's how I always go home. Could you do something else? Well, yeah. Could you wait until the 4-hour candle prints and then maybe take a look on your phone? You know what I mean? Could you open up your laptop and check your charts in the BART station or outside of it in a cafe or something before you get on BART and just get on a later? Like there's always you know what I mean? Like there's always a solution. It's just difficult when we put these barriers up and we say this is why, but it's usually not why. There's always something behind that you can dig deeper and figure out. The real reason why is because, well, I want to get home early and I only want to get on the 6:20 train. I don't want to get on the 6:45 train. Like that's the real reason why, you know what I mean?
Yeah.
So you could, there's lots of different ways to do this, I think, to kind of dig into, what's going on and what, because it's so easy to say, oh, it's just, I keep missing these trades, or, oh, my broker keeps slipping me, or, oh, the markets are too volatile now. Well, why are they volatile now? So you can use the 3 whys, and then you can do 4, 5, 6, however long it takes you to dig to the real reason. And then also in your journaling, you should be able to throw your trades into a bucket. All your losing trades should go into one of 2 buckets, either bad luck or I screwed up. I mean,
Yeah.
that's it. There's only two buckets, really. Yeah.
Yeah. No, I agree for sure.
Yeah.
And I think once you start asking those whys, it really comes down to much deeper reasons, right? Like, I don't have self-confidence, or I don't know what else there could be, like, I don't think this is actually going to work, or whatever, right?
Yeah. That's it. That's totally it. Yeah.
It's kind of surprising once you start asking those questions, what comes up. Like, you might not expect it, but like, especially like with your dream analysis thing that you use, right? I was surprised you came up on that one too. So I don't know if you want to talk about that a little bit.
Yeah. I mean, it's in the course, but you get what you trade for course. But basically, what you're doing is you're trying to figure out what the themes are, right? And you'll notice recurring themes in your dreams. You will notice a couple of really important memories that you remember from when you were a kid, right? And those things. What you're looking for are patterns. And if you want to ask the 3 whys question in a really good state of mind, try to do it right as you wake up or right as you're going to sleep. Really, it's almost better right as you're waking up, because or after you meditate, right? So you want to be in that really calm state of mind where things, you let them bubble up, like you're not repressing them, you're not pulling them down. So like the first thing you think about right when you wake up, just why is this happening or whatever, or it's probably going to be easier to get into like a hypnotic or a meditative state and do it. But that's really powerful too, is to be in that state and then trying to dig into it and figure out what's going on. That's really a good technique for people who want to get into that. Or look at your dream themes, or look at the biggest things you remember, like your biggest childhood memories. And why do you remember those? And what does that say about you? What does that say about, can that relate to any patterns, in your life? Those sorts of things. Yeah.
And how do you feel about that? Those events?
Exactly. How does it make you feel? That's right. Yeah.
And I personally found also just kind of building the habit of whatever you're doing during the day, ask yourself, how do I feel about this? And I found that can help you find some patterns also.
Yeah. And it also helps you cut out what you don't want to do in your life.
Yeah, that's true too.
I don't want to be answering these emails or whatever, you know what I mean? Like,
somebody else do it.
Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And then once they get that, then they can become, like a star tennis player or whatever, like, expert on AI. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think your psychological edge is? I know we always talk about like trading systems and having a trading system edge, but what about a psychological edge? What do you think yours is?
Yeah, that's a good question. So the way I look at it is that a lot of traders, especially the ones that are kind of new to the markets, those are kind of like the easy ones to take money from, because this isn't really kind of an area for them in a lot of cases, I guess. And so my edge really is that I realize that this is where I need to focus on. You know what I mean?
Yeah.
So that means doing whatever I can to be, there's 2 parts, aware of what's going on psychologically, and then to improve my psychology, right? And so there's lots of different tools for that, and lots of methods for both, really. So if you want to become aware, there's journaling, there's meditation, there's just like becoming more mindful. I know that's kind of like a buzzword nowadays, but that kind of thing. And that's a little bit easier, I think, for introverts, because introverts are, which I classify myself as, because introverts kind of, we think more about, like, we like time alone and kind of decompress, and we think more about what's going on. Yeah. So I think being aware of it and then having a plan to improve, those are the 2 things I think that everyone needs to be, because if you don't have awareness, then you've got nothing, right? So that's how I see it. What about you? What's your take on that?
Yeah, I think the biggest gains have come from awareness, basically, and just trying to pinpoint what the issues are, and then finding out the true reason behind those issues, or the true cause of those issues, and not saying, oh, this is just, I'm just revenge trading. Okay, so why are you revenge trading? Are you mad at your mom from when she was yelling at you when you're a kid or something, right? So just digging into that, I think really gave me that awareness. And I think for me, at least, awareness is the number one thing also.
Hey there, I hope you're finding this episode useful. I just want to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's so true, man. Yeah, like you just really need to start at awareness, you know. It's like a kid, you know, when they're growing up, they first got to get their motor development down. Like if they can't, you know, use their voice and walk and use their legs and their hands and their fingers, like they got to get that first. And then once they get that, then they can become, you know, like a star tennis player or whatever, like, you know, expert on AI. Yeah, exactly. Yeah. And so that's it. Yeah. So yeah, I'm totally down with that. Like for most people, like journaling is going to be the easiest thing, but I think you have to be careful because journaling is, you know, people think like, and I thought I did this when I first started doing my journals. All I really did was I would take a screenshot of my trade. I actually found my old journals from like 2004 or something. No, 2005, 2006 area. Yeah. And so all I did was I took a screenshot of my trades, I printed them out, and then I wrote kind of like what the trade was, like what system, why I took it. And you know what I mean? So I had a before and after shot of all my trades, and that was cool. But that's not really what we're talking about, right? Like we're talking about what do you think, you know, or what, and so it's more of almost kind of like a diary of your trading development. And that's really good. And I have those too. But yeah, that's kind of the key, I think, is for awareness, is to dig into that. And it's so much better if you write it than type it. And I know everyone wants to, and some people, maybe it makes sense to speak it, you know, and there's enough text, you know, voice to text things software out there that can do that for you. But you know, it's really tricky to do it right because it's so easy to like say you have a trading journal, but that might be just kind of like a trades journal, you know what I mean? Not a trading journal. So there's a difference.
Yeah, it's interesting you mentioned that because I've been going over mine right here, and it's just kind of like a little notebook that I check off. Okay, these are the trades I took. This was the result. From there, then I put it into a digital journal. But I found that like just marking it off like this really helps me, at least during my trading.
Yeah, and it activates a different area of your brain, and you'll remember it better and all that. Yeah, it's so easy to get sucked into the you know, the fancy online tools and stuff. And there are great trading journals out there, but I think that's the way to do it for sure. Yeah,
I think part of it is also discouraging, right? Like when these journals are too complicated and you have to fill like too many forms. I was like, screw that, and you just stop doing it. So, all right, cool. Thanks, Walter.
Yeah, thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Last month, I heard about this guy who like some crazy returns in his trading, and his secret is basically mushrooms. So like, I don't know how sustainable that is, but you know, trading on mushrooms.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, how do you tell the difference between your knowledge or your skills at work and your ego telling you what to do?
That's pretty good, isn't it? For me, that would be execution. So like, ego's tricky, isn't it? Because I think as traders, that becomes one of the biggest challenges the better you get. And if you've ever seen this among other traders, like who've been around for a long time, you will see the ego creep up. And I think it's interesting because I think as we develop as traders, a lot of things kind of, you know, get easier, I guess, so to speak, in some ways, you know, with experience. That's the one thing I think that's not. The way that you phrased it was, how do you know if it's ego, or what was the other thing?
Yeah, when you're making a trading decision, how do you know if that decision is coming from a place of knowledge and skill, or of a, you know, your ego trying to take over and run the show?
Yeah. So for me, it always comes back to execution. So I need to answer this question. In this part of the trade, whatever part it is, it could be the risk management, the pyramiding, the entry, the exit, whatever. In this part of the trade, did I do what I am meant to do, right? And if I didn't, and you even see this in traders like George Soros was famous for it in his interview in the Market Wizards or New Market Wizards or whatever, whichever book he was in. A lot of traders, like if you go to the Traders Who Speak and stuff, those things, you'll see it. You'll definitely see it where these guys get up there and they say things. And it's funny because then they get sucked into this trap where it's like, you must do this. Like, this is the only way you can, you know what I mean? Make money in the markets. And I understand why they say that, because that's their experience. And like, they're like, well, man, I mean, look, look, look what I've done, you know?
Yeah.
I get that, but that's tricky. I think that's a big trap. The longer you trade, obviously a lot of people are going to fall by the wayside because they quit, but the longer you trade, which means obviously you're making money, the more ego can seep in and convince you that you should break your rules in this instance, or you should do something different in this instance, or that you are responsible for your results and not your system.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Really, because it's kind of like you're a bus driver. You know, you're just driving the bus. Like, you can drive a VW bus or you can drive a Mercedes bus. Don't matter. Like, you got to drive the bus and not wreck it, you know?
Yeah.
So that, to me, boy, man, like, if you can't, that is a really good question, because trying to disengage those two things is, it's a common one, I think. I really do. And I think if you go, like, you guys can go out and look on the internet and see, like, do you hear any traders saying, like, really kind of beating their chest and saying, this is the only way you should do that. You should always do this. You should always do that.
Pretty common.
A lot of times, yeah, they're not saying that because, you know, they're trying to lead you astray, but they're saying that because they're coming from their experience, you know? So, yeah. I mean, I can't speak to their motivations, but I shouldn't say that. But I think in a lot of cases, they're actually well-intentioned. It's just sort of like, that's all they know. You know what I mean?
Yeah, and that's all they can prove also. Like, in terms of a track record, that's what they can prove, right? So that's what they're going to talk about. So it makes sense from that standpoint.
Yeah, and that's why I think, you know, just reading those Market Wizards books is so good. Like, that was the real eye-opener to me. The big lesson from those Market Wizards books by Jack Schwager was that, like, there's so many different ways. Like, you come across all of these interviews and you just realize, man, like, this guy did that and that guy did the opposite and they both made money. Like, what the, like, you know what I mean? Like, it's really kind of it'll snap you out of the idea of finding the holy grail or the perfect strategy, because you're like, dude, all these guys did totally different things. You know what I mean? And look what happened. Like, it's crazy. So I really like how that, you know, that can help you see trading for what it is, which is really it's a personal journey to match up what you should be aligned with, like what makes sense to you. Yeah. So.
Yeah, for sure. And funny story, last month I heard about this guy who like some crazy returns in his trading, and his secret is basically mushrooms. So like, I don't know how sustainable that is, but you know, trading on mushrooms.
So he takes the psychedelics and then he uses those to kind of see the future or something?
Like,
or like, how does he?
I think he feels the market flow better or something like that. I don't know what that's going to do to your brain long term, right? But like, it's an interesting thought.
Yeah, that is crazy. It makes me wonder if you can't just achieve that same thing through a different means, you know, through like a non-chemical means or something.
That's what I'm thinking too.
Interesting.
Yeah, for sure.
Yeah.
That is an interesting thought though. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I love this analogy. My friends who are into martial arts, they're like, oh, be like water, you know, like free flowing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. So there are some things that I used to say to myself, like, that's not possible, or you're so dumb, or I used to ask for permission a lot. And I realized that I was programmed that way partially because I was telling myself that on a daily basis. And have you come across, what were some of the things that maybe you were programming yourself with just by your speech?
Right. So it's interesting, the way I see it is, I guess you could say that I'm programming myself, but the way I see it is that it's kind of like water. So water will go down the path of least resistance, right? Like down the side of a mountain, and that becomes the river, right?
Yeah.
Okay. for everyone watching this, everyone listening to this, I think what happens is you go down that path of least resistance. And where does that come from? It comes from your experience. So it's it's exactly what you're saying, Hugh. It's the things that you've heard before in your family, like growing up, and that kind of becomes what you say to yourself. So in a sense, you do program yourself, but that comes from your experience, right? So your individual experience growing up, and particularly experience that you had with the important people in your life, and the experience you had, like the relationship you had with money, that to me is what you're talking about. Does that make sense?
Yeah, for sure.
Yeah. So what you're saying is true. Yeah. Go ahead.
So you're basically just perpetuating whatever was programmed into you, right?
Yeah. So yes, but I have a very subtle distinction, because I agree with everything you're saying, except I wouldn't say, just me, I wouldn't say it was programmed into you. I would say, like water, like you're like water, right? Like, so we're like the water. I love this analogy. My friends who are into martial arts, they like, oh, be like water, like free flowing. Anyway, I wish, some ways I wish I was like a Bruce Lee, and I'm not. But anyway, so you, or I should say Jackie Chan. I guess Bruce Lee is old. That dates me, doesn't it? Yeah. So what I would say, instead of saying that what's been programmed into me, I would say what I've found to be accessible, or like what's easiest for me to latch onto. And what's easiest for me to latch onto as a trader and as a person is what was around the house, what the things that I heard growing up, right? So I'll tell you what the big two for me were that I mostly grew up basically in a single parent household. Okay. All right. And so, my mom had relationships and stuff, but my father, like affectionately call him my sperm donor, because he was gone by the time I was 5, that sort of thing. So that was a big one for me, was trying to figure out, like, am I worth anything? If I was worth something, surely, you know what I mean? Like, if I was actually worth something, surely my father would be around. Like, he left. So I must be worthless. You know what I mean? So that's number one. And number two is my mom would always say things like, and my mom was brilliant. Trust me. She did a great job with her kids. Unbelievable. Okay. This is nothing against my mom. I love my mom. She was literally unbelievable, the things that she was able to juggle at the same time. Amazing. So, but what was interesting was that, she would say things like, we can't afford it. And especially money doesn't grow on trees. Where do you think we'll get the money from? So those two things, so kind of like a low self-worth and this thing about money, which is like so hard to get, when in reality, if you think about it, and money is probably one of the most replenishable resources on earth. I mean, they literally print it out of thin air.
Exactly.
You know what I mean? Ask any central bank. So that was actually wrong. Like, in both things, I was wrong. Like, the thing to do with my mother and my father had nothing to do with me, right? And then the thing about money is that money literally is probably one of the most replenishable resources in the entire globe. So that was for me. Like, and so what I would say is those things, I use those things to program myself. You know what I mean? I pulled on those things because they were so accessible, because they just were easy. And that was the path of least resistance, is to rely on those crutches. And so I had to like overwrite those, you know what I mean? And say, no, like logically, you can do that two ways. You can do it with logic, and you can do it with simple, like almost like emotion, or like like psychedelics, or like subliminals, or anything like that. Hypnosis is a little bit of both logic and emotion. But so that's kind of so it's kind of an interesting way to say it. You know what I mean? Like that you've been programmed that way. I would say, we have the choice to program what we want. And your subconscious is your subconscious is like a dog. Like, your dog can go and fetch that paper for you every morning. Your dog can make sure that he does his business in the right corner of the yard, all that stuff, right? Or your dog can attack, everyone who comes to the door and can poop all over the place. You know what I mean? Like, that's your subconscious. You just have to train it the right way to what you want, and that's what will work. You know what I mean? Like that's how I see it.
I believe that everybody's kind of programmed a certain way. I think it's kind of hard to get out of that. What do you think about that? Like, your innate, whatever personality that you're born with?
Yeah, in some like in psychology, they talk about internal locus of control and external locus of control. So the people that say like everything is due to them, like, oh, I'm in this situation because of the world around me. And then there's those people who say, well, I'm in this situation, but I basically chosen this situation through my path, the decisions I've made in my life. And so I need to, if I want to get out of this situation, I got to make other choices, you know?
Yeah.
And so you kind of see that in people who say like they're stuck in a job or whatever, when really I think internal locus of control is more realistic and that you chose to go a certain way and got there. And so that's how I would say about even about your subconscious beliefs and those beliefs that are really kind of driving our everyday behaviors. You're right. I mean, you're right. Okay, you're right. The reason why it's so difficult to get to reprogram yourself is because most people aren't aware. They're not even aware. Like they're not even aware of the things they say to themselves.
Yeah.
Like, you know how they do like time management courses? They'll say, okay, write down everything you did for like a day or a week or whatever. And then you have a list and you go, oh my God, I've been wasting my time. Like, you know what I mean? I never do work. I'm always on Facebook.
Yeah, exactly.
Yeah, exactly. Yeah, exactly. Well, it's kind of the same thing, I think, with your subconscious, where if you actually took inventory of the things that you say to yourself and the things that you think and the thoughts that you think, you'd be like, hang on. So what's like my driving belief system here? What's going on? Like, and those will kind of come up in your self-talk. Like you get a little tiny glimpse of that when you pay attention to your self-talk. So yeah, I think you're definitely on the right track. I think, like from my point of view anyway, like thinking that way. But I think we just have to remember that we choose, like we literally choose how to run, like which programs to run, how to run them, and we can become aware of those. And another thing you can do is when you wake up in the morning, just start writing. Right when you wake up in the morning, you're in the hypnopompic state. So hypnagogic is when you're going to sleep. Hypnopompic is when you're waking up. And you can literally, in either state, it's a little bit harder to do when you're going to sleep for obvious reasons. But when you wake up, if you can just kind of write stream of consciousness, like in an emotional journal or something, and see those things, you know. And likewise, when you go to sleep, you can make like a really strong fist, really tight, and then as you're falling to sleep, you'll start to feel it kind of relax, and that's when you know you're going to sleep, and that's when you know you should start thinking things that you want to sort of seed your subconscious. Like it might only be one thing, you know. I take the best trading opportunities according to my strategy. I take the best trading opportunity, or whatever, you know, whatever you're trying to, I attract money easily, or whatever you're trying to, like, you know what I mean, overwrite with all that stupid crap that we've accumulated over time.
Yeah, no, you're right. I think the programming is in the beginning of your life, basically. But then if you don't have the awareness to overwrite that, then it's going to rule your life. But you're right. If the awareness is important, and you just have to overwrite that at some point. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, I have to say, man, it kind of makes me sad, but like where I live, I have to walk by what in the States we would call it the projects, okay? But it's not, they call it something else here in Australia, I forget, okay? But where I live, I don't have to, but a lot of times I walk by. I usually ride my bike and walk. I don't like to drive a lot. And where I live, you don't have to, right? Everything's right here. So I go by these projects, and it kind of makes me sad because I see exactly what you're saying, Hugh. Like I see people, especially with their kids and stuff, and the things that they say, and I feel like, man, it would be so easy to, not easy, but if they just had this one thing, you know, if they just took stock of what they think and how that, you know what I mean, like how that's driving their lives, if they could just kind of just become aware of that and flip it. You know, it would make a big difference, and if people just feel like they're stuck, you know.
Yeah, no, I had a similar experience last week. This woman was in our neighborhood. She was looking for directions, and she said, "Yeah, you're all the rich people, but you know, I'm trying to get back to the poor neighborhood." And in reality, these houses they cost less than the ones over there where she lives. But it's just that mentality of this is the rich people and we're the poor people, right? So yeah, it's just a thinking.
Yeah, it's so true.
Yeah. Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
This works, and then, okay, I'll use it then, you know, that sort of thing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, how's it going?
Pretty good. How you doing, Hugh?
Good. Good to see you again.
Yeah, exactly.
All right. So new podcast, slightly different topic. So I guess we can get started with the first one, which is,
Let's do it.
Is psychology or your trading strategy more important?
Yeah, that's an interesting question. I guess it's like in science, or in psychology, they're always nurture versus nature. For me, personally, I think I look at it, I did my PhD in developmental psychology. So we're looking at different stages. And so the way I look at trading is kind of the same way, where as traders, we go through different stages, and you may have a different experience to me in terms of, what trading, like what that journey's been like. But I think that there tends to be an overarching commonality among traders, which is essentially that, in the beginning, it's all about the system, and the entry especially. And then later on, you start to learn about the importance of exits. And then maybe you start to get into the importance of your risk rules. Mm-hmm. And the other side, I kind of look at them as two sides of the same coin. Risk and psychology is sort of the same thing. I mean, in a sense that if you really mess with your risk and really ramp it up, that will affect your psychology. And we all know that as traders, like the sleepless nights, worrying about the trades and things like that.
Yeah, right? You get your alarm set and everything, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, so I think psychology is very important. Probably if I pressed, I'd say it's the most important, but I think it's only important to you once you've already gone through those first stages. That's my point of view. I don't know. What's your experience been like?
Yeah, I mean, I kind of think that if I had to put a percentage on it, maybe about 90% is psychology, because a lot of people, think, the system, but that psychology is going to help you stick with the system, number one. Number two, keep searching for systems until you find something that works. So I think the psychology is like a really big part compared to the system overall.
Yeah, and if you think about it, I always like to think the extremes, and then that kind of highlights things like the importance of things. So, for example, like what you just said, what if Hugh traded a totally different system, right? Would Hugh still be able to make consistent profits? And my answer would be yes, right? Let's face it, there are free systems available right now in the dark corners of the internet that will work, right? Mm-hmm. And you just got to find the one that makes sense to you, right? And yet we still spend all this money on systems and indicators and all this stuff. It's the reality. We want someone to put a stamp on it that we believe in and say, this works, and then okay, I'll use it then, that sort of thing. So, but then the reverse. What about the reverse? What if? And so I said the system, right? What if you swap out your system? Can you still make it work? The answer is yes. What if you have a pretty good handle on your psychology today and that's all going well, but then in the future you don't? You lose that part? Would you still be able to make money even though you're trading the same system you've always been trading? And the answer is probably no. So I think you're right. I think you nailed it. Yeah.
Yeah. What do you think about this thought of like there's just some basic concepts in trading, regardless of the system, it's always there. So even if you switch systems, you're still looking at a similar type of structure, price structure, or whatever, right? Is that part of that, or do you think it's more of the system?
Yeah, I guess. Can you expand a little bit more on that? Because I want to know exactly what you're
so like if you
focusing on.
If you did like a moving average crossover, right? So that's just basically a turning point. So you could do the moving average crossover, you can do the Bollinger Band, you can do the head and shoulders at that point. That's kind of a system, right? But if you have the right psychology, you could probably spot, oh, that's just a turning point because of this and not necessarily the indicator, right?
Yeah, and that's right. Yeah, I definitely agree with that. Like I think that you can see divergence on the charts without indicators on the charts, right?
Yeah.
Like if you look at charts long enough, and I'll never forget, I had a friend who'd been trading longer than I had, and he was really good at what he did, but he had all these really, like, I think he paid, I want to say he paid about I don't know, $1,000 a month or $800 a month. It was something like that every month to rent these indicators that he used, right?
Mm-hmm.
And then he came out to visit me in Australia, and he was looking at the chart on his phone. He goes, "Oh, I got a signal now." I'm like, "What do you mean you have a signal? That's a naked chart. Like, you don't have all your fancy indicators on there, you know?" Like, because he had to have TradeStation, and I don't know if TradeStation is mobile now, but back then it definitely wasn't.
Yeah.
And he was looking at his naked chart, and he goes, "No, I have a signal." I'm like, "Dude, that's the 5-minute chart you're looking at, okay? You trade the 3-minute chart with a bunch of indicators. How do you know that you have a signal?" And the reality is that he had looked at the market so much through that one like filter that he knew exactly where the indicators would be placed. Do you know what I mean? Because he's just so used to it. Yeah. And I think there's something to that. I really do. I think that if you get someone who's been around trading for a long time, particularly with one filter, one point of view, one system, I think they will be able to tell you whether or not they have a trade, even if their crutch isn't on the chart. I do believe that. I really do believe that.
That's a good point. Yeah. It's kind of a crutch at me sometimes, right? Yeah, cool. Okay, great. Thanks, Walter.
Yep.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
When you find like a new system or a new indicator, you scroll back on the charts and you're like, this thing is gold. Yeah. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about intuition when entering trades?
Oh, intuition.
Yeah,
this is a tricky one. There's actually a really good book if people are into this. I think it's called The Intuitive Trader. We can put it in the show notes for people who are interested.
Okay.
It's not very long. It's kind of a small little book, but if you're into this sort of thing. But I actually think the scientist comes out in me when I think about this, because I think that we have a lot of biases that affect our trading. Obviously, cognitive biases, you can look those up. One of them is that we know, like we know when things are going, like, really going to go, right?
Mm-hmm.
And maybe you're right, but the best way to find out is to test it. So what I always encourage people to do is just keep it in your journal. What I mean by that is, like, if you think that the next trade, like you think you have 90% confidence that the next trade is going to be a winner and unfold exactly as you see it, then write that down in your journal. And then when you have a couple hundred trades, you can actually go back and you can group your trades by the ranking. So like, say, all the 8, 9s, and 10s out of 10, see if those had a higher win rate than the 1, 2, 3s, that sort of thing. Like, that would give you a good sense of whether or not you're right.
Yeah.
Because remember, the turtles, you guys can read about the turtles, obviously, in the Market Wizards and the New Market Wizards by Jack Schwager, those books, great books and all that. They were taught, they were beginners, of course. They didn't really know much about trading when they got into this, and were trained by Richard Dennis and William Eckhart. They were taught to go with the trade that they thought was least likely to go. So if they were almost fully loaded and their risk rules only allowed them to take on so much risk, they had to stop and go, okay, if I have to take corn or soybeans and it looks like soybeans looks better to me, like I think it's probably going to work out, go with the corn. Like, that's what they were taught to do, because Dennis and Eckhart knew that we have these intuitions that are typically wrong, at least in the beginning. I do think as you go as a trader, you can fine tune them and get better, and there might be an edge there. But I think in the beginning, it's definitely not an edge.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah.
And the open position ratios are a good point to that. Like, people who follow the open position ratios among retail traders, to me, that's a really good gauge of the trend. And so when you see all these people going one way, it doesn't mean that the market's trending the other way, but it often is. So, that intuition that we have as traders, I think in the beginning is probably not so good, but maybe later on we can fine tune that. How have you, I know you've been working a lot on your psychology, and what have you found in terms of Like, do you have any data or you have any experiences in terms of locking into that and tapping into that as an edge in itself?
I don't have enough data yet, but I think it's exactly like you say. In the beginning, you think you have the intuition, and it's just wild ass guessing, right? But then later on, then you develop some sort of intuition. And then nowadays, it's more like, you have a feeling if the market's going to move in your favor or not. And when I've tracked it, bailing early I've been right more than often than I've been wrong. So you do develop that intuition going forward, right?
Oh, that's awesome. So far your data shows that you have like a bit of an edge there with your intuition.
Yeah.
That's awesome. Yeah, that's great.
Yeah.
That's great news. Yeah. People sometimes ask me, they'll say, hey, what do you think about just like going total free ball, just like whatever, you think is going on and that sort of thing. And I think that's a dangerous path. Like, I think if you just do that as a trader, I think it probably could work if you had decades and decades and decades. And maybe, like I said, you've got good data to back that up. But I think a lot of times, like, for instance, right now, I'll tell you right now, this week as we're recording this, I have a bias on some charts, like the Aussie CAD, the Aussie Swiss, a couple of other charts that CAD Swiss is another one where I want to sell. But looking at the charts, like I look at the chart and I say, if I didn't have my sell bias, that actually looks like a really good buy. Okay. And it's hard for me to watch the market march and go up, for the last couple of weeks as I'm waiting for a reversal signal to sell and write it down. But that's because I've got my bias. So, I think you really have to decide. And sometimes you can do both. Like you can say, okay, I have my systems that have my rules, and this is my account that I'll do that in. And then I have maybe you have like an intuition account. If you have enough data that suggests that you're good at that, maybe do that and just have a race. See which one's going to make more, see which one, over time comes out ahead. Maybe that's the way to go. I don't know. But I think definitely you got to be scientific about it. You got to test it. You got to make sure that what you think is going on is actually going on, because it's so easy, as we know, when you find like a new system or a new indicator, you scroll back on the charts and you're like, this thing is gold. Yeah. It never works out that way, does it? Yeah.
No. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I don't know why we're just built like that or something, right? Like some of us have that tendency to take it personally.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter. What do you think of FOMO? How do you deal with FOMO? Like, you missed a trade. It's a really good trade. It turned out to be a big winner. How do you go forward?
Yeah. And it comes in so many forms, doesn't it?
Yeah.
Like you could have a situation where you missed on the trade and the trade went just like you thought. And for whatever reason, you weren't around the computer, or you didn't block out that time, or maybe you're on an airplane. That's happened to me before, back when people used to go on airplanes. We're recording this right now when no one's going on any airplanes right now and the airline stocks are tanking. But yeah, so there's that. And there's also the other bit, which is like, I think comes in when, as a trader, you get a little bit more advanced, where you're like, all right, I had this trade and I was in it, but then I got out too early and oh my God, it's gone another 500 pips. Like there's another FOMO where you start to like, and that's dangerous too, because that can lead you to tweaking your strategy, which maybe it's a good thing, but a lot of times that's a slippery slope too, to go down that path where you start changing your system because of one sort of, we might even call it an outlier trade that's not very common, right? So yeah, that's tricky. That's definitely a tricky road to go down. So I think you really have to put it in perspective too and say, like, why do I feel like I'm missing out? Why is it? Is it because my exit strategy doesn't capture the big moves? Is it because I want to trade more often and I feel like I'm under the gun to up my income from trading so I can quit my job? What's the motivation going on there? Is it because all the headlines, like all the news is saying to buy gold and I didn't buy gold? Like, where is it coming from? And I think as traders, I feel like our job is to the pressure should really be coming from our system rules. And I know that seems kind of weird. Like, what do you mean? System system rules. But I think most of what we do, we should really strive to point back and say, okay, the reason I did that is because of my system rules. Okay, you can argue whether or not those are correct or not. And you might look at my system rules and go, dude, what are you doing? That's okay with me. Like, that's totally cool with me. As long as I can look at myself in the mirror and say, you know, I did the right thing. I took the right trade. You know, that like I followed the rules. That's really important to me. And remember, I don't know if you remember this, but remember at the London conference we did with Rima. Rima's a great trader, right? I think someone asked him during his presentation about trading big shadows, and they were saying, well, what if like it's almost a big shadow, but it doesn't quite, like, you know, it misses it by a few pips or whatever. He's like, dude, you know, you got to have the line somewhere, you know, and he's like, I won't take it. He was like, that's how firm he was. Like, I'm not going to, if it doesn't fit my characteristics, I'm just not going to take it. So, you know, I think that's actually a really good thing. And I know people kind of rail against that, but I think the problem is if you don't follow it in such a strict manner, you just run the risk of blurring all the lines, and that can lead to problems, especially in the beginning. I mean, with experience comes a little bit of discretion, but I really do think if I had two traders and I knew one of them was really conscientious and he was going to follow his rules, and the other one, like, she was a little bit more wild and a little bit crazy, I would bet on the more conscientious trader who's going to let trades go and have that FOMO, even though and miss out, knowing that he's gonna stick to the rules, you know, regardless throughout any sort of market situation. So to me, I think the pressure should come from your rules, I guess.
That's a great point. Yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
At least for myself, I think one of the issues was taking everything personally, like being wrong. And that was a reflection of me somehow. You know, I was wrong on that trade, so that's why I'm beating myself up about it. But I think once you can learn to forgive yourself for that and just kind of move on to the next one, like you said, follow your rules, then I think it becomes much easier, right?
Yeah, and you know, you guys, we can all learn a lot from the sports psychology stuff, right? Where the think about the greatest batters in baseball history, like 7 out of 10 times they sit down. You know what I mean? Like they, you know, it's only 3 out of 10 that they actually get on base or you know, hit the ball or whatever, right? Like that just doesn't happen. And it's the same thing. Like to use like an NFL, I like to follow NFL. So gridiron, we call it here in Australia, gridiron. The players who get burnt, like the cornerbacks, so they're the defensive players that get burnt, right? And so people are scoring touchdowns on it. They have this thing called a short memory, right? Like, I got to have a short memory, just go back to the next play. The only thing I can control is the next play, you know, and this mentality. And if you can sort of adopt that, maybe read some of those books about sports psychology, you can kind of get that mindset. Like, really, the only thing that matters to me is my next trade. If I screwed up the last trade, if I flubbed up the exit, if I ruined the entry, if I got my risk wrong or whatever, like there was a guy in the forum, he accidentally had a trade size that was 10 times bigger than he wanted. Right? So he fat fingered his trade. Like, it doesn't matter next time. It doesn't matter because it's a new slate. You start over, you just follow your rules again. Like, all that stuff that happened in the past, it really, but the problem is it's so hard, isn't it, as a human to let go of that?
Yeah, it is. It's really hard. And I don't know why we're just built like that or something, right? Like, some of us have that tendency to take it personally.
Yeah, and maybe it's adaptive. Like, maybe when we were in the jungle as hunter-gatherers, we saw grandma eat that green berry and she died. And so we're like, okay, got to stay away from the green berry, right? Yeah. I mean, maybe that's where it comes from. It's just like we're kind of fluid in our behaviors and adapting, and that's, you know, that might be like an adaptive, you know, trait in most life, but obviously not in trading. Obviously not in trading. It's really hard to make trading work if you're continually changing. Yeah,
good point. Yeah, short memory. Remember that.
Exactly. Yeah.
All right, thanks, Walter.
Yeah. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Hey, Walter, before we start this episode, how about we do the drawing for last month?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Let's do it. You got your randomizer on there? Is that what's going on?
Yeah, I think I'll put it in a certain order, and then you pick a
Okay.
number, and then we'll see who that is.
Okay.
So we got 26 comments and ratings from iTunes. So why don't you pick a number between 1 and 26?
17.
17.
Let's see what we get.
All right, cool. So I'm going to hop over to YouTube. And so Veronica Henderson, you are the winner for last month. And what are you giving away, Walter?
Well, we're going to send her a psychology book. How's that sound? Good?
Sounds good.
Yeah.
And that's from
Yeah.
you. And for me, Veronica, you get a 30-minute coaching call for free.
Cool.
So,
All right, so Veronica needs to send in her, and where will she send in her, or how will she send in her address or whatever? You know what I mean?
yeah, I'll try and contact her through YouTube, but Veronica, you
Okay.
can send in an email to hi@thinkprofit.io, and that will come to me, and I'll take care of you.
Sweet. Thanks, Veronica.
Yeah,
Cool.
thank you, Veronica. All right, cool. So let's get into this week's episode. I thought we could talk about feedback loops, like positive feedback loops, and creating rapid feedback loops to improve yourself faster.
Right. Okay, yeah. Well, so from my point of view, the lower the time frame you're trading, obviously, the faster you're getting feedback on your trade decisions. But beyond that, one of the tricky things about trading, I think, is getting stuck in the improvement idea because there's the element of chance, right? So because we can't really account for the random nature of our sequence of wins and losses, we can anticipate losing streaks, the worst type of losing streak, the typical losing streak, the biggest sort of win streak. We can use that you can use that to change the way that you manage risk and stuff like that if you want to get really sophisticated. But the other thing is there's a real temptation to ascribe responsibility for a given trade's outcome to elements of your system and then have to go back and, you know what I mean, rejig it. So that's one thing that's really critical. So the two takeaways from me would be, if you're trading lower time frame, the good thing is if you can do that, you will get almost instant feedback. Like if you're trading the 5-minute, 3-minute, 2-minute charts, you're going to get this feedback like really quickly, which is great. But there's a real temptation for us to tinker with things. You know, it's never like, you think about it. When the Wright brothers came up with the airplane, the one that they got off the ground, you know, lots of people around the world were trying to get off the ground.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And interesting fact, did you know that Harry Houdini, the magician, was the first guy to fly in Australia?
Yeah, I heard about that.
Yeah, he packed all this stuff and brought it down to Australia. But anyway, so that airplane that the Wright brothers created, like, we as a species, we don't like just go, we got it. We got an airplane. We're good to go. You know, like, we don't do that. We're always kind of like making it faster, better, more comfortable, more efficient. Like, that's how we're wired. Like, we're engineers by birth, really. And even you can watch even like little kids when they build a sandcastle or something, they're just, you know, they're always trying to figure out, okay, well, this collapsed, so I'll do that. You know, it's in our nature. And so I think for trading, that can be a bit of a slippery slope. And I'm always kind of guarding people against that, you know? So that's, but yeah, so your feedback should be, so you want to account for hindsight bias. So a good way to do that is with your journal. So in your journal, you can write down how well you think this trade is going to work out, like on a scale of 1 to 10 or 1 to 5. I think it's like a 5. This is brilliant. This is a great 1 to 5. This is a 5. This is a winner. And then you can go back and see if your intuition really works. And you can go back and when you exit your trades, go back and look at your exits. How well did you sit with your rules, or did you change things up? So that's a really good way to to incorporate that, especially if you're using higher time frames like I am, and your trades kind of take like, why did I take this trade again? Like, you need to have a good record, right?
Mhm.
What are your thoughts on using feedback or how feedback interacts with trading?
Yeah, that's a really good point you made about trying to tweak things. I think people buy courses or they have forums, and then they always want to tweak them. So that's a good point. I would add to that. I think it's important, especially if you're trading the higher time frames. Like you said, if you're trading a 5-minute, yeah, you get a lot of feedback, and you get instant feedback loops, basically, right? But if you have a higher time frame, figure out ways to create that same sort of repetition, but not doing it necessarily in the live market. So you could do Forex Tester, do some back testing, just practice your setups. You could look at your old journal entries and take a look at the winners versus the losers, and kind of focus on the losers and see what you're looking for. And then at the end of the week, you can also take a look at the trades that you may have missed. And, that, like you said, that could suffer from hindsight bias, but that can also give you repetitions that will allow you to improve faster.
Yeah. And yeah, that's great. And the screenshots too, like if you have a screenshot before, like at entry and a screenshot at exit, right?
Yeah.
And you can have a screenshot of what you consider to be like a perfect setup and compare that to the one that you're about to take. Make sure, like, am I saying like a similar thing here, or is this very different? Like for me, as a pattern trader, that became really important for me to make sure that I knew that I was trading the pattern and what I saw and not what I thought. The more you get into news and stuff, and I love FX Street. Like FX Street's awesome. They're awesome. But spending too much time on there and reading about what other people think about the markets, to me, that's something that, well, it's the same with any business newspaper or any business website, like any economic related thing. Like you can really get stuck, and to the point where you're blind to one side. Like you just buy only or sell only. Mm-hmm. So yeah, it's really tricky. Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
These are the sorts of people that don't make it as bank traders, right? They get fired. Yeah. They get fired when they make the mistake twice. They're done. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So, Hugh, we have a question from a trader, good friend in Ireland, but he's from South Africa. Really cool guy. And he has this issue of he will backtest his strategy, get his numbers, get everything set up, everything's right, everything looks good. But then what happens is during the week, he'll start taking trades that are not part of his strategy. So he'll see signals from other traders or another system that looks really good that he hasn't tested or whatever, and he'll take the trade. And so the question is, well, what do I do to get around this?
Yeah.
Like, how do I, this is an issue. It's really impulsive trading, right? Is what it is. So I have some thoughts on that. Do you want me to?
Yeah, sure. Go for it.
Okay. So there are a couple of things you can do. So this impulsivity, if you take a personality test, you would probably see that you're high on impulsiveness. So you need a good personality test, like the Ocean, which is the Big Five. If you just Google, I'll put a link for guys in the show notes so you guys can take it. But if you're high on impulsiveness, then that would be the kind of thing that would come up. And this is tricky because these are the sorts of people that don't make it as bank traders, right? They get fired. Yeah, they get fired when they make the mistake twice. They're done. So what I said to him, I said, you need a trading accountability partner. You need someone to talk to every week. On the weekend or whenever, and just go over your trades and let them go through everything and see why you took this and all that. Also, I like to use you only have a certain number of arrows to shoot. So this is really good for, actually scalpers use this quite well. This rule where they say actually I was talking to a trader this week. he has a 5-minute scalping system, and he only gets 2. What he's basically trying to make is, if he can make 1.5% a day, then that's his goal,
Yeah.
and he only gets 2 arrows a day. And that's kind of what I recommended to my friend. I said, look, just give yourself a certain number of arrows, whether it's 2 arrows, 3 arrows, whatever is a day. And after you shoot those 3 arrows, you have to come back the next day. And your training accountability partner on the weekend will say, okay, Lacey, how many did you do on Monday, Tuesday, Wednesday? Which system was this? Is it a system you actually tested, or was it some, Yahoo on the internet saying that the euro is going to go up or whatever? You know what I mean?
Yeah.
That sort of thing. Yeah. So that was a pretty, and then also I suggested I can put a link in for people interested in the show notes. For people who are interested in the subliminals, there are subliminals for impulsiveness. There's hypnosis tracks for that sort of thing. So if you're accountable to somebody, if you use the arrow technique, if you're working on your subconscious, those are the 3 things that I would recommend to do if this is the kind of situation you find yourself in. Yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Okay, cool. Yeah, I personally have a slightly different opinion on that one. I think the arrow technique is good. Like, I only allow myself 2 entries per trading idea, so that really limits the losses also. But I think also maybe one thing to consider is if maybe you feel too restricted by a system. Like, if you should be more of a discretionary trader who just reads price action as opposed to somebody who has a set system and only trades that system. That kind of goes against some logic and some things that I also teach, but I think there is that personality type that is more of the discretionary trader and wants to have more variety, and the system might be like restricting them. And I think that that's something that can be back tested, something that can be practiced every day, but it's less about having a set system. So I think that's maybe something to consider also if you find yourself straying away from the system that you're supposed to be trading. I've read a lot about like ADD personalities and how sometimes these types of people have to do a project, put it down, do the next project, and then come back to the other project. And it's just the variety. They need that variety. So that could be one of the things to explore if you find yourself not being able to follow a system.
Yes, I definitely agree. And another thing you might look at that occurred to me while you were explaining, I think, some people will say, hey, Walter, why don't you just, like you said, just read price action? Why don't you just trade price action? And my question for you is, have you tested it? And so what I would say is, what if you take all of your strategies that are tried and true and back test and all that, and you're trading those on your live account, and then at the same time in parallel you have a demo account? What you're doing is you're taking all of these, like, sort of reading the market or gut feel sort of thing, and have a race. Have a race. Who wins every quarter, every 6 months, every 9 months, whatever it is, and see, like, where do you fall out in terms of the demo account versus the live account, and see if it's actually better. Because I feel like we do run into hindsight bias with this sort of thing. We kind of trick ourselves into saying, oh no, this system's amazing, but it's easy to skip over, you know what I mean, when it doesn't work. So I agree. I definitely agree. I think that's definitely another way to do it. And if you have that data, though, and you can go, well, look, I've got this demo account, and I've actually been just fully trading discretionary price action reads on this one, and it's actually pretty good, then that might give you a reason to consider moving a small account into that, to that method or something like that.
Yeah,
for sure. Yeah.
All right. Thanks, Walter.
Cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
We could print the turtle rules in the Wall Street Journal, and a lot of people wouldn't even trade them.
Yeah, nobody would.
Why is that?
Yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter, talking about trading or changing trading systems. So you're at that point where you want to change your trading system. what should you consider?
If it makes any money. No, yeah. No, obviously, yeah. No, I think, well, the two big considerations are, I'd say three actually. Is it related to anything that you're doing right now? In other words, are you just kind of trading almost the same? Will you be taking almost the same trades with adding another trend following system, for example, right?
Yeah.
Number two is, are you going to be able to trade it depending on your lifestyle? Like, for example, if I'm trading the 6-hour charts where I live, I have a problem because I miss the 1 a.m. one, which is pretty darn good, right? That's a 1 a.m. candle that prints at 1 a.m. that I would miss. So unless I've got some sort of automation going, you know what I mean? Whereas the 8-hour charts is a little bit different because I can get all three in, right?
Yeah.
So, there's sort of considerations around lifestyle. Is it related, highly correlated with something you're already trading? Can you actually take the trades? Like, it's going to fit in your lifestyle. And the third thing is really, what's the goal? You know what I mean? Like, what are you trying to do? Are you is it variety? Like, other people, I think we talked about in another episode, ADHD, always kind of moving to a new thing, and it's exciting. But what are you trying to do here? I think it makes a lot of sense if you're trying to flatten your equity curve so that you have a strategy. Like, if you have a trend following system, and then the one you want to add is a reversion to the mean system. If that's what you're trying to do, that would make a lot of sense to me. Like, let's say you trade Donchian breakouts, right? You're a trend follower. And then you want to add a Bollinger Band strategy where you have a really wide Bollinger Band or whatever, like a 3 standard deviation Bollinger Band, and you wait for the market to make, double tops and double bottoms at the edge of the Bollinger Band or something like that. Like, that would make sense to me, because those two strategies are probably going to come out with a super low correlation, even if you're trading the same pairs and the same time frames. Yeah. So that's ridiculously good idea if you can make it work, right? Yeah. So yeah, that's what I would basically say. Just those three things. What about you? What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, I mean, similar thoughts. It has to match your lifestyle. I know early on, I would learn like New York Open trades, and I wasn't even awake for the New York Open, so it didn't make any sense. But that's what we do, right? Like, we jump on a system that we think looks good, or the trader said, "Oh, I made like 50% in a month or whatever," and then we just jump on it because we want to make that money or whatever. And then, like you said, what do you want your life to look like? Do you want to be trading for like 2 hours a day, or do you want to be day trading for, like 30 minutes or whatever on the New York Open or whatever? Kind of build your strategy selection around that instead of jumping on something that's most profitable or the most, has the most trades in a month or whatever. So that's what I would say.
Yeah. I mean, sometimes we don't actually consciously acknowledge what we're trying to get.
Yeah.
Like, when you're scrolling the internet looking for like the quote best system or whatever, like, you just have to be really aware of the fact that there are some really good strategies out there that work really well for some people, but you might not be able to trade it. Like, people, like, you know what I mean? Like, especially like the people listening to this, you are most likely to be the type of person that likes to figure things out. So you're not probably going to be the type of person that's going to sign over your account to a signals trader, right? Like with those social trading platforms or whatever, like where they hook up your account and just, like, you're the kind of person that wants to know how to trade. Like, that's why you're here, right? Yeah. Most likely. So it's hard for you to let go of that. What that means is, finding really great strategies is one thing, but, making sure that they fit with you is another thing. Because everyone, you just can't, you won't trade it unless it really matches up to what you believe. And that's why I think when they mentioned, I think it was Richard Dennis was saying about the turtle rules, he said, look, we could print the turtle rules. This is when they were a big secret. They're no longer a secret, but when they were a big secret, like, look, we could print the turtle rules in the Wall Street Journal and a lot of people wouldn't even trade them.
Yeah, nobody would.
Well, why is that? Yeah, exactly. Like, why is that? Well, it's because some people would look at that and go, that doesn't make any, like, that's not no way. That's not for me.
Yeah.
Look at all those false breakouts or whatever, that sort of thing.
Yeah.
Meanwhile, you have these turtles that learned it and went on to manage more money than Richard Dennis did.
Yeah.
So yeah, it's just funny to me that people think that it's like finding the hidden treasure, in a lot of ways it is, but it's not the system isn't the hidden treasure, right?
Yeah, exactly. Cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Well, if you get too down on it that you missed a trade, I think it also blinds you to another trade setup that could be happening on that same pair. And that really kind of brings down your psychology.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter. Today we're going to talk about patience. Johnny wrote in and he asked, I'm having trouble sticking with profitable trades. And he makes some profit on some, but I think he's really dealing with cutting his trades too short, or he feels like he's cutting his trades too short, his profits too short, and he's getting out a little too early. So what would you say to that, and what kind of tips would you have for him?
Yeah, well, that's a common one. So I'll tell you a story. So I had a friend who was a scalper, and he traded the 3-minute charts. And there were plenty of days, he would trade the New York Open. There were plenty of days when he would be kicking himself because he would literally like get in on the double top on the 3-minute charts of the day, or you know what I mean?
Yeah.
And I said, well, dude, that's not your strategy. Like, your strategy is to make 15 pips, 20 pips. Like, that's how he traded. Look, it's a missed opportunity. So one of the biggest things for trading, like I missed one last week. I had a Swissy trade all set up. I put everything in perfectly, my order and everything, and it didn't retrace enough. It was a sell limit. It didn't retrace enough to get me in the Swissy, and then I watched it go literally like the next 24 hours. And that's the hard thing, right, about trading.
Yeah.
I think you just need to decide who you're going to be, because if you're going to be the type of trader who bags those really big wins and that's what you're looking at on the chart and going, oh, wow, I missed that, then you need to build that into your strategy. Okay. So if you're a 3-minute chart trader and you want to occasionally get those big wins, maybe you take like 2/3 of your trade off when you hit 20 pip target, and then you trail the rest. And then, 1 out of every 8 or whatever, you'll get a nice big fat win, and that will bump up your average R. But trading is dealing with the missed opportunities, dealing with the emotions, dealing with, figuring out why you do certain things when you shouldn't, which is all the psychology of it, which is what we talk about here, right? So yeah, I mean, either build it in or just let it go. That's what I would say.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. I think a lot of that is also like, you don't think another good opportunity will come along again. If you just keep in mind that, okay, there's going to be another opportunity out there, there's going to be another chance to make some money, then you can just let this one go and, take whatever you make, 1R, 2R, whatever your plan was, and then not really obsess about missing this one trade.
It's so true, man. And that to follow up on that Swissy, the next couple days, I had a New Zealand yen trade, and I got in at like within like 2 or 3 pips of the high of the day and sold. And it, so one of them, it went to where I wanted to get in, the other one, it didn't, it didn't retrace enough. So that's exactly it. Like I think, and that's one of the things I learned from my friend who was doing the 3-minute scalping stuff. He would say that like all the time. He would go, oh, well, there's always going to be another trade. Like he was really good about that.
Yeah.
And I guess that's easier when you're trading the 3-minute charts.
Yeah, that's true. Yeah.
If you're trading the daily charts, and you get like 8 signals a month or whatever, and you're like, well,
Dude,
there will be another one. Yeah, could be another 2 weeks or so. Yeah, exactly.
Yeah, that's true. And I think it also blinds you to, well, if you get too down on it that you missed a trade, I think it also blinds you to another trade setup that could be happening on that same pair. and that really kind of brings down your psychology and your profitability too, right?
You're right. Yeah, that's a great point. And it's also why, when you think about it, I learned this from an old trader. He was saying that, you know, when you're in a trade and you're like riding it out and then you finally get completely out of the trade, if you think about it, why did you get out of that trade? Okay, so if you bought, for example, you bought the pound and it went up, and then you got your signals and they all got you out of the trade, why wouldn't you just go short? You know what I mean? Is there a difference between an exit signal and an entry signal? For some systems, there isn't. So he would say that the reason why traders have a hard time getting right back in is because they've spent all their psychological energy on the trade and they kind of want to rest. And I totally identify with that. And I was like, wow, that makes a lot of sense. And I think that's kind of what you're getting at. You know what I mean? Like, it's kind of part of that thing. Yeah.
Yeah. You're tired and you just want to take a break.
Yeah. You don't want to deal. You just want to deal.
Yeah.
Exactly. Yeah.
Yeah. That's a good point. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I've heard about a guy, I don't know if it's true, I don't know the guy, but I heard about a guy who was doing kind of a similar thing where you would have like a 1 pip stop and he stopped out all the time. And then he would occasionally like a 500 pip win where he'd make 500 R or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter, I know you have some experience talking to Darren with this. I want to talk about random entries. What are your thoughts on the psychology behind random entries, just entering anywhere in the market, putting in a stop loss or whatever, and a take profit and just letting it rip?
Okay, so got two main thoughts. So my first thought is that this is an exercise I encourage people to do, like people listening to this or watching this podcast. I would say try it out because it's a really good way to highlight the importance of your exit rules, which a lot of people don't focus on, number one. Number two, that's really important. It's a great lesson to do that. And the other thing is, it's interesting that like you would think really sort of data-driven, logical traders who are like programmers and have that sort of background, it's interesting to me that many of them won't apply a strategy if it doesn't make sense. So this kind of speaks to what you're saying. Like there's software out there that you can get. You feed all your data into it, and it will come out with a strategy that will say, hey, every day at 3:15 p.m., you need to buy the euro against the dollar or something like that. You know, some sort of, data-driven rule. And a lot of traders, they'll go, why? That doesn't make sense. And they won't trade it, even though the data is looking at them in the face and it says, this is a profitable strategy. You know what I mean? So I think that like you kind of have to decide as a trader, are you going to like be hands off and let the data tell you what to do? In this instance, what you're talking about is, what if you had a strategy where it was random entry and you just had a really kind of cool trailing exit that took advantage of the occasions when you were right? And so would you trade that? For most traders, the answer is no. And it's the same reason why a lot of traders want to be discretionary and want to have kind of have their hands dirty when they enter trades. And I'm just as guilty as anyone. So I think it kind of gets at the core, this idea of, why do you need to have a logical entry rules? It kind of gets at the core of what you believe as a trader. Is it that you are making the trade, like you're making this happen? Or is it that there's just randomness in the market? Occasionally these things pop up, and that's why the buying the euro at 3:15 every day sort of thing works. You know what I mean?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So it really is up to you. And most traders can't do that. Most traders won't be able to take random entries. It's a very unusual thing that you'll run into somebody that can do that. I've met a few, that are like usually like programmer types, and they're like, yeah, this is what it shows, this is what we find, and this is what I'm going to do. And so you can do it. You can definitely do it. I mean, all the tools are there now. This wasn't the case when I started doing neural networks in like 2004, 2005. I was using neural network software that wasn't trading related really. And so it was kind of clunky, but now today, like there's all these really cool softwares that you guys can use. Maybe I'll put some links in the show notes for people interested. And it literally will spit out a strategy and say, well, based on your data, this would work. Now, that doesn't mean it's going to be profitable in the future or whatever. That's like the first step for a lot of these people who want to use machine learning and these sort of advanced, in vogue algorithms that, are kind of taking over the world. Yeah.
Yeah. No, that's interesting you mentioned that, because I coded up a simple EA. It was just taking a 20 pip stop loss and a 200 pip take profit. And I just coded up one side, just say buy all the time or sell all the time. The system was profitable. I mean, it was like marginal, but you just let it rip, and it made money. And I never went back to it because like you said, I don't know if I could really get my head around trading that with real money, but maybe at some point I'll revisit it, because just a simple idea like that, I'm sure could be optimized a little bit more.
Yeah. Like I can see the wheels turning in people's heads who are listening to you say that about your EA. Like, yeah. Well, what if I used, like moving averages or MACD to kind of give me a direction, and then I would just turn it on, like I can see people definitely doing that. Yeah. And it makes sense. I've heard about a guy, I don't know if it's true. I don't know the guy, but I heard about a guy who was doing kind of a similar thing where you would have like a 1 pip stop, and he stopped out all the time. And then he would occasionally like a 500 pip win where he'd make 500 R or whatever. Yeah, I don't know if that's true. I do know there is a guy though that trades 20 to 1, and he has an 8% win rate. Matthew in London. And so that's kind of cool that there are people doing it, I think. And he said what he was saying was that I think there's logic behind it. I don't think it's random entry. He didn't really tell me. It was interesting. He was saying he thought he had to have it automated because he wouldn't, like psychologically, he wouldn't be able to take 92% losses, like keep entering.
I think that was the biggest issue for me. Like there were so many losses in a row. And like in live trading, I don't know if I could handle that, but
of course.
Yeah, if you automate it, might be all right.
Yeah, exactly.
Cool. Yeah. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
It's obvious.
Yeah. It's like trying to watch a YouTube video on how to ride a bike for the first time, and then you go ride the bike and you fall on your ass, right?
Yeah. That's so funny you said
you're not gonna have confidence.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter, here's a classic one. Fear of entering a trade. Some people are afraid to pull the trigger. What are some of the psychological things you see behind that and some fixes?
Well, it's kind of like, I think about sports, right? And it's specifically like coaches. So like I like to watch NFL, and what's interesting in gridiron, as they call it here in Australia, gridiron, it sounds so much more manly, gridiron, but when the coaches are always talking about in NFL about how, being prepared. And even the players will talk about like when they move from one team to another, like, wow, things are so different here. Mm-hmm. Everything's so accounted for and they've considered every scenario. And I think that's kind of in a way what coaches are meant to do, is to kind of provide this framework for the players. So no matter what happens, they know what to do, sort of thing. In trading, it's the same way, because if you're not prepared, that's when you feel like uneasy. Right. Mm-hmm. So you tell me, like, if you were to, I'll ask, if you were to take a strategy and strategy A, you've back tested, you've taken 900 trades in it, in the strategy and you know the numbers, and then you go, okay, I'm gonna go live today, versus you have a strategy where you kind of was just messing around with something the last couple hours, looks pretty good on the charts, let's go for it. You know what I mean? Which one are you going to stick with after you have 9 losing trades in a row, right? It's obvious.
Yeah. It's like trying to watch a YouTube video on how to ride a bike for the first time, and then you go ride the bike and you fall on your ass, right?
Yeah. That's so funny you said
you're not gonna
that.
have confidence.
Of course. That's exactly what I did last weekend with my daughter. Actually, we were looking at YouTube on how to roller skate.
Okay.
And I'm like, dude, I'm like, because I didn't know how to teach her. I just fell on my butt as a kid, right? Like everyone.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And she's really keen on the roller, and she's been talking about it constantly. So I'm like, okay, we're gonna go to like an empty parking structure where there's no cars or anything, a nice smooth pavement. And she was having trouble, so I said, well, let's YouTube it. So we YouTubed it, and we got a couple of tips. But you're right, we were still falling all over the place. Like it was still terrible. And of course, that's the same thing with trading, right? Like the goal really, I think, as a trader, it's like in sports or in battle. I kind of hate the battle analogies because it's so different, but real life is different to like, going into war or something. It's not, I know people say that with trading and business and stuff, but it's not to me. It's totally different. But anyway, so if you're super prepared, you've got your numbers, you've got that experience, you've traded in sideways markets, up markets, down markets, all that stuff, you are actually going to have a bit more stamina than that trader who just kind of pulled that stuff out of his behind last afternoon, in the last afternoon. So that's under your control. It's not like a personality dimension where you say, like, some people are very conscientious and everything has to have its place, and other people are open-minded and can experience new things, and other people are closed-minded and want to have a routine. And, it's not like that. It's a thing that's up to you. Like you decide how experienced are you going to be in your strategy before you risk real money, and how much do you know about it? Like, do you know what the probability is of 9 losing trades in a row? Do you know what that is for your strategy? Like, if you don't know that, you have a 29% chance of having 9 losing trades in a row, then you might think that something's broken, right? Mm-hmm. So there's a lot that goes into being prepared. And to me, that's why you would be fearful. So the reason why you have like fear of taking a new trade, even though you have a solid signal, is because you're afraid of what's going to happen. Why are you afraid of what's going to happen? Well, because of what happened in the past, right? Yeah. Well, I had a bunch of losers in the past. So the question is, do you know this is normal based on your preparation? Or do you just think you're not prepared enough, so you don't know? You think, well, this is it. It's broken. Mm-hmm. So
I think it's also worth mentioning, sometimes when you go live with it, maybe you're taking too big of a position size. And that's, if you just scaled it back a little bit, sure, you won't make as much, but then you won't actually take the signals, right?
Yeah, and that's how our friend Alex in the UK, that's how he got really good at trading, was he just risked a really, really, really tiny amount. He's like, dude, I had perfect execution. Like, he never had any problems. Like he literally trained himself to execute his strategy flawlessly because he's like, I'm risking 1/4%. What can possibly go wrong,
Mm-hmm. Yeah.
So, yeah.
That's a good point.
Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A really good way is self-talk. Like when we all talk to ourselves, or I hope we all do. I hope I'm not the only one. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about different methods of rewiring your brain for success? What have you tried? What have you seen work? Stuff like that.
Yeah, it's a great question. I know you've tried quite a few things.
I'd be interested to hear. It's funny, isn't it? Like there's sort of two competing ways to look at it when you talk about this. One would be like set a map for me to do what I want to do. Like it's sort of the like what do I want, right? What do I want to achieve? What am I trying to do? Where am I trying to go? Versus the other side of it, which is what am I trying to get rid of? You know what I mean? So people get it confused. Like I believe that people look at your subconscious and they say things like, oh, your subconscious is sabotaging you or something like that, right? But that's not really how I look at it. It's like if you're a programmer, you can create any program you want. That program could be like a virus, to hack into, and steal people's passwords or whatever virus, or shut down your system and stuff like that. Or you can create a program that kind of sets you up on the path, right? And so the way that you can do that, there's lots of different ways. So hypnosis, right, which I'm a big believer in, especially for habits. Like if you have a habit of, let's take what I did was I would move my stop. So if I had 150 pips of risk on a daily chart trade and I saw that it went 120 pips toward my stop, I would move it because the trade's right. I just need to give it a little bit more room, I'd say that.
Yeah.
And that was my big habit, right? So, hypnosis works really good for those sorts of things, like stop smoking, stop overeating, stop moving your stop loss when you shouldn't, like things like that. I've also used what's called the Neo Neurophone, and I can put a link in there. Unfortunately, for the show notes, you guys can check it out. Unfortunately, I do believe that the Neo Neurophone is no longer available. However, you might be able to find used ones, and you might be able to find an older version of it, which is a little bit different, but it basically does the same thing. It's an amazing device by a really cool inventor who died just recently, I think just last year. Yeah, January. Yeah. So anyway, so that's another thing you can use to program your mind. You can use subliminals, right? You can listen to those when you're back testing, when you're around the house and you're sleeping at night, which is what I like to do. Sometimes I'll turn on during the day, but usually I just have them run at night. There's all kinds of things. There's like tapping, right? That people have used. There's also a thing where you kind of like test your beliefs with your body, and you sort of reprogram your body or reprogram your subconscious through that, which is really kind of interesting. I think for most traders and for most people, really, the key is to get to the deeper level. When you realize like I have an issue, or I'm not going where I want to go. So those two things. So I'm trying to get rid of an issue, or I'm trying to map out progress to where I want to go. Once you decide which, what you're trying to remove or add, then I think the important thing for you to do as a person and as a trader is to really sort of zoom in on the deeper thing, right? And so that could be like dream analysis that you can do that. And so what you're trying to figure out is, why is it that my subconscious program is setting me up for this? Why is that? What's going on? And then you can reprogram it, right? I've never done it, but people who talk about, I know we're getting into the sort of esoteric stuff here, but that's cool. And the esoteric stuff is cool. Like people who do like past lives therapy, and they'll talk about things. I've tried to do it, but I didn't really I should have gone to a hypnotherapist or someone who specializes in that. I've actually just listened to CDs and stuff like that do it. And I always just fall asleep. So and I haven't really made much progress there. I would like to though. But yeah, so I think the real key to me, there's a couple of things. Are you trying to remove something, or are you trying to get something? Obviously, we want to do both, right? We want to figure out what's the issue, and then how do I map out where I want to go? And then the other thing is, it's not just writing down affirmations or like staring in the mirror and saying things. Like I think that stuff is great. Like at a certain point, you're going to hit a wall, and I don't think it's going to work. And you're going to have to really somehow reprogram your subconscious. And there are lots of ways to do that. I've mentioned a whole bunch right now, but to me, that's the key. And I know, there's lots of different ways. Like I said, you can hypnotherapy, lots of different ways. And I know you've done some interesting ones as well that people might be interested in hearing about.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, sure. And I think to take a step back, it's also useful to understand that you can reprogram your brain, right? This idea of neuroplasticity. And some people think, oh, this is just how I am, and that's how I'm going to be for the rest of my life. And that's simply not true. So I think the first thing you have to understand is that you can change some of these really deeply ingrained habits. and it might take a while to get there. But if you keep trying things, I think you can figure it out one way or the other.
Absolutely. And what you just said is sorry,
No.
but what you just said is really important, Hugh. And I want listeners to get this. What Hugh just said, that example that you gave, you said, I've always been this way or whatever. Like I can't change. I've always been this way. That's a program in itself. Like people need to realize that, right?
Mm-hmm.
That is a program. So you are running on that software. When you catch yourself, a really good way is self-talk. Like when we all talk to ourselves, or I hope we all do. I hope I'm not the only one. You can catch your self-programs. They kind of bubble up a bit in those self-talk moments. That's a really good way to figure out, okay, this is what software I'm running on, sort of thing, right? So so I think I just want to highlight for everyone listening or watching or whatever, that what Hugh just said, oh, you can't change your brain or whatever. Oh, I've always done this with. You're right. All the research is so clear. It is so clear. Like, I don't want to get too personal, but my wife works with people with brain injuries, right? Like really severe stuff. And it's amazing how you can rewire the brain so that it goes around those areas that are broken, or, people have strokes and that part goes dead. Or there's a study about the nuns or whatever. They lived like in a monastery and they had like the brains, when they scanned their brains, a lot of them had Alzheimer-like brains. Like they were indistinguishable from Alzheimer's with all the plaque and stuff, and yet they had no symptoms. And they put it out to the fact that they were like, meditating, praying a lot, and doing lots of reading. And what happened was the neurons grew around the plaque areas. So they were actually normal in appearance and normal in behavior, even though their brains should say that they'd be, deep in the throes of Alzheimer's. So I just want to, point that out, that what Hugh is saying is really important.
Yeah. And I've seen that too. I've read about it in some other books where people were missing part of their brains and they were functioning pretty normally. So yeah, it's cool. For the stuff I tried some of the hypnosis stuff. I've tried, what else? I've tried energy healing. That was actually really, really useful. To your point where you said that there's a deeper cause for a lot of these problems, I think some of this stuff, it can be solved by just some affirmations and I'm good enough, I'm smart enough, people like me, whatever. But like also you have to look at what is the cause. And I found that for most people, the cause is really trauma, some sort of trauma. That could be your childhood, that could be something, maybe bad marriage, whatever it is, like, or past lives, like you mentioned, if you believe in that kind of thing. If you can pinpoint that trauma and really address that, I believe that's the key to starting to heal and starting to get past some of these roadblocks that you're trying to solve.
Yeah, absolutely. That's the key, is that, like, what's going on here? Okay. Mm-hmm. What's going on? What's happening? How do I dig into it, find out, where this comes from, trauma or whatever, like there's some root cause to it. And then now that we've fished it out, now, like, what's the way forward? I think those three things, like, and not everyone wants energy healing. Not everyone wants hypnosis. Like there's certain things that won't, you're not going to jive with you. But that's a good list to start with right there. The neurophone that I mentioned, I didn't really mention much about it. What that kind of does is that sort of is a way to, like, in a way, it's like hypnosis. It's a way to put data into your head, right? So there's anecdotes about people learning how to speak languages by using the neurophone. So you would plug in like the way it works, you put these things on your head, right? Like almost looks like like an EEG or whatever. Like you put these little sticky tabby things on your head, and then you could plug into it, like, let's say you want to learn Romanian, right? You would plug in like a Romanian MP3 class, like, and then it actually goes into your head. It physically, and if you're quiet enough, sometimes you can hear it. It depends on the person. Sometimes you can't hear it, but it's actually going in there. And so that's how you would, what I'm saying? Like you could use a hypnosis track, or you could use subliminals, or you could write your own affirmations and record them and put that in with the neurophone. So, and your brain's a little bit weird when it's on the it's sort of activated. So, yeah. Some people, they feel like they get shocked. Like I've given it to people and they're like, they like, get that off me, so everyone has kind of a different reaction, but,
I bought one on your recommendation, and I got the older one because you can get that one brand new. And I've been using it, and wow, like when you put it on, like I'm like in the zone, just really focused because of the alpha state, right, that it puts you in. And,
it's awesome.
Yeah, so I would recommend giving it a try if people are interested.
Yeah, we'll put it in the show notes so you guys can check it out. Cool.
Yeah. Okay, cool. I think that's a good list for people to start with. So thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
just being curious about the losers. Why did it lose? Was there something I could have done better?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, there's this, I don't know if you want to call it a misconception in trading, but some people believe that you have to beat your emotions in order to succeed in trading. So what do you think about that?
I don't necessarily agree with that. I think what's happening is people are confusing emotions with breaking your rules and trading on the basis of your emotions. So I think that's true. So there's the idea that you should take emotions out of trading. I don't agree with that, because I think it's nice to, you can feel good when when things are going well, and it's okay to feel bad when things aren't going well. That's part of life, man. I mean, that's, it's okay to be fearful when you're in a situation. I remember my wife was telling me she went into the jungle in, I can't remember if it was Uganda or somewhere. Anyway, she was on this grand tour of Africa, and they were going through the forest or whatever, and then they come up on the silverback gorilla, right?
Ooh, okay.
And the silverback gorilla was standing right in front of him. He's like, oh, and he's like bumping his chest, and all this stuff, and like, showing that this is his territory and kind of back off, you humans. And she said, it was amazing. Like she never, like whenever you hear her tell the stories, and she tells it, right? And I've heard it many times, but she never says, I was scared that this gorilla was going to do something. Although I'm sure that everyone there felt a level of fear. Maybe the tour guide didn't feel the level of fear that everyone else. You know what I mean? And so that's kind of a thing that stuck with me. There was a famous trial attorney named Jerry Spence. He's written several books. I'll put them in the show notes for people. What he was talking about, and his books are more about how he never lost a trial. He was a criminal defense attorney, and he never lost a trial, right? And he talks about, in the book, he talks about fear and how when we have fear, we know we're alive. Like that's such a core thing of being alive, is feeling fear. And what is fear? Fear is just like you're not sure what's going to happen. You're standing in front of this gorilla, and he's thumping his chest, and he's trying to look all tough and stuff. And you kind of just stumbled on this, or you're, like I can imagine the same thing would happen if you stumble upon a bear in the woods, or for me, if I'm surfing and the waves kind of get bigger than I'm comfortable with, or whatever. Like there's always those things, and in trading, it's like, wow, I've had 5 losing trades this week. Am I really going to take another one? And that's all part of being alive. So I think you need to disentangle whether or not your emotions are causing you to stop trading your rules, versus are you just feeling emotions because of the normal ups and downs of your equity curve? So that's, to me, that's how I see it. So I don't know. What do you think about that?
Yeah, no, I totally agree. I don't think you can actually totally remove emotions from trading. Like even if you have an automated system, you're going to, have your ups and downs because the system's working, system's not working. And I think like you say, it's part of being human. So you might as well enjoy the good part of it with the bad, as long as you don't swing too far in one direction, right? Yeah, I think that you need to maybe control them a little bit more, but not necessarily eliminate them altogether, because that's impossible.
Yeah, that's kind of the default. It's sort of like the 2% rule, where they say always risk 2%. Well, some strategies are risk 2%. You're going to go broke, right?
Yeah.
Like Matthew in London, he has an 8% win rate. If he risks 2%, he will go broke. He will lose all of his money. There's no doubt, because he's beyond the optimal F point, that anyway. So yeah, so I'm with you. I think it's kind of like a mind trick too. If traders listening to this, if you get to that point where you can be like, especially if you have a low win rate strategy, if you can kind of trick yourself into thinking after you've had lots of losing trades in a row, hey, this is really exciting. Like, I know I'm fearful, but that's because that's what I get paid for as a trader. I get paid to take risks where other people won't. There are people who are punching in every day. They're doing their time, and they're getting the same paycheck every week or every month or whatever it is, every fortnight, as they say here in Australia, every 2 weeks, right? Yeah. So, and you're not doing that. You're a trader. Maybe you have another job on the side or whatever, but that's cool. But what's cool about what you're doing is you're embracing fear. And you're saying, look, I understand. I get paid for this excitement, for this fear. You know what I mean? I don't know what's going to happen. I've had 5 losing trades in a row. I have a 37% win rate. Chances are I'm going to have another loss, right? You know I have a positive expectancy, and this is what I get paid for, this moment. And then pull the trigger, man. You know what I mean? Like, it's so cool. Like, one of my favorite quotes is, the Larry Williams story about how he won that trading contest.
Yeah.
And he was saying he was in a $900,000 drawdown when he won. Like, I think in November, December, at the end of the year, he actually lost. He would have won, but his record stands. You guys can look it up. I can link it up to the show notes if you guys want to check it out. But his record still stands. And I think his daughter has the second best result ever, which is pretty funny. Yeah. And she's an actress. Like, she's not even a trader, right? So Michelle Williams, yeah. So he was saying, hey, man, I'm a trader. He's like, look, I knew by August that I had wrapped up the contest. Like, he knew, or even by June, he knew that he was going to win it, right? Mm-hmm. And he could just kick back, not take any more trades. He's like, hey, man, I'm a trader. I'm going to keep taking my signals. You know what I mean? Like, it's awesome. Like, I think it's really cool that he's decided, this is what I'm going to do, because even though I could just say, oh, there, I won, game over, I kept going. And when he kept going, it even put him down from 1.9 million to 1.1 million. He lost that 900 grand or whatever it was the last month or month and a half, because he decided, hey, I'm going to trade. If I get a signal, I take it,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
That's really, I think, if you can kind of mind trick yourself into remembering that you get paid to take risk, it's a different story,
Yeah, no, totally. The mind trick that I started using that helped a lot was just being curious about the losers. Why did it lose? Was there something I could have done better? And just being able to dig into that without any judgment or like fear of the loss or any regret of the loss either. And that really helped me out. But are there any other mind tricks that you know of that have helped you or other traders?
Well, the biggest one that I really like to promote for people is the execution journal. And I think for me, that was a game changer. Like the idea, and I'll explain what it is. So most traders, what we do is we go, oh, you got to keep good records. Oh, you got to, pull the emotions out or whatever. Like they say things like that. Or if I automate it, then the emotions are out. And like you said, that's all BS, right? Like you still turn on the robot. You still turn off the robot. Yeah. You still see drawdowns from the robot. You might be able to shirk the responsibility and say it's not me anymore, it's the robot that's doing it, but it's still, you can still intervene and say, holy crap, the markets are crazy, I'm going to turn off this robot. So automating trading does not take the emotions out. Yeah. You still have to babysit your stuff, right? But the other thing is this execution journal for me was the biggest game changer. So instead of focusing on, which system did I take, what was the signal, when did I take it, how much did I make, where was my stop, what was the R return and all that, and that's all great. And writing down, I felt really bad about taking the signal. It didn't look really good to me, but technically it was, so I took it. That sort of stuff is great, However, the best thing I've been able to do for my trading is have an execution journal where I actually rate my entry on a scale of 1 to 5 and rate my exit. What this does is it shifts my focus from why did I lose to am I following my strategy? And it's really weird to do that and to start rewarding yourself for having 7 losing trades in a row. But if you've performed your system according to its rules and you're getting 4.5, 5 out of 5 stars because you're doing a really good job, then you should be happy. And the only reason why you have drawdowns, the only reason why you have losing streaks, provided that your strategy actually makes money, of course, and presumably we tested that, we have a pretty good idea, we have a handle on that, it's because of bad luck. So all of a sudden you're letting go and you're saying, bad luck has given me a losing streak. I can see I'm executing according to my plan. So, you know what I mean? It's a different way to look at trading instead of, because it's so easy to change things up because you have a losing streak and go, oh, well, I see here if I would have added the stochastic, then I would have, missed out on, you know what I mean? Like that's how you go down the slippery slope, man. Like that's terrible, right? So yeah.
Yeah, it's all about focusing on the process, right? Not necessarily the result, but the process.
That's a great way of putting it. Yeah, that's exactly right. Yeah, exactly what you said. Focus on the process. Focus on am I executing, not am I losing money, am I making money? hey man, look, one of the worst things that can happen to you as a trader is for you to do really well on the back of bad habits. That happened to me. My first week trading, right? My friend convinced me to move in with him, quit my job, take my trading stake. We put it in our account. Second night, we tripled my money, our account, right?
Oh, yeah.
And that was Tuesday or whatever. It was Tuesday. Yeah, Tuesday. And then by Friday, it was gone. Like, you know what I mean? Like,
Yeah.
like that was my story. That was my introduction to Forex trading in 2000. Like, that was it. You know,
Mhm.
20 years ago, I got into the game and it was all like bad habits, man, and not knowing what the heck I was doing. And so that was probably one of the worst things that could happen to me, because I saw that you could make money doing it, but I didn't know how. Because I didn't, it was just dumb luck. Like, it was stupid. So execution is key. Focus on, like you say, it's really all about, are you doing the right things? Not the result. It's process. Like they say, keep chopping wood, that's the key.
Yeah. Cool. Awesome. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If that 7-year-old can tell you that that's a trending chart. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, something I learned early on was that the crowd is usually wrong. There are a lot of books about this, and I think I was kind of wired to do that naturally. I'm kind of like go against the crowd or whatever. But I want to hear your thoughts on mass psychology of crowds, and how you use that in trading.
Yeah, so I think you're right, by the way, that like your approach, I think a lot of people watching this, a lot of traders, I think, are contrarian by nature, and they're drawn to trading that way.
Yeah.
I do think, however, there are certain asset classes. So if you're a futures trader, if you're a currency trader, if you trade CFDs, which are illegal in the US, but like in England or Australia or New Zealand or whatever, you can trade them, you probably have some contrarian bent, probably. If you are investing in real estate, if you're investing in shares or stocks, there's a chance that you're the other side, that you're more of a social proof. So everyone should look up social proof. That's the cognitive bias you want to pay attention to when it comes to this. I saw somebody the other day, I think it was on Twitter, they posted a thing, and I don't know who she was. I think she was like some actress or something, or reality star. I literally don't know who she was, but apparently she was famous. And it was a video, this guy, she was talking about how like stocks were going to rally and stuff. Yeah. And she was clearly not, like, that's not her game, right? Yeah. And the guy was like, that's it. S&P 500 has reached the top because so-and-so has claimed that it's going to go, further or whatever. And so he was making the contrarian point, which is what I like to do. And so one of the things you can do, and sometimes people fight me on this, but I would encourage you to look at the data. The easiest way to look at the data is to get an account at Awanda. We can put the link in the show notes. And at Awanda, you will have access to their tools. They have really cool tools there. And you can map out the open position ratio, which is just a fancy way of saying the percentage of traders long or short a currency pair. And you can map that against the actual price. And you can go back at least a year, probably even further. I think you can zoom out further. Anyway, and what you will notice is a very interesting phenomenon, which is as more and more traders sell the Euro USD, for example, selling euros, buying USD, as more and more traders as a percentage, like when that gets really high, like 70, 75, 80%, what you will notice is that the Euro USD will tend to go up. Don't shoot me for it. I'm just the messenger, right? I'm just telling you, this is a very valuable tool. Is it foolproof? No. Is it always that case? No. All I'm saying is that if you have two things, if you have a chart that you look at and it looks like it's trending, and you say, and you can bring over your 7-year-old and point to the chart and say, hey, put it on line chart. Is it going mostly up or mostly down, or is it just going up and down, up and down?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
If that 7-year-old can tell you that that's a trending chart and the open position ratios are flipped, so if the Euro USD is going up, making higher highs, higher lows, and the open position ratio shows you that 70, 75, 80% of the traders are selling the Euro USD, that's a pretty strong trend.
Mm-hmm.
And I would count on that trend breaking through resistance and to keep going higher. And of course, the opposite is true as well. Now, so what you want to do is find a good broker that has these. The best one I found is IG Markets. They have a big chunk of the retail market. These are retail traders. They're not funds. They're not pros. They're the people that we're trying to take money from, right? Our fellow retail traders, right? Those are the traders that you'll see at Awanda, Saxo Bank, IG Markets. There's lots of them out there. I think even Daily FX or certain news websites. I don't know if FX Street does it. I don't think it's retail traders. I think it's their experts or something. They're buy. So that's what I like to use. And so that's a contrarian point of view. We don't move the market. We're very small. Retail traders are a very small percentage of the currency markets, and our broker is really participating in the real market, and we're sort of trading an image of it. I think using the crowd as a gauge for the strength of trend can be very valuable. And so that's one way to do it. Just look at the open position ratios and look up social proof, look up all the cognitive biases, see how those are. And social proof is the one that really, which is basically this idea, if it works for everyone else, it should work for me. If my uncle keeps flipping double wide trailers in Alabama, I can flip double wide trailers in Alabama or whatever, my friend keeps buying Apple and Tesla stock, I should do the same thing sort of thing. That's social proof. And so that's what makes a trend happen, and that's what makes a bubble happen, and that's what sooner or later there's no more there's no more fuel, right? If everyone's flipping double wide trailers in Alabama, pretty soon there's no one left, right? There's no more buyers, everyone's so you just have to be aware of that. And so that's one thing I would encourage you to look at. It's an empirical question, which is, do open position ratios tend to be inversely correlated with the trend, the movement of the market? And the answer is a clear yes. And like I said, don't take my word for it. Have a look yourself. So, yeah.
I've tried looking at the commitment of traders in the futures market. That really didn't work for me. Have you looked at that?
Yeah, that's interesting. I was actually hoping you'd bring that up. For me, the problem is it didn't come out. I think it comes out weekly.
Yeah.
Last I checked, it was weekly. So what Hugh's talking about is different. That's the pros, right? And that's futures. We're in spot retail Forex. It's a little bit of a different market, right? But I think that could be useful if you were long-term position trading, maybe weekly charts or something, or maybe some sort of daily. I haven't been able to make that work either. I have to admit, though, I didn't have high hopes for it because it didn't give me enough data. If I go to IG Markets, every 10 minutes, they're going to refresh the open position ratios. If I go to Awanda, every 15 minutes, they're going to refresh the data. So it's a little bit better data, you know what I mean?
Yeah. Otherwise, the COT is just too lagging.
Yeah, exactly. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah. They went on to selling, multi-level marketing vitamins or whatever, you know what I mean? I don't know. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you do to cultivate mental toughness, which is necessary for trading.
Yeah, I totally. So I call it resilience. There's a guy named Martin Seligman. I'll put the links in below. He's known as being one of the modern day fathers, not the original creator of positive psychology, but he talks a lot about resilience. I saw him at a talk. He came out here to Sydney a couple years ago. And you kind of like can ask him a question if you bring your book up and have him sign it. He's got tons of books, but he talks about resilience. So what I would say is what I would equate to mental toughness is resilience. And I think it's probably the reason why some traders keep going. If you keep going long enough, you're eventually going to figure it out. It's not that trading is difficult. It's just the actual mechanics of profitable trading aren't difficult. It's actually all the stuff around it, all the psychology and all the BS around
nature,
it that makes
basically.
Yeah. Exactly. Yeah. It's against your nature. Exactly right. We have all these cognitive biases working against us. So resilience, I think, is key. And so if you get into resilience, you can read Martin Seligman. There's other people who've written a lot about this. A big one is I'll give you an example. So what they talk about in the resilience research is catastrophic thinking. So I've had 2 weeks of losing trades. I'm down 9% of my account. And so I start to wonder, what's going on? Is my system broken? Have the markets changed? Am I going to lose all of my money? This is never going to work for me. How am I going to be able to pay my mortgage or whatever? That's catastrophic thinking. It's just taking a little tiny thing and blowing it up out of proportion. Because the reality is, if I shift my focus and say, hang on, 2 weeks of losing trades, how many trades is that? 6. Okay. What are the probabilities that I'm going to have 6 losing trades according to my rule? Oh, well, it's actually 85%. Okay, so actually what I'm talking about here is something that's actually quite likely to happen, and that it's happened is not a big deal because it's predicted given the parameters of my system. So, you're just trying to shift the way of seeing it, and instead of allowing yourself to snowball and get really hyper negative. That's catastrophic thinking. So that's one tool, right, for the resilience. The trader who wants to be resilient is to shift that catastrophic thinking into another. How can I state what I've just said? I've had 2 losing weeks. How can I state that in another way? Instead of saying I've had 2 losing weeks, I'm going to lose all my money. I'm never going to make it as a trader. I'm never going to be able to pay the mortgage or whatever. Instead, I can say, wait a minute. I've had 6 losing trades. Is that normal? And the answer is quite logically, yes, it is normal because I know the probability of that happening. So for me, that's how I view mental toughness, is sort of building up your resilience so that you're able to withstand those terrible moments that we're presented with as traders. That's really what we get paid for. Other people don't want to deal with these sorts of things, and we have to deal with them face on. So that's what we have to do. Yeah.
Mm-hmm. Yeah, for sure. Would you say that people who faced some sort of breakdown like that, like blowing out an account or several accounts, develop that quicker than people who are more risk averse and don't take a lot of risk or blow out an account early on? Do you think that they have less toughness or resilience just because of that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
That's a good question. I don't know. I think if you read the Market Wizards and the New Market Wizards, almost to a trader, they all talk about how they blew up their account and they basically swore to never do it again.
Yeah.
Or they blew up their account and then their second and their third, and they swore to never do it again, sort of thing. It's a tough question. I often wonder, are you better off just totally blowing up in the beginning or, getting on a lucky streak in the beginning? And I think that it's blowing up, but I'm not sure, I'm not sure. Mm-hmm. I think there are probably tons of traders that we never hear about who started trading, blew up their account, and then just never went back to trading.
Yeah.
They went on to selling, multi-level marketing vitamins or whatever, you know what I mean? I don't know, so yeah. I'm not sure, or they went to go flipping houses or whatever the next thing is, So I really don't know. It is crazy though. When you read the interviews of traders, it is amazing how many traders have the same sort of basic story, which is, yo man, I started trading, things are going well, and then boom, I lost my money and I swore to never do that again. So I decided that my risk would be blah, blah, blah. It's amazing. It really is a common thread. Yeah.
Yeah. And I don't know if the people who didn't blow out would want to tell their story. I don't think they're the type of person who would tell the story, or maybe the people telling the story wouldn't think that's interesting. So they wouldn't write a book about them or interview them, right? So maybe it's just some sort of like filtering bias or something.
Yeah. And you bring up a good point, because I would argue that there are some traders that just want to tell stories.
Yeah.
They don't want to make money. They just want to go, oh man, you wouldn't believe I was in that Euro trade, and then the interest rate came out and blah, blah, blah. That's what they get. Like Ed Sequoia says, everyone gets what they want from the markets. Some people get these stories that they get to tell. Like that's their thing.
War stories.
Yeah, exactly. War stories. That's exactly right. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, and there are people that really get into this. I know Sinclair doesn't like education. That was my story. That was my understanding is the three things that you can definitely so that was probably one of the worst things to go run. In my head, when doing it, it's the bus. It's all information in this podcast is information in this podcast is education, transformation. Not the result. The animals are on a reduced calorie intake. Keep chopping wood for years. Those people have healthy loss. After like all the information in this podcast is for educational and informational purposes. Only 12 hours is not training how to get exposed and all those sorts of things happen. They've known that for a long time, but it's only now. I think just recently with the resveratrol and the NAD and stuff, what they're saying
trailing and let the trailing exit. That's why I like to automate trailing exits.
And these
That's a
sirtuin
really good thing
paths
to
are
do
actually
for
the
people
ones
who
that
have
kind
this
of
problem.
All information in this podcast is for educational and informational
the whole
purposes
thing's
only.
Keep
Not
catching
Not
up.
training or
people
investment
Try and
write
advice.
this
automate
stuff
your
off,
exits,
don't they?
man.
Like they
That's
say,
a really
oh
cool
man,
way
well, if I'm
to,
going to
like,
live
oh,
an
then all
extra
I have to do
15
is
years,
just
I don't want to
babysit
live,
the EA
the last 15
and make
years
sure
of my
that
life
it
where I'm drooling on
gets you
myself
out,
and I'm in a
right? So
wheelchair or whatever.
that's
You know what I mean?
another
Like
one.
people say,
Hyperbolic
but
discount,
that's not what we're
because, I
talking
did
about.
the
We're
thing. I
talking
know
about
you.
maintaining
We've
your
done
body
this
to a point where you
exercise
don't,
with
like that's
traders,
not you.
right?
You
And I
don't
think
have
you
to
were there,
walk with a
and,
frame and you don't have to
almost
have,
always,
you know, you
I
can't
go-
get out of your
I go, I have
chair or
two
whatever. Like that's
envelopes,
another
right?
thing actually
And we
that
did
I
with
learned from my
Caroline, and I
wife.
said,
Like she
in one of
rehabs
these
people and
envelopes
helps them
is
when they have like
whatever,
strokes and
50
things like that.
bucks,
And you know
and
what
it's
she
yours.
says?
Take it.
What's the
Okay,
best predictor
fine,
of
right,
someone
enough.
like
But
when they're
if you
older?
open it up,
If they're
you
going to
get the
be,
50 bucks,
you know,
right?
healthy or
Or
whatever,
100
or if they're
bucks,
going to have
whatever it is, I
problems,
can't
is if
remember.
you can,
And then
you
I
can get out of
say,
the chair.
now I've got
like
I've got
100 times.
another
So they
envelope
call it
here
sit
that
to
you
stands,
can
right?
switch,
So you're in a
but
chair and you
this
stand up.
envelope has
If you can do
either
that
nothing
100
in it
times,
or 200
boom,
bucks.
like
I can't remember
you're
which.
going to
I
be
don't
pretty,
know.
like
I
that's
don't
good.
remember.
Like you're in a good spot.
And then you can offer
But
them
if you're
the opportunity.
unable to do
And
that,
every
you know, that's a
single time
sign
I've
that
done that,
maybe,
people
you know,
do, they
you're
always
not
keep
as
the
fit as you want to
envelope. They
be
never
like, in your
do
later
switch.
years.
The only
And
one
we're
that
talking
did
about
was
people
Caroline,
that are
and that's
older,
'cause
you know,
we
like in
kinda
your
convinced her that
60s,
she
70s,
should.
80s. You want to be able to do 100 sit to
So that was,
stands.
and you were
Like
there
if
for
you
that,
can't do
yeah.
those in
So-
your 50s,
so
then you're
that
definitely
was pretty funny because
trouble,
I'm
right?
telling you, every single time I've done it, and sometimes I put the extra
I think a lot of
money
it's
in the
like a
envelope, sometimes
mindset
I
too,
don't.
like
So it's not
what you
always
do
that
right
the
now
extra
to
money
maintain
is
your
in there,
body,
you
like
know?
this
So
type of
it's
stuff,
really,
just
you know,
how
it's
you
really
think about
interesting.
yourself.
That's
Like
sort
if
of-
you think
that's
you're
the
old
best way
already,
I
then
know
you're
to
gonna be
highlight
old.
this hyperbolic
And I've seen a lot of
discounting where it's
videos
like,
with like
it's
these old
worth
Chinese
more
dudes
in
or
your
these Japanese
hands
dudes, and they're doing
than the
like
potential
pull-ups, and
of
they're like
even more in
70
the
or whatever.
future.
So I think it
basically
is just
And that's
maintenance
why
and
trailing
kind of a
exits
mindset
are
also
so
too, right?
hard for
Totally,
us
man.
traders to follow is because of that
my friend,
bias.
his dad
Yeah.
was a
Yeah.
judo
Sure. Why do you think
like
that
black
is?
belt,
I mean,
and I
most
swear to
people are
you,
taught,
he
you
would
think?
go.
I mean,
He
if
would
you
go to
like,
these
if you were going to take an
tournaments when he was
evolutionary
like
point of view,
60s
you
and
would
in
say,
his
okay,
70s, he'd go to these
the
tournaments in
caveman
like
is
Las
cruising
Vegas and
through
stuff
the woods
and
right?
kick guys'
He
ass
sees like
who are like in their 40s and 30s.
bushel
I
of
swear to you,
berries
dude.
here.
And
Should
like he was always
stop
like,
and pick
you
the
know,
berries
and
eat
you
the
know what
berries
was
and collect
funny?
the berries?
When
Or
we were
should
in
he
high
keep
school,
walking,
he
maybe
would-
there'll be like a pineapple.
When we were in high
He
school,
you know, he
so
likes
he had two
pineapples,
boys,
better,
right?
they
And
can
I,
be
you know,
more
I knew
described or
the two
whatever.
boys, right?
You know what I mean?
And
And so it
their
makes
dad
sense
was
that
this
you would take
totally
it while
into
you
martial
have
arts and
it.
stuff.
You know,
The
we
boys would
spent a
like
lot of
try
time
to
as
sneak home
hunter-gatherers,
at night, like
you know,
on the
just
weekends,
looking
so
for
they
food,
didn't wake up
right?
their parents
And
'cause
once
they
we
were out
found
partying
food,
or
we could
whatever in high
relax
school.
and all that. But
So
then,
they
you
try
know,
to
the next day
sneak
you got to
home and,
find
like,
more
sneak
food. So
in
that's
through the
why,
back window
you
and
know,
stuff like
all
that.
you know,
And
all this
sometimes
intermittent
they
fasting
would like
thing
be
is all the
sneaking
rage.
in
People
through
are saying, well, that's how
the
we've
back,
always eaten.
the
We
back
never,
window or
like,
whatever
you know,
called
when you're a
in,
hunter-gatherer,
and
you
they
don't
would come
eat on the
down,
dot
and
at
the next
noon
thing they know,
lunch,
they're up
right?
against the
Like,
wall and they got a
doesn't
hand on
happen
their
that
throat.
way, right?
Like,
You don't know when you're
their
going to run
dad's like,
into
dude,
another
what are you
rabbit
doing,
or
man? You're
a
scared. Like,
bushel
I
of
thought you were a
berries or
burglar
so.
or
Yeah,
something, you
I
know?
think
That's
if
how
you
their
were to
dad
take
was.
sort
It
of the
was amazing. Like, and
socio-biological
that's
point
totally
of
how
view,
he
you would
was. You know,
say,
he was totally
well,
like
we
skiing
kind
and
of
stuff
learned
into
to
his
survive
70s,
by
doing all the
taking it
judo,
when
and it
we
was a
can,
mindset
sort of
thing. He's
thing,
like, hey
right?
man, like I don't want
And
to,
we
you know
would
what I mean?
apply
Like
that
it's
to
up to
money
you.
too, I
It's your
guess. I mean,
choice.
that's, you know,
Yeah,
but all
no.
the economic
My
theory
dad's
stuff,
been
like,
teaching
if
Aikido
people
forever.
have a
He's
business
like
background and they go into
93, and
economic
he's
theory,
been teaching up
they
until
act
this
like
whole
people are
coronavirus
rational
thing, but he
and
still
like do
teaches
the
Aikido
weighing and
class.
say, oh yeah, this
So,
is
That's
worth this, so
awesome.
you know,
Stay
the chances
healthy
of
and
me
just
getting
stay active.
like,
And
that's all BS.
That's
Like, it's
amazing.
not. It's driven
Yeah,
by
that's
cognitive
amazing, man.
biases, as
So
you and I
do you
know,
do
because we're
Aikido?
faced with
Do you
these
know,
every day.
like,
I
you know,
took
It's
I took
crazy,
2 summers,
man.
but
Yeah,
it just wasn't my thing. So
right.
You have to kind of
Yeah.
rewrite in trading, right?
Oh, that's
exactly.
cool.
Yeah.
Yeah.
You rewrite
That's
your
so cool.
brain.
Yeah,
Exactly.
so
That's
true.
exactly
Man.
it.
So true.
Yeah.
Yeah, you can
Okay, Okay,
like
cool.
there was a
Thanks, Walter.
guy,
See ya.
you guys, I'll put
All
in the show notes
information in
too.
this
There's a guy
podcast is for
who
educational
actually-
and
I know this
informational
sounds
purposes
crazy, right?
only.
This is
It is
insane.
not
Like, people
trading
don't say
or
it's
investment
impossible,
advice.
right? But this guy broke his back, like shattered it, completely shattered it, and he literally put it back together, like healed himself with his mind. And then he wrote a whole book about this stuff. So I'll put that in there in the show notes too, because people kind of overlook. They think, oh, I need a drug or I need a rehab thing or I need a tool or whatever. But really, your mind is a really powerful thing. And like you said,
I don't think anybody should trade. Like, what are you talking about? Like, what are you talking? You're a trader. It's like, no. It's like, no, I don't.
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So in the last episode, we talked about cognitive biases. So let's talk about negative biases. How does that affect us as traders, and where does that come from?
Negative biases. Well, I think for people, considering what can go wrong is adaptive. Who's going to survive, right? Is the person, like the mother who's so concerned about her child that she makes sure that, every little thing, like you grow up in the rainforest in down in South America, the mother's concerned about pythons getting her baby, right? So she, her family, her kids are the ones that survive because the pythons never get her kids, sort of thing, right? Or what do you call it? Neanderthal guy who's worried about woolly mammoths trampling on his tribe or whatever, his tribe survives. So I mean, it's adaptive in a way, like anxiety and assuming that the worst is always going to happen. To me, that's kind of like it's an adaptive thing, I guess you could argue. And so that's useful in that sense. In trading, it's a little bit different because you do need that. You need that when you're considering risk because it's a matter of risk and reward. But at the same time, I think a lot of traders, they don't get into trading thinking about that. Like I didn't get into trading considering probabilities. I really didn't. I didn't understand that until later. I got into trading thinking about the reward. I didn't think of the risk. Right? Yeah, everyone's Scrooge McDuck, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I think you need that balance. I mean, you can go the other way. Like if you're too concerned about risk, I've seen that too. And those traders, what they end up doing is limiting their possibilities, right? Yeah. I'll tell you a story. Just this week, I was working with a trader and he was like showing me his strategies. He was like, look, I got this strategy, it's pretty good. I got this other strategy. Yeah, it's pretty good. I think they both work in the same type of market, like a training market or whatever. But then I put them together and it's freaking unbelievable. I go, yeah, it is unbelievable. That looks really good. And he goes, doesn't make sense, And so he was trying to tear it down. He's like, I want you to show me why when I put these two strategies together, which seem to be, they would work in the same market, why would the equity curve get so exponentially better? I said, yeah, that's weird. I said, let's look and see if they're actually, if these two strategies are actually kind of taking the same trades. Turns out they had a 0.08 correlation. One was zigging while the other one was zagging, and that's exactly why his equity curve went straight up. And that was awesome to see. What's cool about this is he didn't just jump in straight away and go, oh my God, I have this crazy, I put these strategies together and I'm in the money, right? Yeah. What he did was he said, what's wrong here? What am I missing? What did I get wrong? Can you show me something? Blah, blah, blah. And I said, dude, I said, you just got to run the correlations. It's, you know what I mean? It's a question. He's like, okay. And we were looking at the distribution, you're looking at one, you're trying to put the equity curves together and see if they're actually, and I'm like, no, man, just run the correlation. Let's just see. And then we'll test it on out of sample data, make sure that, blah, blah, blah. And so, yeah, that's what he did. And he had the right approach. He's a very data-driven dude. That's how he looks at things. And so he was like, where am I going to go wrong here? And I think that's a healthy approach, to have that negative, skeptical kind of thing. Here's the question. You probably heard this too. People say, well, how much can I make money? How much can I make trading Forex? What can I? Yeah. What they're asking you to do is they're asking you to take your limits, right? Your limitations, your beliefs, and place it into their head. That's what they're saying. They're saying, give me the universe that I am going to live in. You tell me what I am going, that's like a parent telling the kid, you can only have an IQ of 115. After that, I'm cutting you off, you're on the streets or whatever. That's crazy, right? It's totally crazy. But I understand because we're taught to accept authority, and whatever authority tells you, that's the right thing and all that stuff. So, I mean, I get it in a sense, but I think we need a healthy dose of negative expectations of feeling like things are going to go wrong or where can it go wrong, especially when we're system constructing, and building that strategy and tweaking the risk and trying to figure out how much, because your biggest drawdown is always in the future, right? All that stuff is important. But if you're too far that way, I've seen that too, where traders are like I've seen guys who've been trading for decades and they go, you know what? I don't think anybody should trade. What are you talking about? What are you talking about? You're a trader. It's like, no. It's like, no, I don't. It's not. You know what I mean? And that they've just gone. Yeah, they've gone the other way. They've just totally gone the other way. Is that what you meant by this? I just want to make sure that we're clear.
Yeah, that's good. Yeah, that's really good. Yeah, that's interesting that you mentioned the limitations, because I've gone to a couple of presentations, obviously a lot over the years. And one guy at a meetup was saying, how much can you make trading? And he was like talking super loud, trying to be really convincing. And people threw out some numbers and he said, no, you can only make 10% a year at the most. And I was like, wow, that's really limiting people. But yeah,
Wow.
that was his world, but
Yeah.
and I don't think he was trying to be negative. He was just trying to be realistic within his version of reality, but it
Yeah.
wasn't necessarily other people's versions of reality, right? Obviously.
Yeah, I mean, obviously, like we have Nicola in the forum, and she does way better than that, you know. And
Yeah.
like, there's people that are out there that it's crazy to me. Like, yeah, it's so true, man. Like that guy, he didn't mean to. I really believe he didn't. The guy that you're talking about, he didn't mean to do anything
Oh yeah,
to
sure.
hurt people or
Yeah.
send them the wrong way, you know. But here's the thing. Here's a good test. If you ever see someone and they say, "I'm an optimist," don't believe it. And and if they say, like a self-proclaimed optimist, right? No, you should like. This is my belief. If somebody is an optimist, it will be super clear. Okay, like you will
Sure.
know it, right?
Personality and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, somebody wrote in and they have the age-old question of, my trading sucks. What can I do to improve? Like, this guy's losing for like, I don't know, 3 months or whatever, lost a big chunk of his account. Where does he go from there?
Okay, first of all, do you have a system? That would be my question, right?
Yeah.
Sorry, I jumped the gun there. So if you can't write down the conditions to an entry and the conditions to an exit of a trade, then you don't have a system, and you are flying blind, friend.
I call it the swag system.
Yeah.
Wild ass guess.
Really? Yeah, that's it. And people ask me too, they go, have you ever just look at charts and take a trade and just kind of go off and I'm like, no, I have to have it fit into a box that I know, that has made money in the past. So yeah, so do you have a system? Number one. Number two, if you have a system, see if your entry is any good. And the way that you see if your entry is any good is whatever your entry conditions are, the indicators or the pattern or whatever, see where the market goes 3, 5, and 10 candles after your entry. That's a really good way to see if your entry rules on average suggest what's likely to happen, next. Is the market up 3 candles later after a buy signal, 5 candles later, 10 candles later? Okay, if you go through that and your signal is good, then the last thing, and probably the most important thing where the most work would be in the exit. So the easiest way for most traders to make more profit with their strategy is to simply wait for more profit. I know it sounds crazy, but like instead of going for those 1-to-1 trades, what if you went for 3-to-1 or 4-to-1 or 5-to-1? Your win rate will typically go down, but the overall profitability usually goes up. And what I mean by that is if I have a strategy that's 1-to-1 and it has a 59% win rate, if I move that strategy to 2-to-1, maybe I don't have the 59% win rate anymore. Maybe I have a 46% or 43% win rate, but I'm actually now making more money. So every 100 trades, I have 43, let's say it's 43%. Every 100 trades, I have 43 winners, and those winners make 86 R, and then I lose 57 R. So 86 minus 57 is whatever that is, 29. Is that right? Something like that. So yeah, whatever, something like that. So I make more money than I would have if I had the 1-to-1 where I had a 59%. So that's key for a lot of traders. But you got to first make sure you have a system. First, make sure your signal's good. Then on the back end, use trailing exits, use aggressive targets, split it up, maybe go 2-to-1 and then have an aggressive trailing exit or whatever. But that's usually where you can make the most gains is on the exit. And everyone focuses on the entry. It's usually not filtering out bad trades or whatever with the entry, it's the exit usually.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. I actually test to see how far the price went on each trade. So I call it the max R. So like how far I would have gone if you just left it alone and you just left the stop loss there. And sometimes that can give you some good ideas of where to put your next profit target. You can see, okay, 50% of the trades went 3R, 60% went 6R or whatever it is. And you can kind of guess, not guess, but you can kind of use the data to see where you might be able to get more profits out of the trades.
Yeah. And that would work really well, like with a fixed exit, right?
Yeah.
You could, you know what I mean? Like you could say, yeah, so exactly. That's exactly right. I've been working with a trader, a really interesting guy who how he builds strategies. He's very unique because he doesn't really get stuff from other traders. He kind of just looks at the charts and comes up with ideas.
Nice.
And he's like, yeah, so well, how did you come up with this strategy? He's like, well, I just look at the charts and I look for the big moves. And then I look for like what happened before the big moves. And so what I'm trying to do is backwards engineer the big moves. Yeah, it's really cool. Yeah. I mean, I think that's something that we all do in the beginning, but then we kind of get down the rabbit hole of like stochastics and, moving averages and all that stuff. We get away from that simple approach, but it works really well for him. And I think that's, something to keep in mind, that you can, just because it's on a website doesn't mean you have to trade that way. Just because you read it in a book or whatever, like in many ways, you're better off just going your own way, using your own approach, because it's going to make sense to you and you're unlikely to throw it away.
Exactly.
It's easier to throw away someone else's idea. Yeah.
That's a good point. Yeah, I wish I started that way, but I know it wasn't possible. It wouldn't be possible because we're always looking for that teacher or whatever to help us out, right? And for good reason sometimes.
Yeah, I mean, look, people spend a lot of money on universities, right? Like, I mean, your whole life you're taught. You've got teachers from when you can start talking. They so yeah, it's kind of ingrained in us. Yeah,
that's true.
Yeah.
Okay, cool. Thanks, Walter.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I would sit down with my trading buddy and we would get on Skype and we would pull up our charts and we would look at the same charts. And our question was, buy or sell? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So I got a question yesterday from a trader, and he was talking about how I said, how's your trading going? And he was saying that what he realized was that he was losing quite a bit, and he was thinking that what he needed to do was to get better at reading the markets. Basically, he's into price action, so that's kind of his approach, which is close to how near and dear to me, and I know you know a lot about it too. So what I highlighted for him is something I think that a lot of other traders could benefit from, which is this idea that a lot of times we focus on what seems to be the obvious thing, and when someone else has a look at it, sometimes you'll realize that there's a little bit more to it. And I'll give you an example. So when he said that he was consistently losing because he couldn't quite get a handle on price action, my response was, well, are you sure that that's it? Because typically, there are the three things. There's the system, there is the risk rules, and then there's you. Basically, how you interact with the system, your psychology, which is what we talk about here, right? And so he was focusing on the system and specifically the entry rules. What I said was, look, it may not be that. Like, It could be that,
Mhm.
but it may not be that. It could be that what you find is if you do the exact same things you're doing right now, but you change your exit rules, things are get better. It also could be if you do exactly what you're doing now, but you change your risk rules, you would be on a different path and have a different sort of a drawdown, and you won't get to those deep drawdowns that perhaps you're having right now, and that's why you're thinking, oh, it's not working, I need to quit, right?
Yeah.
So that's the thing is that, you know, and then obviously the last bit is it could be that your relationship with the system is not, you know, in lockstep. So like this often comes up when traders go, okay, what I want to do is trade. Okay, so what do I do? Okay, I need to find a really good system. Okay, so let's check on the internet. Okay, this one's really good. You know, this guy's done really well with it. So I'm gonna use it because obviously it's the best thing I can find, right? So it's the best thing I can find, so let's use it. Right. Well, that's obviously, as you know, that's tricky because I didn't really build it, and I'm just using something out of the box that someone's given to me. And unless it really matches up with my beliefs about how things work in the markets, I'm not going to trade it long term. I'm going to give up on it eventually. So the reason why I bring this up is because I think as traders, we need to start thinking in these three buckets. Is it system, which is entry and exit, right? Is it me, which is how I interact with my system and my belief or confidence in my strategies or strategies. And then finally is the risk, which is the risk kind of amplifies it and it can make my system, you know, have higher peaks and lower drawdowns and all sorts of things when you start to get into that realm. So when you run into an issue as a trader, it may not be that you just need to change your entry. That's probably the number one first port of call for most traders is to go, oh, I need to change my entry, but it may not be that. And so I just want to talk about, I mean, I know you had some experience in this, and so what have you found in terms of that? Like when you're looking at systems and trying to diagnose, you know, what are some of the things that you've run into?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, sure. I mean, you've covered most of it pretty well, but a couple things to add. First, I know a lot of traders think they learned the system correctly, but then when they actually go back to the educational material or whatever strategy the person was using, sometimes they notice, oh, I'm not actually following the rules. And I saw it with this guy this week. He's been posting his trades. He's been showing me what he's doing. And I can see, okay, sometimes he follows the rules, sometimes he doesn't. And he's been losing and he's frustrated, obviously. But I told him, go back, take a look at your journal, see what you're doing, and are you actually following the rules? Did you actually interpret whatever that book or that YouTube video said correctly? And if you didn't, then that's one place to start also. The second thing is, I think we really underestimate the mindset part of it. Like we don't take a look at, you know, am I in the right state of mind when I'm trading? Do I tend to overtrade? Do I tend to undertrade? The same guy I talked to, I told him what's the difference between your back testing and your live trading, and one of the things he listed was FOMO, and you know that's something he didn't identify before, but it's something that's really common with a lot of traders. You want to get into the trade, you want to make $1 million right now, you know, you just take these crappy trades. So I think those are two things that are really underestimated, but we really have to be aware of.
Yeah, it's so true, isn't it? And it's tricky because sometimes as traders we feel like really we should be pressing to trade more often, right? Because of what you said, like FOMO, right?
Yeah.
Like you're really kind of like, yeah, I need to, you know. And I used to think of it the best way I know how to explain this is I used to think of it like I would sit down with my trading buddy and we would get on Skype and we would pull up our charts and we would look at the same charts, and our question was buy or sell. and that's not how I do it anymore, right? Like so now my question is there a trade?
Yeah.
Right? You know what I mean? Like it's a very different approach. So it's not always the case. If you have a low win rate, you can have the issue of not wanting to pull the trigger. But in most cases, what traders are doing, especially in the beginning, is they usually trade with a high win rate because they take quick profits. And so what they're really trying to do is trade a lot. And the question is the yen going up today or is it going down? Like that's the question. And they're not really looking at it from a system point of view. And the other thing I want to mention is what you said to that guy is great. And one way you can quantify that about looking in your journal is scoring. So if you score your entries and score your exits, you'll actually have a quantifiable data set that you can go back and look at and say, oh, this is where it was here or it was there. And that's a really good way for you as a trader, especially if you're not something's going on, you don't know what it is, to see and zero in on, oh, it's my exits or it's my entries. Or if you're missing trades, that's a sign that maybe because you're at work or away from the screen or sleeping or whatever it is, that's a sign that maybe you want to adjust your time frame. Like instead of trading the 4-hour charts and you miss 2 candles or whatever, or miss 2 candles while you're at work.
And what do you think about Monte Carlo testing?
Oh, I'm a big fan. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, how's it going?
Hey, good, Walter.
So I got this question from a trader today, and she's doing really well. I recommended that she get Forex Tester and start, simulating. She's sort of new to trading, and triple her account. That's what I, normally say. Try and triple your account. So she did, and she was trading I think $1 a pip on $1,000 demo, or not demo, but Forex Tester account. She tripled it in 32 trades, trading the daily charts. I think she was trading kangaroo tails on the euro. Then she said, this is really, I'm pretty excited, blah, blah, blah. I'm going to start moving on to other currency pairs and do more, get more kangaroo tail under my belt and that sort of thing. And I said, yeah, that's great. There's a couple of things that I thought of when this came up, and one of them was that you hear people say you don't have enough data. Like normally, if someone had 30 trades, people would say things like, "Oh, well, that's not enough data. You don't know if it's significant or whatever," and that can be true, right? And that's why, for example, when you see companies and they do like drug tests where they have a placebo and then the real drug, they'll have thousands of people in the study, right? And one of the reasons why that is because when you have thousands of people in the study, you have the ability to zoom in and see really little tiny effects. And like the placebo effect is well known to help like 30-something% of people, right? Just by taking a sugar pill. So they need a big sample, because if they had a small sample of 50 people in each group, they probably would find nothing. And then they spend all that money creating that drug for nothing. So they need big samples so they can zoom in and see really tiny small effects. Okay, so I said it's great that it worked out to be 32 trades and you're able to triple your account. But you might have been risking too much, right? Because in the future, you might not be that lucky and actually end up with a lower win rate and more losing trades in a row and get into a deeper drawdown and then throw up your hands and say, I quit, right? So that's one thing, obvious, right? The other thing is, what people don't talk about small samples is if you get an effect for a really small sample of, in this case, 32 trades where she had a 59% win rate, a 1.2 reward risk ratio, that can tell you that you have a really strong edge. Like if you only take a few trades and you find like this really good effect, even if you take out the impact of the risk percentage that she was using, right, per trade, even if you pull that out and just like in terms of R, right, R, the amount at risk versus the amount of return, you see that this is a really strong effect. That could mean that you're dealing with a really strong edge, right? That your interpretation of the kangaroo tail, that the way that you trade it is viable.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And so that's something that no one ever talks about. And people just say, they just assume that small sample equals maybe you just got a freaky lucky, thing. But actually, it also could be that you don't need, a really strong telescope to see the moon. I mean, because you can see the moon with your, with your bare eyes. And that's the kind of thing that could be happening with that. So that's something I just want to point out for traders when you're testing, is that it's really easy. Everyone knows the story about you don't have enough data, okay, fine, right. The other side of that is if you have too much data, you're going to find a really small edge, right? And maybe you don't want to trade that. Maybe you don't want to trade the really small edge. Maybe you want to trade those systems that after 50 trades, it's pretty obvious that, okay, there's something going on here. So that's something that I wanted to point out, and I think can be useful to the other traders out there. I know, like in the past, you've traded systems, presumably, I know that you've tested because you're really good at that, right? And then later on, you might decide, well, this isn't really, you know what I mean? This isn't really for me. Is that because you think that you were trading something with a small edge, or are there other reasons that came in to that? Or
I think in the past, for sure, like the small sample size kind of messed with my head a little bit. Now I understand that, okay, some of these systems are only going to have a few trades. Like what I'm testing right now, actually, it only does not even one trade a month. But when it does fire off, it's like a 90%, probability of winning. So it's one of those things where you just have to keep it in the toolbox, and then if it comes up, then just track the metrics, track the results versus the back testing, and then kind of go from there. But yeah, definitely the small sample size thing did mess with me before.
Yeah, it's a bit tricky, It's kind of like systems where everyone focuses on the entry, and it's similar with testing. Everyone looks at, the win rate, and they look at, the sample size, and they all work together sort of thing. Some traders I know, they won't even use money management. And actually, technically, she didn't either, because she risked a constant lot size on all of the trades, even when the account doubled and, got to the tripling point. That's kind of cool, because when you use fixed lot sizes, you can look at R, right? So that's a way of looking at your R return. And I know lots of traders, usually they're programmers, like they have a really analytical mind. They won't even trade something unless they run the test in R, on the basis of risk, and see what kind of R did it return. Did it return 15R or 50R or 30R? After 500 trades, how many R am I up? And so that's another way to look at it. And that's actually probably one of the best ways to look at it as a trader. Before
you can actually tune things, right? When you're looking at R instead of just the percent or whatever you're doing, right? Fixed percentage.
Yeah, because if you use some really hyper aggressive algorithm with your risk, they can make it look really good when really there's just a small edge. So yeah.
And what do you think about Monte Carlo testing?
Oh, I'm a big fan. The reason why, it's because, the reason why I like it, and the reason why I pay people to create spreadsheets, because I'm not smart enough to make them, is because, if you use Forex Tester, you can get sucked into this idea. Well, for example, that woman that was backtesting the kangaroo tail, and she posted in the forum, and she said, hey, this is what I got. You cannot, as a Forex Tester trader, run through the same number of simulations that you can with Monte Carlo. You're just going to be on one path. And so you can think, okay, that's going to be pretty close to what I'm going to trade if I go live. The reality is that might not be true. The great news is with Monte Carlo, for people that don't know, Monte Carlo is just when you run a whole bunch of simulations. If you can't do those in your 50s, then you're definitely in trouble, right?
Exactly. Yeah. And I think a lot of it's like a mindset too.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. Hey, Walter, I want to talk about NAD and resveratrol. You turned me on to that, and you've been doing this longer than I have. I just started it, so I want to see what your experiences were, and that might help some people out there.
Yeah, sure. So so we should put a link to the David Sinclair interview. We'll put it in the show notes so people can click and watch that. It's 10 minutes or something, but kind of gives you a background on that. So my understanding, so there's a guy named David Sinclair, right? He's from Sydney, and he's now at Harvard. Again, I'm not a biologist or anything like that, right? So, in fact, I took one biology class, and it was because I failed physics in high school. So, because I failed physics, or got a D, right, and I wanted to go to college, the reason... It's a long story, but I tried not to fail physics. I was in the lab group with these guys that were jokers, and they would turn on the eye washer and stuff and spray it all over so I basically got lumped with these older guys, these older kids in high school, and totally got screwed. But it's my fault. I shouldn't have joined. That was the wrong lab to join, right? Yeah. Anyway, so then the teacher was like, this is a funny story. Then we'll get to NAD, I promise. But the teacher was into skulls. Okay, he collected animal skulls. So he was like, hey, if you bring me an animal skull,
I'll skin it and you'll get extra credit. So I was like, oh man, maybe I won't fail physics, right? So so it was like Easter holidays, right? So we had a week off from high school, whatever, and I'm like driving around where I live. It's kind of rural, lots of farms and stuff. So I'm driving around looking for like, you know, a dead rabbit or something that got hit by a car, like some roadkill, right? And a snake, anything, right? And I found a coyote. It's like, holy cow, like a coyote was hit on this, you know, this road out, you know, out in the country, not far from where I live. And I was like, I'm the kind of person that has a problem giving blood. Like I get really wheezy.
Same
so
here.
there's this coyote. Yeah, you same. Yeah. This coyote. I had to saw off his head, okay, with like a hacksaw, like a something that you take a branch off of a tree, right? It took forever. The skin was so strong, man. This was crazy, and I'm sure there was like fleas all over this thing. And so I sawed off the head. I put it in like garbage bags, double bagged it because I didn't want to get blood all over my car, you know. Bring it to the guy. Like he lived around the corner from my high school, my physics teacher. I bring it to him. I knock at his door. I'm like, hey man, you know, I got you a head. Like, I didn't want to fail physics, and so because I really wanted to go to college, and this was going to be a black mark on my record, right? So he's eating like cup of noodle soup. Okay, I'm not kidding. This is totally true. He's eating like a cup of noodle soup. And when he answers the door, he's like, "Oh, let me have a look." He opens the bag, like pulls out the head, checks it out. So, oh, coyote! Wow, thanks. You know, and he's really excited. Puts it back in the bag. Still eating his cup of noodle soup. I'm like, this is disgusting, man. Anyway, found out after, you know, school's back in a week later or whatever, after our spring break, or 2 weeks, whatever it is. He's like, oh, the skull was no good. It was too crushed, you know, because when it got hit by the car, it like crushed its head or whatever. I'm like, oh, okay. But I still got the extra credit. So I guess I went from an F to a D. You know what I mean? So that like got me to, so I had to take biology in junior college, and that worked as a science credit. I had to retake physics. So I had to take, you know, summer school at the junior college, which was cool because that actually worked toward my college degree too, so it kind of double counted for high school as well. So that's my only biology course. Okay, so that's a long-winded way of saying I know nothing about biology, and even less about physics. But David Sinclair discovered this compound called resveratrol, right, which is in wine and is pretty well known now. But he also talks about this thing called NAD and NMN. Now, I have no idea what they stand for. You'll have to look at the video. It's like nicotine mononucleotide, whatever. But the idea is that all of our cells have NAD in them. It's either, I think it's NAD, and I think NMN is the precursor to NAD. But anyways, everything in your body, all of your cells have this NAD. If you didn't have it in your cells, you would die within minutes, okay? So that's how important this stuff is. The interesting thing is, as we get older, our levels decrease. Okay, so this is one of those things that sort of, they believe, leads to aging. Okay, so what David Sinclair says, you can, and they found that this works in mice. With mice, they actually give them this stuff with resveratrol. So it's NAD with resveratrol, or NMN, which turns in NAD when it's in your body, right? It's like their hearts are like, they have the hearts of mice that have been running, like runners, like marathon mice, right?
Yeah.
And they don't get tired. Right? And they live longer, and they regenerate faster, and all these really cool things. And so the idea, the belief is, if you increase the NAD in your system, especially as you get older, because it's decreasing naturally, you can feel younger, you can, you know, all those sorts of things, feel more physically fit, even if you don't exercise. Like that's what they found with the rats, is that the rats that do exercise but don't take the NAD, don't have the NAD and the resveratrol supplements, and then the rats that just don't do the exercise but actually have the supplements, they're the same. Like they both have the same ability and all that sort of stuff when it comes to exertion. Like they don't get tired. And so I found the same thing. Like when I get injured, like, you know, if I'm running and I injure my ankle, or I injured my shoulder at the gym or whatever, and it was like terrible injury. And I was talking to some guys my age, and they're like, "Oh man, it's just, that's what happens, man. Your shoulders go," and you know, and they'll say, I'm like,
Yeah.
"Oh, really? No." You know, so I'm like, so I'm really on the NAD really hard. And what I found is that if I take, and I've been really good at taking it every day. What I found is that I do. Even if I haven't been running for a while, I still am able to run upstairs, no problem. Like I don't get winded. You know, I feel like I've been running. And what I found is that my shoulder is like almost completely healed. And it wasn't healing forever. But now that I've really been on the NAD, like, You know what I mean? And you feel like you have more energy. You just feel really good. It could be placebo. Definitely, it could be that. But I would encourage people to look into it, because Sinclair's not the only one doing it. There are other ways that you can naturally increase this. Like another one is rose hips tea. Apparently can help that. Like starving yourself.
Yeah. The cool people tend to hang out late. They like to drink, and once you start drinking, all the stuff comes out, right? And everybody's like good buddies afterwards.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, they say that you're the average of the 5 people you hang out with the most. So what are your tips on like finding more successful people to hang out with?
Yeah, that's interesting. I think it's kind of like finding a mentor. If you're trying to learn a new skill, I believe that going to university doesn't necessarily prepare you as much as maybe like working with somebody would, like someone that kind of like says, okay, I'm going to show you how we do this sort of thing, which is kind of funny for me to say that, because I spent so much of my life in school, getting a PhD and everything. But having said that, that's how a PhD works in science, is you kind of work with a mentor. So, even more so in places like Australia or England, where that's pretty much all you do. Whereas in the US and Canada, they have like courses, you actually take classes, but in other countries, the PhD is literally just working with a mentor. So I guess that makes sense. But so here's the thing for me, and some people do this, and I understand why they do it. They just hang out with people because, like what you just said, like they go, oh, this guy's really successful, so I want to learn from him or work with him or hang around him, and kind of figure it out. I find that you kind of like need to like them too. You know what I mean? Like it has to be someone. You know what I mean?
Yeah.
Like it has to be someone. I mean, some people do that. Like they're totally cutthroat, and they're just like,
Yeah.
I'm gonna. In fact, Lincoln's wife, I think his second wife was like that. I think it's the guy who wrote the How to Influence People, How to Make Friends and Influence People. Dale Carnegie, is that his name?
Yeah.
I think he wrote a biography of Lincoln, which is really good if anyone, if you haven't had a chance to read it. Anyway, it sounded like, and Lincoln had a terrible life. Like he had so many bad things happen. People kind of might know that before he became president. Like becoming president was probably the only thing that he actually succeeded at. And even at the time, he was like Donald Trump is today. Everyone hated him. So it's funny that we look back and we go, this guy is so like, I guess we used to think he was a good president before we tore down his statues and stuff. But anyway, so his second wife was like that. She was cutthroat. She was like, It was funny. Like I think she was at some point considering who to marry, either Lincoln or the guy that Lincoln was running against for Senate. Like she literally like it was kind of like a coin flip. She's like, and then she chose Lincoln. And then he like lost the race, and the other guy won the Senate race or whatever. It was so funny. It was something like that. Anyway, so for me, I like to have friends that that I like, and it's nice if they're also someone that you can learn things from. I think part of the process of this, like if you have a lot of friends that you feel like they're not doing as well as you, or they're not at the point, like they just seem to always have bad luck, or they always seem to be down. Part of the process is just pruning those relationships from your life. You know what I mean? Like kind of cutting the ones that you don't want that influence in your life anymore, which is always difficult, especially if you've like grown up with somebody since you were kids and that sort of thing.
Or it's a
That's
family
always
member.
tough. Yeah, or a family member. Exactly. Yeah. Even better. Yeah. Good. So I think that's the first thing you do. And then the other thing is it's pretty easy. Like you think about where will people be that you think you'd get along with. So it would be like, if you keep going to McDonald's, what are the chances that you're going to bump into someone that's got a $3 million trading account? You know what I mean? Maybe, but chances are you're probably more likely to find someone who's, not at that level. So there are a lot of places you can go. I mean, that's why they have like clubs and stuff, like they have in Sydney here, they have the American Club where all the Americans hang out, and all this stuff. It's so funny. Like, and they had that, a friend of mine, she worked at the one in Japan, in Tokyo, they have the American Club, and they make like deep dish Chicago pizza and, so, golfing and things like that. It depends on what you're into. I've made some really good relationships, mostly from older people who are retired through surfing, because in Australia, surfing is and probably similar in the US. Like everyone, like there's a whole wide
national
range of
sport,
people.
right?
Yeah. A lot of people do it. Yeah. It's not just a certain demographic.
You know what I mean?
Mhm.
Like, whereas you might say, like, if you were going to do badminton, there's probably a certain type of demographic that's going to do that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
You know, and maybe bowling is similar, but with surfing, it kind of cuts a wide range. And so I've made some really good personal mentoring relationships from people. Some of them have died because they were older from surfing. So for me, that's been. So I would just say, do what you like and think about where the successful people would be and try and go there. If that's something that you would do naturally. Like if it's not, you know, if you're not into like bridge, you don't have to go learn how to play bridge or whatever. You know what I mean?
Yeah.
Like you don't, you know, and go into the bridge club or whatever, or golf or whatever it is. I would just do what you like to do and think about where they would be. So, but the first step, the most important step is cutting the relationships from those people that you feel like are holding you back because they're always, you know, everything seems to be against them. They're always kind of a negative, you know, energy on you when you're around and they kind of drag you down. That's what I would say. What about you? What are your ideas?
Yeah, no, that's a good point. I totally believe in what you're saying about taking your interest first and go do that and then go find some cool people, because there's always going to be cool people in those activities.
Yeah.
And I think the general area is another thing to consider. Like, what area are you doing these activities in? Is it more of an upscale area, or is it like a lower income area or whatever? That can play a factor in it. Another thing that's been helpful is just going to like meetups or any kind of group associated with trading, and then just staying there and hanging out late. Like, I think that's one of the key things. Like, the cool people tend to hang out late. They like to drink. And once you start drinking, all the stuff comes out, right? And you just, and everybody's like good buddies afterwards.
That's a good tip. Yeah, that's a really good tip, because it's so true what you just said. That's kind of where, like, those conferences and those things where you have a lot of, you know, whatever the field is, like trading or whatever, and that's where a lot of that stuff happens. You're right. The other thing that you said that reminded me is you can move, right? So if you live in an area, like, let's say you're fairly young and you're renting or whatever, right? And you live in a really nice place, but it's in kind of a cheaper neighborhood. What if you were to move to a really small place in an expensive neighborhood? I think you really bring up a good point, Hugh, what you're saying about when you're saying about where you live, because if you don't live in a nice area, you can always move, you know, to some place. Yeah, so you kind of like check in with the app. It's not like you're just like, I can... Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right, we're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about some strategies for calming yourself down during trading. Maybe you had a bad day, got into a fight or something like that. What are some strategies that you use to calm yourself down?
Yeah, good one is breathing techniques. So one would be like, you want to breathe in and out your nose. I think there's a new book about this called Breathe. I don't know. Maybe we'll put it in the show notes. This guy kind of went around the world and learned all this stuff about breathing, which people said, what? You're writing a book about breathing? Obviously, these sorts of things have been handed down through the centuries, especially out in the East. One way to do it is to breathe in, close off one nostril, breathe in one side, and then breathe out the other. Mm-hmm. Or you can just breathe in like to a count of 6 and then breathe out to a count of 6. If you're really small and younger, maybe a count of 5 or 4. But if you're if you're a normal adult, the reason why I say that is I do it with my kids and we don't count to 6 because they can't go that far because their lungs are too small, you know. But like, you know, if you're a small person, right? Like, so yeah, so that's another thing. Or you can just simply, I like to lie down. I know some people don't because they fall asleep. But you can lie down and do the sort of the guided imagery thing where every breath you take, what you do is you feel the relaxation kind of moves further through your body, like starts up at your head, goes down through your neck, your shoulders, your body, your abdomen, all the way down to your toes. So after 2 minutes, you've got to the point where that breath, like the first breath, the first exhale, it's like here. Second exhale is like here. You know, as you go, you kind of just let it go. So that's more of a sort of like a guided imagery or guided meditation sort of thing that you can do. Those are probably the easiest ones. Like if you breathe in and out your nose and you do it slowly enough, you will reduce your blood pressure. Like there's all kinds of things that you can do. If you're like
like in a full panic attack, the tips I got from that were, because I used to get these for a really short period of time when I was going to defend my my dissertation in psychology. I was freaking out because I tried to defend it and they failed me. And so then I was like, well, I hope they don't fail me the second time. Like, what are they going to do? Like, So I was really freaking out. And I learned to put your face in ice water. Okay, so if you're like super, like really kind of heart palpitation, I mean, this is not just normal, stressed out. I'm talking about like really full on. Put your head into ice water or bear down and squeeze like you're doing a poo. That's the other one. Those two are like totally, it's like a nerve thing. Like you can't, you know what I mean? Like they both will slow down your heart. So that's just extreme. But the otherwise I would go with like the relaxation, visualization of your body relaxing, or the breathing thing can work too. What about you? Do you have any tips on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, I mean, I do the breathing thing too, but I also use this device from HeartMath, and they measure your brain-heart coherence. So that's a visual way, at least you can see on the app, like how coherent you are right now. And they usually recommend that you breathe like, I think 5 times. I mean, not for 5 counts, and then breathe out for 5 counts, in for 5 counts. And that really slows things down. It increases your heart rate variability. And then once that graph is green, then you know that you're kind of in a good place to start trading.
Okay, can I ask you a question?
Yeah.
When you do this, are you sitting up or lying down, or what position are you in when you're using
Yeah, just sitting down in my chair.
Okay. And so when you're doing it, are you looking at the app? Like, is it like a biofeedback kind of thing where you're looking at or is it different?
I personally just do 5 minutes and I don't look at the screen, because when I look at the screen, it freaks me out and my graph goes back down again.
Yeah, that's what I would be worried about. Like, that was my concern. That's why I asked that. Yeah. Yeah. So you kind of like check in with the app. It's not like you're just like, I can see where that would be for me, that would be definitely like for you the same. That would be counterproductive. Yeah. Gotcha. Yeah. That's the thing. Like, I love those apps. I'm always concerned about, is my attention going to be on the app, like the screen, or is it going to be more on what I'm working on? That's the only thing I always wonder about those. But yeah, that's a great way to do it. Really, you just check in like every 3-5 minutes, just check in and see where you're at. Yeah,
whatever works for you.
And the one that you turned me on to, that has the headphones, that you plug in your headphones, and then what was it? And then like the chirping, the birds start chirping and stuff.
Yeah. The Muse headband, right?
Yeah, the Muse headband. Yeah, that one's cool because you don't actually have to look at it. It just tells you with the audio. That's why I like that one.
Yeah,
you know what I mean? Like it'll tell you when you're slowing down. Like it'll tell you when you're in a lower brainwave or whatever. Yeah, that's what I like about it. Yeah.
Yeah.
So that's another one.
Even with those though, like I end up looking at the time, so that kind of throws me off sometimes.
Yeah, that's true. Yeah. Cool.
All right. Thanks, Walter.
Thank you.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
has anyone made it before as a comedian? They're like, well, yeah. Well, then I'll figure it out. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are the basic trading personality types that you've seen?
Well, it depends on the dimensions you're looking at. So I would break people down into two categories, and we'll be really simple. Okay. People who focus on the reward, and there's people who focus on the pain. And then there are people who are super conscientious, and there are people who are not so much. Okay. So we'll just do those four things. Okay. So what you want, I believe, what you want to do is focus on the pain, but also be conscientious. I think the worst combination, so I could, if you had if you drew a box with 4 spots, you know what I mean? So you could be really conscientious and focused on pain, which is basically losses in trading. If you're there in that area, what that means is you're probably not going to risk too much. Now you can go extreme. So I know this guy, he was the co-founder of Awanda, and he was super extreme, too far. He was just risking 0.1% and stuff like that. He was really, really low, really risk aversive. So the other side, so you have those 4 squares. So you have risk averse or focus on the pain and very conscientious. Conscientious just means you're very meticulous and you're aware of what you're doing and you're not sloppy. And you know what I mean? You're so someone who's very good at being organized is conscientious, right? Mm-hmm. And it also helps to be self-reflective too, but that doesn't necessarily mean, conscientiousness may or may not relate to that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Then if you're focused on the reward and you're low in conscientiousness, that would be the worst, because in that case, all you really think about is how much trading can make you. You don't consider the drawdowns, the losing streaks, and you're not very good at, this is the kind of person that's always kind of swapping systems and oh, well, so-and-so said to buy the euro, so I'm just going to do that because, he's always right. Even though you've never tested or anything, his strategy, just kind of that sort of thing. And you can do a conscientiousness test. We can put that in the show notes and see where you are there. But that's what you want. You want to be higher on conscientiousness, and you kind of want to focus on the risk or the pain of trading, because that's what's going to end up ending the game for you. It's not the reward. The reward's great, and it's great to look at that, and it's great to target that. The driving feature of your system should be dependent upon the risk side of it, because that's going to define how long you get to play the game. So, yeah, that's what I would say. Cool. That's how I look at it. So those 4 dimensions, those 2 dimensions with 2 categories. I know it's very simple, but that's an easy way to see it.
Oh, that makes sense. I think for me, it's people are either focused or unfocused. Focused people tend to figure it out, and if you're not focused, then they tend to go off, do something else, and go flip houses or something like that. So
yeah, exactly. It's a means to an end. And if you really press every trader, they'll even in the beginning when you say, "Oh, I love it" and all that, they'll still tell you it's a means to an end, and that's true. But you're right. There are people who are totally determined, and I can't remember. I remember there was a comedian, and his parents were like, "What? You're going to be a comedian? Are you serious? That's ridiculous. You'll never make it," or whatever. And he's like, "Has anyone made it before as a comedian?" They're like, "Well, yeah." Well, he's like, "Well, then I'll figure it out." You know what I mean? Then that's, you know what I mean? Those are the kinds of people. It's the same in trading. Oh, well, you're going to be a trader? Well, everyone loses money, blah, blah, blah. Well, has anyone ever figured out how to trade? Okay, well, I'm going to do it. That's the kind of the approach I think that works. It can be painful. There are shortcuts. Information is helpful, but too much information can get you off track. There's so many things you have to keep in mind. But yeah, I would definitely say that's a big factor, what you pointed out. That's a huge one. When I was undergraduate school, one of my professors, she kind of made a side bet with her lab assistant. She didn't know, I was dating her lab assistant. She didn't know, and she told me. She's like, there was me and my other friend. We were both trying to get into graduate school because we both wanted to get our PhD. And my friend was way smarter than I ever would be, right? He was naturally gifted, okay?
at a lot of things. And she said to the lab assistant, who was my girlfriend, and she didn't know, she said, which one do you think is going to go further or whatever in psychology? And the professor basically bet on my friend. He's like, he's way smarter, but he's not really that motivated. Like we all knew that he was really smart, but he wasn't that motivated. He never really had to try. And then, and then my girlfriend's like, well, I don't know. What about, Walter? Because he's like super motivated. And she's like, yeah, but he's not that smart. So yeah, it was pretty funny. Anyway, fast forward, my friend, he went to graduate school for a year and dropped out. So he never, I went through it. Yeah. So it's exactly what you're saying, basically. So at least in this one instance, yeah. So I agree. Yeah, motivation is true, man. Like if you have that motivation and you're determined no matter what, then you'll find a way. You will find a way. You just have to do it long enough, and then you can get it. You can definitely get it. Yeah,
for sure. Yeah. Well, talking about personality types, what do you think about like all these personality type tests? Do they help? Do you think they just hinder?
It depends on what you're trying to do, I guess. This is a big thing in psychology. In personality psychology, people always talk bad. Like the one I was telling you about, the conscientiousness, that's from one called the Big Five, right? And, they talk about the 5 dimensions. And it's kind of like intelligence. In psychology, intelligence is a hot topic too, because people go, well, what is it? Is it a general thing or is it like individual specific things? And it's a big debate. If you're a person who's trying to get better at trading, then I do believe there are some tests that can help you at least become more self-aware and probably focus on something. Like if you identify something is your weakness, then that's really helpful. That's a very good thing to know. It's also kind of, which I think is what you're hinting at, it's also kind of taken to an extreme where it's like you take this test and you'll know for sure if you're going to make it. Like, that's not, you know what I mean? Like that's like, because personality changes. That's another thing. Yeah. We used to think that it was like solid set. Not true. Personality changes. You can become more conscientious or you can become less conscientious. You can become more determined and you can change your mindset from sort of a defeatist sort of woe is me, everything always, my life, I always have bad luck. How do you know that the walrus is angry and he just doesn't always look like? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, revenge trading. I know some traders do it. I haven't really suffered from that, but let's talk about that and see first of all, why do people do it? And what are some ways to overcome it?
Well, to me, it's kind of like the same reason why as humans, we will look at different animals and we'll give them human characteristics. There's actually a really fancy word for that, and I can't remember what it is. But like it's where they do that in Disney movies, right? They take animals and they make them look human. And we do that when we see animals. Like you go to the zoo and you go, oh, look at that walrus. He's so angry, and like, but you like, how do you know that the walrus is angry and he just doesn't always look like, you know what I mean? Like,
yeah.
To me, that's a weird thing. And we do the same thing, I think, with the markets where it's like, you little pound, you got me this time, next time I'm gonna get you, sort of thing. It becomes this thing where it's like I'm gonna get back at the pound because the pound has been beating me up and taking my money. That's just a license to get off the like you're gonna be off your plans, you know what I mean? Like you're gonna get way outside of that. And
now it's personal.
Yeah, it's personal. The other way it comes up though is brokers. Like you'll hear people say, oh, my broker got me again or whatever. I will say that there are brokers that do that, especially in Forex.
Yeah.
But it's not the norm, and you can usually figure out who they are really quickly by the reviews. So when you see these reviews where these brokers are just getting hammered, all the brokers get hammered in the reviews actually, but the ones that get really hammered, those are the ones that you want to stay away from. And sometimes you can kind of tell when someone gives a broker a bad rating. You can see like they're like, well, what they're saying is completely ridiculous. Like, like I'm actually on the side of the broker. You know what I mean? But so you can get spiked and things like that. And so you're like, oh, I'm going to get that. I'm going to get my money back and stuff like that. But it's really important for you to just determine like what are you trying to do as a trader? Are you trying to make money out of this strategy that you've tested and has a really good chance of working? Or are you trying to get back at the broker, the currency pair, trying to prove your boyfriend or girlfriend wrong that, you know, you can make it out of trading. Like, what is your real motivation? And I think the closer you are aligned to following your rules and actually following that path, I think the better off you are. But that's just,
no, totally.
yeah.
Totally, for sure. And I think it really boils down to ego, right? Like, we want to prove something, like you said, and our ego can't let go of it. And we need to get back at them, or get back at whatever we perceive to be the culprit or cause us to lose. So what do you think are some ways to get over that?
To get over it, first of all, what you said is I totally agree with. The female traders typically don't have as much an issue with that. They're really good at letting go of ego. Typically, not always, right? Typically, they don't have the ego that men do. And you'll see this when you go to like see trading gurus talk. The men will talk about all the money they made and how good they are and how they did this and that and blah, blah, blah. And it's like, you know, you're setting yourself up for a failure. At the time that we're recording this, there's a really famous dude on Twitter who trades stocks, and he's made a boatload of money. And the last couple of days, he's lost 4.5 or 4.2 million or something like that, because he's letting his ego take over. And he's saying, like he says, the stocks only go up. And if you have any, rule number 1, stocks go up and they only go up. Rule number 2, if you have any questions about what to do on a trade, see rule number 1. And so what he's doing is he's really setting himself up for a life-altering loss.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And if you read like the Market Wizards books, you'll hear all the stories about these guys who went through that. So how do you get rid of ego? Okay, what you need to do is you need to become your own manager or have a manager, one or the other, or probably both. So one, to become your own manager is rate your score on entry and rate your trade on exit. Okay. And objectively look at that every week, every month, every quarter, every year. How are you tracking? You can keep it in a spreadsheet, see how you're going, how your rating's going. The other thing you do is every week you can talk to someone else and have them do the same thing and say, well, you didn't do what you said you were going to do with your system on 3 out of your 5 trades. So what's going on here, buddy? Right? Like that's another way. So what you're trying to do is step out of yourself and see your performance from another's point of view. This is why the professional traders, when I say professional, I mean like the job, the guys that's their job at the bank or the fund.
Traders,
yeah, they have someone looking after them. They all do. And when they leave, they don't, right? When they go home and trade with their own money, they don't anymore, okay? And let's look at the difference between performance. So you can create that yourself, where you have someone else. You can try to do it yourself with your journal and rate your entries and exits and rate your performance on the execution side, but you can also get these sort of reports from somebody else that you trust, and you can do the same thing. You know, it's a trading buddy sort of thing. I try to connect people with trading buddies in the forum, and it's a really good way. Like, just every week, man, just work on one thing. What's the one thing that you tell your trading buddy you're going to work on this week? Simple as that. And then at the end of the week, how did you do? Did you do it? What? Show me. Let me see the trades. Let me see the data. Even if the one thing is just I'm going to backtest 100 trades this week. You know, it doesn't even have to be live trading. It could be backtesting or whatever. So yeah, that's what I would recommend to do is offload the responsibility of knocking down your ego to someone else. They're much better at it.
Yeah.
Hopefully
Exactly.
they'll tell you the truth. You need someone who's truthful, right? Yeah.
Exactly. Yeah. And I think we both know several bank traders who could trade well at the bank, but when they leave, it's really difficult, right? And it's part of that system. Now, I would also add, like, I think it helps to physically imagine yourself like separate from yourself almost, and like observing yourself from as like a third party, and that helps me to get more objective about what I'm looking at.
Yeah, like a camera. So
Yeah.
so I think it's I've read about this when I was on my trading sabbatical. Yeah, so you kind of like back in 2004, I don't know if it's NLP or maybe it was NLP, but the idea that you kind of see, like you say, like you're there trading. And I remember when I first started doing it, I was like, man, I looked at myself and I felt like I was addicted. You know, like I felt like I watched myself trading in my setup and I had this really comfortable chair and I was sitting at it like every night. And I just thought, man, like you're just sitting there in that chair the whole time. What are you doing? Like, and that's when I kind of moved away from trading the lower time frames. I just thought, I realized, number one, that all my best trades were the ones where I didn't sit and watch it. And so I kind of walked away. And thing number two was doing that technique you just said, which is a great technique, because I kind of objectively saw, man, my body is going to mold into that chair. Like I am going to, you know what I mean? I am going to be like, I'm going to turn into Jabba the Hutt because, you know, and I would fool myself because all day I was surfing, I was going, you know, doing whatever I wanted. And then at night around 6 o'clock is when I would sit down in that chair and just lock into the computer, and I'd be there from like 6 till 2 a.m. It was crazy, man. So yeah, so I just thought this is not a good idea. And so that can definitely help. You could ask other people. You can ask other people, you know, I mean, like, it doesn't even have to be, I don't, you know, with your trading accountability partner, you want someone who's a trader, but it could be someone that's doesn't really understand trading. And you can ask them about, what do you think about, you know, my trading or how I'm, you know, because then you might get a perspective about, they might say something that'll shock you. Like, are you really happy? Like, is this really what you want to do? Like, you know what I mean? You always seem so upset, or, you know, they could give you some sort of weird insight that you hadn't even considered.
Yeah, because if you're in it, like, there's a certain amount of dogma associated with any type of activity or profession, and some people get brainwashed into that. But when you get an opinion from somebody else from the outside, then you can get something that's fresh and something that's not necessarily part of that dogmatic thinking, right?
Yeah, absolutely. Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I would argue even the most successful have been women, the ones I've met actually, and that's a very small population size, obviously.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about men versus women in trading? Do you think that generally women are better traders from the beginning, or do you think men are, or what do you think about that?
So there's this idea in like science. I understand it from psychology, but I'm sure they have it in biology too, which is you're born with this range. You're going to be a height. Like, your genes are basically going to determine pretty much the upper and lower limit. So you might be 6'3", or you might be 5'11", but you're going to be between 5'11" and 6'3", or something like that, right? Depending on your nutrition and things like that. Okay, so, and I guess, you know, how much you stretch your spine or whatever. Like, I don't know how you get taller. How much yoga you do. Yeah, so the way I kind of look at this with the women versus men sort of thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
On average, and I know we're talking about averages and stereotypes and all that, but
sure.
On average, men have a wider range. And here's why I say that. Because sometimes you'll find a Jesse Livermore, and you guys can look up who he is. You can go read Reminiscences of a Stock Operator. I'll put the link in the show notes for this episode. He was crazy. Okay, he took risk to the max. Actually, you could argue that George Soros is the same way. George Soros is very similar. The upper limit is when you just go hog wild. Now, Jesse Livermore also killed himself. George Soros is to be determined. Okay, so you may not want to be, you know, Jesse Livermore, right? You may not want to go into that. So that's the other thing, is that George Soros and Jesse Livermore, they're at the upper edge because they got so wild with risk. Then you can also have the lower limit down at the bottom where there's people, same thing. They get crazy with risk. They're doing revenge trading, all this crazy stuff, and they end up blowing out. Whereas I think women have a tighter range, right? So I think women typically don't let ego step in and kind of dictate what their position size is for any given trade, right? And they typically a little bit more measured. I actually think that women in general should be running the world. Like, I actually think we would have fewer wars. There'd probably be more wisdom in terms of, you know what I mean? Like, I just think the countries would get along. That's another story. So yeah, so I think that they have a tighter range. So they're probably more likely to make money overall, but also they may not have the extreme highs and lows that you get when you get these wild cowboy guys, stepping in the markets, which is like, they're there, man. You can see them, and you can see them today. You can go on Twitter. I had no idea that Twitter was such a spot for traders, but it is. Like especially the stock traders. It's crazy. I've only really realized that in the last 6 months, but it's entertaining. It's actually entertaining to see these guys try and blow themselves up. It's crazy. Yeah.
There's actually some good opinions there too. So
yeah, absolutely.
Yeah.
What do you think? I mean,
for me at least, the most consistent traders I've ever seen, and I would argue even the most successful, have been women, the ones I've met actually, and that's a very small population size, obviously. But I do know of a couple women who can make a living basically with a 5 or 10 grand account, and they'll double that up every 1 or 2 months, and then they make a living off of that, and they don't want to trade anymore. But I'm on a pure percentage, return. That's like fantastic, right? But yeah, I think they do have a little bit more of a calm head. They generally look at things more objectively, and they don't put that testosterone, I guess, in it and try to go balls to the wall or whatever. Yeah. So I think there are fewer women trading, but I think when they do decide to trade, I think they end up usually being pretty good.
Absolutely. Yeah.
Yeah. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Take it and, be a man.
Suck it up.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, when you're first starting out, what would you have liked to know about trading psychology that you know now?
Yeah, it's a good point. I think probably that's the biggest part of the trading game is the psychology part and not the systems part. I was like a lot of traders, probably like you in the beginning, where all of my focus from 2000 to 2004 was on systems. And back then there was one Forex book that was available that I could find anyway. The rest of them are all technical analysis books for stock traders. Mm-hmm. And so that's what my focus was, and if I remember one day, it was when I moved to Australia, I didn't really have anything to do. All I did was just get books from Interlibrary Loan. Mm-hmm. So there's a little tiny library in the town I lived in that was about the size of a really big garage, Yeah. It was weird, man. It was crazy. It was like walking into a sheep shed or something. It was weird. Anyway, so they had no books, right? And certainly no trading books. But what was cool was I could pay $10, $15, $20, and they would send these books from all over, from universities in Adelaide and stuff. It was amazing. And so I had this really cool education of learning all these strategies. But in the end, I realized, and I remember one day I had this system. It was called, I learned it from I'll put the link in the show notes. I learned it from a Jake Bernstein book called The Stochastic Pop. Okay. And I was trading the strategy, and it was actually working. And yet I didn't follow the rules. And I remember going out surfing, it was a rainy day, and I remember just thinking to myself, what am I doing? I have this strategy, it works, but I'm not following the rules. I'm taking my profits too early, blah blah blah. I'm doing all the wrong things. You know what I mean? Mm-hmm. And it was at that point that I really understood the magnitude of the trading path. What really what it is really about you. It's about you, the trader. You are the mechanism that makes it all work. And even if you're an automated trader, like even I know some people might be listening to this and they're like, well, I program, I use EAs, blah, 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 that, I don't have to worry about that or remove emotion from my trading, blah, blah, blah. Well, no, not really, because you turn it on, you turn it off, you modify it. You know what I mean? Like you're still tinkering around. So it's really no different for a discretionary trader and an automated trader or what they call systematic trader, I guess. So yeah, so that would be the biggest thing. And the other thing that drove that home for me was the Market Wizards books, because I saw all these different traders who were successful and they all had different ways of doing it. And I was like, whoa, because I always thought like there's got to be one way or maybe a couple of different ways it would work. And I didn't realize that there's all these paths you can take, And that was really cool too, because it showed me a lot of them had that experience of having a terrible loss, and that sort of set them off on the right path in terms of risk and stuff like that. So they really kind of recognized the importance of risk management. And then also it was an eye opener, because like, wow, all these guys have totally different approaches and they're all making it work. So that's kind of like, it sort of readjusted my reality, and it wasn't about systems anymore, because like, why would it be about systems? All these guys are, they're trading totally different, completely opposite in some respects, like 180 degrees opposite. So yeah, that was, for me, that was really important, was the realization that it is about you, the trader, and not so much the system. The system's important and you interact with it, and that relationship between you and the system is really important, but it's not the real gains you're going to make as a trader is once you realize that you are the reason why you succeed or fail. Everything else is just kind of like real estate. They say real estate, location, 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 right? And that's true. Like you can have a gorgeous mansion, but if that mansion is in like the ghetto of like South Central LA, nobody gonna want it, right? I mean, it's the exact same thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Whereas, take the opposite. Let's say you find a total rat-infested, disgusting house that's barely holding up, but it's like in Beverly Hills. Guess what? Everybody's going to want it, because what are they going to do? They're going to knock it down and fix it up. So it's the same thing with your trading psychology. If you have that part right, the system, don't worry about that. Like that will come. If you can get you right, then it'll, you know what I mean? It'll work. So what about you? What are your thoughts on that?
Yeah, I totally agree. I mean, I think that's something that everybody goes through. And I just don't know if you can get around that or if there's a way to shortcut that realization. So maybe my thought is that maybe you can look at other areas in your life and figure out maybe what are your shortcomings there and try and fix those things first. And then that will carry over to your trading. Because I think just inherently the way that trading works, I think everybody defaults to the trading strategy. They want to have the highest return strategy. They want to find the most successful trader. But in reality, it really comes down to your own psychology. So I think that might be one way to short circuit that mechanism. But I don't know. What do you think about that?
No, I think you sound a lot like Ed Sequoia, because Ed Sequoia said that, right? Like in his book, I'll put in the link for you guys in the show notes, the Trading Tribe book. He talks about how like basically what you're saying in a different way. If you have issues in your life, they're going to come up in your trading. And so the whole reason why they have these trading tribes around the world, and you can probably find one pretty close to you for most people listening to this. Like, he has these groups where the whole point of the group is, I don't go anymore. I used to go for years and years and years. And the whole point of it is for you to pull out those emotions, those dramas, like those things that are happening in your life that are like causing friction. You're supposed to experience those and kind of release them in a way, right? Mm. And so in a way, it's kind of really Freudian in the way that Freud talks about, like in Freud's day, the steam engine was the big thing that everyone was relating things to. Like today, it's a computer or whatever, but back then it was, the steam engine, and so kind of letting off steam sort of thing. And that's kind of what the Trading Tribe was designed for by Ed Sequoia, was like, look, you have these things in your life that are like issues and touch points and little disagreements with people or issues with whatever dramas are going on in your life. And you're not allowed to get emotional about this. You're not allowed to, like, especially as males, you're not allowed to talk about them. We're supposed to just kind of take it and, be a man. Suck it up, boy. Yeah. And so the whole thing about the Trading Tribe is to release it. And so, Yeah, so I guess what I'm saying is he would have a similar approach, I think, to what you're saying, which is understanding that it's not just your system, it's not just you, it's not just you and your trading journal, it's not you and your platform, it's everything that's kind of impacting that. And I feel really sorry, like I feel really bad when I hear from traders who have people in their lives who don't like that they're doing trading and they think that it's a waste. You know, that's an influence, you know, that can really impact your overall bottom line. So I find that what you said to be very true, you know, like that you have to have a way to release. It doesn't have to be Trading Tribe, but you got to find a way to get, like, for some people it's journaling, just writing down. For some people it might be like working out or running or riding their bike for, you know, miles and miles, or, you know, whatever it is. Like, you've got to have this way of kind of like releasing that pent up energy, that pent up emotion inside of you that otherwise can seep into your trading and create like trading dramas, you know, where that's where they play out. So that's, yeah,
no, totally. I mean, I've studied quite a bit of like ancient cultures and how they heal people. And that's totally what it is. A lot of them, you know, regardless of what method they use, sometimes they use some medicine, sometimes they use chanting or rituals, but regardless of what they use, it's all about facing the trauma and then releasing it. And until you're ready to face it, then it's still going to be there. It's still going to cause problems. And I've seen some pretty amazing healings with those types of methods. But yeah, it all comes down to, do you have the courage to face it and solve it? And I think that's the same in trading too, right?
Yeah, that's really interesting. And I bet you, when you look at that, I bet you found that they kind of set it up in a way where, like, you know, you have like a support system around it when you approach that, right? Like, it's kind of interesting, isn't it? That like we think of ourselves as so advanced, and we do have a lot of advancements today, but it's weird that there's certain areas, I think, that like historically, like you're saying, like ancient cultures had a better approach, like a better way. Yeah. And this might be one of those areas where you see it pretty consistently, right? Like, there's probably a very strong protocol in a lot of cultures for like, what do you do in this case? Like, how do you help someone through this? How do you get to the other side, sort of thing?
Yeah, no, that's a good point. I mean, they have a lot of strong rituals and protocols, and they also have the support group. So I think it's a similar thing in trading. If you should have a support group, and you should try out some of these protocols that people have, and, you know, see if it works for you or not.
Yeah. Cool.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think there's a huge difference between being able to do the thing and teach the thing. Some people are good at both, but most people are just good at one, I think.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what are your favorite or most influential trading psychology books?
Trading psychology books? You know, I actually find that more pop psychology to be more useful.
Okay.
To be completely honest. I mean, the Mark Douglas one is pretty good. I would say that for me personally, so when I went through psychology, so I did a lot of psychology. I was surrounded by psychologists, right? So my mom was a psychiatric nurse, okay? And so I had like psychiatrists, psychologists always around, like, because she worked with them, like she worked in like the nut house, right? And so like, you know, we knew, like, and I was, you know, I would go in there and see these crazy people, and I always knew they were different. It's really kind of interesting, you know. When I went to school and did undergraduate and then later on a PhD and master's and all that in psychology, you actually get really specialized. Like, the most that you learn in terms of breadth is in undergraduate, and then as you get further on, you kind of, you know, like any PhD, learn a lot about a really precise thing, you know. What I found interesting though about that area of doing that and working with academics and things like that is how like certain ideas are just kind of relegated to like, this isn't real science. You know what I mean? Like, there's certain topics you're not allowed to study, right? And in a lot of ways, I found some of those to be the most interesting.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Like, for example, there was a guy in my school, and I know this is a long-winded way, but I'm going to eventually get to this. So there was a guy in my university that he studied UFO abductees, right?
Okay.
And nobody was allowed, like, I never saw him. He was a professor, so he was tenured. He had been there for decades, right? And I even walked by his office one time. It was on a level that I never, like, there's multiple levels, and I was on the bottom level, and the lab that I worked in. So I never really went up to different levels. But one time I walked by and I go, holy crap, this guy is at this university. I forgot. And he was like a well-known interviewer of people who had been abducted by in UFO experiences, you know?
Mhm.
And I thought that like was a really interesting thing to study, right? Like, I mean, but I always listened to like those shows, those late night talk shows and stuff where they talk about that stuff, right? So I was kind of interested in that. So, but yet whenever his name came up, which is only once or twice I can remember, like my mentor would just kind of blow it off like, you know, he's loony bin, you know, he's a crazy guy. Like,
Yeah.
you know, and it was so weird, like, because people would just, and that's how it is in science, like certain ideas, like another one would be, I think in anthropology, like they say, like, there's only one theory about how people came into North America, like go over the land bridge from, you know, from Russia and come down and so anything earlier than that, it can't be. Like they actually wouldn't dig to a certain depth. After they dug a certain depth in archaeological sites, they wouldn't go any further because they knew there was nothing down there, which is crazy, right?
Yeah.
And then now we have all this evidence of like Göbekli Tepe in Turkey, which like this city structure thing like isn't supposed to exist when people were in the Bronze Age, right? Like they're not supposed to have cities and stuff like that. So like there's a lot of there's actually a lot of evidence in North America and South and Central America too. This is a long-winded way of saying what I found in trading psychology is to be kind of like, for me, not that meaty, but I found it in like typical pop psychology. Like I found some of that to be more useful for me. Like, for example, there's a guy named Martin Seligman. He's written a lot about, he's kind of considered the guy who created positive psychology, which again, you know, in some circles, it's kind of accepted, right? But it wasn't something that I learned like all through going to get a PhD. We never had any chapters or readings really on positive psychology. Like it wasn't really a thing, you know what I mean?
Yeah.
It wasn't until I got out of it and I realized that this guy had written all these books and he had actually, like there are his disciples in Australia who've created schools based on his teaching. And he has all these guys. He's getting really old now, you know, and I saw him, he came out to Australia and you get to like listen to him and ask him questions and stuff at his lectures. But his stuff is really cool because for traders, resilience, and that's something that he talks a lot about, is resilience. Mm-hmm. That's a really important thing because we quit trading systems, we quit trading, we give up on things during losing streaks. And so that ability to bounce back, I think, is the best predictor of trading success. So like you, for example, are a very resilient trader. I know this because I've known you for years and I know like the process you've gone through, right? Mm-hmm. I believe that that's why you've been able to make it as a trader. I know other traders who don't trade anymore. And the reason why, I think, isn't because they couldn't do it, but it's because they've got to a certain point, and because they didn't have the resilience, they just kind of gave up. So they never allowed themselves to make those extra couple steps to where they would have actually made it. Mm-hmm. You know what I mean? Yeah. So for me, the biggest thing, if I had to guess one thing, like, you know, if someone asked me and they said, what should I go, just read all the books on resilience, Martin Seligman, like get into that stuff. And that's really going to help you if you use those tools. And there's a lot of like, it's not just Martin Seligman. There's a lot of his disciples or whatever, people who've taken up the baton and are doing really good research in this area. And a lot of them have written books too. So look up positive psychology, look up resilience. Those are things that I think can help. There are great trading psychology books out there, like the Mark Douglas one. You know, there are other ones like related to like trend following where you know, it's kind of like, you know, pick yourself up and go and do it again, you know, sort of thing. Because a lot of the trend followers have to go through that, like Curtis Faith, you know, that sort of thing. But I found personally for me, just applying those lessons from mainstream sort of pop psychology has been more helpful. Yeah. What about you? Yeah.
Yeah. I mean, for me, it was a little bit out of the trading realm, I guess. One of the big ones was the original title of the book was Poker, Sex, and Dying. Dave Kaplan bought it and he renamed it Trading, Sex, and Dying. But the original author, Joel Anderson, was a poker player. He worked at a
phone dating service, and he worked at I think it was a morgue. So that's where the title comes from, Poker, Sex, and Dying. So he said that based on those experiences, he got a lot of insights into human nature, how people act, and especially at the poker table, how certain personality types would respond to certain types of stimulus. So he could kind of read them just based on the category that he thought they fell into, which is really interesting. And when I started reading about my profile in that book, I realized, okay, yeah, that's me. So I guess before that, I was thinking that these things about me were wrong or they were bad or something I had to change. But then once I read that book, I realized, okay, that's just how my personality is. And I could kind of go forward from there and not be like guilty about it or whatever. So that was one book. Another book, yeah, the Mark Douglas, Trading the Zone. Another one is, I forget what it was, but anyways, it's just basically a psychology book. I'll put in the show notes afterwards. I forget what it is. It just escapes my mind.
Yeah, we'll put it in the show notes. Yeah.
Yeah, but those are the three. But I'd be interested from a psychology standpoint, besides the resilience part, what do you think is most lacking in most trading psychology books in terms of like you say, pop psychology versus trading psychology?
Well, actually, what you just said, because I think you really nailed it. Basically, what you said is what a psychologist would call self-awareness, right? So what you were talking about was like you were trying to like map yourself onto what you're reading in the book. I think that self-awareness would be one of those really important skills. I don't see a lot of this going on in like trading, like most trading books. Okay, so most trading books, 85% of it is devoted to systems, right? Entries, exits. Yeah. And then the other 10% might be a chapter on psychology or something like that. And then maybe another 5% on risk or something like that. Like that's usually what it is. 85, that's typically, you can pick up any book and that's what you're going to find in most cases if it's a normal trading book, right? If it's not just devoted to psychology, obviously. Okay. What you were talking about is being self-aware. Now, how can you be self-aware? Why is that important? Well, in trading, like if you don't know, because I guess the reason why I say this is because if you are self-aware, then you also are like, you have what's called high interpersonal intelligence, right? Like you can kind of read people and stuff like that. So like if you're a door-to-door salesman, something like that, or like a car salesman or, something like that, you can kind of read people. Like you get used to like figuring out if someone's thinking that you're BSing them or whatever, you know what I mean? I've always found that fascinating, sort of like an introvert. I've always found it fascinating to like, if I'm at a party or something or a get together and there's lots of people, I'm always like thinking like, what is that person? And you know what I mean? Like, what are they thinking and what's going on in their lives that they're not talking about and stuff like that, And in fact, I remember the last time I had a job, which was a long time ago, I'm basically unemployable. Yeah. When I had a job, I remember my manager was saying to me, like, you're very aware of your body language and stuff. And like when people were in meetings and stuff, I would always, and he was right. Like what I would always do is I would always like shift and stuff so that I was listening to them, you know what I mean? And stuff like that to make, you know what I mean? Like to get that sort of, and they talk about it in NLP and all that about facing someone. But I think, so if you want to become self-aware, why do you want to do it? Because you become aware of the mistakes you're making, right? And number two is if you're not self-aware and you can't figure out what's going on, what's going on with my trading? Why isn't this working? There are things that you can do. Like you can become more mindful, right? Mindfulness is something, that sort of meditation. That's a really buzzword right now, nowadays, this idea of being mindful, but you can read up on mindfulness. You can also write it down in a journal, not like an emotional journal, like a diary sort of thing about your trading and your experiences, and not sort of, I entered the euro here, I sold here. And, not like that, more of a, stream of consciousness sort of thing. You can also write down your dreams, and there are ways that you can like people say, well, I don't dream or I don't remember my dreams. Well, you can work on that too. I've posted some stuff on my blog about that. I'll put the links in there if you guys want to check that out. But so those are tools. Those are three things right there that you can become more mindful. And you need to be mindful as a trader, because if you're not aware of what's going on with you, how are you going to fix it? You need to know, okay, this is an issue for me. Like, this is not a strength. This is a weakness. How am I going to attack this? How am I going to make it better? Typically, if I'm watching something on YouTube from a trading guru or more like lectures, I do watch some lectures on like futures traders and stock traders. Like I do find those sort of interesting. The Forex stuff I don't really find useful. but what's interesting is they will usually say something like this: you got to do this, and this. Like you got to fit my pattern, right? And I'm not a big fan of that. What I think you need to do is one, become very resilient, and two, become self-aware. So you know, kind of like, and if you can't do that, other people can, right? Like having a trading accountability partner can help you, right? Like a trading accountability partner can help you because every week you talk to your person and you say, look, this is what I did. And they can say, well, why didn't you do this? If you have those blind spots, you know, those sorts of things, if you're not a really self-aware person, that's what I would do. So trading accountability partner, mindfulness / meditation, and also journaling. Those are 3 things that you can do to kind of up that, because I think you're right. That's basically what you just said. And I think that's really a big one for traders. And again, I don't see this in terms of like trading psychology. I don't see it as a thing that's talked about. It's like resilience. It's kind of like a thing. Like they usually will say things like, just do this, this, and this, right? Like follow this path. They don't say like discover who you are, or, you know, here's how to, you know what I mean? Like
that doesn't sell very well.
No, exactly. Like that's not a, it's not a,
too touchy-feely.
Yeah, it is. And a lot of these traders who get these platforms, they're very self-assured because of, you know, their experience in trading and the money that they've made. And so they kind of get blinded to the fact that, you know, they kind of think that this is the way, like you need to do what I did, sort of thing. You know, you don't get a lot of people saying, well, I did it this way, but you could probably also do it this way. Like you get a lot of sort of dogmatic you know, and that's not, I don't think that for a lot of people, it might be perfect fit for you. It could be, you know, just like you can go to the shoe store and you can pull a shoe off the shelf and that's your size, right? But a lot of time it's not going to fit. So it's not a good match, in my opinion.
Yeah. I think it's, the bottom line is that those people aren't necessarily being dishonest or whatever, but they just aren't very good teachers. I think there's a huge difference between being able to do the thing and teach the thing. Some people are good at both. But most people are just good at one, I think. So,
Yep.
That's
true.
Thing,
Yeah, it's true. Yeah. And part of that is because when you get really good at something, you don't know what you're doing. You know, you're not aware. Like, you know, you're like, like think about when you first started driving. Like when I first started driving, I remember I was in the car with my friend, and he's older than me. He's about 10 years older than me. He's actually a really well-known actor, like well-known. He's always covered up in a costume, so you wouldn't know him, but he's in a lot of like movies and stuff. And he was in Silver Surfer. He was the Silver Surfer, and he was in all these different movies. So I had a permit, so I had to have someone who had a full license in the car. And I'll never forget, I was driving with him, and he's like, "Hey man, can you change the radio station?" And I'm like, "No man, I'm driving." You know what I mean? Like, like it's like I can't change the state. I'm like concentrating on driving. You know, think about that. Like, it's the same with trading or any skill. When you first learn it, it takes so much of your mental energy has to be focused on that. And then as you get good at it, it's so automatic. It's so like just you don't even. It's not even a part of your awareness. It's so hard to even bring into your awareness what you're doing when you're driving. When you've been driving for 30 years, it's just not possible. You know, it's really hard to bring that in. So I don't blame people for that. Again, it's part of being self-aware and mindful. That's how you know what you're doing. And so you really have to almost like get really deliberate, you know. And so for me, one thing that really helps me, and this could help people, even if you're not sharing these videos with anyone, you can download like a free video recording software, and I'll put a link down there for you. You guys can make these videos when you take your trades and maybe when you get out of your trades, even if no one sees them except you, and just walking through the trade and talking about, this is why I'm taking this trade. This is what I'm going to do. If it does this, I'm going to do A. If it does that, I'm going to do B. You're mapping out, just having that record so you can go back and look and go, why did I do that? Like, you know, and eliminating that hindsight bias, because you can see, well, that's all the information I had when I took the trade. I didn't have this future information. You know, just having those sorts of things where you're actually speaking out loud and talking about your trades, that's super useful for people to open up to, okay, whoa, that's a blind spot for me. You know, that's something I didn't realize I was doing that, but now I can see it. So that's another thing you can do too. So yeah, this is actually a really good episode, Hugh.
Yes, we're getting into it on this one.
Yeah, I think this is a good one. Yeah, so hopefully, you know, with all these things that we've talked about, people can use them, at least one.
Yeah, definitely. Oh, just real quick before we end, that book was called Trade with Passion and Purpose by Mark Whistler, just so that we have a reminder for the show notes.
Oh yeah, you know that guy. I've heard about that guy. I went to a husband and wife trader team in Portugal. And they're like, dude, we just had Mark Whistler here. Like I went and stayed with them for a couple days. Oh, I know what it was. I was at the FX Street conference in Barcelona. That's right. And they said, "Hey, come over." And I go, "Okay." And I said, "I can only come for a couple days because I got to go to a wedding." And the guy's like, "Well, whose wedding is it?" I go, "It's mine." He goes, "Oh, okay." So I had to go to Tahiti. So I had to go from Barcelona all the way back to Tahiti for my wedding. Yeah. They were saying that Mark was there, and I heard about this guy. I didn't really know much about him until they were telling me, and they said, "Yeah, he's a really cool guy." So I'm going to check that out too, Hugh. Thanks for that, because I never really heard of this Mark guy until they told me about him. They said, "Yeah, he's a really cool guy." I said, "They're like, we always try to get these traders to stay at our place."
Nice.
And it's a really nice place too. It was like a kind of like a bed and breakfast, like a really nice, right across from the beach, and it's beautiful. Yeah. So.
Oh, cool. Yeah, he's written a few books. I've read a couple of them, and they're really good. He's kind of like a good underground author that I don't think too many people mention, but
yeah, I think you're right. Yeah, but I'm going to check it out. Yeah, thanks for that. Yeah,
sure.
Awesome.
Okay, thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Well, that ain't going to last very long. And here we are 20 years later, right? It's still over $1. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk a little bit about swing trading psychology. How is it different from other types of trading? What are your tips on becoming the best swing trader possible?
Well, I would say from the data that I've seen, from asking traders questions and putting them through like a questionnaire, most traders are what you would term swing traders or end of the trend traders. So about 85% of traders like to find the end of the trend or like the end of a swing move, right? So they like to kind of like catch a reversal. It's almost unnatural for most traders. It's unnatural to try and buy at a high or sell at a low and assume that you're in a trend. So number one, if you're a swing trader, it's probably going to be quite easy from like a mental point of view to try and hook into these. The bad news is there's a real temptation, because a lot of times, let's say you're a swing trader and you get in on a pullback. So it's actually a trend. It's a strong trend, and it's going to keep going. It's going to keep trending. And so you find your reversal entry and you get in it. The problem is, that trend, that reversal is only going to go so far, and then it's going to continue on in the trend. So what that means is you have a very small window to take profit if the market's trending. And oftentimes a lot of swing traders or reversal traders, end of trend traders, their radar really perks up when they see a strong trend, because they think, oh, it's gone too far. Like I'll tell you right now, I raised my hand as, back in 2001, I think it was, when the euro went over $1.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And I remember saying to myself, well, that ain't going to last very long. And here we are 20 years later, right? It's still over $1. So, because when I first started trading, it was when the euro first came out. It was always below $1. It was like 87 cents, 89 cents, 92 cents. Like it was always down there, And so we always thought it was trash. The euro's trash, man. It was no good. And so I remember thinking when it got above $1, I go, well, totally time to sell. Well, that was like a 3-year bull trend, it's crazy. So it's natural is one. There's a temptation to take quick profits, which I think is bad. I think you're probably going to want to use some sort of element of a trailing exit, and also some sort of way of determining whether or not the market is trending or not, and make sure you just stay away from the trending market. So like if you see a box consolidation or a channel, there's lots of different, or trend lines or whatever, like if you have a line in the sand, you go, okay, it shouldn't go beyond this, like use that sort of thing. So like trend line, support and resistance, anything that you can really sort of define the market as range bound or at least not trending, you're better off than looking at those wild charts where the market looks like it's gone too far and you just think it's going to come back because it's gone too far. I would stay away from those, and I would try and have a really high reward risk ratio because like I said, it's really tempting to take profit when you catch these reversals and it doesn't really go that far. And then you start thinking, I better take profit or it's going to go against me, sort of thing, you know? Yeah. So you're better off just moving to break even and then slapping a trailing exit on it or something like that. You know what I mean? And then saying, okay, well, I either hit break even or I really got one here. You know what I mean? Sort of thing. That's what I would do. But I mean, everyone's got to decide for themselves and test and figure it out if it's profitable.
Yeah, sure. I think definitely patience and lack of patience is definitely the hardest thing about swing trading. Just going through the testing and figuring out, okay, how am I going to exit? Does that exit work? I think is the toughest part. Otherwise, it's pretty easy from the standpoint that you can just take 1 or 2 trades a week. You don't have to look at the charts every hour or whatever. And but yeah, I would agree with you.
Yeah, for sure. Yeah, I mean, it's fun. I mean, it's fun, right? I mean, that's why a lot of traders get into it because they think, well, this is obvious, like it's going to turn around here. And I think for non-traders or new traders, I think that's what they think trading is. Like you have to know where it's going to go. You know what I mean? Like trading is predicting the future when really it doesn't. That's not
more
really
reactive than anything. Right?
Yeah, exactly. Yeah, exactly.
Yeah. Okay,
exactly.
Cool. Thanks, Walter.
Thanks. See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Discipline can trump talent. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, missing trades. How do we avoid it? Why does it happen? And how can it affect our trading?
So for me, the way that I've tried to avoid that is by trading. Well, there's 2 ways for me. If I trade higher time frames, I don't necessarily have to miss trades. Like it's just easier to see like the 12-hour candles. So that's one thing. The other thing is like let's say I wanted to take a trade on a 1-hour time frame, then I would just set up an automation so that it enters the trade if you know what I mean, if it's if everything sets up correctly. So so that's what I've done. But I think what you're getting at is the psychology behind it. The difficult part about it, I think, for a lot of traders, like imagine you're playing a soccer game, right? And your team's down a goal. So it's you're 0-1 down a goal. There can be a lot of pressure for you to try and score, right? To, even it up, so to speak. And I think that's kind of the way that some traders, like we think about trading when we go, well, we missed that one. And then you'll watch it and you go, oh, look, of course it worked out so nicely, blah, blah, blah. And so you kind of feel like you got to make it up by taking another one as soon as possible. The other real problem is getting in late and chasing it. I prefer recently, the last couple of years, I've liked to trade the trend mostly. So that's a real big deal, isn't it? Because if you miss an entry and you don't, and then like it's tempting to get in again after your signal. And if the trade's already up 80 pips or whatever, and you're like, well, I'll just get in now. Or what I like to do is really kind of hold off until another signal comes. Because if it's a strong trend, it's going to keep pulling back. It's going to keep giving you signals on the pullbacks if that's how you trade, right? So it's not really like, for me, it's more of a lifestyle thing, like making sure if this is something that really bothers you, then just make sure that you don't just set up your day. If you're away from the computer from 7 a.m. to 8 p.m., then just trade those charts that allows you to make your trading decisions, before you go to work or whatever, and then at the end of the day when you get back, like just set it up that way. Like to me, it's an easy solution. I understand. But the problem is so many traders are into the lower time frames. They feel like if they quit their jobs, they would be better off because they could see all these, all these candles unfold and that they wouldn't normally see. And that's really the danger, I think, is that you convince yourself that your trading would be better if you were dedicated to it completely. And that's where, the missing trade thing kind of highlights that for some people. Like, oh, well, if I you know, if I quit my job, then I would have seen this one, and you know, hindsight bias can seep in, and you forget about that one, and that one, which would have been losers, you know.
Yeah.
What do you do?
Well, I think the bottom line also I see a lot is it just comes down to discipline, right? You just have to have the discipline to, you know, if you're trading the 4-hour chart, check the chart every 4 hours. Or if you're day trading or whatever, then sit down for the 1 or 2 hours that you're going to day trade and just do that instead of like watching Netflix or like trying to make some bread on the side or whatever. Yeah, I think that's one of the major things that I see. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's very true. Like just setting aside that time, making your schedule. Discipline, it's a funny thing. Like what you said reminds me of my friend in high school. He was a really good basketball player. He was a freshman in high school, so first year in high school, and he was on the varsity team, right? Which is the junior and sophomore, the year 11 and year 12. Normally, kids are on that. You know, he came in straight away, and I'll never forget, we became really good friends, and we still are to this day. And he said, and he went on and played in college and stuff like that. So he's a pretty good player, right? Mm-hmm. And he said, I'm the worst athlete on the team. And I said, really? I said, what do you mean? He goes, yeah. He said, and this is coming from the only athlete on the basketball team who's been on the varsity team since freshman year, right?
Yeah.
And he said, I'm the worst athlete on the team. And I said, what do you mean? He goes, and then I realized what he was saying. I go, oh, you're just saying you work harder than anyone else. And he goes, yeah. And that's kind of like, and it was true. It was absolutely true. He was the worst athlete on the team, and he absolutely worked his tail off because I saw him do it, you know, and I saw the things that he did and all this crazy Russian sports science that he was into and all that stuff. It was really cool, actually. But yeah, so what I'm saying is discipline can trump talent. And in trading, it's kind of similar. Like discipline can actually, like you might have a really talented trader or someone who has a really good system, but if they're not that disciplined, you can win. Like you can beat that trader in the markets just by being disciplined. You know what I mean?
Yeah.
Yes, you need to have a system that works. Yes, you need to have all this stuff. Yeah, blah, 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 blah. That's all true. But if you have the discipline, that's a huge part of it. And I attribute the discipline to the reason why I was able to go through school and get a PhD. Like it was only because I was disciplined. It wasn't because I was super smart. Like that should be clear to all the listeners, right? Like that's obvious, right? And now I wasn't the smartest person. I wasn't this or that or whatever. Or, you know, I just tried really hard and I set my, you know what I mean? I set my my goals up, my schedule up. I did the work. You know, I literally got bounced doing my PhD. You have this thing where you defend it. They actually said no. Like usually, it's almost usually a. I'm serious.
Guaranteed,
like,
right?
Yeah, it's almost guaranteed. Right? It's almost a guaranteed thing that when you go in to defend your dissertation, you have this committee of 5 professors, and they read through it. You give it to them. They have to, you know, they have it for a couple of weeks. They read through it, and then you go in there and they ask you questions, and then they like pass you or fail you. And they failed me. And I'm not going to get into all the politics about that because I think there were some, but the reality is I kept pushing on, and I said, okay, well, you know, what do you want me to change? And they told me, and I said, okay. So 6 months later, I came back and did, you know, made the changes and did it again. So, you know, that was just by being disciplined and keep going and hammering away at it and not, you know, getting discouraged or whatever, or trying to do so, or just throwing my hands up and going, you know, whatever. Like I saw today, actually, I went surfing this morning and I saw a guy in like one of those scooters, those motor scooters, right? You know, and you could tell he was ill for whatever reason. He wasn't that old, really. You know, he's probably in his 40s or whatever, but he was like, you know, really sickly, and he was in this motor scooter. He wasn't even like a big guy. So something was wrong with him, right? Mm-hmm. And I was thinking about this other guy that I've seen all the time on the beach. Same age, okay, as the guy that was in the scooter. And I don't know what's wrong with this dude, but he basically has one leg. And what I mean by that is this guy runs on the sand. He sprints up and down stairs, and one of his legs is basically useless, okay? And it's like all bandaged up and stuff. Like it almost looks like it's like hanging, like they told him, dude, we got to amputate your leg. And he's like, no, I'm going to make it work again. You know, like that's what I imagine. Yeah. And it's kind of the difference between these two guys. Like the one guy's like, oh, okay, screw it. I'm going to have to be in a scooter for the rest of my life, you know? And the other guy's like, no. And he literally is like, you see him going up the stairs on one leg. He's like, and he's like making all these noises and stuff. Like, dude, the guy's going to die. And you'll see him on the sand. Like all these people are jogging on the sand in the morning. And he's like on one leg going, you know, I'm like, dude, this guy's crazy, but he's disciplined. You know what I mean? He wants to, he's trying to get back to where he was. It's clear, you know, that's what he's trying to do. So anyway, I just thought that was an interesting analogy, and it's exactly what you're talking about. Discipline,
no, totally. Like I
it
knew
wins.
This guy, I didn't know this guy, but I used to play against this guy in high school in soccer, and you know he was okay. Like we didn't know about him because he wasn't like spectacular or anything. But same thing, like he worked his ass off. He made it to he played for the Houston Dynamo, I think, in the MLS.
Really?
Yeah, and then he has like one of the top 25 goals of all time because he scored a bicycle kick in like the MLS final or whatever. And when we played that guy in high school, but he wasn't like anything special, you know, but he worked his ass off and he got there, and he's like a legend now at the Houston club. So I think work and discipline really do trump any kind of skill that you have or anything like that.
Yeah. And that's why you rarely see someone who's super like you're saying, like in sports, you rarely see someone that's so like just transcends sports. It's those people that have the two, like they're really talented and they work their butt off, and that's so rare. It's usually one or the other, right? Like you usually have someone like they're super talented and they just kind of like ride that talent. Sure, they work. I'm not saying they don't work, but they don't totally push themselves. And then you have your friend or the guy that you knew that you played soccer with. He's the opposite. He's like got some talent, right?
Yeah.
You know, maybe average talent, whatever. But he worked he worked so hard to get to where he was at, and it should be this should be a message of hope for you traders. If you're kind of struggling right now, just know that discipline is what will do it. You know, making that time to back test, making that time to check the charts, just cracking it every day, even if it's only 20 minutes, working on your strategy, working on getting your data, doing your back tests, whatever it is. It's a big deal, and it all adds up, you know? So
it does. And I think it's also kind of hard to sometimes see like inspirational stories from traders. So I think it's also useful to like look at other areas of life and see, you know, these people who have succeeded, even though they weren't the best or most talented in the beginning, and then just kind of draw some inspiration from there also.
Absolutely. Yep. Yeah. Absolutely. Biographies are great for that sort of thing. Yep.
Yeah, for sure. Okay, cool. Thanks, Walter.
See you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I've been experimenting with actually putting on your arm. So like I have this case that holds it, and then I put the sensors on my arm. So we'll see how that goes. But
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, you turned me on to the Neurophone. So I just wanted to tell people about it, what your experiences are, and I can share some of my experiences also.
Yeah, sure. So there's sort of like two ways, I guess, that I see it for use. And we'll put a link in for people who are interested. I think their new ones aren't really the Neo Neurophone. I don't think they have them anymore. I think you have to get like a used one. But you can probably find them. So unfortunately, the inventor, he's died. So I don't know what the plans are, if they're going to be making any more. Maybe his wife will commission another lot of them or whatever. So basically, the device was invented by this guy named Patrick Flanagan, and what it was meant to do was help deaf people hear. And the way that happens, it pulls sound in, and it actually, instead of echoing the sound off your ear canal like normally, and what happens is it kind of, you put these two pads, they look like electrode things, and you put them on your head, and you actually hear the sound through your skull, which is really kind of weird. So that's one thing. And you can actually learn, like they say, that you can put, almost like hypnosis, how you get hypnotized and then they give you suggestions. You can kind of do that because it can entrain your brain waves so that you're at a certain level of alpha or whatever, and then, or theta, and then you can put information like how to speak a language or subliminal thoughts that you want, like any sort of suggestions, you can put that in there. So you can kind of get really relaxed and then plug in an audio source, and then you may or may not hear it, but the idea is that it actually will be in your subconscious. I remember for the longest time I couldn't hear it, and then eventually I did hear it, and I was like, oh, okay, I could hear, the subconscious, like the audio input. I could actually hear it if you're quiet enough, And so that's kind of the way I see it, is sort of using it for two different ways. And the research is that they had these gurus, that were meditating out in India in the caves for decades. They tested their brainwaves, and they found that it was really interesting that they had all of their brainwaves elevated, which is normally not the case. Normally, we humans have one or another. Like you and I would be in beta right now, which is sort of your waking state, and that's sort of the dominant brainwave. And then maybe when you're relaxing, watching a movie or something, and then it becomes alpha, and then maybe when you're sleeping, you're down into theta or even delta at certain stages. So there's kind of like one brainwave that becomes dominant. And what they found with these gurus, these meditative dudes, that they like had all of them elevated, and they found that the same thing would happen for people when they were using the neurophone. It's kind of like a brain tool, subliminal. So if you know about brainwave entrainment, you can get your brainwaves to a certain level. You can also put some inputs in there, like subliminal information, and you can read books in a way. Like when I say read, like read books, plug the book in, or the audio book, and see if you know what I mean, if you retain that. So it's kind of a fun tool, but I've misplaced mine, so I've been looking for it, and because I really miss it. And I know you can find used ones. There was a guy in Canada that had some of the older ones, not the new ones, for sale. Maybe we can find that link for people. But what did you do? What did you find?
Yeah, no, totally. I found that I can concentrate a lot better, and then I actually get this like ringing in my ear after I use it, and that's, some people would say that's what tinnitus or whatever that
tinnitus.
Yeah. Other people will also say that that's because you're more sensitive to more subtle energies or subtle frequencies. So I tend to think it's the latter. But just from a cognitive perspective, like I can focus better. It does help with learning things, and I haven't done the language thing yet. That's right. My next thing also. You can actually get the older one. This is the older one.
Yeah, that's the older one. Yeah.
You can get it brand new from Canada, and if you pay in Bitcoin, he gives you like a $50 discount or something.
Oh, really?
That's awesome. You got to trust the guy and stuff. But that's been my experience so far, and it's been really helpful just to like kind of zone in and concentrate.
Because they were talking about making another, because they sold out of the Neo Neurophones, and then they made another. They said they were going to do it again, like make another lot of them, but then for some reason they said, nah, we're not going to do it. And so everyone was like, oh, I'm sure you can find used ones out there, like, or older ones or whatever, because he had several versions. I mean, I think he invented it like in the 50s or something. Like it's a really
you see, like, the old school ones with like the tube sticking out and all that stuff. Yeah, that's pretty cool stuff.
And did you hear the story about how they got the patent? The story about how he got the patent is really cool. How Patrick was young, he's 13 or 15 or whatever, and his dad said, well, I know a patent lawyer, and they applied for a patent for it, the neurophone, and the patent office came back and said, no, there's nothing out there like this, so patent rejected. he goes, well, where would I get something protected that has never been invented before, if not the patent office, And what they were basically saying was, we need to see science that links up all the elements of your, patent. And so they said, listen, if you come to DC, and we've got a deaf person in the office here, come to DC and show it to the deaf person. We'll plug them in and all that. And if it works, we'll grant you your patent. Because usually once they reject it, that's it. That's the story, is that typically you do not get like there's no like appeal or whatever. It's like, nope, patent rejected, boom, that's it. So and they did, and they plugged it into the person working there, and they started crying because they could hear again and all that. And so it was like, because they played her favorite record or whatever,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And so, yeah, she could hear again. I guess she must have had hearing and then lost it, you know, and then got it back with the neurophone. But yeah, so it's a really interesting device if you're into those sorts of things. Yeah.
Yeah. How would it apply to traders, would you say? Like,
well, what I used to do, I used to do exactly what you were saying for concentration. So I would put it on and then I would look at my charts. So in the morning, so my routine is that in the morning, I wake up and I kind of look at my charts and see what is there anything that's looking good? And then in the evening, which is when London is trading, that's when I actually kind of put my orders in, right? Usually that's how I usually trade. What I would do is actually put it on in the morning and then go and look at my charts. Because I found the same thing that you're saying. Like it really kind of, you feel like switched on. And I used to, when we did podcasts without the cameras on, I used to wear it on the podcast. The old podcast that we did, the Truth About FX, I was always wearing that on, you know what I mean? Like I had it on my head. Yeah. I found the same thing you did, basically. Like some people use coffee or whatever, but it's a really good way to kind of, like, if you're doing back testing or you're making any sort of decisions that you want to be on point, I would definitely say, yeah, that's something to use.
Yeah. And I think if you do some like positive affirmations or whatever, you could probably feed that in also, right? That's what I've been doing. And I think it's been helping. I've been experimenting with actually putting on your arm. So like I have this case that holds it and then I put the sensors on my arm. So we'll see how that goes, but I just started using that.
Some people get shocked. Did you know that? Have you ever let someone use it and they are like, No, I did that to my friend. And he was like, get that off me, I think you can make it like more intense and less intense and louder and
whatever.
Yeah. There's like a volume and there's an intensity and so it's kind of a different. So everyone's going to react differently, like they said, Yeah.
But just another cool tool to experiment with and see if it works for you, right?
Exactly. Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I could go right now in the grocery store and we could buy, $50 worth of ice cream if I wanted to right now or whatever. You know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what are some ways that people can feel more wealthy? I know that a lot of people have this like poverty mentality or feeling of lack in their life. What do you think are some ways that people can boost their wealth awareness?
Okay, so what I did, people say do visions and stuff, get really relaxed and imagine yourself in the future or whatever.
Yeah.
There's that, and there's vision boards where you put things on, you cut pictures out of magazines or whatever, whatever you want, and then you put it on paste it and that's what I want. There's those sorts of things. But there's actually a book that came out. Recommended it to people. I'll put it in the show notes. It's called Ask and It Is Given. And it's really cool because it has all of these techniques that you can use to kind of help yourself with your mentality. If you feel like you're saying, you feel kind of poor, you feel like things are never going to get better or something like that. And it's really cool. I'll give you one, for example. So in the book, there are lots of them. And it actually talks about in the book about levels of emotion. So they're saying if you're down here at full on depression, you don't just automatically switch on and become ecstatic. Yeah. So they have this scale of emotions, and they say, look, all you really want to do is just move to the next one. And then once you're there, try and move to the next one. And it's go up the ladder slowly. There's no reason, if someone's depressed / suicidal, you can't say, oh, you have so much to live for. Come on, let's go on holiday. They're not going to, they're going to say, no, get off, get away, go. So that's really cool just to see that. But here's one that's cool. Let's say you're you say, you feel like maybe money's been tough and is it ever going to get better? What you do is you get a $50 bill, or in Australia, it's 100 because everything's more expensive here. But you put it in your pocket or in your wallet or your purse or whatever. And what you do is when you walk around, you just say to yourself, you look in the, oh, there's some shoes right there. Let's say you're a lady, right? Oh, I like those shoes. They're kind of like the ones that I wear. And, I could wear those with my dress or whatever. And then you think to yourself, well, I could buy that right now because you have that $100 note in your purse or whatever. Or you're walking by a restaurant and, with your wife or whatever, you think, You think, oh, well, we could go there right now because I have that. You know what I mean? Like what you're doing is you're trying to create this mentality of, instead of keep thinking and cycling through your mind, oh, I can't afford it, I can't make it, I can't do it. What you're saying is I can, and you're becoming more positive relating to money. And you never really spend that thing, and you don't put an IOU in your wallet. Like that doesn't work, right? It's got to be the real money.
Yeah.
And it's not a credit card, it's not anything, it's real money. So you actually pull the money out of the ATM. I know no one wants to use real money anymore, but you take that real money and you put it in your wallet, and then you just remind yourself every time you walk by the toy shop with your kids. Oh, I could buy that toy for my kid. I could buy, that hat. I could buy those pants. Whatever. I could go right now in the grocery store and we could buy, $50 worth of ice cream if I wanted to right now or whatever. You know what I mean? You just kind of like keep that. It's just a way of reminding yourself. When you walk by something and you see something, you think, oh, I could do that right now. Oh, I could go joyride right now with an Uber. I could go on an Uber joyride because I have $50 in my pocket, or whatever. So that's the idea, is that you would do that. So, yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Cool. Yeah, I mean, it's funny that you mentioned that because I've used that actually quite a bit. Like several years ago, I started that habit, put a $100 bill in my wallet, and it really did help. It helped a lot. And it also helps because if there's some cash situation where somebody's going to pay with their card and you have to pay them cash or whatever, or the place only takes cash, then you also have that confidence of having that in your wallet, saying, oh yeah, I could cover that. I don't have to go run out to the ATM or whatever. So yeah, I think it's a super useful exercise.
Yeah, and you get to the point where you'll just always know that it's there. It's a very comforting thing to know that, like, yeah, I can afford it because you can. Because it's right there. It's in your pocket. Like, it's not. Yeah. So it can go it can go a long way. Just doing that and just keeping that in mind. It's like you'll just be at a different emotional state all day because you know that. And in the beginning, you might forget that you have it, but you just have to remind yourself. And then after that, a couple of weeks, it's like boom, you'll always remember.
Yeah, totally. And I think it really is a good step from that lower level to the second level, or maybe like a mid level, right? In terms of psychology about money.
Yes. Yeah, absolutely. Yeah, it's great.
Cool.
Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Oh no, that didn't happen. It's terrible, right? Like, it's the worst thing ever.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk a little bit about catastrophizing when we do this in our everyday lives and how that kind of carries over to our trading.
One interesting thing, and this might help some people, just kind of as it's true, that did you know that intelligence is negatively correlated with anxiety? So that would mean that if you wanted to act smarter than you really are, just kind of say everything will be all right. So it's kind of like the antidote, right? You just say, no, but I guess there's two ways that I know of for that. You can read the positive psychology guy. He's written a bunch of books, but I can't remember his name now. He came out to Sydney and I saw him. Anyway, I'll post it in there. The Marty Seligman, that's it.
Oh yeah.
Martin Seligman, yeah. So everyone calls him Marty, but he thinks it's weird. He says he never says for anyone to call him Marty, and he doesn't even think of himself as Marty, but everyone calls him Marty. I thought that was pretty funny. But yes, so for catastrophizing, you can adjust it like logically and say, like, for example, as a trader, okay, I've had 7 losing trades in a row. Obviously, my system doesn't work. I'm never going to make it as a trader. I'm going to lose all my account, and I'm going to have to start all over again, because the strategy doesn't work, right? That's like a slippery slope sort of catastrophizing thing. So another way to look at it is go, okay, let's go look at my historical data. When I tested this in Forex Tester, did I ever have 7 losing trades in a row? Yes. How likely is it to happen? Well, you can actually work that out. I'll put the risk calculator for people who want to use that. You can use the risk calculator to see the likelihood of that given your system. We'll put that in show notes too. So what that means is you're using logic to reassess the situation and kind of put it in its place in a different way. That's one way to do it, is logically. And the other thing to do is kind of more of an emotional thing. What you're doing is you're convincing yourself that you are on the right path. And so it's a little bit different to logic, where logic is kind of like trying to drop a bit of, antiseptic into the wound and make it heal, right? And say, look, I understand why you're saying that and why you'd feel that, but it's actually not reality, right? This is not likely. And then the other way to do it is to kind of like focus on the feelings that you had when you discovered your strategy, when you tested your strategy, and when you saw that it worked. And think about what it's going to be like in the future after you've been trading this strategy for a couple of years or whatever. Where will you be at financially and that sort of thing? So you're kind of trying to use the emotions, and you can use hypnotherapy for that or any other of your favorite ways of seeding your subconscious. Those can also help and get you in that direction. But most of the positive psychology research, what they do is they give you specific tools like the one that I just talked about, which are like, trying to shift your focus and look at things slightly differently and say, what am I looking at here? Is it a normal sort of drawdown, normal sort of losing streak, or is this something totally different? What do you do? What do you use, or what have you found?
Well, one thing I found really helpful was just being more aware about the words that you use. So for example, a lot of times people say, oh, I need to go to the store. Well, you don't need to go to the store. I mean, it would be nice. You might be able to make some dinner, but you don't need to go to the store. And I think that's kind of where the catastrophizing starts, is where we pick up these phrases from our friends, our family, or whatever, right? And then that kind of gets ingrained, and it becomes like we need to do this. This has to happen. Oh no, that didn't happen. It's terrible, right? Like it's the worst thing ever. Well, you lost a few fries, you dropped a basket of fries. I think you'll be okay. I think that's a really important one too, where we have to realize how we speak to ourselves, how we speak to others, and how we take in the information from the outside, like from the news or from other people also.
Yeah, absolutely. Yeah. What you're saying is so true. It's, when you have kids, it's like, I need this toy, I need that. And I don't know if you really need it. It's a sort of same sort of thing, right? Yes. I think you kind of nailed it. Like, it's interesting, there's this debate in psychology whether or not they dream in images or if they dream in language, in words. And I had the experience, I spent a lot of time in South America and Central America, and I had the experience once where I was dreaming in Spanish. And so then it just kind of shifted my thinking. I was like, well, maybe you do sort of dream in words or something. It was weird that I had that experience and that my thoughts were in Spanish, in my dream. And so,
hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
To follow up what you're saying, that's exactly what a really good approach would be. What I would call a positive psychology approach would be to do that, to kind of reframe. What you're trying to do is reframe the situation, because when you catastrophize, usually you have negative emotion associated with it. So it's actually easier for you to fall into the trap of that faulty logic, right? Mm-hmm. Because you just feel so bad, right? It's like someone who's suicidal and you say, oh, cheer up, let's go, start a charity or something like that. Like, so someone who's suicidal is not going to want to start a charity, right? Like you're on a totally different emotional level. So yeah, so I think part of it is exactly what you said, is just kind of shifting, just a slight shift up to the next higher emotion. And that can come through words for sure. Absolutely. Yeah. And the other thing you can do is get another perspective. Like if you have a trading accountability partner, someone you talk to, you can show them your stuff and say, well, what do you think? Mm-hmm. And like, I think this, and do you think I'm off base here? And that's another way, you know, just to get another set of eyes and see how someone else looks at it, who's kind of a little bit more detached from the emotion of the experience of going through that tough time, which is usually, obviously, for traders, it's usually a losing streak. It usually is that. It could be something else. It could be, you know, relationships and people who don't believe in your trading career. You know, it could be feeling like you're never going to find a system. You know, those things can also be the case. But normally what happens with traders is we get into a losing streak, and that's when we start to think, oh my, this is it. You know, this is the end of it. It's all done, you know.
Yeah.
And so that's tricky. Yeah.
No, that's a really good point. Yeah. I mean, I think the bottom line is that we're a lot harder on ourselves than we are with other people. So if you can get that outside perspective, or you can say to yourself, how would I talk to my good friend about this? And I think those are good perspectives to have also.
Absolutely. Yeah. Yep.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Back in his day, they didn't have such a thing as, you know, Prozac deficiency or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So we're on the topic of trading psychology, obviously. So Jesse Livermore, how would you analyze his psychology? What do you think were good parts of his psychology? What do you think were the ones that brought him down?
Well, my favorite quote, and I used to have it. I don't have it up anymore, but I used to have it. It was said, I can post it for you in the show notes for people. But he said something along the lines of, I always made my money by sitting and waiting. You got that? It was by sitting and waiting. Plenty of traders or men, I think he said men, can be right about the market and buy at the exact bottom and sell at the exact top. But there are very few that can actually hold on to it. To me, that kind of sums up what was good about Jesse. Now, the bad things are obviously, you know, people don't talk about this a lot, but he killed himself. And one of the reasons why he killed himself is he went boom and bust several times, just like the markets, you know, in his time. He went up and he went down. He made it all and lost it all. And that was because he went really hard with his risk. So, you know, you can learn a lesson in that, in trying to figure out a way for you to avoid hitting rock bottom like that, and, you know, and not losing it all. So, you know, that's the other part of it. He may have had, I mean, today probably they would have put him on Prozac and, you know, said that he had he's bipolar or whatever. I mean, probably, I don't know.
Yeah.
But, you know, back in his day, they didn't have such a thing as, you know, Prozac deficiency or whatever, whatever the diagnosis is.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, so I think the real lesson with Jesse is, you know, and it's the same with the Darvas. Nicholas Darvas was similar too. If you read his book, Nicholas Darvas, How I Made $2 Million in the Stock Market, which doesn't seem like a lot, but back in, you know, in the 50s it was or 40s, whenever he did that. Yeah, so I think sitting and waiting and learning how to be patient with your winners is good. Possibly pyramiding, if you like pyramiding and adding to winners. The thing to watch out for is the risk part, and you don't want to risk so much or just be so convinced that you're right that you just pile it all in. Because if that's the case, you can obviously run into a big problem, right? By having too much on the line, and then it's absolutely devastating if it doesn't go right for you. So,
yeah, true. And I think if you do have that kind of personality where you know you're good at pyramiding or like scaling up your winners, I think once you are done with that campaign or whatever, you have to take all the money out, just leave a small amount in there and build that again. And then if you blow that out, then you're okay. But I think there's a tendency, right, to put all the money into play, and you know, you lose everything.
Yeah, totally. And it's fun to do that. It's fun to take off a little bit and get really aggressive with it. I mean, it sucks when it doesn't go well, but once in a while it will. And you don't need it to go right that many times, you know? Like I have a friend, he does that too. He takes out $1,000 and he'll run it up sometimes. He'll run it up. When he gets to over 100, he quits. So he goes from 1,000 to 100. But a lot of times it doesn't work, and so he's down 1,000, down 1,000, down 1,000. Imagine doing that 11 times, and on the 12th time you hit 100 grand, you're up. You're still up, right? You're up 88,000. So yeah, so it's not a bad approach, but it's kind of a way to get around it, isn't it? If you have that tendency, it's a way to kind of funnel all that energy into your little account where you're going to be super aggressive instead of risking it all, So it makes a lot of sense for a lot of people.
Yeah, true. I know this guy who he knows Larry Williams, and Larry showed him this thing where he put in on a trade for like $3 or something like that, something small, and I made like $100. He was like, "Wow, how do I do that again?" He said, "Oh, do your own homework." But it just outlines the Larry's mentality, right? Just bet a small amount and try to make a big amount, and if you lose it, then no big deal.
Yeah, absolutely. Yep, that's right.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You decided to take a profit and you've decided to let it run. And you've also decided to let the computer do both. So you know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader. He's writing in and he's like saying that he doesn't really have the patience. He knows that he needs more patience with his positions, with his winners, but he keeps pulling out of the trades, the winning trades, too quickly. And he knows that this is the case. He said, well, what should I do? And I said, well, look, this is what I would do. A couple of things you might look at doing. Number one is, first of all, you can split your positions up. So if you're worried that, you should be taking profit now because it's up, and you're worried that you're going to lose all that profit, then just split it and have some sort of a target. And then for the remaining bit, have a trailing exit, right? Which is what I like to do. I think it's kind of fun to have one. Sometimes your trailing exit will make way, way, way more, but a lot of times it may make a little bit less or around about the same as the original, the position where you had the target. That's thing number one. Thing number two is try and see if you can automate your exits. That way you don't have to think about it. So if you're going to do that, let's say you go, I'm going to go 2 to 1. So I'm going to risk 50 pips to make 100 on half of my position. On the other half, I'm just going to run my trailing exit. You can put a script on there. It doesn't matter which platform. Almost all of them will allow you to do this. And so what that does is it takes you out of the equation. So once you take the trade, well, I've made my decision, which is to take a trade. Now the computer will do the rest. It will get me out of the at the target level, and or I'll get stopped out, and it will get me out of the trailing exit, or I'll get stopped out. So it's kind of an easier way to. What's happening is you're shifting that psychological burden off of you and onto the machine. Now you can still jump in, and you can still turn it off, and you can still all that stuff can still happen, but in theory, if you are doing this and you're doing it correctly, you're not going to have the issue of, having to deal with that psychological burden of, oh, I made the wrong decision, and how do I know if I'm making the right decision? Because you've decided to do both. You've decided to take a profit and you've decided to let it run. And you've also decided to let the computer do both. So you know what I mean?
Yeah.
It's no longer in your hands. So that's one way to do it. And for some people, that's a really easy way to deal with that, even though sometimes we feel like we want to make the right decision. If you do that, you're almost always, if you have a winning trade, that is. If you have a losing trade, it doesn't matter. But if you have a winning trade, it almost always feels like you've made at least a little bit of the right decision.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
If it really goes and your trailing exit is able to take some of that profit or a big piece of that profit, you feel really good. And if it doesn't really go and your trailing exit, gets a little bit, very, very small profit or around break even or a little bit of a loss, and then your target actually makes money for you, you feel good too. So it's kind of a nice way to deal with that. And obviously there's lots of other things that can happen, right? Like you could get stopped out, or you could lose on the trailing exit, which happens for me sometimes, and yet make money on the target, depending on how tight your trailing exit is. There's lots of things in there. It's not an either or situation. For some people, that's a very good solution. Yeah.
Yeah, those would be my first two recommendations also, but maybe like a distant third one would be just practice more, right? Like go into Forex Tester and just practice the setup and the exit, and just review your journal a lot more and look at what happens when you stick with the exit or the trailing exit, and that can help you bolster your confidence to stay in the trades, I guess.
Yeah, and I've done tests on that, like where exactly what you're saying. So you get your Forex Tester data, and you go, okay, what if I use this trailing exit versus this one? And you see the difference, and that can convince you that it really is worth it. Even a lower win rate and a trailing exit that's going to yield a lower win rate, but more profit overall, because it allows you to have really, really big winners occasionally, and that makes all the difference. So yeah, it's a good point that you should definitely think about running that sort of, I call it an exit race, where you have these two different types of exit. You want to see which one is going to be the winner here, and try that multiple times. And it can, especially if you're just using targets now and you're not using a trailing exit, like that's a real easy win in a lot of cases. Not always, but in a lot of cases. So yeah, that's a great way to show the logic of being more patient, and so it makes sense. You go, well, I can see why I should do that, because it's actually going to help my trading quite a bit. So yeah.
Cool. Yeah, great point. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Hey, Walter. Where are you today?
Yes, I'm coming to you live from the spaceship. No, I just thought it would be cool to switch it up, Hugh, and give myself I actually didn't know this was possible. For those of you watching the video here on YouTube, apparently on Zoom you can change your background. So I'm up with the times, and I have now decided to go into outer space.
Nice. Awesome.
Yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So today's question, I think, is do you think anyone can succeed at trading?
Anyone can succeed at trading. I guess I'd have to say no. I want to say yes, but I guess I have to say no, because it's kind of like, to me, it's kind of like the question, can everybody walk? And the answer, unfortunately, is no. Some people won't walk. Some people have issues, physical issues, and they're born into bodies that don't allow them to walk. So yeah, I'd have to say no. And so we know about the turtle experiment, which was basically the core of this issue, which is one guy, William Eckhart, said, some people are either born with trading skills or they're not. And Richard Dennis said, no, you can teach anyone. Even then, they filtered people out. So they only took people that they thought would be good students. Yeah. And even then, they did have at least one student that I'm aware of who didn't do well. So
I think quite a few of them kind of blew out at some point, right?
Did they? Yeah. Okay. Yeah. See, I wasn't aware of that. Yeah. Okay. So now that doesn't mean that those people couldn't trade. It just means, like I've blown out too a few times. You know what I mean? Like, so I think I want to say yes, that if you stick with it long enough, if you do the right things, if you go through the right process, you can do it, you can make it work. However, I do believe that there are some people, just like there are some people who are born with, actually, I'll put in the show notes. I was fascinated by this. My son and I found on YouTube this group of people. I don't know if they're on an island or something. It was fascinating. So what they call them, like the missing link. So you know how they say that we evolved from like shrews. The shrew turned into like an ape or whatever, or orangutan or whatever. And we ended up, well, these people, they're people. They look like people. They actually have clothes. I don't know where they get their clothes from, because they seem like they're totally isolated. They walk on all fours. So they don't actually stand up. Okay. And so all these scientists are like, oh my God, we found like this kind of like this missing link between when we were like sort of ape-like or like, monkey-like, primate-like, and then human, like where we decided to stand up. And these people, and it's so weird. Like you see this grandma, and she's like walking around, and they're walking around on all fours on the beach, right? You know, what do you say about those people? Are they genetically predisposed to be unable to walk on two legs? I guess so, because their brain is set up. That's how they move. That's their locomotion is walking on all fours. So I would say that there are some people that have impulse issues, basically gambling / addiction issues, and they will not stick to the risk rules. They will not stick to the rules of the system, and it'll be extremely difficult for them to actually adopt profitable trading habits. So I would have to say, no, not everyone can. My hope is that everyone can, but my belief is, if you really look at it truthfully, there are some people that they won't buckle down and they won't follow the rules that will lead to profits. So yeah, what do you think? What do you say?
Yeah, that is a tough one.
Tricky.
It's
tricky.
I think if you take it with the caveat of the person has a normal functioning brain or normal cognitive abilities, whatever normal is, I believe that everybody can, but not everybody has the desire nor the perseverance. And like you said, some people have these demons, right? Like these addictions, these whatever they're working on. And I think that if you can overcome those things, I think then you can become a trader for sure. But I think, yeah, they really hold you back. But so ultimately, I think if you can overcome everything and you have enough, you stick to it long enough, you have enough will, you really want this. And I think most people can make it happen. But yeah, not everyone, I think, can become a trader, and nor should everybody, want to become a trader, because maybe you're better at basket weaving or, something else. So I think you should do whatever feels good to you.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, and it's like a lot of things in life. You'll know, who your friends are, who the people are that you get along with, and the people, you almost know immediately whether or not you'll want to see, if you meet someone at a party or something, you'll know, oh, that, she's pretty cool or he's pretty cool, and I wouldn't mind hanging out with him or whatever. And it's the same thing with trading. After a while, you'll figure out okay, this just isn't me. Maybe I should go sell adult toys on Amazon or whatever. Maybe this is not my path to, you know what I mean? This is not my way to do it. What I found is that a lot of people who are attracted to trading, they kind of like the idea of the markets and they like the idea of trading, and they get into it. There are some people who are attracted to trading just like they were attracted to selling stuff on Amazon, or, just like they were attracted to flipping houses or selling Herbalife or whatever. It's just kind of another vehicle. And that's cool too. But I feel like those people, and I don't have any data to support this, but I just have a sense that they're more likely to give up. They're not the type of person that would stick with it. That's just my intuition. I don't know if that's actually true. I don't know.
Yeah, I think there's two sides to that. You could also say that they're just trying different things out, and then they, settle on the one that maybe works for them or whatever. But I'm kind of with you too. I've seen more people jump from thing to thing to thing, and then just finally give up and go to their job. So I think yeah, totally. Yeah, you get those people. I run into those people. They're like, oh, I'm going to be a blogger, and then you see them again. Oh, I'm going to do Amazon, or oh, I'm going to do no money down housing, or I'm going to rent out Airbnbs, or there's all these things, and they're like, oh, I'm going to do, whatever it is. Oh, I'm going to try Forex robots now. Okay, now I'm going to, do options. Now I'm going to, and you're just like, okay, cool. They're trying it out. Yeah, maybe that's what's going on. They're trying to, I did that when I was younger. I was I was really interested in religions. And I'm like, okay, I've only been exposed to a really limited amount, in terms of the world religions, in the way I was growing up. So I was when I went to university, I studied religions. I got a minor degree in religions, because I was like, okay, what is Hinduism? What is Buddhism? What is Zoroastrianism? What is all this stuff? You know what I mean? And it was really cool, to figure it out, because I was in that stage. And I think people get that way too. Society in a way kind of encourages us to not necessarily settle on an occupation. And, that was different, I think, for our grandparents.
where they were almost like born into a thing. You know, they kind of knew based on their family, what their family did, what they were going to end up doing, working on the farm. Like both my grandparents, they were born on a farm, working on a farm, like that was their thing. And so, so I think today we have a lot of flexibility in terms of finding what our occupation, and they even tell you in college. I remember in college, they said to my mom, son or daughter is probably not going to get a job in his or her degree. You know, they also told her that it was going to take 6 years to graduate, which I think is like setting up for, you got to keep paying, you got to keep paying. Yeah. Which wasn't true. It took me 2.5 years to get out, but they said it was going to be 6. So, you know what I mean? It's funny how they do that, like kind of set the expectations. And so I think in a lot of ways, because there's so much information available to us, we get to try different things out and see and taste it and see if, okay, this is for me or this isn't. And so in that way, it's pretty cool. I think it's cool that more people are trying trading. And from a selfish point of view, we use those newbies, like those are the people that we get our profits from. The newbies coming into the system who don't know what they're doing, we can, like, those are the easy prey, right? Like that's how we can pull our profits out as retail traders from that group. That's where we're getting our money from. So, and then they learn a lesson. You either learn your lesson and get better at this, or you move on to the next thing. So
it sounds a little harsh, but like it's kind of like a fraternity or whatever. Like if you can overcome the initiation, then you're in, right? And similar thing in most any profession.
Yeah, like sports. Think about sports. I was thinking about this. All the kids, the 6-year-old kids that play soccer, and then how many people are playing soccer at age 26? It just totally filters it out.
Yeah,
it's like that in everything. You're absolutely right. Everything in life, in the end, the cream rises to the top, and that's it. That's just the way it.
So just find the place where you're the cream, right? I guess
exactly. Yeah. Where that is the take-home message. Find out where you're the cream, and then go for it, and then rise. Yeah, that's right.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. I personally don't think there is such a thing as ADD. Like, I think it's just a ploy to sell more drugs.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about this concept of ADD? And, some people say, ADD is getting in the way of me trading successfully. What do you think of that?
That's an interesting idea. Here in the spaceship, we have no place for ADD. Everyone has to know their place, and everyone
can't go off anywhere.
Everyone else. No, we will all die. Yeah, that's right. So ADD, you know what's interesting about that, Hugh? And I had this professor in graduate school who was talking about how his idea was that ADD was this construct that we have, and it's kind of like a new idea. And like in the past, he was very evolutionary, sort of biological. That was his bent on psychology. Mm-hmm. And he was saying that those guys would have been in the past the lead hunters, the king of the tribe, the one that got the most crocodiles, from the river, that sort of thing. The ADD guys, because they were always. And he said that what's happening is we're creating a new environment for people, like the classroom. We're supposed to sit still, look up, pay attention, listen to the teacher, all that sort of stuff. And so it was like we had these hunter-gatherer bodies that were kind of put into this new situation. So in other words, the diagnosis is the problem. The ADD diagnosis is the problem. So, okay, so the next step is, what about trading? All right, so here's what I think about this. You can construct a situation where your ADD is mitigated, and you can also channel it. So if you have like a checklist and you go, okay, I have to have all these things lined up for me to take a trade with this system, and you have someone every week this is okay, let's see which trades you took. show me your checklist, show me what happened, show me why you took the trade, why you didn't, whatever. Why did you risk this much or whatever, right? So you have checks and balances. You have a list of things you know you should do for every trade, and then you have someone that's going to look over it every week and say, well, did you do what you said you were going to do, right? And then the other thing is, if you really have a lot of ideas percolating, why not just channel those into your system building? Right. I think that's the level, like the creative output for traders can be in system building and coming up with ideas and looking at different things and how can you use those ideas that you have, to take trades. So I really think that you should separate it. So you should become very regimented in the way that you trade and the way that you keep your records and the way that you score yourself on your trades. And then you can become more creative in the way that you kind of create strategies and come up with things to test. So to me, that's the key.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And if you even need to have a small money account where you actually take live trades on your creative ideas, you can even try that. Just again, try and keep them in record so you know which ideas are working for you and which aren't, right? Mm-hmm. So kind of, track that and tag that. So yeah, that's what I would say. What are your thoughts on that?
Yeah, I personally don't think there is such a thing as ADD. Like, I think it's just a ploy to sell more drugs. And like you said, I think it is those people who are the movers, and they need to be kinesthetic, and they were the hunters back in the day, right? Yeah, I think that the education system just is not built for them. Like you said, it's not tailored to that type of learning, and they're geniuses in other ways, but they aren't like book learning geniuses. I think on top of what you said, that's a good thing to go through also. But I think maybe consider, if you're that type, consider like day trading, right? Just day trading for maybe like an hour a day. And that kind of fulfills your need to like flip between different pairs. And you're kind of like on the hunt. And then you just spend that 1 hour of disciplined trading, and then you can go on and do something else with the rest of your day. So that's another thing that I think could help that type of personality. But yeah, the bottom line is I don't think there is such a thing as ADD. I think it's just a different learning style.
Yeah, and you just need to constrain your different areas, because going off the reservation when it comes to trading can really hurt. Like, that's a bad thing. And I inevitably I get these questions from traders where they say, have you ever just taken trades like based on where you think the market's going to go? And I'm like, no. Maybe when I first started trading, we did that. Like, I remember my roommate, when I was trading, he was like, oh no, oil's going up, man. Oil's going up, and all this stuff like that. And I was like, well, how do I, like, where's the stop loss? You know what I mean? Like, what,
Yeah.
like, yeah, that sort of thing. And, so I think if you keep it in the like, if you keep it penned up, it's the way to go, right? Like in the right area.
Parameters, yeah.
Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Of course, I screwed it up because when I was trading it live, I would take profit too early.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So in the last episode, we talked about a little bit about creativity when developing trading strategies. What are some ways that you found to, start getting new ideas for trading strategies and just getting creative with things that maybe aren't out there or you haven't found?
There's some really cool tests in psychology where they say can you come up with 30 things that you can do with a paperclip, or things like that. And there was a book, I can put it in the show notes for people that are interested, called Thinker Toys, and it's about this guy who kind of like consults with companies and tries to help people to learn to think out of the box and stuff like that. I think his heyday was in the 90s. I don't know if he's around anymore, but one of the things I took away from that was taking something that everybody sees in one way and then using it in a different way, right? So like paper clips, like when I was a kid, I could open a pair of handcuffs with a paper clip, right? You know, my stepdad, he was like a volunteer police officer. So I had not only, you know, when I was a kid, I was a magician, and so I did like escape tricks and stuff like that. You know, jump off the roof into the pool with some handcuffs and try to get out in the deep end. Hopefully, you know, get out of that, you know. And then, you know, I thought I was Houdini. And then when he started volunteering on the weekends as a cop, I was like, sweet, now I've got real handcuffs. You know what I mean? I don't have like the toy ones. So I learned all these different ways to do that. And I think in trading, you can do the same thing where you go, okay, what is a moving average? All right, a moving average is used by most people to determine the direction of the trend or the market, right? Okay, what are other ways you can use moving average? Oh, you could use it as support and resistance. You could use it as an exit tool. You could use it as an entry tool, right? You could use it lots of different ways. And so that's one thing to think about is what does everyone use? Like the biggest mind blower for me was when this was back in 2003, I learned the stochastic pop.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Stochastic pop, I will put the link in the show notes, from a book called The Complete Trader, but he spelled complete weird as P-L-E-A-T, Complete Trader. I don't know if that's like an oldie. Yeah. Anyway, the guy was interesting because he was like, when we were trading stochastics, we would wait till it to go over 80 and sell and wait for it to get back down under 20 and buy, right? Or get under 20 and then go back up over 20, right? And then buy, or go over 80 and then come back down below 80 and then sell. Or 30, 70, it depends on, you know, whatever, you know, people have different levels. But he was saying, Jake Bernstein, that's right, Jake Bernstein. He was saying when it got up to 80, buy. Mm-hmm. And I was like, mind blower, you know what I mean? Like, I was like, wow, because I was like contrarian by nature, you know, and I was like, ooh, that's interesting. And so I started testing. I'm like, holy crap, it actually worked. His point was that usually when the market got over 80, that wasn't the end of the move. There was still a bit of a pop there. Mm-hmm. And so you're trying to get that little move higher, right? And sometimes, of course, it would keep trending, but usually you just got a nice big move up there. So you weren't buying when it went over 80 and crossing back down. You would actually just wait till it got over 80 and then you were buying. And the same thing when it got
small profit target, right? If I remember.
Yeah, it was pretty quick. Yeah, it was a quick thing. Yeah. And so, of course, I screwed it up because when I was trading it live, I would take profit too early. And then I was beating myself up going, what am I doing? And every time I go, oh, look, it was perfect if I just stuck to the rules, you know. So I was still learning, you know, not to take profits early, which is something really hard to learn, I think, when you first start. So that's what I would encourage you to do. Take the tools that everyone else is using and use them in a different way. Like use that hammer to eat ice cream, right? Use that moving average to do something that no one else is doing. Use that stochastic in a different way. Like, oh, here's another one that I learned. Point and figure charts. You know, like a point and figure chart is like it has an X if it goes up 50 pips. If it doesn't go up more than 50 pips, or whatever the number for the box is, it could be 100 pips, 20 pips, whatever. But I used to hand draw these euro and pound charts on point and figure. And you know what I did with it? I made moving averages on the point and figure chart, and you could use moving average crosses on the point and figure chart. Totally different to what anyone else is doing, and actually a really good way of seeing the trend. And you don't get these little whipsaws that you get on normal price charts, which are normal like time-based candles instead of movement-based candles, you know, which is what point and figure are. So yeah, so I would just encourage you to look at things in a different way. Take a tool that a lot of people use and decide, hey, I'm going to use this in another way. How else could I use this in a way that I've never heard before? And does it work? That's a really cool way, I think. What do you think?
Yeah, no, I agree. I think But like you said, I'm kind of contrarian by nature, so I'm going to figure out, okay, what is the opposite of what's going on here, and does that work? And I think you can also draw some inspiration from other areas, like maybe architecture or design or hip hop or whatever it is, and kind of figure out what those successful people did differently and how they were going against the grain, and you can kind of like figure a different way to do that in trading. That sounds kind of weird, but I think it just gives you more creativity when you do that.
Yeah, I think you're right. I think, like, I've always thought that looking into harmonics, I feel like there's something in the market charts that maps onto harmonics. I haven't figured out what it is, or like, you know, you can get into like sacred geometry and stuff. There's actually quite a few books on that stuff. But yeah, I do think there are some elements that you could take from other fields, like even physics or whatever, you know, applied the right way could possibly give you an edge. So, and it could just be our minds just looking for connections too. Like that could be it too. But who cares if it works, right? If it works, you know what I mean? Yeah. So
what do you think of this idea that if enough people know the trading strategy, it loses its edge?
Yeah, I understand why people are saying that. And I suppose if everyone was using the same robot, that would be the case. The problem is, if I give you my rules to my kangaroo tail strategy, and I give them to you, and then we give them to 500 people, and then we say, okay, now go and trade that. And we all trade the same pairs, the yen, the pound, the euro, the Aussie, the Kiwi, the CAD. We come back a year later and we look at our chart, our trades. We have different trades, man. In fact, some of us are going to throw it away 6 months into the year, 3 months into the year, and the others are going to say, this is amazing. And so that to me is the real thing about the markets, is we're looking at it through our own filter, and what I think is a great kangaroo tail, someone else is going to go, no way would I ever take that, and vice versa. So, and you know, this was really driven home to me by a book by Daryl Guppy, who's a trader. And I read this, you know, back in 2005, 2004. His books are kind of hard to read, but he was talking about moving averages and how, you know, he would look at the market this way, and he would say, you would look at this change in the moving average, and that would suggest that the market's going to go this way. He said, but like, if I tell you this, it doesn't matter, because everyone else is going to have their own way of seeing it. And it's so true. It is so true. Like I get questions from traders on our Sunday night webinar, right, that we do. And they're like, what about this kangaroo tail? And they'll tell me the chart, they'll tell me the time frame, and I'll look at it and I'll go, which one, where? Like, I don't see it. Like, you know what I mean? It should be like to me, it would be like an obvious kangaroo tail. If it was, I'd say, no, I don't think, for me, this isn't really because of this, this, and that. You know what I mean? And so, and it never fails. Like, it's so obvious. So I think it is possible. What you're saying is true. If we all have the same software, the problem is we all have different software in our head, and we all seeing it through our own filter. So I don't think, as long as we're still discretionary traders, I just think we're all trading something different, even if we have the same rules. It's crazy. I mean, it's crazy. Like, and it's crazy how people modify it. Like, if you give someone your rules, Hugh, and you say, okay, this is what works, this is what I do, these are my data, this is blah, blah, blah. You give it to someone, I swear to you, you come back a year later, they're going to have slightly different rules, because they're going to say something like, well, Hugh, what I noticed was when this happens, then I have to do this and that. So I've added this rule and I've, you know, modified it. And that's cool. I think that's good, because that's good for them. They shouldn't follow exactly what I tell them. They should use their own beliefs in building it. So, but I just don't believe this idea that if everyone, you know, if enough people have the rules, that it stops working, because I just don't think we're all doing the same thing, even if we all have the same rules, which is crazy to say. But
I agree.
Yeah.
And especially, you have to think about, like, the retail market is so small in most markets, you know, options, futures, whatever, that I don't think you could really move the market. I think the only way that you would really move a market, like you said, is with an automated system traded by some sort of bank or something, or some sort of hedge fund that has like huge volume, right? And I think that's the only way that a system could like play itself out, maybe.
Yes. Yeah. It's difficult to imagine a situation in our life, like where we are right now, where that's possible. Now, what people will sometimes do is they'll point to like the turtle rules and they go, see, it didn't work, you know, from 1998 to 2006. It stopped working. That's because everyone read the Market Wizards. Everyone started trading the turtle rules, you know, and I don't think that's really true. I think it's just a case of the system went through a terrible stretch, you know, or whatever.
Long drawdown, so you got to be able to.
Yeah, totally, man. And even if you talk to some of the turtles, they'll tell you that they're trading different rules now. Mm-hmm. You know, they're still trend following, many of them, but they're not trading the same original rules. They've modified them, which is good. That's the whole point
Yeah.
I think, of trading. So yeah, so it's a tricky one because I understand, and this is, it's kind of like the idea of brokers out to get you. It's this idea of, systems stop working because everyone's, don't share it. Everyone's going to get it, and then it'll ruin it. And the brokers are going to, ruin your account. And, there's a lot of these things that we get as traders that we hear about. So just part of the landscape, I guess.
Yeah. Cool. Great insights. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I think it's harder to trade really gappy charts. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I got a question from a trader. He's been trading indices and shares for a long time, and he was saying that when he tried to move over to currencies, he found it difficult, and he was wondering, why is it that he finds it difficult moving over? And I had some ideas on that, but what were some of your thoughts?
Yeah, I think it's just a different psychology, right? I think Forex and maybe futures kind of have a similar psychology, and then you got stocks, indices, and maybe even options that have a slightly different psychology behind them. And it seems like if you're a stock trader, you can find value going long. You're looking for those companies that are really undervalued, or they're going to have a new product coming out or something like that, and you can look at the fundamentals and really lean on that. And then for the penny stocks, if you find those scam companies and you know that they're no good but they take off, then you can just short them. That's a different psychology behind that compared to Forex or maybe even futures. What do you think?
Yeah. No, I think probably the biggest thing is what you touched on is when you look at shares. Okay, so when I started trading in the 90s, we learned from this guy named William J. O'Neill, who wrote a book, How to Make Money Trading Stocks. I think it's something like that. We can put it in the show notes. And he came up with the Investor's Business Daily, which he thought was a more technical based newspaper rather than the Wall Street Journal, which was kind of the go-to thing in the States at the time. Other countries have different papers, but so he was talking about earnings per share, relative strength, and things like that. And we would get the charts every week called daily graphs, and they were these phone books. Sometimes 5 of them would come every week, and we could pour through them and look at the charts and find out if there's any cup and handle, which is what William J. O'Neill talked about in his book, right?
Yeah.
Anyway, here's the thing. We were only looking for shares to buy. And this is also in the dot-com bubble too, from 94 to 99. So we were only looking to buy. There was a really hardcore rising market, especially towards the end of that, 97, 98. There was a lot going on then. And I remember, buying stocks like Netscape, Gateway 2000, which made computers, all these really AOL, all these really darling companies at the time. And when you think about it, a couple of things are interesting about that. We were only buying, right? Mm-hmm. So when you're a currency trader, automatically you have to look at things a little bit differently. I would even argue more than it's a little bit different to futures traders, because futures traders, I remember when oil fell earlier this year in 2020, earlier in 2020, I think it was. I don't think it was late 2019. It was early 2020. Oil fell really hard, and everyone was saying it was the death of oil. But the thing is, oil does have some intrinsic value. It can't go to 0 cents. You know what I mean? I suppose a company could. If a company is totally bankrupt and they're toast, then yeah, the shares will go really low. But before that, they'll actually delist it, and they'll take it off the major exchange and they'll move it to another. I remember I had a stock. I know this because I had a stock, and I called my broker. There's no internet or anything. And I called my broker. I'm like, what? Where's the stock? I can't find the quote in the paper. And he's like, well, it's gone to I think he called it the note board, or it was something about the board, some sort of board. And I'm like, what's the note board or whatever? He goes, that's where stocks go to die. I was awesome. My stock's going to die. But yeah, so I guess the biggest thing is
when you're trading Forex, you're always trading one relative to the other. So you can look at the pound Aussie chart, or you can look at the Aussie pound chart. And there are actually some charts that you can find, we can post in the show notes, where you actually, it's the opposite. It's not the Euro USD, it's the USD Euro. It's really kind of hard to wrap your head around that. So inherently, currency pairs are range bound.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Now, it doesn't seem like that because we still can trade with leverage in Forex, even though they're trying to take that away from us. There still is a range, a high and a low for the Euro, which the Euro USD, it's about from, it's been about 77 cents to the Euro to about $1.61, I think, around there. So it's basically been caught in that range since the inception of the Euro. And every currency pair kind of has that range. So it's a little bit different from, say, gold. Because some people right now, if you talk to them, they'll say gold is going to go to $10,000. Well, it hasn't really been to $10,000 in modern times. We don't have a chart that goes back that shows gold being worth that much. But it could, and it could go to 100,000 or 200,000. Same with Bitcoin and everything else. Whereas with currencies, it's a little, that could certainly happen, but that would mean that one of the currencies is basically in the toilet and is done, and they're going to have to reset that currency, right? So yeah, it does take a little bit of a different approach. You really have to, you almost have to consider twice as many decisions because you're thinking of buying or selling. Whereas a lot of times, there are a lot of share traders and index traders that just buy. I suppose index traders are a little bit different because they could buy and sell. And certainly futures traders can also sell. But they definitely have a buy bias that you don't necessarily have to have as a currency trader. The leverage thing too, if you haven't traded futures before, that can be a bit tricky to get your head around. And it was for me. Like I remember when I was first getting into, getting out of share trading and getting into this, I had to talk to a futures broker like on the phone, and he was like sending me stuff so that I could understand, what is this margin thing and all that. And we had actually traded shares on margin. We were able to do that, but it wasn't to the level that you get in Forex or in futures. Obviously, it was and I have no idea what the margin requirements are now in shares, but we couldn't get that much, and you have to pay interest and all that,
I remember I had a small futures account once, and I only could take one trade at a time.
Yeah. And that's why some of the Ryan Jones method of fixed ratio trading, like that's where that comes from, because it's like the question was, how do we grow our account quickly when we can only trade, you know what I mean? Like you're kind of you're stuck with these fixed lot sizes. Yeah. So that's where all that stuff comes from, is from that sort of approach. It's really lucky, I think, and fortunate if you're a currency trader that you can get fine lot distinctions and you can get smaller lot sizes, because that makes a big difference over time. Of course, if you map it out, you can see that it makes a huge difference over time if you're able to get precisely 2% risk or precisely 1.5% risk or whatever your risk amount is. It's a bigger deal for sure, because future traders can't do that, obviously, especially with smaller accounts.
Yeah, totally. Yeah. I think if you look at the mechanics of the different markets too, when you dig into it, like the stock market, like if you have a retirement account, you can only go long, right? Stuff like that. And then you have the pattern day trader rule, which really kind of limits people. And if you want to go short, then you have to be able to borrow the shares, which means you have to find it somewhere. And then same thing with like the futures markets, where it can get locked, limit out, limit down. So there's all kinds of different mechanics behind it. Whereas the futures market, the Forex market is pretty wide open. You can go long and short pretty easily both ways.
Yes, and outside of the States, you can trade CFDs, contracts for difference, which is like in the UK and Australia, we have these where it's like the major shares, like, Tesla or Apple or whatever, you can trade like, it's actually the same as Forex, really, where you're trading like a mirror of the market. So, in Forex, we're trading these charts that aren't, our broker passes the trades through to the real currency market, the real interbank currency market. And it's the same thing with these CFDs. So you can actually trade smaller lot sizes and stuff with like Tesla or Apple or, the big shares that are traded, like Microsoft and stuff like that. So that's another thing that you can do if you move over to sort of like the Forex world. It takes a bit, I think, of mental flexibility once you go over to currency trading. I understand people say it's harder, but it depends on what you consider to be harder. Like, I think it's harder to trade really gappy charts.
Yeah.
That's really the main reason why I like currency. I really do. I mean, it used to be like probably like most people, because you like to have charts going like after work or whatever, so you can trade, you know, when you get home or early in the morning before you go to work or something like that. The thing that I really hate is having a trade on and then the market gaps over, you know, your stop or your price or whatever, you know what I mean? Like that, all that stuff, to me, that is a lot of risk there. Now, I understand currencies definitely do gap as well. The technical analysis side of trading is so much easier when you have these really smooth charts, which you typically get, you know, these candles that you get in Forex. And that's what I really like about it, to be honest. Like, I've looked at Australian companies, Australian shares, and they're so gappy, and the market's only open here for like 4 hours or something. It's crazy. And so you get these massive gaps, and it just, you know what it looks like? It looks like target practice. It looks like someone just took a gun and just shot it like you're like, whoa. So it opened here today, and then tomorrow it opens up here. It's crazy, you know, like, so I really like the smooth charts that you get in currencies. And that, to me, that's another thing that I think, you know, might be weird if you're coming over from shares and you're so used to that. Yeah, it just depends. With anything, though, practice is what it's going to take. And, you know, working through a simulator, getting your feet wet, getting your confidence up, all the sort of fundamentals of trading, that's the way to go for sure.
Yeah, well, backtesting is really tough with shares too, right? You need so many data sets. It's kind of crazy.
Yeah, you need a lot of data. That's right. Yeah, that's right. Actually, one of the guys in the forum, he was showing me one that I didn't even hear about, but he uses this in his share trading, and it looks very similar to Forex Tester. But you're right. I mean, your data has to be really good no matter what, if you want to get some good idea of how your strategies are going to work, for sure.
Yeah. All right, cool. Thanks, Walter.
See you.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I know of a couple of ladies who can double or triple their account in like 2 or 3 months, but both of them said that I can only work with a $10,000 account.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So, hey, Hugh, I was talking to a trader in my forum, and she was talking about how she kind of gets into this rhythm where she does really, really well in her trading, and in her live account, she kills it basically. But then inevitably she has like this terrible drop off in performance. And she was wondering, like, if, you know, why does this happen? And I think she's onto the right thing, because obviously it could be many things, but two that come to mind would be just a, you know, reversion to the mean, right? So you've been doing really well, but if you have a 50% win rate and you have 8 winning trades in a row, maybe you are going to have a few losers, you know, 4 or 5 losers in a row. But actually, I think what's going on with her, and I think she's identified this, it's really coming down to confidence and overconfidence. So, you know how they say, like with athletes, if they're on a win streak and they're just really hot, you know, and this team's getting really hot going into the playoffs, they're so hard to beat. It's kind of like that with trading. But the problem is, because so much of your success in trading comes down to how well you execute and how well you prepare yourself to execute, which is really what this podcast is about, isn't it? It's about that aspect of trading. I suggested to her that she really focus in on how well she is doing that. So, in other words, it's so tempting for us to blame the strategy or the markets when we are, in fact, the reason why we end up with these really difficult losing streaks. So what I told her is, this should be something that you can track. This should be a data point. You should have data points in your journal that are telling you how well are you taking your trades at the beginning, and how well you're managing them, and how well are you getting out of your trades, right? So if you have those data, then you can go back and look and say, okay, well, it looks like every time I start to get really good and have lots of, get really lucky and have a win streak, I started to get sloppy and I start to consider trades that I wouldn't normally consider. But because I'm feeling so invincible, I take these sort of subpar pattern setups or something like that. And so that's really, I think, one of the key things to look at. It could, of course, be normal reversion to the mean, but in some cases, and I think in her case, she was right to suggest this or to ask this, is, it could be performance related. So that means keeping a track, so screenshots of your entry, screenshots of your exit, and also keeping a track of what do you think about this entry trade? Like, how good does this look at inception, at the beginning of the trade? And then how good does it look at the end of the trade? Like, how well did you get out of that according to your rules? So it's all according to your rules. So that's one way that you can fight this, is by, you can also keep in your journal, like, how confident are you in your trading? So you kind of ask yourself this every day or every time you take a trade, like, how confident are you in your trading right now, on a scale of 1 to 10 or whatever, and you can track it over time. And what you can see is you can map that onto your equity curve and see if your confidence goes up and then your equity curve goes down. You know what I mean? Like that's sort of a precursor to drawdowns, which again would indicate that it's performance related and not anything to do with the markets or the strategy.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's true. Totally true. This could go either way. Like, you could use this as an excuse, or you could use it, or it could be a valid reason, right? But some people have this circuit breaker where they think they don't deserve success or whatever, and then they kind of just sabotage it. On one hand, some people blame that for their losses, but in reality, like you said, they're not tracking their stuff, so they don't know if that's the case or not. They're just trying to blame it on something. I think in some cases there are legitimately people who kind of say, "Oh no, I'm successful. What am I going to do?" Right, and then they kind of just sabotage it, maybe subconsciously. But I think that's another thing to look at.
Yeah, and it could be both, right? It could be exactly what you're saying, and then that sort of manifests in the, in the execution. And so, so there are some, you can go to a hypnotherapist and ask them to find out what you think about your trading. They can kind of probe and things like that. Or you can do what's called remote association. So you can write down, you could literally go to a thesaurus, an online thesaurus, and copy all the words that mean wealthy or successful, all those synonyms. You could copy all those, paste them down in a column, right? And then print that out. And then what you can do is you can just go, calm yourself down, get really relaxed, deep breathing and stuff. And then bring that sheet of paper out. And after you look at every word, write down the first thing that comes to your mind on the other side of it. So wealthy, you write down whatever comes to mind. Rich, you write that down. Successful, millionaire, all that stuff. You write down all of your thoughts, and then see if you see a pattern. If you're writing down all these really negative adjectives to those words, right, to those synonyms, that's telling you something about what's going on up here and why maybe you have this repeating pattern. I know traders where they pull out their money. Once they hit $100,000, they pull it all out and they start over at $10,000, just work it up and just keep doing that, because they self-sabotage when they're trading $500,000 accounts. So I'm not saying that you have to do that. That's a workaround. I think you're actually better off, working on the root of the problem, right?
Yeah.
But at least you know what's going on. There's actually a fascinating interview in the Market Wizards or the New Market Wizards. It's the last one, and it's with the hypnotherapist, and he talks about this client he had where he hypnotized him, and he found out that he kept taking his statements from his broker and he would hide them from his wife or whatever.
Oh yeah, I remember that one. Yeah.
Yeah, do you remember that? So that's an example of that,
Yeah.
Maybe we can link up. I can link up that book, and it's the last chapter. I can't remember which book it is, but yeah. So those are definitely some things that I think much more common than we recognize, for sure. Yeah.
It's really interesting. I know of a couple of ladies who can double or triple their account in 2 or 3 months, but both of them said that I can only work with a $10,000 account. at the next month, I'm going to pull out everything that's the profit and then start all over again. My buddy actually got one of those ladies, like, I think it was $500,000 to trade or something. And then she couldn't do it. Like she almost blew it out, and she came back, but then the investor pulled out. So it's like, it's a really interesting psychology.
And the dynamic between trader and investor is interesting too, because a lot of times the investor is not educated in terms of like they don't know what the likelihood, like the likely drawdowns are and all that stuff. Like that's not, you know what I mean?
Yeah.
It's actually really hard to be a trader and have an investor who knows a little bit about trading. You know, that's a really difficult thing. So like people who get into that, I always say you need to have an agreement that says like the money is tied up for this amount of time.
Yeah.
But there's also like triggers. Like if the drawdown goes to this level, then all bets are off. You can pull your money. You know what I mean? Like safeguards on both sides.
Yeah.
Yeah. So, it's a really tricky thing to do that. And in my experience, the traders or the investors who have the least amount of, like the lowest amount of money are the biggest headaches. You know what I mean? It's the guy that gives you $5,000 that you got to worry about, not not the guy that has $500,000. It's so fun. It's so true. It is so
exactly.
True.
And I think a lot of these like prop firms, they kind of set a lot of traders up for failure because their drawdown is like 10%. Well, how much money are you going to make with the 10% drawdown, right? So it's really tough. And then they only give you like $5,000 to trade with. So I don't know. That's kind of a tough business too.
Yeah, absolutely. Yeah.
All right. Thanks, Walter.
Thanks. See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A lot of traders think that automated trading is the be all and end all, and it's your way out of psychological torture as a trader.
Yeah.
That's not true.
Yeah,
right?
exactly.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this is something that came up recently this week. It's around like mechanical backtesting or automated strategies. What's kind of the psychology you go through when you test something that's automated? It can be difficult for the average trader to get an EA or some sort of a program, stick it in, they test 3 or 4 pairs and it doesn't work, right? So where would you take it from there?
Okay, so probably I would recommend that people who are into this, there's a couple of books. One is by Kevin Davey, and the other one, I don't think it's Stidham, but it's another guy. I'll put the links in the show notes.
Mm-hmm.
So here's the deal with that. Like, you really need to group your data into 2 sets. One set is the set that you're going to test on and make sure that your strategy works, right? Like, which is what you were just talking about.
Mm-hmm.
The other set, which is the out of set data that you're going to use to take that system that you've developed and see if it actually works, right? Mm-hmm. So in one sense, you're like let's say you have like some moving averages and Bollinger Bands and RSI. And so you're kind of optimizing the levels and the values and all that on one set of data. Now what you need to do is take that data, and the out of sample data is where you actually run the strategy to see if it works, right?
Mm-hmm.
So that's really important, because a lot of times what people will do is they will take, like if they have 60 months of data, they will take like 55 months, develop the strategy, and then take 5 months and actually test it. You don't want to do that. You're actually better off in the reverse, having a little chunk of time or data to develop the strategy, and then more to actually see if it actually works. You know what I mean?
Mm-hmm.
And that's why I'm a real big believer in simple strategies that don't have a lot of degrees of freedom. So degrees of freedom just means the availability of different settings, different levels, right?
Mm-hmm.
So a moving average has tons of degrees of freedom, right? So if in that case, what you said, which is if I had a strategy and I tested on it and it didn't work, you should probably throw it away, right? Mm-hmm. That would be the thing to do. But in most cases, what people do is they'll go back and they'll say, well, what if I had done this? Okay, what's happening now is you're over optimizing that data set. immediately. As soon as you did that, as soon as you said, okay, I'm going to use this indicator or this pattern or whatever it is on this set of data, and it didn't work, that's like throw it away, and you should like start with something completely different. Because the more you go back on that set of data and try and make it work, the more what you're doing is fitting that strategy to work on that particular set of data. You know what I mean? That time period in the markets. And that will come out when you take that data and then you apply that system that you used, that you developed on that set of data, and then apply it on the out of sample data. So that's the real problem. So probably the biggest thing I think is understanding that the relationship between the data that you use to develop your strategy and the data that you use to test your strategy. The other thing is, a lot of traders think that automated trading is the be all and end all, and it's your way out of psychological torture as a trader.
Yeah.
That's not true.
Yeah,
right?
exactly.
Yeah, that is not true. It is not true, because you still have to turn it on and you have to turn it off. You have to say, oh no, we're in a GFC or we're in a pandemic, so that means I shouldn't trade my strategy anymore, right? Or I should reduce my risk. Or and basically what you're doing is you're making up rules on the fly, okay? Because you didn't have any contingencies for that when you developed your strategy. So thinking that letting the computer make the choices for you is going to help you avoid, the psychological pitfalls of trading is, I think, wrong. And I don't think that's true at all. Unfortunately, a lot of us fall victim to that. Now, I will admit that I do like to use automation on the exits. I found this to be very freeing. If you're using like a trailing exit or something that you don't want to check every, for me, like I don't want to check every 6 hour or 8 hour candle or whatever. So I can do that, right? I can set a target and I can set my automated EA exit to get me out. So that's really cool, I think, to do that. There still is a temptation to fiddle with it and all that. But at the end of the day, using automation in your trading is really kind of a test of how developed or evolved you are as a trader, I think. The more confidence you have in your automation, whatever that is, whether it's an exit rule or the complete strategy, that's going to come from your testing, right? From your experience, from getting dirty with the data. And so, like, if you're a beginner and you're starting to get into trading, I think it's the worst thing you can do. I really do. I think you're better off just learning simple strategies and applying them manually. But I think later on, I think it kind of is like the way that a lot of traders end up looking. If you've been doing this for 10 years, you're certainly going to look for some shortcuts, right? You're going to look for how do I get myself away from the computer, sort of thing. So yeah, I can see those two things, the in-sample and out-of-sample testing, and the thought that it's going to remove all emotion from your trading. I think those are the two biggies for me. What about you?
That's true. Yeah, I mean, I've never been a big fully automated person either, but I can see where either automating the entry or the exit could be a good way to go and just kind of save yourself some time. My trading buddy likes to automate his entries so that the stop gets moved automatically, but he manages the exit, and so you automate the exit. So I can see it helping there. But I think like the idea of testing or having a fully automated system is not for everybody. I think the psychology behind that and the technical mindset behind that, I think, is really hard to get your head around.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And to be honest, like, I think people overcomplicate it, kind of on the degrees of freedom thing. Like, I'm serious. Like, I've seen some really good strategies, and you know what they are? They're things like, buy the pound at 3:00 every day. Like, it's like simple stuff like that. And you're like, what? That would never work, or buy when the market or sell when the market makes 3 candles in a row where it closes higher than the previous candle. You know what I mean? Like, it's kind of like a counter trend move or whatever. Like there's so many really, like, you look at the rules of the code and you're just like, no way, man, there's no way that's going to work. But it does. And so that's another thing to keep in mind. I think as beginners, we start and I was the same way. Dude, when I first, my friend and I, my training buddy, we had a spreadsheet with 15 different things, different indicator levels that we'd look at, and I would actually tick on the spreadsheet yes, no, yes, no. And if I had 12 of the 15 in the right direction, I would take the trade. That's what I did. And that was on the 3-minute charts. You know what would happen? By the time I went through all 15 things, the 3-minute candle would already print. You know what I mean? Like, it was crazy.
Yeah. I think we've all been down that route though, right? With the checklist and everything.
yeah, totally. Yeah, it was so funny. Yeah. That was pretty classic. Yeah.
Cool. Well, thanks for the insights.
All right. Thanks. Yeah.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I'm sure, people look back 1,000 years from now on us and they'll say, yeah, they didn't have that quite right.
They were using all these drugs and
yeah, exactly. There'll be something. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. All right. This might be a little bit out there for a topic, but I'd be interested to hear what you think about the mind versus the brain. So is there like is everything coming from the physical brain, or do you think that there's some other knowledge out there that maybe we receive through the brain to make our decisions?
This is really good. Thanks. And I'm sure you have some interesting thoughts on this too. I'm sure of it.
Hey there. I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So the way I look at science is it's really materialism. So if you talk to scientists, in essence, most scientists, not all, but most scientists in a professional sense, they are in the field of materialism. And that's kind of the way that our science has gone down this path of, if you can touch it, if you can see it, if you can hold it, if you can measure it, then it's real. And everything else is not. Okay. Mm-hmm. Now that hasn't always been the case, but it certainly has been the case the last 150 years or so in our scientific fields, right? Mm-hmm. So if you talk to a lot of neuroscientists, many of them, not all of them, but many of them will tell you, just like how we map the gene, like the genome, like the human DNA, like when we map that out, it's like, okay, they thought, okay, we're gonna figure out all disease, because of course all disease is due to our genes, right? Which we found out it's not quite the case. Certainly is there's epigenetics, the interaction between your genes and the environment. A lot of hardcore neuroscientists will tell you that if they map out the brain completely, they're not there yet, they don't know exactly what every little nook and cranny of the brain does. They have a general idea of Broca's area, and this is where your emotions, and this is where your frontal lobes is where you do your planning and speech and listening, and they have that, that's all. But they don't know exactly down to the neuron sort of where things are, right? But they do with DNA. And so some of them will tell you that as soon as we get to that point where we map out the entire brain, then we will know everything there is that you need to know about the brain, and you will know the mind. However, there are a lot of other scientists that believe that the mind is separate from the brain. I had whole classes in this in graduate school because I actually had some pretty cool professors who were kind of deep into this philosophical aspect of brain science, right? Cool. So it's really kind of cool. And so my belief is that the brain is like an antenna, okay? And so your mind is beyond the physical, kind of like a sailboat. So if you're in a sailboat, in fact, you might, it's not a very good day today, but you might see some sailboats behind me. I'm not sure if you can. There's one. I don't know if you can see it. But anyway, these sailboats go by, and what they have is they have this big sail that catches the wind. Okay, and the wind helps them go. Obviously, they need to get that sail just right to catch the wind. Mm-hmm. Well, it's the same thing with our brain, right? Our brain is like a sail, right? In essence, what we're doing, our mind is beyond our brain, as I see it. It's beyond us. It's beyond the physical. so the essence of who you are comes from all those experiences that have come in through your brain and all those physical, all that physical stuff, all those interactions, your memories, the things you've forgotten, all that stuff kind of helps form that, but it's a bit beyond. So you can that's why, for example, and I don't know, this is probably going to freak some people out, but there's a book written in 2004, and I will put it in the show notes. Her name is Sylvia Browne. I don't know if you heard of Sylvia Browne. You heard of her?
Yeah, I've heard of her.
She's a psychic, right? Yeah, she's a psychic. I always thought she was a total and complete fraud. Okay?
Yeah.
Maybe she still is. But what if I told you that she wrote back in 2004 about this virus that would come in the year 2020?
Mm-hmm.
And she basically made all these predictions in this book. And she was talking about this virus, and she pretty much nailed it. Okay.
Mm-hmm.
So, and it's just like people who use like remote viewing and things like that, where they pick up on other areas of the planet where they're not physically located. How is that possible, right?
Mm-hmm.
So I believe that our brains can serve as a bit of an antenna. And I think of the mind as that aspect of, or that ability of you as a human to tap into other things other than what's in the physical stored in your neurons, right? So what are your thoughts? Because I know you probably have some really good ideas along these lines.
Yeah, no, I totally agree. I've been researching it quite a bit, and I've been looking for this book. The name is escaping me, but the guy basically, he's done a lot of studies, and he's proven that there is like a certain knowledge that sits outside of the body, and if you get into this alpha state, you can actually access that knowledge. I don't remember what it was, but I'll put it in the notes when I remember. And yeah,
is it a new book? Is that a new one or an older one?
No, it's older. It's older. I forget the name. Jeez. Anyway, but yeah, I've read several books like that, and then there's that other one, The Secret Life of Plants, right? And it shows that plants actually have they can tell when they're going to be harmed. So when you think about only eating plants versus animals, there's kind of no real difference, right? And once you have that sort of knowledge of what's out there, then you can I think it makes it easier to understand, okay, there are some other things out there that we don't typically learn about or know about, and can be accessed, from outside of us. And it's not just the brain that creates these ideas or these thoughts. And if you go through a lot of famous people, like composers and artists and all these kind of stuff, a lot of them say that I was just the conduit. I did not think of this. Somehow it just came through me, and I just moved my hand, and I wrote this book, or I painted this painting, or I created this opera, or whatever it was. So yeah, I believe that there is a certain amount of information out there. And like you said, I think, our brain is just kind of this antenna. It stores a little bit of information about our life right now, and it helps us like brush our teeth and stuff. But other than that, I think, there is the potential to get access to this other knowledge.
Yeah, so Carl Jung talked about that. I don't know a lot about Carl Jung. I wasn't really big into him, but some people were. He was a student of Freud. So he talked about like the collective consciousness.
Yeah.
So everyone sort of has this collective, like, deep in your unconscious, like the shared experience. And actually, my understanding is that there's data that comes from the mother. Like, so let's say your mother really loved Doritos, okay? Or had some trauma at a young age, like a really terrible experience when she was 5, that actually gets passed on to her children, like encoded somehow. Like that like all that stuff is really weird. That's only kind of recent stuff that we found. And so, yeah, there's a lot more to it. And whenever someone says, like, when you start saying stuff like this, Hugh, and people say like, oh, well, that's ridiculous, or that's not real, or whatever, I always just come back with, well, bloodletting. We used to think that bloodletting was the thing to do. You know what I mean? Like
leeches.
Exactly. Like, it's so easy to think that where we are, we're at the tip of the spear. We're at the we're at the point of science where we have everything, or we almost have all the knowledge and everything. But you always look back in historic time, look back years and years and go, oh, they had bloodletting, they're a bit off there, and I'm sure, people look back 1,000 years from now on us and they'll say, yeah, they didn't have that quite right.
They were using all these drugs and
yeah, exactly. There'll be something. There'll be some clear direction that we sort of went down, and it was the wrong path. It was a dead end.
Yeah. Well, there's a lot of evidence that they're coming up with, like in Turkey and stuff, where they're unearthing these ancient civilizations, right? And they had plumbing and they had supposedly electricity and all this stuff. So that just shows you that we might not be the tip of the top of the mountain or whatever you want to call it, right?
Yeah.
We're not the highest point of civilization. So
yeah,
something to
Göbekli
consider.
Tepe. Yeah, exactly. Göbekli Tepe is a great example of that because that shouldn't exist back in the Iron Age. Like they have all that stuff. We weren't supposed to have that in the Iron Age. Nope. I don't know if did you hear about that thing they found in Utah? Like what the? I mean, that's just weird.
Which one was that?
Just the other day, they found a monolith in Utah. So in the middle of nowhere, okay, these guys were like, I don't know if they were like rangers or foresters or whatever, like they're geologists or something, but they were kind of with the state, trooper dudes or whatever, some official capacity. They're in this helicopter. And one of the dudes is like, what's that? Because they're in this super remote area. Actually, a friend of mine used to work out with the Parks Service in Utah, and he was like, he loved it out by Moab and stuff. I don't know exactly where it was. You can look it up. I'll put it in the show notes for people. But they found this massive metal monolith, like a 12-foot tall monolith stuck into the rock, just sitting there in the middle of nowhere. And they're like, dude, like what? like what? And so the only theory right now that they're putting forward is that it's some sort of elaborate art installation. Okay, maybe. But that, like, who would helicopter that in? And there's like no seams or anything. Like, like where I live, if they put a bike rack into like the concrete, into like the footpath, the sidewalk, if they put a bike rack in there, there's always like where they had to like drill the hole and they had to kind of like spackle the concrete around there and kind of like seal it up. But this is like, it looks like it just got pushed up out of the ground. It's this pristine metal, shiny. That's how I think how the guy saw it. He was up in the helicopter and he's like, whoa, what's that down there? It's just an example of what you're saying. Like we don't know everything. Like I don't know where that came from. And maybe it was some elaborate art installation that they somehow hiked into the middle of nowhere and somehow installed like perfectly. It looks like it's cut with lasers or whatever. Like maybe. Yeah, maybe. But it could also be something like historical or something just like there is no real logical explanation for it, and things like that come up all the time. So yeah, I'm totally with you on that one.
Yeah, I mean they haven't really totally explained the pyramids yet.
Exactly,
it's been like hundreds of years. So like
yeah. No one can do that. No one can do what they did back then. Like we can't do it today with cranes and all that stuff. Yeah,
sure. All right, cool. Thanks, Walter. Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Make a decision. I think the worst thing you can do is kind of just like say, I'm going to take this trade. Am I going to get out? Am I not?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter, this is something that you probably know about from your studies in psychology. This idea of paradox of indecision. I think they call it like Birdian's ass or something like that, right? Where the donkey is between the food and the water, and he can't make a decision, and then he dies because he doesn't get either one. How do you see that playing out in trading? Like, how do you see that manifest?
Well, I think in trading, our gut instinct is to take the profit and to not wait for. So, like, let's say you're in a trade and your trade's in profit, but it hasn't gone as far as you had hoped it would go. Let's say, for example, you risk $1,000 and you want it to go to your $2,000 target. You want to make $2,000 on your $1,000 risk. It's really tempting when it's at $800 for you to go, maybe I should just. It's almost Friday. Maybe I should just take that profit, And the problem with that is that it messes up all of your stats. So I think when people are stuck and they're indecisive, the instinct for traders, for us, is to do the wrong thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
It's usually to take the profit. It's usually to, put off the pain. So take the profit quickly, or take the nice feeling thing quickly, and to put off the thing like the losing trade, move the stop away, move it further so I don't get stopped out yet, give it more room. Like those sorts of things, I think in traders, when really it's interesting that some of the most successful traders, what they've done instead is they learn to adapt and interpret the market information and feedback that they get differently to most traders. So, for example, trading with really low win rates strategies, or not taking a lot of trades and having a lot of restraint. You know what I mean? So it is really easy to get stuck in that situation where you're like, I don't know what to do. But I think the tendency for most of us, at least for me and a lot of traders I've talked to, especially when you first start trading, is to do the wrong thing. So to take that quick profit, to put off that painful loss, all those sorts of things are kind of like what we're built to do. And it's why the markets, it's classic. Like I was just reading the other day about this hedge fund, and this hedge fund had been bearish for years. Okay. They had been banking on a market collapse. And interesting thing about it was this year, they had finally decided, you know what? No, we're going to go long. We're going to go long the markets. We're not short anymore. And then March 2020 happened, and with the coronavirus freak out, and of course the markets all went down. And so they literally decided to flip right at the point. You know what I mean? Everything turned around. It's so amazing how we are so good at that as people, at picking the exact turning point and deciding, you know what? Maybe I'm doing the wrong thing here. Maybe I should do this instead. And it's always, right around the point where you should actually not do that. And I think that kind of that's the story of the markets. That's why it's so difficult for a lot of people to make this work, is because you're just built to go against it, including, that being indecisive or deciding to do sort of the, the wrong thing mathematically. Financial, what are they called? Behavioral economics. Like they say that we should be very rational and make the rational decision and the one that makes the most money and all that, but we don't do that. The data is pretty clear on that. I believe that we don't do that we don't make those decisions that are most rational. And so instead we have these driving things, like the drive to be right, the drive to be right is to take profit quickly, the drive to avoid losses and say that you're incorrect. Both of those are kind of the same thing. It's like you don't want to take the loss, and you also don't want to say that, I made the wrong decision here, all that stuff. So it's a tricky thing. What are your thoughts?
Yeah, for sure. People, I think also it's worth mentioning that you should make a decision. I think the worst thing you can do is kind of just like say, I'm going to take this trade. Am I going to get out? Am I going to not? And make a decision. Whatever you think is the right thing, just make the decision. And then number 2, record it. If you can do those 2 things, I think you'll learn much faster, because you'll understand, okay, I have a tendency to do this, take profits early, whatever it is. And then I record that in my journal, and I can see that doesn't result in much. But I think a lot of times people get stuck with a decision, and they're like, maybe I should do that, maybe I shouldn't. And then they kind of like flip a coin, and you're not really sticking to one path. If you can stick to one path, I think you can understand your logic and how you really feel about the trade. And then that will allow you to either continue on that path if it's working, or take another path if, it's not, or whatever.
Yeah, that's a really good point. I learned that lesson. Like I was reading about a famous surfer, and he was saying how, like, as the waves get bigger, I don't really surf like huge waves or anything, but when I was younger, I did more, I guess. And he was saying that the worst thing you can do in like big surf is to be indecisive. Like you really like, and it's so true.
Yeah,
because it's exactly what you're saying. Yeah. Yeah, it's so bad because like when you're paddling out, you've got to decide, are you going to try and get duck dive under the wave, or are you going to ditch your board? And when you're paddling forward wave, you got to decide, am I on this? Am I definitely going to try and catch this wave? Because what happens sometimes is people like get a little bit fearful or whatever, and they pull back, and then they're stuck in the wave, and then they really take a pounding.
Yeah,
like all that stuff. Yeah, exactly. So it's the same with trading, and your point about having a record is really good, because then you can learn. You know what I mean? Mm-hmm. Like you can learn obviously from experience, but it's so much better because we kind of trick ourselves, and we cloud our memories by thinking that we're better than we are, or sometimes worse than we are. But I think for most of us, we think we're better than we are, and so having a record is really clear, because that clarity and keeps you sort of grounded at where you're really at. So that's key. Yeah, for sure.
Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
break the goals down into more achievable, aspects. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So I was talking to a trader the other day, or messaging a trader the other day. Well, what he wanted to do was get really aggressive with his trading strategy and use some aggressive risk algorithms. And so we were working through the numbers, and he was trying to figure out, he kept coming back to this point, oh, my system's not good enough. Oh, my system's not good enough. And what I was trying to share with him is that actually your system's pretty good. But what's happening is when we tweak the risk so much and get really hyper aggressive, it's leading to likely drawdowns that are going to freak you out. You know what I mean? I think we confuse as traders this idea of the system's no good, when really we put that label on it, when really it's more that the way we're trading this system is making it no good for our appetite for drawdowns. You know what I mean?
Yeah.
Do you know what I'm saying?
Yeah.
Does that make sense? Have you ever had that? I've had that happen lots of times.
Oh yeah, for sure. I mean, I think there's also this idea that if you get a result at a certain risk amount, like maybe 0.5% risk, same results are going to scale up if you risk 5%. And it just doesn't work like that. I mean, your drawdowns are going to be more. And like you said, obviously the psychology is going to be different. And sometimes systems just blow up when you increase the risk that much. And I think that's what people need to understand, in addition to, tailoring the drawdown to their personality, right?
Yeah, it's exactly, you know what you reminded me of when you said that? It's exactly like saying, well, if I got from here to Las Vegas in 10 hours at 100 miles an hour, I'll just go 200 miles an hour and I'll get there in 5 hours. You're going to die, right? You're going to die on that 45 mile an hour turn. It's over. So yeah, it's exact same thing. It's exactly what you said. That's totally it. That's trading, thinking that everything is completely scalable. And now actually, I learned that lesson really early in terms of strategies, because one of the guys that was sort of getting me into trading and stuff, and he wanted to work with me and my friend in trading, and sort of start bringing investors and stuff. And he was like, is it scalable? That was his main thing. He worked for a broker, so he understood this idea of, is it scalable? Is it scalable? And he kept pounding on this, and I was like, man, what is this guy talking about? But I realized what it was, because some strategies, they really only work at a certain size. You know what I mean? For example, if you're scalping the euro or whatever for 5 pips, you're actually going to move the market. I mean, you're going to move the Forex market if you have too much size there. You know what I mean?
Yeah.
You actually won't be able to get into all your position. I know people think about this more in terms of stocks and trading shares and that sort of thing. But it's actually, and I saw a really good presentation on this from the guy who founded Owanda. His name was Richard, and he was Richard Olson, and he was I don't think he has anything to do with Owanda anymore, but he sold out his part of it. But he was showing all this data. He had tick data going back to the 80s or something. The biggest takeaway I got from it was, wow, it doesn't take actually that much to move the Forex market. We think of it as this big, massive. And he's like, no. He's like, so if you're trading 10 lots or something, 10 standard lots or whatever, that's enough to actually really push it, And I found that fascinating, that whole idea. Yeah, so this idea of scalable, and it just, maps on perfectly. Obviously, that's not the case. And we often confuse whether or not it's the system that we don't like or the risk parameters that we've placed on the strategy, on the system. And that leads to drawdowns that we can no longer withstand. I mean, that's the one thing I try and get across to people, is that psychologically, your biggest issue is going to be dealing with the drawdowns. So you may as well up front go, all right, what is the drawdown I'm willing to withstand, and what is the drawdown I'm willing to draw the line and say, I'm done. And so now you need to do everything possible to avoid that drawdown where you say, oh, I'm done. I can't do this. I can't sit through a 35% drawdown. That's impossible for me to do. I know that, so I'm not going to do it. So you need to know where that is before you ever start trading the strategy. That's the key thing. Yeah.
Yeah, sure. Hey there, I hope you're finding this episode useful. I just want to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. And I think one thing that people think of also is that I need to increase my risk, or I need to increase the return because I can't make a living on whatever it is, 1% on $10,000, which is all they have in the account to trade, right? You know, the reality is that maybe you just get an investor and you get more money or whatever it is, but you can always somewhat scale that up. But I think thinking that you only are limited to what's in your account and the return on your system is kind of like, you know, you're kind of throwing away a good system when it could be useful.
Yeah, absolutely. Yeah. And you know, that idea, that 1% that you said, that the first traders that I came across, there was this group in London, and my friend introduced me to them, and they were, you know what their goal was every week? They had a very, very simple goal. Every week they just wanted to make 0.75%. That's it. That's all. And some weeks they'd lose 0.5% or whatever, or 1%. But they wanted to average every week 0.75%. That was it. That was their goal. It was just boom, boom, boom. And you know, you would be amazed at how quickly your account grows if you can do that. Even if you can only do 0.5% a week, if you just keep that money in there, and if you're able to compound it and you don't have to pull it out, you'd be amazed at how that can grow. It's not. It doesn't take that long actually. So it's going to grow faster there than in the bank. That's for sure. So yeah. Yeah. So, you know, that's the thing, is that sometimes you do have to take a step back and go, okay, well, I'm not going to be super aggressive. So what can I do? And maybe that's what you can do, is just take it, you know, break the goals down into more achievable, you know, aspects and more achievable steps. Yeah.
Yeah, cool. Good advice. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
But I'm not sure that going to school and getting a PhD or whatever, like I did, is really the best thing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, we've both met quite a few people over the years and quite a few successful people. What are like the core traits that you see in successful people and successful traders?
Yeah, that's a good question. It's interesting because I think, you know, the test where it's like I'm an INTJ or EFP, whatever,
Myers-Briggs.
Myers-Briggs, yeah. Myers-Briggs. I always get that one confused with the there's another one. But anyway, yeah, with the Myers-Briggs, like I've seen on forums and stuff, people discuss like, oh, you know, if you're an INTJ, you know, that's the best trader profile or whatever. And I can see why people go down that way. But actually, I think there's only a few things that would make it easier. So there's a really good study of like really good gamblers, as funny as this sounds. And, you know, they actually look, the way that the author described it is, you know, they almost look at as if they're in, like, they live forever. So when they're looking at the odds, you know, they might have a slight odd in a certain situation. For example, like I can't even, like, I don't even know enough about poker or blackjack or whatever, but like in a certain situation with a certain hand in poker or blackjack, you know, your odds shift, all right? Or if certain number of face cards have been pulled out of a blackjack deck, even if it's 6 blackjack decks that are all mixed up together that they're playing, you know, the dealer's playing. Like there's times when it shifts and you get a slight advantage, right? And it's almost like in the study, they almost seem like they just live forever. And so they look at things on a really long time frame. And I think that's one thing I would say that's interesting about the successful traders. They have that ability to kind of see the value of a really slight edge. Whereas I think when we first start trading, we assume that we can't even start trading until we have like this enormous edge, right?
Yeah.
And once we find that, then it's like, it's over. You know, we're just going to mine that sucker. And so I find that fascinating about the gamblers. I think that a lot of that translates to trading. The other big one would be resilience. I think that most traders quit and move on to something else, or just find trading too painful when they're unable to overcome losing streaks. I think that's a big one. I think that's probably the number one reason why most traders don't make it. Not because they don't have a good system, not because they don't have good risk rules in place, but because they were unable to trade through that drawdown. And so they've come up with excuses, whatever they are. The system's broken. The markets have changed. I'm not cut out for this. This is the wrong strategy for negative interest rate environments, whatever. They can come up with lots of reasons why, and they quit. So resilience, I think, is good, and also the ability to see the like to play out the odds in your head. And you can do that obviously with a spreadsheet. You can do that with Forex Tester. All of that's really important. But I think for me, if you're able to see the value, and it's really, I guess it's kind of in a way probabilistic thinking would be kind of the overarching general thing. Like, I really think it's important, I was thinking about this the other day, not to go too far on a tangent. I know I want to get your ideas too on this, but I was thinking about kids and what's important for kids to learn. And, and I went to school for a long time, right? But I'm not sure that going to school and getting a PhD or whatever like I did is really the best thing for you. In a lot of ways, it kind of pins you in intellectually into a certain corner, and you almost can't get out of that.
Yeah.
And so I was thinking, like, what were the really good skills that people need to have? And I thought one would be the ability to understand probabilities and statistical thinking. The whole game of science is a game, and it's run on probabilities, basically. Everything. It doesn't matter if it's geology, astronomy, medicine, psychology, it's all a game of science. And so if you can understand probabilities and statistics, you can read all those papers, you can see what everyone's arguing, you can do all that, right? The other thing would be storytelling, because there's a lot of value in that. I'll tell you a quick story. One of my friends, his whole business is getting investors to invest in a fund of Australian properties, right? And he was saying that he had this guy come over from Switzerland, this billionaire guy, and they were trying to get him to invest in his company or whatever. And he's like, all the guy said to me was, tell me the story. My friend was like, I couldn't do it. I didn't know what to say. We had all the numbers and everything, but we didn't have the story. And I think there's a lot to that. Like, I remember in high school sitting on a bus going out to the ski fields. It was like, 3-4 hour trip. One of the guys, he was a year older than me in high school. He was sitting in the bus and he was sitting there telling me stories, and everyone was just riveted. And I remember thinking, that's awesome. Like, this guy can do that. It's such a cool skill, to be able to tell stories in a way that's engaging and can teach lessons and stuff. So I really think, there's a few other things, like maybe learning how to speak in front of others, but there's certain skills that you can get, and you don't necessarily have to get a master's or a PhD to have those skills. You can learn probabilistic thinking. You can learn storytelling, all those things. You can learn how to speak in public, like, in an engaging, interesting way. And it's fascinating to me how many really good scientists are terrible speakers, and you see that.
Yeah.
Like, it's weird to me. Like, you would think if you spend your whole life on this one issue, like this one thing about, whatever it is, anti-aging, or, something about the number of Earth-like planets, in the universe or whatever. Like, if you had some really important thing, you thought this is the most important thing we need to understand, the ozone layer or whatever, you would think that you would spend a little bit of time learning how to explain that to other people. You know what I mean?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So I know it's a long-winded tangent, but for trading specifically, I think it's probabilistic thinking and being resilient, which is the ability to bounce back in the face of really tough times, because that's what traders have to deal with in terms of losing streaks. What are your thoughts?
Yeah, I would totally agree with you on the resilience part. I think it's a lot of these successful business people just stuck with it. And if you just stick with it at some point, if you try to improve, you'll get better, right? And I think that's a huge one, obviously. Also, I think a lot of good business people and traders, I think, are kind of weird, like in terms of what the average person thinks about them, right? It's the idea of having independent thought, thinking for themselves and trying to figure out what really works for me, what really does work in the markets, and not, like you said, falling into the trap of education. Like the guy who can quote all the books,
but he can't trade to save his life, right? And I think that's a really key one, to be able to think for yourself and to be able to really think way, way, way out of the norm. I think really puts you ahead of most people.
Yeah, and that's such a good point. I've noticed that, like, the difference between people generally speaking in the US versus in Australia is, in Australia we have kind of this really traditional English way of teaching children, not universally, but in a lot of places. And so what that means is, they get grounded in the classics and sort of thing. So they can quote the classics and they can understand certain things that are held high in our Western culture and ideas and authors and stuff like that. In the States, it's exactly what you say. Like, I think there's a lot of value placed on the cowboy, or the Lone Ranger, that sort of idea, the guy who's just out on his own, kind of doing his own thing and, figuring it out on his own, and being an individual is so important. Whereas in Australia, there are a lot of great things, but one of the things I've noticed is that it values being in a group, like the community. It's a very Asian idea of like the good of the community, Yeah. And that's really important. And one time I remember my friend who was Australian, he was trying to console me because what had happened in California is I had a failed business, and for lots of reasons. But he was saying, "Oh man, I'd always bet on," which basically what you were just saying. He said, "I would always bet on the businessman with the failed business because he'll come good. He understands it. He's been through the wars and stuff." And I was thinking to myself, like, dude, I don't even need you to tell me this. Like, you know what I mean? Like, that wasn't even a concern for me. You know what I mean? Like, it really wasn't. Like, I was like, bummer. You know what I mean? It was a couple of years of my life, or whatever, a year and a half or whatever, and a lot of money and work and this and that. But it didn't work out, and I wasn't like worried that I could never do anything because I had a failed business. You know what I mean? So, but his point was exactly what yours was, which is, you have two people. You have one that's never seen failure and one that's seen failure. Which one do you bet on? He's like, I would always go with the guy that's been hardened through, the trials of burning through a doomed business or whatever, as a business person, he was saying like that. And I was like, I could appreciate what he was saying, but I didn't need the pep talk. Yeah.
Cool. Yeah, totally. But that brings up the point also, like, if somebody thinks that they don't have these characteristics, how can they develop them? And do you think that some people are just destined not to have them?
I think that's in my opinion, and from what I've seen, even in psychology research, they used to kind of think that way, that like, and I've heard older people say this, when your kid's personality is formed before they turn 5 and all that, we found that personality is actually quite malleable. And I've noticed that I've changed in different environments. Like when I was in a certain circle of friends in undergraduate school, I was a certain way. And then when I went to graduate school, I kind of became a different person, had a different group of friends, and the same thing when I left US and came to Australia, I'm kind of a different person that, and everyone will say, well, yeah, I'm always different with my grandma than I am with my friends from high school. Okay. Yeah, sure. Right. That's fine. But I'm talking about actually sort of changing your introversion, extroversion, like where you're on the scale. Type thing, right? Yeah. And so let's take an example of resilience. We've both identified resilience as being an important thing. So an easy way for that, and there's actually a school in Australia that teaches this way, and a lot of psychologists will as well. So like if you go to like a cognitive behavioral therapist because you're depressed or something, they will teach you this skill. But in terms of trading, let's say that I'm in a losing streak and I'm thinking, oh no, here we go again, another failed strategy. I'm training this strategy. It's failing me. It's not going to do very well. I need to give up. I need to find something better. I need to, reassess. And I'm going to lose all my money. I'm never going to be able to make trading work. I'm never going to be able to quit my job. Like all these things sort of cascade. So what you do is you can build up resilience by rephrasing that self-talk, right? The way that you see things. And so you identify that that's called catastrophizing. Just because I have a losing streak of 6 trades means I'm never going to make it as a trader, right? That's catastrophizing. And it sounds ridiculous when you and I talk about it right now. But actually for a lot of people, that's their reality. Yeah. And so, and I've been there, you've probably been there where you've had situations, it doesn't have to be trading, it could be anything, where you start thinking, oh my God, like it's never going to work. So that can be retrained, and you can train yourself to say, okay, hang on. All right, so I've been trading this system for how long? 2 months. Okay, 2 months. And I back tested it for how long? 10 years. 10 years. Okay, 10 years. In the 10-year back test, did I ever see a drawdown of 6 trades in a row that were losers? Oh, yeah. Yeah. Okay. So is it really the case that the strategy is busted? No, probably not.
Mm-hmm.
Is it likely this is a normal drawdown? Yeah, probably. So what you're just trying to do is just trying to inch yourself up a little bit higher to a slightly more positive emotion through logic. And that's all that is. And they do that with depressed people too, with cognitive behavioral therapy. You can look up CBT on the internet and see that. But that's what you can do to build resilience, is you can just learn new tools where you kind of step back and say, is this real, what I'm seeing here? Or am I just catastrophizing? Am I just letting my thoughts get really negative and keep going to the point where, I'm just like off the map. Like I'm not even on reality anymore. I'm just in this other world of manufactured pain and suffering, right? So, and it's so easy for us to do that because our ancestors did that. They're the ones that survived. They're the ones that were worried. Wait, what's that noise in the bushes? Oh no, it must be a lemur, or whatever, right? They're the ones that survived. The guys that were just whistling through the woods, they're the ones that were eaten by the lemur, right? So I don't even know if lemurs eat people, but you know what I mean. Yeah. So, yeah.
Oh, great points. Yeah, for sure. I think another thing too that I found is that motivation really plays a big part in it. Like if you have the proper motivation, you can do almost anything. But if not motivated, you have a nice cushy job, you kind of like it, then you probably won't quit because, trading is tough in the beginning. So I think that's also another thing to consider is how can you maybe not artificially create motivation, but dig up your real motivation behind what you want to do. Do you want to travel around, be a trader? Do you want to buy these things that you can't afford right now? Do you want to take care of your kids and see them grow up, stuff like that? And I think that's also a big motivator to, improve whatever you need to improve, no matter how hard it is.
Yeah, that's so true, because you will see that in traders, the ones who, like, no matter what, they still push through, and it helps build resilience when you have that end goal and there's nothing else you're going to do except achieve that goal.
Yeah.
So yeah, it's a really good point. Yeah.
Cool. All right. Thanks, Walter.
See ya.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I think it's just a matter of repetition.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here. Trader has written and said, I really would like to get to the point where I'm making consistent profits, and yet I'm very fearful of taking a trade. So that's the question. So my thoughts on this, and I'd like to get your thoughts as well, is that when you're at a point of fear, what is fear? It's just anticipating the unknown. Because you don't know what may happen, you are concerned and you might think the worst. Well, what could be the worst possible outcome of a trade? It could be that you lose, or that you lose more than you had anticipated, right? So I said I'm gonna put my stop loss at $250, but I actually lose $375 or something like that. So that could be kind of the worst case scenario. The antidote for fear is preparation. And so that means running through your simulator like Forex Tester, doing your back tests, making sure that you know what is likely, what is not likely, looking at all that stuff and mapping it out. Because once you map it out, guess what? It's totally easy. Now you know, right? There's no really unknown. Once you get enough trades under your belt with a strategy, it's really shouldn't be unknown. It should be, well, I have a 61% chance of making profit here, 39% chance of getting stopped out, and around 0.5% of the time, the market may gap over my stop loss, and I'll lose a little bit more than I had anticipated in terms of my risk, right? So that, those are the sorts of situations that, preparation can help you with that. So if I hear from a trader that they're fearful, it probably means that they're not prepared and they don't really know what to expect. So you can help that with back testing. It also probably means that in the past you've had a lot of losing. And why is that? Is that because you're risking too much on your trades? So even a normal loss is really painful. Then you need to look at how what your position sizing is. And if you're just fearful in general of taking a trade, no matter the size, it just means you're not prepared yet. You need to go back. You need to, work through Forex Tester, find out what your numbers are in terms of average win, average loss, win rate, loss rate. You need to figure all that stuff out, what your likelihood of certain drawdowns are. All that stuff can be found just by preparing. So that would be my suggestion to the trader who has the fear of pulling the trigger. It could be that you have done all that and you have a low win rate. Sometimes that'll happen. You've worked it all out, but you have a 29% win rate system. In those cases, I've seen some traders successfully automate that so that the entry is automated so that they don't have to keep hitting the button knowing that, they got a 7 out of 10 chance of losing again, because that can be really that can be a difficult thing to do. So those are the things that I would say about that. What are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, cool. I think what you just said would cover about 95% of the fear of losing. But I think there's a small population of traders who also have this fear of just, the system isn't going to translate into live market somehow. And I think those are the very, very risk averse people in life and in trading. So I think to overcome that, another thing to do is just to take some trades, like bring the risk way down and just take trades. And I think that's kind of like ripping off the Band-Aid, right? You just got to go out and do it. Otherwise, you're just in your head saying, oh, is this really going to work? Is this really going to work? And the only way to do it is to actually go and take a trade.
Yeah, and you can do that like over and over again with a small account, right?
Yeah,
so you have your $150 account or whatever. Yeah, just boom, 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 boom. Yeah, that's a great, because then you kind of get, it's like a muscle, you're exercising that muscle. You're taking the trades every day or whatever. And, yeah, sure, you're only risking 25 cents or whatever, but you're doing it. Like you're saying, like you're doing it. And it's totally different when it's real money. All of that is absolutely true. So, yeah.
Yeah, because it's kind of like maybe hunting or skeet shooting, right? Like it might be a little intimidating to shoot a shotgun. But then once you do it a few times and you're like, okay, I can shoot these clay pigeons or whatever. And I think it's just a matter of repetition.
Yeah. Have you ever done that, by the way?
Yeah.
It hurts. Like
yeah,
I did
it does
when I was
hurt.
a kid.
Yeah.
It hurts. It hurts when you have the shotgun here. It's like I was just a kid. I don't even know. Maybe I was like 10 years old or something. And I went out.
Yeah.
And it like the kick is crazy.
Yeah. Yeah. But once you can get over it, right? I think you get used to it or whatever. So
yeah. No, man. I only did it once, and I was like I said, I was a kid, and I was like, whoa. Like I wasn't expecting that. I mean, I knew it would be loud, but it was the kick and the thing that where it gets you right here in the chest, the shoulder. It's like ugh. Yeah, it's crazy. Yeah. It's kind of fun though. Like it is kind of fun actually to shoot clay pigeons.
Yeah.
But
like, I'm not into violence, obviously, but it is fun.
Yeah, it is pretty fun. Yeah.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Charts are good, and we like charts. We both like charts, and most people trade with that. But what are some other catalysts that you could look at, maybe?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from one of our traders, and he is wondering about how should he go about trading and getting to the point where he knows which catalyst he should be using to trade. So he wants to find the right catalyst. And so my thoughts are that inside of this question, if we sort of unpack it, he's basically saying that he needs to know what the right pattern or the right catalyst. So the way I talk about it in Naked Forks is a catalyst is a pattern at a certain support and resistance level. Obviously, you could use trend lines, you could use other things. You don't have to use support and resistance levels, but a lot of traders do, and that's why they kind of become obvious on the charts. So what's interesting is he's kind of suggesting that he needs to find the right catalyst for him, but he doesn't actually come out and say that. He actually says, I need to find the right catalyst. So, because he doesn't say that all catalysts are making money, which one should I use, or which one makes the most money. He just says, I need to find the right one. So really what this comes down to, I think, is discovering what you as a person, like what you think as a trader about the markets. What do you think they're going to do? What do you think they will do? What do you think they're likely to do? That's all up to you, right? That's your, double bottoms and double tops make a lot of sense to some people because they like to find that sort of reversal point. And then trend continuation patterns make sense to other people. So, or breakouts make sense to other people. So it really depends on what you look for as a trader. Does that make sense? So what are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, no, totally. I think there's actually kind of two questions in there, right? There's the beginner's question of he's actually saying, what system should I use, right? And that implies some sort of technical system or whatever. But then if you take it a little bit deeper, it could also mean what works for me, what kind of catalyst should I be using? And that might not be a chart pattern. Maybe you're trading the cocoa market and you know something about the companies in the cocoa market, and you'll use that as a trading catalyst and not necessarily what's on the chart. So I think a couple of things to consider there. Obviously, charts are good, and we both like charts, and most people trade with that. But what are some other catalysts that you could look at? Maybe that's that's more in the futures and stock market, maybe. But FX has some of those types of catalysts. Also, like I know you look at the retail traders, right? Their ratios and stuff like that. So that might be another catalyst that you can look at. So just something to think about there.
Yeah. There's lots of triggers, aren't there? Yeah, for sure. Yeah. So it really, I guess I just want people to get away from this idea of there's a best pattern or whatever. It's really about what matches up with you. Yeah.
Mm-hmm. Yeah. Totally. Yeah.
Yeah. Cool.
Okay. Cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this is a big time of change, obviously. This last year and this coming year is going to be probably even more change. So what can people do to kind of weather the change and kind of roll with the punches and even benefit from the situation?
I'll tell you one thing I've learned. I think people sometimes confuse fear as, they give it like a negative. So for example, if I grow up in a country like Australia, where predominantly, I noticed this when I came to Australia, that all the people, when you get off the plane at the airport, everyone looks like they're all from England. They're all these white faces. And that was so different to me growing up in the United States, in particular in California, where, I had black friends, Mexican friends, you know what I mean? I had friends from Taiwan, was a good friend growing up. Lots of friends from Mexico, of course. I had friends from Japan. I had friends, like from, everywhere, Guatemala. I had a really good friend from Guatemala in college. And so, yeah, it was like if I took someone out of Australia and dropped them off in the middle of like Angola, where they're going to stick out, right?
Yeah.
That can be scary. But why? Why are you scared? Do you like if I just pluck someone out of Sydney Airport and I said, okay, we're going to Angola, and I dropped them off in Angola, and they're like, whoa, they would probably be fearful. But why? They don't probably know anything about Angola. Maybe they didn't even know it was a country. Never heard the name.
Mm-hmm.
But yet here they are, and they look different, and they're fearful. And I think that's really what gets at the core of fear, is the unknown, right? So we don't know about something, and we have to confront it. So what do we do? And so I think fear, in a way, is like a sign that you're in a spot, you're in a place where it's very exciting. Like it's exciting. And think about it. Most of our lives, what we do is so normalized. And so, you get on the bus at the same time, or you get in your car at the same time, you go to work at the same time, you go to the same cafe, you have lunch with the same people, or what, you know what I mean? Like so much of it. And I know like it's not always the case for everyone. Like you might have a meeting over here or a meeting over there, or you might have a business trip or whatever. But the point is, most of what we do is just so normal. So when you're fearful, to me, that's like a sign that you're alive and that the unknown is there, and that should be exciting. So really, I think we misinterpret excitement over the unknown as fear.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Because we don't know what's going to happen. We like it when we know what's going to happen. We know what is likely to happen. So I've learned, and I think this really applies to trading. In fact, one of the things FX Street was asking me about this like a couple years ago. What do like I think it was New Year's resolutions, and they asked a bunch of people on there, and I said, because I do webinars there, like I just do once a month now. But and they said, what are you working on in the new year? And I said, I really wanted to work on this idea of fear and of embracing the unknown, because that's what we do as traders, right? You and I, we risk our money, we put it down, and we say, I don't know what's going to happen here, but I believe enough in my data, in my testing, I have enough confidence behind it that I'm going to risk my money because I think there's a good chance that X is going to happen and X is good for me, right?
Yeah.
And so I think fear, you can kind of twist it in your head and look at it, flip it around, and look at it as an excitement for what's to come, the unknown that's to come. And that can be another opportunity to learn something. That could be another opportunity to see something about yourself that you hadn't seen, like a facet of yourself, whatever. So that's why I think we should sort of reorganize how we view fear as something exciting, not as something so problematic or, dark or, negative. Yeah. But rather interpret it as something. It's really kind of excitement. It's excitement that we're interpreting in a negative way. What are your thoughts on that?
Yeah, no, I totally agree. I think that in reality, there aren't too many things that can really harm you. I think, it's just an opportunity to grow. And I think, especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do. And I think if you just calm down and just objectively see the situation and say, okay, this is going to go away, but then maybe this is going to come up, and that's an opportunity, and this is an opportunity to do this, then I think it becomes much more interesting and a lot less scary.
Yeah, and that's why, I think the downside is you can get addicted to that, like base jumpers, or, NFL football players love, running into people, or what, you know what I mean? Like there are a lot of big wave surfers. Like there are ways, I think, where you can kind of take it to the extreme. Gamblers also. Yeah. Right. So that's important for traders to recognize that a certain proportion of traders are actually gamblers. And I would say Jesse Livermore would fit into that category. You guys can look him up. We can put it in the show notes. If you look up the Reminiscences of a Stock Operator, which is a biography of Jesse Livermore. But yeah, so
it is tricky. There's that balance of embracing fear versus getting addicted to that feeling of overcoming the long odds of jumping off a building with just a squirrel suit and a parachute or whatever. You know what I mean? Like, yeah. So it's a bit tricky, certainly. Yeah.
Yeah. You definitely got to know the odds or whatever, right? And your own skill level. But
that's right. And that's where the simulator comes in for traders, right? Exactly. Yeah. Yeah.
Totally. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Try and think long term. Try and think really far away. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, so if some people don't know this, most people are basically not born to trade, right? Probably 99.9%. How can we first understand that and then use that to become a good trader?
Okay, this is a great question, and I appreciate it. You know what I would say is there's an app, and I will try and put it in the show notes for those of you watching this. And this is your lucky day because you're going to get a cool app. It's free, I believe. I believe it's free. I don't know. I have it on my phone, but it's basically is a risk assessment. Okay. Mm-hmm. And what's cool about it, and I've only shared this with like traders that I've coached before. So I'm going to put this in the link and I want you guys to check it out. So what it does is it enables you to see how well are you at defining risk. Because I think that's a big part of trading. It's not the only thing, right? It's something that we get wrong. And I think what you said is absolutely correct about the fact that we're not born to trade. We're not built to trade. Mm-hmm. We're built to make the cognitive mistakes that don't allow for consistent profitable trading. In that app, it'll like you can take the test and see your score and all that. What's interesting, I think, is that there was a study of like professional gamblers, right? And what they found was fascinating, which is these gamblers, they thought of themselves almost as like they just would never die, that they were like they were infinite, they had infinite life. Mm-hmm. And so it's almost like you need to adopt that point of view when you're looking at your edge. Like, let's say, for example, you have a trading system and it has a 55% win rate. And if it gets down to 51%, you're going to be break even. Mm-hmm. But if you're making anything over 51%, you're going to be making money. What's interesting about that, and you're convinced that it's a 55%. So for a lot of people, that's not enough. They're going to say, no, I want it to be 60. I want it to be 70. I want it to be at least 65, right? It's like, I need to improve my win rate, right? They focus in on that. But for these professional gamblers that they studied, they saw so far into the future and thought about so many thousands of trades that they were going to take that they knew that 4% edge was money. You know what I mean? Like that was all they needed. And it's actually the exact same thing that the casinos do. Mm-hmm. Like the casinos, those slot machines, they pay out like 98.5% of the money or 97.8%. It depends on where they at. And they actually publish the numbers. Mm-hmm. So what that means is, on average, they're only taking 1.5, 2, 3, maybe 3% of the money that goes through there. But that's enough to make all those lights and pay for all the entertainers and all the staff. And you know what I mean? Like, mm-hmm. It's fascinating to me. And it's the same thing with the table games. Table games have very slight edges too, but they all have an edge for the house. So, mm-hmm. Of course, blackjack it varies with the composition of the deck, right? Yeah, exactly. But yeah, so I find that whole thing fascinating that they basically discovered that the guys who are really good at managing risk, the gamblers, right? Because think about it. Gamblers are trading, they are basically traders trading systems that have negative expectancy, right? Yeah. So where do they find their edge? They must find their edge somewhere, right? And I know it's different when you're like betting on sports and things like that because the line changes and all that. But I find that fascinating. So I think if you're interested in this idea, I think you should definitely check out the app. I'll link it up in the show notes. You guys can have a look at that. And also try and think long term. Try and think really far away. And imagine not why you want your 55% win rate system to be 65%, but imagine how much money you could make if you pushed a certain number of trades, a certain amount of money through that. Right? I mean, that's what people at Walmart do. All the companies that sell stuff at Walmart, or any place like that, right? Any discount department store or whatever, they have such, like, Walmart ensures that they have such small margins. You're selling this widget, you're selling all these millions of widgets to Walmart. You have such a really fine amount of profit there. But the reason why they happily sign the contract with Walmart, because they're notorious negotiators. They will push that price down, right? Or they won't take your product. They will say, no, you got to get it here. You got to give us this price per unit, or we're not going to say yes. And so people will happily sign that because why? Because they know the volume. They might only be making 6% on every unit, right? But where normally they might make 20% or 15% or whatever, but they'll take that 5-6% because of the volume of the millions of widgets that they know that they're going to push through Walmart. And it's the same thing with trading. It's the same thing with gambling. Like, if you have that edge, however so slight, don't discount that, right? Think about how valuable that is to have over the lifetime of your trade. So yeah, that's how I see it anyway.
Okay, cool. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, I mean, that's a great way to look at it. I think we get lost in the income, right? How much am I going to make every month? How much am I going to make this month? Am I going to be able to pay my rent or my mortgage, right? And we don't think of the long game, like how can we get investors or something later on to ramp up our trading? And
and you, like, here's a question for you. Do you have like 10-year goals and things like that? Because that's another way to, like, make it more... sometimes people just say, well, I want to do this year. Like, we're recording this podcast in January, and a lot of people have New Year's resolutions, all that, right? I think it's easier if you push your goal further out and say, well, I want to have 10-year goals, 5-year goals, 15-year goals, instead of like your annual things. Do you do stuff like that? Have you looked at stuff like that? Because I think that kind of takes the pressure off.
Yeah, I mean, I've tried that stuff, but I think for me, it's more about, like, what am I really excited about? And that's going to be something that's really far out, right? Anyway, and that's kind of my goal. I don't have to put like a time limit on it, but I just work towards that. And for me, I found that works the best instead of setting like a hard 5 or 10-year goal or whatever.
Right. Yeah.
Do you use those like far out goals?
Yeah, I mean, I think I think it's really important to have quarterly and annual goals and all that, and you can have monthly or weekly depending on what your time frames are on your trades, but I do think the longer term goals, at least, it's kind of like trading the higher time frame charts. You kind of get like an update every so often. So like if you have a 10-year goal, you might look at that 10-year goal every year and go, okay, well, we're 8 years out now from my 10-year goal. The last 2 years, how have I, what I mean? How have I progressed and that sort of thing? I just think I feel like it takes the pressure off. I feel like we're such a, now sort of, everyone's on their phones and you know what I mean? I feel like it just takes the pressure off for me, and it helps me see it more clearly. Just like looking at the weekly charts or daily charts makes, you know what I mean? For me, that also can help you see what's going on a little bit easier too. Yeah. Yeah, no, totally. And I think for me, at least, I make too many of those little goals. So if I have too many of those little goals, they start piling up and I'm like, oh crap, I can't do any of these. But that's what I mean. One big one, right? Then it's easier to kind of see what needs to be done. So. Yeah, absolutely. I had the same problem, and that's actually that's exactly what got me into doing the longer term goals. Was exactly what you're saying, because you get these lists and you're like, oh, I got to do this week and this and that, and it becomes like it's overwhelmed, right? Yeah. So if you can kind of consolidate everything into a big picture, it's just like, for me, it's like, okay, yeah. So, yeah, totally, I agree. Yeah. All right, cool. Thanks, Walter. See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And it was like their parents would just drop them off there when they didn't have a babysitter. You know, that's basically what it was. I should have charged like a door fee, you know? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I think it might be useful from a psychology standpoint and from an experience standpoint to maybe talk about what we've been into before, like business-wise, and how if we had any success or if we failed, and how we learned from that and how we came to trading after that.
Sure, yeah. So just real quick. So when I was a kid, I learned how to do magic tricks. And so I was basically a magician from about age 6, where I did, little till I was in my 20s in college. I did magic. So that was kind of my business. Mm-hmm. And then I had side jobs, mowing lawns and stuff like that, whatever, right? And then when I got to college, so I was surrounded by like psychologists and people that were in, because my mom was a psychiatric nurse. And so I would go to her work, and there'd be like whisper, like you would see the rubber room where they would put the crazy people, like the really violent crazy people in the rubber room. And I always remember being fascinated by that. And walking through there and seeing the patients, there was kind of like this feeling as a kid, like almost like you're going through a jail or something. I don't know. Like I felt like, they were dangerous or they were weird, the people, but they just seemed normal. The people that were there just seemed normal to me. And we were always around psychologists and psychiatrists and people like that. So when I went to college, I just decided to study psychology. And then as I got through it, I knew I wanted to go to graduate school. So I made friends with there was a master's program at the university I went to. Mm-hmm. And I was talking to someone, and I actually ended up taking some master's level courses right before I graduated with my bachelor's. And one of the guys there, he was working for a jury consultant. And I thought, that's interesting. And I thought, that's a really cool job, because it's so I was thinking, what can I do? What kind of job can I have where I still have time for surfing? And that was my whole thing, right?
Yeah.
And so I thought, if I was my own boss and I did this jury consulting thing, I could kind of work my own hours and stuff. And, I would have the mornings for surfing or whatever. And so he was telling me about it. And so I was really fascinated by the fact that this graduate student was doing like grunt work basically for a couple of jury consultants. Mm-hmm. And so I applied for psychology and law programs in the US and Canada. I applied it saved up my money and applied for 26 graduate schools. I think I got into 3, Yeah. And so I did that. And then after I graduated, I went and did the jury consulting thing, and I hated it, because you're always working for the bad guys. You're always working for the defendants that should be sued. That was tough. And also you're traveling a lot and you're living in hotels. It wasn't very fun. So I got out of that, and my friend that I had grown up with, that I went to junior high school and college with, who also went off to graduate school, although he only went for 1 year of psychology school, and then he opted out and worked for an investment bank. He and I were trading all throughout the 90s when we were in university. Okay, in the early 90s, we were in university, and we were trading the .com stocks, right? This is the real big ramp up, that first big ramp up in like NASDAQ stocks, okay? He convinced me to quit my jury consulting job and move down with him in Beverly Hills and learn how to trade currencies. So that's what we did. We went down there. We even had investors lined up and stuff, because he had a pretty good trading background. He had worked at lots of different brokerages and stuff. So he told me to go and take this class. I took the class. I think you've taken the same class, right? We talked about the guy.
I took that class too, yeah.
Yeah, the thing, which is funny. It was like a little ad in the LA Times. Yeah,
it was like a weekend or something, right?
Yeah. Well, I think mine was 5 days. It was a week.
Oh yeah, 5
whatever,
days. I'm sorry, it was a week. Yeah, that's right.
Yeah, but whatever. Yeah, it's the same dude. I know. We talked about. Yeah. So I took that class, and then we were trading our own money and stuff. And he tripled. I didn't really have much to do with it. He tripled it in 2 nights. And then by the end of the week, the money was gone, blah, blah, blah. But we had these investors lined up, like the Swedish Bill Gates was a friend of my friend, right? Because he was dating a Swedish girl, and he somehow made this introduction to the Swedish Bill Gates. And so that was the deal, was we were going to trade the Swedish Bill Gates money. We were going to have this big office in Malibu and all this stuff. And then September 11th happened, and the guy lost a bunch of businesses. There was no way he was going to have any play money for currency trading or anything like that, which was good because we would have lost his money. We dodged a bullet there. That was a really good thing that happened. We weren't ready for that. And so then I started a coffee shop, which was coffee smoothie shop, which was pretty much a disaster. Didn't go very well. And then I just sold everything and moved to Australia, sold all my possessions and packed it up and went down to Australia. Like, I thought of it as like a sabbatical, like in academia, which all my friends in graduate school, they all ended up going to academia, right? They're all teaching professors and stuff. I'm like the black sheep of the group. I'm like the one that nobody talks about. I moved to Australia and I had this sabbatical of like learning as much as I could, getting as many books as I could about trading, all about technical analysis, and they're all stock related and futures related because there was one book on currencies at the time, and then there was another one, so there's 2 books on currencies at the time. So I spent a good year and a half just learning it there, and then I had to get a job because in Australia, visas and stuff, so I had to get a job for that. It wasn't anything more than just a job, When I finally could get out of that and still maintain my residency in Australia, that's when I got out of that job as soon as I could, because my trading was going really well at that stage. And I think it does take the pressure off when you have another source of income for your trading. I've talked to a lot of traders about that. So to put it, long story short, I was an absolute failure at business. My business I guess my first business where I didn't have any employees as a magician, I did all right. As a smoothie coffee shop owner, that was a disaster. And I made a lot of mistakes there. The path it's an interesting way because I never really wanted to become a trader. It was only just my friend that got me into it. And I thought it was actually cooler to be a jury consultant than to be a trader. I thought when you think about when you're at the party and people talk about what you do, like jury consultant's like a cool thing to say because what's that about? Where if you say trader, people kind of already have an idea in their head of what that is, or you know what I mean, and it could be negative or positive depending on the person.
Yeah.
So
type stuff, right?
Yeah, exactly. Yeah. So where did you come from? Like, how did you build up to trader status, or how did you end up there?
I mean, in school I studied biology. And
biology, really?
Yeah.
Wow.
Did absolutely nothing with that. So right out of college, I got a job at a hedge fund. So I was working at the trading desk as a trading assistant.
That's right. I remember that. Yeah. You said that on your website, right?
Yeah.
You talk about that on your website. That's how I read that. I remember. Yeah.
Yeah, so it was a good introduction. I mean, it was a fixed income arbitrage hedge fund, so it wasn't too interesting to me because it was like all math and they were just like playing like regression to the mean basically. But I got a couple years there. It was a cool experience. And then I went into IT consulting. So that was a little bit more stable. I understood it a little better and it wasn't like this, like an assistant job, right? So did that for a few years and then I tried to do real estate and that failed miserably. I found out that I don't like doing real estate because you have to talk to too many people and everybody's out to get their own little piece of the pie. We did a few deals, but after that, I was like, okay, got to go back to the job and figure this out. So then I've been
on the side. Can you talk more about the real estate? I'm just curious.
Yeah.
So were you selling or are you putting deals together or what was your role?
Oh, buying and selling. So like, late nights, no money down type stuff.
Gotcha. Yeah.
So so we did a few deals, like bought a house for $10 and then sold it and made like $30,000 profit or whatever, right? So I mean that was kind of cool in itself, but the whole process of it I just did not like. People are luring up and they want to sue you for stuff, and it was just that kind of fun, right? So I got out of that, and the whole time I kind of had trading on the back burner. Then I started the website and the website started generating some money. So that took a little bit of the pressure off. And then once I was able to take the pressure off, then the trading came around. And that's what I'm doing right now, just trading and doing the website. I'm going to start another website soon. So it's a good passive income generator, not passive, but more passive income generator than trading.
What's the new website? What's that going to be?
It's more about this like self-sufficiency, trying to learn these skills that maybe your great grandfathers had, preserving food, like building houses, stuff like that.
Hey man, I want to learn how to pickle garlic. You going to talk about pickling stuff? I'm serious.
Yeah.
Like that's the kind of stuff, right? You're talking about stuff like that, like self-sufficient, like storing your own food and
that's what my wife wants to do. She wants to pickle some food, so I'm going to do some tutorials on that.
Oh dude, I'm in. I'm totally in. Yeah. So I had a friend, actually the friend that got me into trading, his dad, they were from out of the country and his dad would have these amazing jars
jars of pickled garlic, and he'd be like, "Hey," and they made it, and they had it like in the garage or whatever.
Yeah.
And I was like, "Oh, that's amazing!" And like I remember when I was a kid, my grandmother came out from the East Coast to California, where we lived in California. There's lots of strawberries where we grew up, and so my mom and my grandma, they just went to town. They went and bought like punnets and punnets of strawberries, right? My grandma showed my mom how to make strawberry preserves, like jam,
Yeah.
And I'm not kidding you. We had it for breakfast on our pancakes. We had it for lunch on our peanut butter sandwiches, which I don't know if you know now, you can't take peanuts to school now. So my kids don't have
what?
peanut
Wow.
butter sandwiches. Yeah, no, you can't take nuts to school. Like it's illegal. That's all this crazy stuff. Yeah. So like I had a peanut butter and strawberry jam sandwich for literally like 8 years going to school. And then we would put it on our ice cream for dessert. We would give it to people for Christmas, like, hey, Merry Christmas. Here's a jar of preserves. Like we literally had that stuff for 10 years. It was just one spring that my grandma came out and just boom made all that stuff. But that's cool. I like stuff like that. That sounds like a good idea.
Yeah. We'll see how it goes, but it should be fun. But
that's awesome.
I mean, like, so what did you learn when you failed at? I mean, a lot of people will try a lot of different stuff, right? Like stock trading, futures trading, real estate, and all that stuff.
Yeah.
So, like, after you failed at your smoothie shop, and after I failed at the real estate thing, how did you feel, and how did you know where to go next? Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I always had, like you said, trading in the background. When I was at the smoothie shop, there was a lot of downtime. Okay, in other words, we didn't have a lot of customers.
Yeah.
So I would literally, and I'm not kidding you, I would literally get up, and this is 7 days a week. Okay, and I had people that could work there, but I just couldn't really afford. I'd give them a shift here or there or whatever, but I would get up when it was dark and I would listen to the Coast to Coast AM radio show. It would be on replay.
Yeah.
I'd get up, it'd be night. It'd be like night. Okay. I'd get up, I'd drive. It was about a half hour, 35 minutes to the smoothie shop. It was really more of a smoothie shop than a coffee shop because nobody drank our coffee. Right. And very few people drank our smoothies as well, but at least 4 people did. So I would get up, I'd be listening to Coast to Coast AM rerun, like they reran the one that was on earlier. Like, they have 6 hours of Coast to Coast or whatever. I'd get to the smoothie shop, I'd fire up the coffee machines and all that, blah, 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 right? Get everything ready. People would come a little bit, a little bit before school. Maybe a few people would come for a cup of coffee or whatever. And then after school, it was more of a hangout for kids that were like 11, 12 years old because we had ice hockey and foosball and billiard tables and, you know what I mean? Couches that they could relax on. And it was like their parents would just drop them off there when they didn't have a babysitter. That's basically what it was. I should have charged like a door fee, And we actually had music too at night sometimes, like
Nice.
crazy music. Like bands that couldn't play anywhere else because they were like death metal or whatever. And they were so thankful. It's probably the only smoothie shop that had death metal bands at night. I can't see what could possibly go wrong. So why did this business take off? Yeah. So what I learned though is I was always looking at the charts.
Yeah.
During the day, because basically from about 9 a.m. to 1, 2 p.m., there was nobody coming in. We'd have a few people coming in at lunchtime. There was a company there that makes guitar preamps in that area. They make guitar preamps. I don't know much about guitars or anything, but apparently that's like a really well-known company. And the founder of the company, like the CEO or the president dude, that the company's named after, he came in once, and then the whole, like, all the secretaries started coming in and stuff and having smoothies. So they would come in at lunch, and then that was it. So I had all this time to look at the charts. I was following a signal service in South Africa. So whenever they gave their signals, I would take the trades and stuff. So, that's basically, and I was looking at charts and still trying to learn as much as I could about trading. There was a trader guy that actually came in there, like a broker dude, and we would talk and stuff, and I would, kind of learn things from him and bounce ideas off of him and stuff like that. But other than that, that was, all I really learned from it was, persistence and perseverance. Like what I've seen
when I came to Australia and I convinced my one and only friend in Australia to come and live with me, he was like, dude, don't get down on yourself that you had a failed business. And I wasn't. I didn't really care about it. I was like, yeah, what, I tried it and whatever. But he was like trying to pump me up, even though I didn't need it to be pumped up. And he was like, I'll always bet on the guy with the failed business, man. He learned lessons and stuff like that. I'm like, okay, cool. Well, I'm not looking for any backing or anything, but thank you. Thanks for the vote of confidence and stuff. Like, it's so interesting that you asked this question, because today I was listening to a talk by Malcolm Gladwell. You know who that guy is, who wrote Blink and Tipping Point and Outliers. He was talking more about outliers and how, like, they did this study where they got the 0.1% top IQ people, right? I think it was in California. And this guy in Stanford followed him around for like 50 years. And what he thought he was doing was identifying the movers and shakers of the generation by getting the genius level 0.1% over 140 IQ people. He thought that that's who he was identifying, and he was going to follow this cohort every 10 years, right? And you know what he found?
Go ahead.
The IQ didn't predict anything. And I think this really is relatable to trading. I don't think that you can say that if you're smart, you're going to do out trading. If you understand math, you're going to do out trading, or anything like that. I think it really comes down to you wanting to make it work, right? Yeah. What he found was that those kids that had the higher IQs, there was a small percentage of them that, about 15% of them, that actually did go on to do great things, but 85% of them had very average to below average lives in terms of like achievement or whatever. And he said that was because of where they grew up. So if they grew up in a household that was loving and encouraged learning and had books and stuff like that around, they did quite well. Basically like a higher class of opportunities. And the kids that didn't have that, they didn't. They just had like normal lives and stuff. And I thought that was kind of fascinating, because a lot of people will assume it's ability, right? And I think for trading, it's not really ability. Like, there are very incredibly simple trading systems that make money.
Yeah.
But there are very few traders that will trade those systems through drawdowns, through the hard times, and learn enough about themselves so that they can kind of put things in place around them so that they continue to trade even when things get rough. And I think that's the same with business. Like, I think today, if I wanted to go out and make a chain of smoothie shops, I could probably do a pretty good job of it, because I learned a lot of things from, having, don't have death metal bands at your smoothie shop. Don't have a space of like, I don't know what it was. It would have been like, 500 square feet when, you could do with 40 square feet. You know what I mean? Like, you don't need a lot of space for those kinds of places where they're kind of like takeaway places. I didn't need to have all that space. So that's why I put the air hockey and the billiards tables in there and stuff, because like I had all this room, and it was just weird to have this big room with nothing in it. You know what I mean? Like, yeah. So yeah, I mean, I wish I could say I had some really big insights, but I think what I've really learned from talking to traders, from surveying traders, and from thinking about the traders I know who do well, they just know it's going to work. They know it's going to work. They know, like, you can probably relate to this idea of like, you're just not going to stop. Like, you're not going to let anything hold you back and stop you from getting to the point where you're going to start making money. One of the things that Gladwell was talking about was the difference between Asian cultures and like normal Western cultures. In a lot of Asian cultures, they do much better on the math tests. So they have these tests that they go around the world every 4 years. They give them to all countries, right? Basically, all countries, they test their kids every 4 years on the TIMSS test. They also have the questionnaire in there that's not math related, and it talks about like, how many hours do you spend studying a day and all this stuff about your life. And what they found was in fact, it was 120 questions. Not all the kids would go through all those other questions that were not math related. They didn't get to the end of it. And one researcher decided to look at the countries that tended to complete those 120 questions about their life versus the math scores. And that actually, the kids who did the questionnaire about their life, who went through the end of it, they also did higher on the math. So in other words, and this is like in Asian cultures, they teach you that every math problem has a solution. I don't know about you, but in America, what I learned growing up was that some kids would just say, oh, I'm just not good at maths.
I'm not going to do this. I can't do this.
Mm.
I'm not good enough at math. But the Asian way of looking at it is very different. The Asian way of looking at it is that every math problem has a solution. It's up to you to find the solution.
Huh.
And, there's no out. There's no like genetic out. Like, oh, I'm no good at math. I can't do it. Like, that doesn't exist. If you take that idea to trading, like people can tell you, well, I've never found a trading system that makes money. But there are traders that make money, right?
Obviously.
Okay. Yeah. So if traders make money, is it possible to make money trading? Yes. Okay. So can you find out what you can do to do more of what the traders who make money do versus following the traders who don't make money? What can you do to duplicate it? If one person can do it, many can do it, right? And you can do it as well. What I've learned from trading is that. And I wish I could say that. I mean, it really comes down to persistence, I think. Persistence and the belief that you can do it. And,
well,
and
I think also it sounds like, I mean, in my case, and it sounds like in your case also, that there's also a matter of interest, right? Like if you're really interested in it and you really want to figure out this puzzle, then I think you'll figure out how to do it. But if you're not interested, then you're just kind of, half-assed and just try to get by and then make the quick buck or whatever, right?
Yeah, absolutely. Yeah, absolutely. And you know what? What's interesting about what you just said is that the Turtles, when they did their screening, they were looking for people who were interested in games. Like that was the thing. And actually in the show notes, I will give you guys a link. There's this really cool guy. I don't know if you heard this guy named Naval. Do you know Naval?
I've heard of him, yeah.
He's an angel investor, right? And he had this thread that went viral on Twitter, right? About wealth. And he was talking about I love listening to his interviews too. When he grew up, he was always doing like role-playing games. He was doing games and he kind of looks at life and business as games and kind of figuring out what are the rules and how do you win this game? And I'm really big with that with my kids. I think like three things I think that are really important to teach kids from me as a father are the art of storytelling. So we make up a story every night, 2 stories every night before we go to bed. We make up stories. The other one is probabilities. So my kids know probabilities and they're like 5 and 7. You know what I mean? Like they know probabilities. Yeah. And yeah. So probabilities, the art of storytelling, and then and then strategy games. So we play a lot of strategy games like Naval was talking about, because I think that kind of, you can apply that to life. You know what I mean? Like I think back to the time when I was in academia as a graduate student, and there were certain academics that got a lot of attention, okay? And they kind of dominated their field, like even in a little tiny field of like child abuse and neglect, which I did some sort of ancillary research in at the time, right? And my mentor had a foothold in this area called child abuse and neglect. Okay, very small sliver of psychology. But there were these people that had these like larger than life presences at these conferences. You know what I mean? And they dominated it. And really, when you look at it, they only did they just did a couple of things. And I think you can do the same thing in any field. Like real estate or Instagram influencers or whatever. Like there was this guy. He would just wear these outlandish, garish these flowing sleeves, like he was from the 17th century. He looked like a 17th century magician.
Yeah.
And his name was Dante, and he would wear these like big kind of like the stuff I used to wear as a magician, to be honest, like really weird costumes. And he would give these talks, ruffles and all that, and he would give these talks at the conferences, and no one is ever going to forget Dante. You know what I mean? Because he's like created this persona. It's like he's gamified the whole academic thing, and all of his things get published, and he goes against the norm. You know what I mean? He just rails against the major theory of the time. And it's like just a game. Like everything in life to me is like a game. And so I think and trading is a game, absolutely is a game, right? And that's why the Turtles were screened. That's why they knew to screen. They were looking for people who were interested in games of strategy when they got those Turtles in there. They weren't just, they say that they could take anyone and teach them how to trade, but really they wanted people that understood games of strategy, because they knew that that's what trading was. It's about learning the rules and learning how to make it work and how to win. So
No, I think that's a good point. I think also that brings up the idea that if you're doing something you really enjoy, then you're going to do it in your own way, right? You're going to make it yours. You're going to figure out how to have fun with it, like this guy dressing up or whatever. So I think it's the same thing in trading. You're going to, some guys like the big R trades, some people like the consistent returns, and you'll just figure out a way to do it for yourself.
And what you just said, there's a neurochemical basis for that too. Like if you're happy, you are going to create neurochemically, you're going to create an atmosphere in your brain that's going to lead to more testosterone, which is going to lead to more effort. So if you're happy at what you're doing, you'll do a better job at it. Because why? Because you'll want to do a better job at it. You'll want to put more effort into it. It's going to come naturally. Whereas if you're slogging around at some job that you really hate, like you're not going to be a winner. Like you're just not. You gotta do what makes you happy. I mean, I know it sounds all new agey and all that. Like, yeah, do what makes you happy and do what, but it's true. Like neurochemically, it's absolutely true that will make you try harder. Like in your brain, if you're happy at what you're doing, you will try harder and you'll get better at it. And then now it's going to snowball, right? Yeah.
Secret to life.
Yeah.
On that note. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You don't want to encourage that behavior.
No.
Okay. You know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, here's an interesting idea, especially during this time. Do you think it's possible to change everyone's mind? Like to see your perspective at least.
Well, I guess my question would be, why would you want to, right? Like,
that's the thing though, right? And a lot of people go around trying to change other people's mind, whether it's trading related or, whatever opinion they have, they try and go and change another person's opinion, and then they get all frustrated and mad, right? But I believe like you said, why would you want to change anyone's mind?
Yeah, it's tough. Like I've heard this before, people get really upset and say, why is there pain and suffering and sadness in the world? The only way that you can, that there's bad times is if you can contrast it with something better, right? And so if I disagree on the value of something like the euro against the US dollar, I think it's a great thing that somebody else has the exact opposite opinion as me, because that's what makes the market, right? So yeah, I'm probably pretty close to like a free speech absolutist, and I know that's a big deal for a lot of people. Like they think that's really bad. Like you shouldn't. And if you've ever gone to like corners of the internet where it is as close to, I mean, it's about free. It's pretty much as close to free speech. You'll see like that's the thing about the internet that our society has changed. And so if you think back to like Washington and Abraham Lincoln, like back in the day, it was all about your honor. It was all about your honor, like your word and your honor. Yeah. That was a real big deal. What's happened now, like on the internet, is we've taken your identity away, so it's not you anymore. It's like you're like this ghost. You know what I mean? You're like this online identity. And so as an online identity, you can go out there on the internet and these free speech forums and just say whatever you want with no real consequence, because at the end of the day, you can say all these crazy things and then you walk into the store and nobody knows that was you saying that, and probably nobody in the store even goes on that online forum anyway, right? But like that, do you know what I mean? Like it's sort of, we've taken that away. In a way, it's great that we have the internet and we have all this exchange of ideas, even though it's being suppressed now, obviously, in a big way. But in a way, I love the free flow of information and the exchange of ideas. But taking a stand isn't like it used to be. It's because it's cheaper, right? It doesn't cost you so much to go out on a limb and make this claim, right? So if I go out there and I claim that redheads need to be all rounded up, because if it weren't for redheads, we wouldn't have poverty. If I said something like that, okay. In the olden days, everyone would say, "Hey, Walter said that about redheads," and I'd have a bunch of redheads upset with me and maybe tailing me everywhere I went, right? Yeah. But because online I can be anonymous and say that, no one really knows who I am or where I live, or you know what I mean? They just yell back at me on the internet. So it's kind of like it cheapens. It's hard to take a stand, really, because Unless you do it in the light and you say, here, this is me, this is where I live, this is what I'm about, and this is what I believe. Like, like Jordan Peterson, for example. I don't know much about Jordan Peterson, but I know he's controversial, right? And probably Noam Chomsky would be similar. They're both kind of outspoken, controversial figures, right? So that, but what happens on the internet for the average person is we're just anonymous. Nobody knows who we are. And so we can say all these wild things. I think we need divergent opinions for everything, but especially for the markets. And as traders, it's really important to have that. And I use those opinions. Like I like looking at where traders are at in terms of their trades. I use that information for my own trading. So yeah, I really like the idea of and I've learned things from people who have taken the opposite point of view. Like I've always been like, one of the things that you learn in psychology, there are real subtle forms of prejudice in the way that we look at groups. Mm-hmm. And even though you would say, well, I'm not prejudiced, I give everyone an equal chance or whatever, that still comes out, and that can come out just by calling the group the minority, not by giving them like a color of skin or a sex or whatever, anything like that. You're not even doing that, just by calling the group the minority. But like there are studies in psychology where they say, well, the majority group says this and the minority group says this. What do you think? And so our prejudices actually get applied, even if it's just minority versus majority group. It's crazy, that we're built that way, like we're tribal people. And so, yeah, it's fascinating in some ways. But to me, free speech is really important. I just wish that we all had to do it in a way where we were saying, well, this is me and this is what I'm saying, because then we would think probably more about the consequences of what we're saying, because like I said, the redhead example, that would have severe consequences for me if I said, hey, I'm Walter, I'm in Australia, redheads are the problem. If I did that, I would have there are a lot of redheads down here in Australia, and I'd have some people upset with me. So that, I think, is the issue with, or one of the issues with free speech, is that it can be done anonymously now.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah.
Yeah. And I think, well, especially as like in those trading forums, things can devolve pretty quickly when there's a lot of like anonymous tips, right, or whatever. But do you think it's sometimes worthwhile to engage in those things, as long as the other person's going to have like a reasonable conversation?
Like to try and change their mind, you mean?
Yeah.
I think I'm a big fan of, do you know how they teach in law school? So they ask questions, right? So I don't know if all law professors do this, but I've been told by people who've gone through law school. And actually, when I did my degree in psychology, my PhD in psychology, I had a lawyer on my committee. So it was all psychology professors and then one lawyer. They ask questions. So like the Socratic method or whatever, like they'll be asking questions of the class. So they assume that you've done the reading that you're supposed to do when you walk in the door.
Yeah.
And so then they'll ask you like, so, okay, Hugh, so what do you think about, the Johnson versus Tennessee case from 1859? Do you think that would apply to today's, big tech questions or whatever? You know what I mean? Like so they're asking you to apply that. And so I think that can be really useful also in anything like with trading or whatever. You say, okay, like for example, one of the traders in my forum now, he's got the system and it looks pretty good to me. And he's like, well, I want to like improve the win rate or whatever, you know what I mean? Mm-hmm. And and I want to apply this sort of money management system to it and this and that. And I'm like, well, why do you want to improve the win rate? Like, it's already 75%. It's already seems to be pretty good to me. Yeah. Like, and if you run the numbers of the risk management system that you're looking to apply to this, it's going to look really good. So why not just, you know what I mean? Why not just do that? We get stuck into these little things. And I think there's a problem too with trading. We can get emotionally attached to our strategies. If we spend so much time working on them, it's really hard to throw them away. Whereas if we have like 100 strategies and we see one that's just not working anymore, we can just see you later, goodbye. But if we've only got 2 and we're emotionally invested, that's tough. That's really tough to be able to put it aside, because what else are you going to do? You got to start from scratch again. So I think it's really important to always be testing and looking at new ideas. For me, anyway, that's important. So yeah, I think the best way to get someone to that point is to ask them questions. Like kind of lead them. And women are really good at this. Like, some women will say, "Yeah, you're wrong," but that's more of a guy thing to do, right? Like, "Oh, you're an idiot," you haven't even looked at it, have you? Whereas women will say, they'll kind of this subtle way, like, "I see, that's interesting. So what do you think about this?" And they're trying to get you to get there on your own, sort of thing, And I think that's a more useful way than to say you're wrong. Just kind of gently get them to come to their own conclusions that perhaps, for example, focusing on win rate is not the be all and end all for your trading, right? Maybe you're already there. Maybe you're okay with a 75% win rate. Maybe that'll will work for you. And maybe instead you can just now start to look more at your risk rules. Yeah.
Yeah, no, totally. Along the lines of like this whole censorship thing and, some posts getting taken down or whatever from the various platforms. Do you think that's going to lead to like more second guessing in the trading world? I think it will. Like if people aren't free to like fully express what they're thinking about in trading or in any other part of their life, like I think that might start to make them second guess their own opinions, their own beliefs, and maybe not, go forward with a trading system when it obviously works, but they're just second guessing themselves. Do you kind of foresee that happening with all this?
Well, it could be, or they could just go off and break off in like their own little enclaves or whatever, right? Like away from the mainstream. It could just fracture the groups. So, for example, there are videos on YouTube, and you can show this clearly, where the numbers have been they've been fudged.
Yeah.
Okay. So there's been videos on YouTube where they've reduced the down votes or the thumbs downs or whatever, you know what I mean, and stuff like that. In some ways, like doing stuff like that is just going to point out to the quote minority that they're, that it's obvious that they're in the majority. You know what I mean? Like that, just like at a certain point, like for example, I'll give you an example. Okay, let's say, where I live, a lot of people have young families. Okay, in Australia, there's a bit of a population boom at the moment, right? Lots of kids everywhere. If you have a daycare, you have a license to print money. Believe me, you will never have, like, at least in the next 10 years, you're going to be full, and you're always going to be full, right? You just need more rooms, right? You need more teachers. Okay, so if you have a daycare center, you are loving it. If you were trying to, like, let's say you had a bookstore, okay, and in your bookstore, you decided that you weren't going to have any books, any children's books, or any books about parenting, okay? Because, you just think the world's overpopulated. So, you don't want to encourage that behavior, okay? You know what I mean?
Yeah.
What's going to happen to you if you do that? What's going to happen to you? Well, if you live where I live, where there's a lot of kids and a lot of families, like, they're not going to go to your bookstore. Like, if word gets out that you're anti-kids and anti-family and anti-population or whatever, they are going to boycott you, right? And I think the same thing could possibly happen with what you're talking about. If we're talking about the same thing, where you have these big spaces on the internet where they're obviously fudging the numbers, pushing people out that they don't that have the wrong ideas or the wrong point of view, and they don't want them in there, and they want to keep people that are, so it's a little tight echo chamber where everyone kind of has the same thoughts and stuff. What's going to happen is that group, whether it's the majority or the minority, they're just going to break off, and they're going to start their own bookstore that's just for families. It's all kids books and all, you know what I mean? I think it's like drugs. What happens when you make drugs illegal? What happens?
Yeah.
Well, the price just goes up, right? I mean, I think so. Making certain thoughts and statements illegal, in a sense, and suppressing them is just going to push them somewhere else. I think it's the prohibition of ideas. There's a big group of Christians in China, right? It's illegal. There are religions in China that are illegal, like Falun Gong.
There are these groups that have been made illegal in certain places, and they still exist. There was the Underground Railroad in the United States, right? When slavery, they had the Underground Railroad. So I think that's how I see it. I don't know. Maybe I'm wrong. Maybe people will just second guess themselves and go, "Oh shucks, I was wrong," or whatever. Why was I thinking that? But I think especially in the United States, like the people in the United States are historically have been very independent thinking. It's so funny. I love living overseas because you get this other perspective of the States, and they say, it makes me laugh every time when people say things like people in the States are so simple-minded, or they never travel, they never go anywhere. Like in Australia, people used to travel everywhere, right? I see so many Australians in Europe and stuff.
Yeah.
Every Australian winter, they're up there in Europe. But yeah, so, they would say things like that. And yet then they would like put on their blue jeans, invented in the United States. They'd be on their iPhone, invented in the United States. Watching The Simpsons on TV, laughing that night, ha, Simpsons, from the United States. You know what I mean? Like reading the New Yorker on the weekend because they're so educated. You know what I mean? Like it was just bizarre to me that there's that disconnect. But I think in the United States, they're very independent. People have this culture of independence, the cowboy, the Lone Ranger sort of thing. And I think that even though there is currently this free speech clamp down and there's a censorship culture going on right now and people are getting canceled all over the place, I think it's going to eventually, it'll kind of restabilize and get to homeostasis where it's, the First Amendment isn't under threat. As funny as that sounds. I think it's going to eventually get there, I think it will. I think it'll eventually get to the point where, kind of balances back, but we'll see.
I hope so. I definitely hope so. I mean,
me too.
Unless you're in California, then you're in law school.
Yes, in California, that's right. California, totally, the People's Republic of California, totally different place.
Exactly. Yeah. All right, cool. Thanks, Walter.
See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I like to tell dad jokes at the webinar. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, you do a NFP report podcast. I mean, not podcast, but a webinar every week, right?
Yeah.
And so
every
I just want
month,
to go over the psychology behind that, how you've seen that maybe change over time, and how psychology plays into trading that report.
I'm not the only one that looks at the markets this way, and I'm sure you've done the same, where we look for surprises. So, for example, as we're recording this, about a week or 2 weeks ago, somewhere between a week and 2 weeks ago, the Reserve Bank of New Zealand said, they're going to try and clamp down on the housing bubble over there in New Zealand. And so the New Zealand dollar just totally tanked, right? Mm-hmm. That's the kind of the same thing with these news trades. What you can do is you can get ready for a trade. I mean, pray and hope that there's a surprise. That's basically it, right?
Yeah.
And so you're right. Like back in the day, 10 years ago, non-farm payroll was kind of like the most important thing. Now it's more about, is there inflation, or who's the first reserve bank to start raising rates? That's kind of the big thing now. Jobs are still obviously very important for the US dollar and jobs reports for all currencies. And actually, I remember when I first started trading, the jobs report wasn't as important as what Colin Powell would say. because he was talking about whether or not they're going to go and invade Iraq for the second time back around 2001, 2002, in that area. So, it changes. The importance changes. It used to be that the non-farm payroll would pretty much set up the US dollar for the whole month. It's not really the case anymore, but you can still find surprises. The reason why we do it, I think, is because it's fun to get traders together. I like to tell dad jokes at the webinar, and that's kind of what we do in our downtime. And then because I find trading rooms to be absolutely boring.
Yeah.
I've had friends that have done them and try to get me to do them. I just refuse because I don't want to sit there for hours, right? But we usually do sit there for about 45 minutes or an hour to see if it sets up. So yeah, you can do this with any sort of surprise. The Swiss National Bank had the surprise on January 15th, 2015 with Frankengeddon, right? When the Swiss franc totally appreciated so quickly. So they happen all the time. The flash crash, all these, if you had a tsunami or something, like these things will happen. They don't have to be economic news reports. But obviously with an economic news report, you have the advantage of actually knowing when it's going to happen. So you can kind of set it up. That's basically it.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, for sure. And these things change over time, like you said. Like one report might not be as effective or at finding trades as another one, and then they could also do things like change how they calculate GDP, right? And that can really
you're absolutely right. Yeah. So the consumer price index has been changed in the U.S. and they don't. I think they don't look at fuel and food now as part of your everyday costs, which I find interesting.
Because nobody's like paying for that, right? So
yeah, no one has to go anywhere or eat anything, right?
Yeah.
And right now, like if you talk to the people who are deep in the economics world, like the hedge funds and stuff, in the fundamentals, they're going to talk about bonds. Which is fascinating, I think, because what we're seeing in a lot of emerging markets like Brazil, you can even look at China and here in Australia, what's happening is there's signs of inflation. And so if it keeps going this way, the reserve banks are going to have to do something, and they're probably going to have to raise rates. In Australia, they decided to spend $4 billion in the bond market to try and push it down, and it's not working. A day. 4 billion a day. So it's really a kind of a tricky thing. I believe that we've seen the bottom of the interest rates, like as in December 2020, and I think that like they might be going up for the rest of our lives. So it's interesting times actually. It'll be really interesting to see who blinks first, which central bank starts to ratchet up rates first, and I think that'll be make for some really good trends in currencies over the next 2 or 3 years. So if things go as I think they will, which I think is, we're going to start to see central banks have to reckon with inflation, which is showing up right now in the bond market. But I mean, that's all fundamental stuff. Doesn't really matter. I can still just look at the charts and trade it. I don't like going into fundamentals, but you kind of have to if you're trading the news, like you said, if you're doing these news reports.
Yeah, sometimes you can get way too deep into it and like get into things that don't matter, right? But yeah, I mean,
exactly.
Same thing in the US. Like the rates can't go any lower, and if they raise rates, then they're going to be paying all this interest, right? So yeah, it's going to be tough. Let's see.
It's a tricky thing. And like the turtles, they never looked at that. They just when they taught those guys how to trade, they didn't like that wasn't part of the deal. They were just supposed to wait for the 55-day breakout. You know what I mean? Like
yeah.
It's so funny. It's so funny that like and you can watch TV all day, and literally every single person that comes on that business channel, that the CNBC or the Bloombergs of the world, or the what's it called over here, Sky News, like they have Sky News in Europe, in England too, but it's just like every single person that comes on can have a different opinion about what's going to happen. That's the whole fundamental world. Whereas it's great as technical traders, we don't really have to. We can just say no. It's actually made a new high. Like that's the highest price we've seen in the last 20 days. Like there's no argument there. You know what I mean? So that's what I like about technicals.
Yeah, the price can't lie. Like if it's going to go up, it's going to go up, right? So
yeah,
cool. Thanks, Walter.
See ya.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, money's never been cheaper. Let's get the bids rolling, you know? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I know we talk about psychology here a lot, but what do you think is going to be the big investments for the next 5, maybe 10 years? What do you see as things that are going to trend up or trend down or whatever?
That's interesting. I'm going to be contrarian and say that I think the US dollar is going to appreciate from 2021 to 2023.
Okay.
So over the next 3 years, I think the US dollar is going to go up in value, believe it or not. I also think that gold is probably going to go down or stay about where it is, which is also probably contrarian. A lot of people are bullish on gold.
Yeah.
I think that XRP or Ripple will go up because I think that there will be a world financial system based on blockchain, and I think Ripple is the most likely candidate for that. Mm-hmm. So I think that'll go up in value because there'll be a lot of demand for it. Because right now, like if you send money, a lot of people may not know this from trading world today because it's so easy to fund your account. It used to be back in the day when you funded a trading account, you'd have to go into the bank, you'd fill out this long form, and you would have to wire the money from your account to the broker's bank account, right? Mm-hmm. And make sure that you had all your numbers correct so they, accredited your account and all that, right? Because your money's like in a pooled account, right, at the brokerage. What I didn't know then, though, is that was basically like an SMS for banks. So they were sending text messages.
That's why it never works the first time, right?
Yeah, exactly. Exactly. It never worked. Yeah. So anyway, with blockchain, it'll be a lot safer. It'll be instant and all that stuff. You don't have to wait for the text message and all that. So I think it's already headed that way. You can see it. The only real question is where. So I would say if there's 3 things I would say. Oh, and I should mention the difference between gold in your hand, silver in your hand, and buying paper gold, paper silver. So I think that physical gold and physical silver may actually go up in value, but there's kind of divergent markets now. And I think the physical gold market is different from the, buying it on a chart sort of thing. So that's important too, to note. So I think that gold's going to be choppy. I think that Ripple will probably go up quite a bit in value in the next 5 years. And I think the US dollar is probably going to go up as well. And I know everyone's, called the death of the dollar now, but I think it's probably going to go up between now and 2023. But we'll see. We'll see what happens. Yeah. What about you?
I think they're really printing right now, right? So in the next 1 or 2, 3 years, it's still going to go up along with the stock market, probably.
Yeah, I don't know. Yeah.
Yeah. Well, for me, I think crypto is a good one, especially Bitcoin. I think it's a network that's really it's almost impossible to hack at this point. So I think a lot of people are going to use that as a store of value. And then I think a really underrated crypto, not underrated, but an underrated asset or a category of crypto is going to be like the privacy coins. So people I think are going to get more into like how to transact privately. Yeah, I agree with you. I think gold and silver are still going to be controlled. So they're just going to go sideways, even though they should be worth more. Mm-hmm. And then I think commodities are going to be a big one, especially like food stuff. I think those are going to start increasing in price because there's going to be some sort of shortages around the world. So could be something to watch out for. Obviously not advice. We're not giving advice here, but just some opinions.
Yeah. That's interesting. I think you're right about, I think specifically water is a big one. So in those countries like the US and Australia, where you can actually buy rights to water, I think that's big. In fact, I have a friend who trades that. Like that's his job. He trades in the water rights stuff and the water market. And it's very illiquid, in Australia. It's not a very big market, but yeah, I think water is the key. I think water is one of those commodities that's going to be a big deal. I think you're absolutely right about that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I know we mentioned the stock market earlier. I do think that the stock market, probably stock markets, many like UK, Germany, Australia, US, I think they're probably, by the end of this year, by the end of 2021, I think they're probably going to start to roll over. That's my belief. And that by 2023, the highs will have been obvious. Like, I think it's going to roll over. So I think there's a little bit of a, like I was saying, that the US dollar is going to go up in value. Mm-hmm. I think with that, the stocks will go down. So right now what we see is US dollar values, the purchasing power of US dollars is down. So the stocks have to go up to stay the same, right? Mm-hmm. Right. I mean, it's kind of like, so I think the opposite might happen, where if the US dollar becomes more valuable, the stock prices might actually go down, even though like relative to the US dollar, you might argue that they're the same or maybe a little bit less in value. But so I don't know. I just think my sense is that it's starting to roll over. And so, yeah, we'll see what happens. But I think the inflation, like the interest rates, are going to be key. I think that's the important thing. And as currency traders, we should always be looking at those anyways. Yeah. Like interest rates are really one of the most important things for the currencies that you're trading. But certainly, I think that may be kind of the first domino to fall. And then we start to see these sorts of things unravel. We'll see, though. It's going to be kind of fun to see where are the cryptos, where are the stocks, where does the money flow when money starts to get more expensive? Because when you think about it, anyone who's alive today has never seen money this cheap. It is so cheap to get money. In fact, that's what they say here in Australia at the auctions for property. Yeah. The auctioneer will get up there. It's really big. It's really like common for Australian properties to sell by auction. They don't all, but a lot of them do, much more so than in the US or in England, right? And so they'll say things like, money's never been cheaper. Let's get the bids rolling, And so I think so though this money has been so cheap, and so where's it been flowing? It's been flowing into stocks and artwork and cryptos and, classic cars and all these places. And so then when it starts to get more expensive, what happens in property, of course, where does it move from there? Where's it going to start flowing? You remember years ago when we had the obvious carry trade, where money was flowing from Japan, where it was cheap, to London, where it was relatively expensive. Yeah. And you always had this idea of money moving to different geographic locations. Well, now it's cheap everywhere. Yeah. So people are just sinking it into what they think is going to be good, which is cryptos, property, shares. I would argue even the artwork and even like trading cards have been inflated in value because of this. You know what I mean?
And those things like NFTs, right?
Yeah, exactly.
Yeah. Well, like when my parents bought their house, I think the interest rates were like 17% or something like that.
Yeah, so exactly. Yeah.
It is super cheap compared to that, right?
Yeah, people don't know. If you're like 30 years old, you have no idea about what happened in the 70s. You have no idea. Yeah. I have mentors who lost everything in the 70s. These are like older, getting up there in years, and they tell me stories about the 70s. Like, it was crazy, man. Like, I lost all my properties. I lost 3 businesses. Like, you know what I mean? It's just. I guess with the virus and everything, I guess we kind of had a taste of that in a way. It's different to like seeing like all these cars lining up to get fuel, and and all the loans you get are like 20%, 19%, and all that stuff. So it's a different sort of a story, and everyone's out of work too. That was the 70s, and people forget about that.
So read up on your history, people.
Yeah.
All right. Thanks.
That's
Walter.
the lesson. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. There's also a lot of value in reviewing what you're doing and finding joy in the process itself.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, everybody has some sort of addiction in some small or big way, I think. And how do we harness that and like turn it in a different direction or a more positive direction instead of like a negative direction? What do you think about that?
Yeah, that's really good. That's a really good point. So you kind of see that with people who are like addicted to eating when they get depressed or sad, and then they end up getting addicted to exercise or something like that. Like, I think what you want to do is think about break down the chemical thing that's happening at a basic level. And this is going to be super basic, right? And I'm not a neuroscientist, but I know just enough to be dangerous. And I'm married to someone who knows a lot about the brain. So let me tell you that. So let's talk about this. You do something that you're addicted to. Okay, what happens in the brain? It doesn't matter if it's like sex or food or danger. Like you like to do dangerous things like skydive or surf big waves or hunt crocodiles or whatever, something that's like really crazy, right? Rock climbing without a rope, whatever that's called, free climbing or something. Yeah, so stuff like that, right? So what happens in the brain is basically you get a flood, or drugs, you get a flood of the happy chemicals, right? That make you really happy. All right, so what happens over time is you kind of get used to that. So you build up a tolerance. So you have to do more drugs, you have to do scarier rock climbs, you have to surf bigger waves to kind of get to that same level. If you know that you want out of that, you could do a 12-step program, right? Those are pretty popular. And they have a pretty good track record, right? But if you don't want to do that, you could shift your focus into something that you want to be really vigilant. So with trading, you could just shift over, let's say you really want to start following your rules of trading. You're like a random gambler, right? You see some tips, you read an article on FX Street or whatever, you see one of your videos and you say, oh, Hugh likes Bitcoin, so I'm going to go in on Bitcoin or whatever, right? Like you're all over the map. So what you can do now is just focus on this specific idea of rewarding yourself, of getting that flood of happy chemicals in your brain when you do the right thing. So what you do is you reward yourself for following your trading rules, right? That's a really good way to shift on, and it works with anything. So like you would reward yourself for sticking to your diet, right? So what do you like to do? Well, you like to eat. Okay, well, what do you want to do? Like, how do you want to reward yourself for sticking to your diet? Well, maybe you go out and buy yourself a new dress or a new set of golf clubs or whatever, right? So you're just you're trying to move the focus away from what you've sort of used as your crutch to what you want, right? To what you want to change to. So like procrastination is a big one. A lot of people procrastinate. What you can do then is you just set up this reward system and go, look, if I don't procrastinate, on this thing that I'm supposed to do every day, 5 days out of the next 7, then I'll buy myself a movie or whatever. Like, I don't even know if you can go to the movies anymore. We can't over here. I don't know if they're open over there or what. Like, I don't know what's going on. But yeah, something like that, or buy myself a book or a trading course, or take myself to frozen yogurt. If I follow my diet Monday through Saturday, then on Sunday I can go and get a frozen yogurt, right? Or something like that, right? Just treat myself. So you kind of want to make it into a game where you win the game by doing the right thing. And so, because we fall into those habits. The other thing is to have someone to be accountable to. And that's why the 12-step stuff works, because you get people who are like your sponsor or whatever, and they're like, okay, like, you have to fess up to your sponsor and say, no, man, I actually had a drink yesterday or whatever, right? So yeah, having someone that you're accountable to every week that you talk to and you say, okay, this is what I did, this is what I'm working on. So it went well 3 out of 4 days or whatever. So yeah, that's how I look at it. Do you have any ideas on that?
Yeah, I think, that's obviously really important to have a little bit of that dopamine hit, I guess, right? When you do something right. But I think there's also a lot of value in reviewing what you're doing and finding joy in the process itself. So are you maybe trading in a way that's too stressful for you? I find this a lot. Like, people want to day trade. They want to they have this idea of like sexy day trading, right? Like making $2,000 a day or whatever. But in reality, most people would probably do better just swing trading. So I think just reviewing the process
do you find the process fun? Is your filling out your trading journal, could it be easier or could it be more fun? I think that's a really good way to entice yourself to keep on going because you find the process enjoyable, or you maybe have a trading strategy that, you know, has a small stop loss and a big winner. Some people like that. Some people find that fun, or some people like having consistent winners that are just maybe 1R, and some people enjoy that. So I think there's something to look at there also.
Yeah, and I think you bring up a really good point about the process. And one of the things I learned at the last FX Street conference that they had in Barcelona, I don't remember, 2013 maybe or something. No, it was maybe 2011. It was a while ago. Anyway, one thing I was thinking about there, which really, there's a lot of great traders. There's a really cool conference. I wish they still had it because it's, you know, a lot of the presenters there, they would come back like in future years because it's kind of small and it was really good. Anyway, one of the things I was thinking about there was this idea of embracing the unknown. And I was thinking about like how as traders, that's our whole job. And it's so different to everyone else who they go to work the same road, you know, they walk in the same door, they say hi to the same people, they sit down at the same desk, like they do all this stuff every single day. It's so boring. You have the same meeting on Monday, you know, whereas traders, it's so cool that we actually have this different thing. Like I might not take a trade today. Maybe I will take a trade today. Maybe my other trades I took last week are going to be losers today, or maybe they're going to cash out, or, you know, and so we get paid for uncertainty. So whereas some people know they're going to get that paycheck every month or every 2 weeks or whatever it is, we don't know that. Like you're saying, like part of the process, I believe as traders, is that we get to embrace the uncertainty. We get to say, you know what? I don't know what's going to happen in this trade. I really don't. I know I have about a 46.5% chance that it'll work out, which means, of course, I have a 53% chance it's not going to work out. But it's kind of cool knowing that, you know, I've put it in. It's in the platform. We're going to see what happens now, you know, and I'm either going to get paid for this or I'm not. And a lot of people, they don't want to do that. And that's why, you know, your job is to be a trader. That's why you get this job, because a lot of people don't want to do it. So, yeah, so I think that idea of looking at uncertainty as a good thing, and we try so hard to make the uncertain certain, like we'll add a new indicator, or we'll do another back test, or we'll try something to make it so that we feel like we have more control. We won't take this trade, or we will take that signal, and yet it still is just a roll of the dice. You just don't know what's going to happen on any given trade. You really don't. And if anyone doubts that, you can do that in your journal. Write down how likely it is to work out and see if you're right. See if you actually have the ability to tell those trades that are more likely to work out than others. You know, give it a scale, give it a 1 to 10 rating, and see. That's a really good way, because people trick themselves into thinking that they can tell the best trades, right? You just don't know usually.
And I think that's really the crux of trading, right? Like if you can find joy in that uncertainty, then I think that's the best place to start, right?
Yeah, absolutely. It's just let it go. You know, it's like when you teach a kid how to ride a bike and you push them for the first time and they're just like, they don't have their training wheels and they're like kind of wobbly, you know? That's how I feel like every time with the trade, I'm just kind of like pushing it off and just, okay, let's see where this goes, you know? We could skin our knee, or we could have like, yeah, I did it, you know? You just don't know. It doesn't, and it still is fun to win. I mean, I always say things like trading is boring.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And that's just because like the process of it is boring. The process of fishing out where should I take a trade next and that sort of thing, that's pretty boring and pretty, like, to me, kind of obvious. Like I don't try and convince myself anymore when I look at the charts, like, oh, well, I probably should take this trade because of this or that. I usually know, like, straight away. I look at the chart and I go, yep, within seconds, like 2 seconds, I can tell looking at a chart if it's usually really obvious. So in a way, it is boring, right? But it still is exciting because you don't know the outcome, the uncertainty. That's what you get paid for. And people don't want that. People want certainty. People want a paycheck. And so that's what's cool about trading, is that we get to get paid for taking on risk where other people won't. And so hey, enjoy it. It's fun.
Yeah, I think it's also a skill that not too many people can master. So when you do have that successful trade, I think it's a confirmation that you're doing the right thing also, right?
Yeah. Yeah. It's very rewarding, isn't it? I mean,
Yeah.
like putting all the time in that you've put in, Hugh, putting all those years, all those back tests, and getting to the point where you know you can make money is it's like someone can't take that away from you. You know,
Yeah.
it's like having a degree or something, you know, it's like, yeah, you did the work, you got it. And so now you're there, you know, and it's really kind of fun having that and knowing that, you know, you're there. It doesn't mean that you're not going to have a losing streak. It just means that you did it. It's a really nice sense of accomplishment. And most traders don't. They never get there, which is sad.
Yeah.
They never get there. They're always looking for something better. They're never really locking into anything. And it's a bit sad, really.
I guess it's kind of like farming, right? You could think of it that way. Like if you're a farmer, you know how to grow some food. You always have food. You won't go hungry. And it's a similar thing in trading, I think.
Or hunting.
Yeah, hunting.
Yeah, exactly. Yeah.
All right, cool. Thanks, Walter.
See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. And I think it's just a matter of what works best for you, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, I'd be interested to get your opinions on this. Default mode network. It has some implications in terms of our ego, our ingrained personality. And some people say that if you interrupt that default mode network, you can change your personality, or you can, do certain things with your psychology. What do you think about that?
Well, I've never heard that term before. So you're saying like we operate from like the basis where we operate that's kind of our homeostasis or something? Like we're
yeah, that's,
there?
In my personal opinion, the science behind it is a little circumstantial, but the idea I think is sound. But yeah, it's like certain parts of the brain or certain networks are activated when we're not doing something like really cognitively strenuous, and we're just kind of relaxing.
Oh.
And apparently those parts of the brain light up. So they say that that's the parts of the brain that are our true selves or whatever. Right. So have you seen anything like that?
No, but what I'm aware of in terms of like personality, because it sounded like you were touching on that. Like they do say, like we used to think in psychology that they say your personality is formed by the age of 5, and then you're stuck. That's not true. And like you've probably noticed, like I lean towards the there's a guy in Cornell University. He might be dead now, but there was a psychologist, a really famous one in Cornell University in New York, and he talked about how like you are different in different environments. So like you have like you have your wife, right, and you're in a certain way with her. Then you've got your like bigger family, like your mom, your dad, her mom, her dad, maybe your kids or your cousins, and then it kind of widens out to your workspace, to your social friends, to people that you kind of know, acquaintances, maybe when you go and watch a UFC fight or something, or whatever, or like go to a casino, you're different in different environments. And so he talks about like these circles that get bigger and bigger, So I think that makes a lot of sense, because I've noticed personally, anecdotally, so I would say in my life, I've noticed like I've made conscious efforts to be a little bit different. You know what I mean? And the easiest way I know to do that is to move someplace because nobody knows you.
Yeah.
You know what I mean?
Yeah.
So I believe that personality is very malleable. I think the research supports that. That sounds like a little bit more, what you're talking about is a little bit more in neuroscience, and they probably do, if they've researching that, like they would be using functional MRIs so they can see where your brain's lighting up and stuff. So I don't know much about that. Like if, let's say you go to work and you go a certain way every day, you walk down the street a certain way, you catch the bus, a certain bus at a certain time, you get off the bus, you walk a certain way to work or whatever, or maybe you drive your car, you drive your car to work, you drive the same route every day, unless there's a detour or something, you park it in the same general area, you know what I mean? Like, so I always try to mix it up. Like I try not to where I live, it's really easy to not go anywhere because everything is right here, and it's a really small community, right? It's like living on an island. It's a little tiny peninsula, and there's like you're surrounded by water, and like you're kind of like stuck, right? Unless you really make an effort to get off the off the island, which luckily there's several ways to go. You can go by by car over a bridge, or you can go by boat or whatever. Like it's so easy for me to like walk to the store the same way. Walk to my kids' school the same way. Like, you know what I mean? But I think it's good to break it up and do different things so that your brain is somewhat uncomfortable. And that might be kind of what they're talking about. I don't know.
Yeah, I think so.
Yeah.
Have you seen like Dr. Michael Parsinger's work on the God helmet? Well,
but I've heard about it. I've seen like a video or something. Tell me more.
Yeah. So he had a similar concept he called the binding factor, and he measured a 8 hertz signal. I think that went from back to front of your brain. It kind of just cycled, and he found that if you use magnets to interrupt that movement, you can kind of get certain effects. Like some people became a little bit more aware of things. Some people improved their psychic abilities. Some people saw God, right? And like 1% of them. So I think there is something to interrupting that signal or some signal that's in there, right? And that can be through doing your activities differently or putting magnets in your brain or whatever it is. But I think there is something to it for sure. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, like to me, the general takeaway would be, that's fascinating, by the way. Thanks for sharing that. Because I heard about the God helmet, and I just saw like a quick video or something about it, or somebody talking about it.
You can actually get it.
You can buy it.
Yeah.
Oh, right. Cool. Yeah, I'm a sucker for those sorts of things. But I think the general takeaway would be like, break it out, like change your habits. Like, it's so easy as people to just fall in the same habits. You know what I mean? And it's thinking habits too. It's not just like physical things like walking to work or whatever, or, walking to the store or riding your bike to the store or whatever. Like it's also thinking habits too. When you become a parent, it's like you see these patterns in your kids' thinking and you try and show them like there's another way. You don't have to always look at it this way. And I think we forget that we can do that for ourselves too. It's why it's so useful to have like a trading accountability partner, because they can often point out things from a different point of view,
Yeah, totally.
And so, or a mentor or whatever, like somebody that says, well, you don't always have to look at it this way. And just like you don't always have to act a certain way. You don't always have to have this sort of personality. You can have a different personality. Like when I was a kid, I was extremely shy. And the only reason why I was able to somewhat break out of that was because I started doing magic shows at a young age. So I had to learn to suck it up and get in front of a crowd, even though like when I'm 6 years old, it's only a crowd of like 5-year-olds, like 5 kids or whatever, but it's still like, I had to learn that, and we can do that with anything. We can do that with thinking habits. We can do that with physical habits. So yeah, I mean, that makes a lot of sense. It is tricky though. Like what the God helmet gets into, it sounds like, is that, these things are almost like hardwired. So it takes something drastic to kind of like break the connection and force it to go another way. Right.
Yeah.
So that's very interesting to me. I suppose that I would say that there might be other ways, like the nuns that had the brains of, what do you call it when they Alzheimer's.
Yeah.
So they had Alzheimer's brains when they scanned them, but because they did so much reading, meditating, and like just gardening, simple stuff, almost like they're in a Zen monastery, like these nuns, even though their brains look like normal Alzheimer patients, they were normal functioning. Oh. So, I think there's ways that your brain can, the whole plasticity of the brain thing where, the connections can go around, because Alzheimer's is basically like plaque in your brain, like black spots where it's like your brain, the connections have to go around, the neurons have to go around for you to function normally. And apparently, if you're very mentally active, that can happen. I think that's the case also with meditation. Like people that are lifelong meditators, I think it's the same sort of deal where, you start making these connections. Perhaps, I'm not read up on the research, but perhaps that's the sort of thing that would maybe give you a similar effect, to what you're talking about.
So
yeah, no, I totally agree. I think there's a lot of different ways to get there. Like you could do meditation, you could do whatever, the God helmet, you could do psychedelics, you could do all that kind of stuff. And I think it's just a matter of what works best for you, right?
Yeah, exactly. Yeah.
Yeah.
Like so many things. Yeah.
Yeah. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think from my perspective, one of the really underrated things is lowering your expenses every month.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what's like the most underrated thing that will get you to become a full-time trader that people really don't talk about? I know everybody talks about the trading system, they talk about the psychology, right? But is there something more basic or maybe more advanced that you would say is super important also?
For me, I would say it's probably the way that you approach risk, because risk has been the thing that is probably, like, getting risk wrong has been the thing that probably has led to more traders quitting than anything else. It also has led to more traders getting frustrated more than anything else, I would say, because it takes so long to get a certain, to build your account to a certain size where your goals are, basically. So, for example, everyone always says risk 2% or risk 1%. Some strategies, if you risk 1%, you will go broke. Like, that's too much. Some strategies, if you can handle it, you can go more than that. Some traders might be comfortable doing something completely different. Like, you take, let's say you have a $100 account, okay? And so in your $100 account, you risk $10 a trade or $15 a trade, something like that. So let's say on a $100 account, you risk $15 a trade. You might be able to build that up to $1,000 rather quickly. It also might blow up the account, right? And if it blows up the account, you say, well, it was just $100, I'll try again, sort of thing, right? And then when it gets to 1,000, maybe you decide that instead of risking 2%, which would be $20, right? You decide, well, I'm going to risk 5%. So you're risking $50 a trade. Again, this is a little bit more than what most people are used to, but it could build your account to 10,000 rather quickly. And then when you get to 10,000, maybe that's when you're looking at 2 or 3% or something like that, right? Where it's closer to sort of the normal accepted level that everyone talks about. So that's a way that you can kind of get some fast traction. And I know a trader that did that. Like he always started with a really small account. And as soon as he got to about 100 grand, he would cash out and start all over again. So even if he only started with 5 grand, he would just work it up to 100. And then once he broke 100, he knew that something in his head would mess him up. So he would have to like cancel it out and do it again. And sometimes you start with that little $2,000 account, whatever, and it blows up. And you're like, well, that's all right. I made 112 last time around. I'll try another $2,000 account or whatever. So that's another thing. Like you can do things like that. You don't have to risk 2% of a $1,000 account, like things like that. There's a lot of things like in society that you just don't question, we don't question it. It's a fact. And that's one of the things in trading. It's the same thing. It's like everyone sort of just says 2%, 2% or 1%, 1%. But I don't know that for some traders, that's too much, depending on their system parameters. And so for other traders, that's never going to get them where they want to go. So, yeah.
True. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. I think from my perspective, one of the really underrated things is lowering your expenses every month. So like, I think, the faster the lower your expenses, the faster you can cover it with your trading. And, maybe you buy a used car and you pay it with cash instead of having a loan or whatever. And same thing with your housing situation. So I think that's a really underrated thing that most people don't look at. And even if you don't want to become a trader later on, or you just want to have a business or something like that, I think that really is beneficial for that also. So something to consider.
Yeah, that's so true. Like that's why there are a lot of traders in places like Thailand and Indonesia and stuff, because well, one, you can live wherever you want, and two, it just naturally, cuts that. And actually, I think those are really good time zones to live in too. Like Bali, Thailand, like over in that part of the world, it's really cool because London session starts like in your afternoon, And so in the evening you get New York. So it's kind of like the really heavy volume in Forex is for Forex traders, or even if you're trading like New York Stock Exchange, still that's like, you know what I mean? That's kind of like the early evening when that fires up for you. So, well, it depends on the time of year, but yeah. So like you could easily catch the open of the New York Stock Exchange if you lived in Thailand. So yeah, absolutely. And for people in your part of the world, it would be, Mexico or Costa Rica or places like that where there's a lot of expats living there, and it's easy to reduce your expenses. Colombia or whatever, depending on how.
I think Thailand was I heard $500-600 you could get away with a month or something and still live pretty well.
Yeah, I think it depends on
where you live.
Yes,
right?
My wife lived there, and I think we went back maybe would have been 7 years ago. We went there, and she was amazed at how much more expensive it was. But we went to like the tourist island Koh Samui, which is really touristy. So I think at the time they were getting a lot of Russian and Chinese. They'd had kind of discovered the island, and so prices had gone way up since when she was there. But like if you're in Bangkok or something, you could definitely find a cheap or just slightly off the beaten path.
Yeah.
Like I met some Australians over there that were kind of doing that. They're like, yeah, we don't live in Koh Samui anymore. It's too expensive or whatever. But yeah, so what you're saying is definitely doable. Like there's beautiful places around. It's the same with Bali, or Indonesia. Like there's areas of Indonesia. You can spend a lot of money if you want to, or you can just go slightly off and find.
Yeah.
Like I think Bali still has there's tons of places there that are cheap. And if you go off Bali somewhere else, it's definitely cheap,
Yeah. I've seen some guys with those villas, and I don't know what they're paying, but it was kind of ridiculous, like $2,000 a month or something. And it's like
totally
cheap. Yeah.
Yeah, totally. Like we rented a place there, and it was like you had a driver, a chef, a pool. Like it was my family with another family, and it was like, dude, we were in heaven, man. Like the girls, like the driver takes the girls to go shopping, the driver takes me to go surfing. Like it was amazing. Like it was so cool so I can see where, it could be tempting. It depends on where you're at in your life. If you're in this situation where it's easy for you to pull up stakes and go. But yeah, you're definitely right. That is an overlooked thing for a lot of traders, is thinking that you have to make a certain amount of money to go full-time trader. So obviously you want to have some money saved and set aside and all that. But the other part of that is you also want to look at, can I reduce my expenses so that it's easier for me to get to that full-time level. Yeah. Mm-hmm. I would always say have 6 months at least though. Like if I was working a job and trying to work trading and trying to trade on the side, and I wanted the trading to take over my job income, I would definitely want to have 6 months just in case I have expenses that come up or a nasty drawdown for a couple months or whatever, just so I don't, you need that little cushion, I think.
Yeah. It never goes as well as you think, right?
Yeah. It's never as good as Forex Tester.
Yeah, exactly. Yeah. All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So the bank sent him Forex signals. He would take the bank signals, but he would disregard their profits. And he would just hold for 3-1.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I had a trader write in, and he was talking about, he had this issue where he was comfortable with his trading system, he's comfortable with his risk, all that was good, but he had the problem of not holding his trades to the point of taking to the take profit point. So what would you say to that? Like if someone came to you and said, look, everything's good, it's just I keep pulling the trigger and dumping my trades too quickly, and I'm not going to the full where I wanted to take profit at the beginning of the trade.
Yeah, that's a tough one, right? I mean, you have to put something in place that's going to almost force you to stay in the trade, right? Either have an accountability partner, or you have a protocol where you just shut off the computer or something.
or just consciously force yourself to, stay in the trade and not create a policy, write something down that says, I'm going to stay in the trade. I'm going to stay in the trade until the stop loss get hit or the take profit gets hit, right? Or something like that. But yeah, I mean, it's really a matter of discipline, I think. But it's tough to institute for sure. What do you think?
Yeah, no, I agree. Like, I would recommend reading, if you can, get your hands on the Nick Raj book, Everyday Traders, Scott Barlow chapter. He's the only Forex trader in there, but the other guys are all basically systematic stock traders, which is what Nick teaches. Nick's a great guy, by the way. I've met him. He's a really cool guy. That interview with Scott really changed my whole thinking on that, because the guy was talking about this exact thing. He's like, look, it's up to me to make sure that my system has the right risk to reward, right? And his was 3-1. So he always, no matter what, did 3-1, held to 3-1. I tried to interview him, but he doesn't want to be interviewed. But yeah, so yeah, and he was interesting because he actually offloaded the signals to a bank. So the bank sent him Forex signals. He would take the bank signals, but he would disregard their profits, and he would just hold for 3-1. So it's really, really interesting guy. So yeah, I think that you need a trading accountability partner helps. You could also just say, hey, look, if on Monday I take a trade and I say that I'm going to wait for it to go 2-1 and I don't, then I can't trade for the rest of the week. Right. So you have to set up this, like you're saying, like sort of reward system where it's like, if I do what I'm supposed to do, then I can take another trade this week. Right.
Yeah.
Or this day or whatever it is. I mean, it depends on the time frame. But yeah, so you're basically forcing yourself to get to a point where you are doing what you said you would do in your trading plan. And if you're not, you start to lose your trading privileges, right? Like you're saying, trading accountability partner can really help with that. So yeah.
I think there's a tendency to like want to rely on like an app or like a special system or something like that to solve these issues. But I think at the end of the day, you really have to face yourself and say, hey buddy, you're not doing what you said you would do. So I think that's what it comes down to, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. And I have a chart, like a spreadsheet, and it shows like when your risk reward shifts and you just shift a little bit over, how much more likely you are to have a terrible drawdown, or blow up your account. And it's fascinating to see how close most of us, we trade right on the edge, right? So if we start moving our 2-1 system, it starts becoming a 1.75 to 1 or 1.65 to 1 instead of a 2-1 because we're so antsy to take profits. It's bad news. Like it's amazing how quickly you can fall off the cliff if you're not on the right side. So that's another thing that can impact your logical thinking. Like, okay, if I don't stick to my 2-1 exits here, I'm probably I've literally tripled the likelihood that I'm going to blow up my account. This is bad news, right? So yeah,
maybe post that on your wall or something in front of you.
Yeah, exactly. Yeah, that sounds like a great idea. Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So Richard Dennis, the most famous trader in the world, who took whatever it was, $400 from his dad, and he went to the Chicago Mercantile Exchange, I believe, and took it up to whatever it was, 10 million or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about edges? How long do they last? Do you think they last forever? And maybe let's talk about the different types of edges also.
Yeah, my thinking has actually changed on this. It'd be interesting to hear what you think. So I used to
I still do think that the simpler the edge, the more likely it is to maintain over into the future, like to be robust. But I think there's kind of two things going on here, and as traders, we confuse the two. Thing number one is, did your system stop working because it ran its course? The markets are now changing. There's high frequency computerized trading or whatever, and whatever people blame it on. Mm-hmm. It's usually the computers, though. they usually blame it. I mean, if you look back, they were blaming it on the computers in like the 80s, and they're still blaming it on the computers. I think it's funny. But so there's that. And I think that's real, especially if you have a lot of variables in your strategy, like, 5 indicators, and then you have all these multiple settings that you can choose for all the indicators and all that. Like that's probably true. That's why I try and go as simple as possible. However, the other side of it that I don't hear a lot of people talk about is whether or not you, as a trader, have you decided that the experience of this drawdown you're in is to such an extent that you've decided, no, it doesn't work anymore. That's a different question, right? Like, let's say someone hurts their leg. So my daughter, she sprained her ankle the other day, and she couldn't walk. She was on a trampoline. She sprained her ankle, and she couldn't walk, couldn't do this and that. And it's kind of like a pain threshold. If you think of it in trading, there's like we all have this internal pain threshold for drawdowns, and once it gets to a certain point, it's like, nah, I can't do this anymore. It's broken. I got to scrap it. I got to change it. I got to do something. I can't keep going down this path. And it's the same, I think. It's sort of like a pain threshold. At a certain point, someone will just say, I can't walk anymore, or I can't move, I can't raise my arm, or whatever the pain issue is, wherever that pain is. And so that's a separate question. So but that's under your control, right? Like you can map out your risk using Monte Carlo spreadsheets and all kinds of even formula to determine the likelihood of certain drawdowns given your risk parameters. So that's totally under your control. It's the other side that you're talking about that we usually blame it on, which I think that's real. I think it does happen. I think the best thing you can do is make your strategy as simple as possible. And so in statistics, we talk about degrees of freedom. How many degrees of freedom do you have? That's basically how many different parts of your strategy do you have. So the simpler, the better. And one thing I think that humans have an advantage over systems and computers is generalized pattern recognition. I'm sure that it's possible to program it, and that with AI and all that stuff, neural nets and everything, you can do it. But I think that's not within the realm of most retail traders to have that ability to get some sort of program that even approximates what you can do as a human, just looking at the charts and going, okay, I see this is, basically a bullish trend that's a severe pullback or whatever, I think those things are kind of hard to program in. So I think you do have an advantage, I do believe, as a retail trader if you use that, which is sort of the big picture, That's what I think. I think that there's two things to think about. And I've seen strategies that I thought were good on across the board. I've seen them not work on certain pairs and things like that. Yeah. So I've come around to that. So like the classic is, if you're trading a reversion to a mean strategy, the CAD Swiss is a really good pair to use. If you're trading a trend trading strategy, the Euro Yen is a very good pair to trade. And so there's certain, certain pairs have different sort of profiles. And so that's something and Aussie CAD is another one. Aussie CAD is really good with reversion to the mean strategies, not so good. I mean, it obviously trends, but it's not as good as, say, the pound yen, the Euro Yen, the pound New Zealand, the Euro New Zealand, things like that. So I do believe there is something to it in terms of like systems that break or systems that like certain markets. That's any programmer can tell you that. I've moved a little bit more toward that side, whereas before I used to say, no, they work on everything. But I've seen like my daily kangaroo tails don't seem to work very good on the US dollar yet Japanese yen. I mean, it's just not. The data since I wrote my book I think bears that out. Maybe it'll flip and start going good again, but from what I've seen, it's not there. So that's what I think. What are your thoughts on
Yeah, quick question before I talk about it though. Like, have you seen strategies that work for a very long time?
Well, yes. The classic would be the turtle trading system, right? Yeah. And what happened though is that in the 90s, I think in the mid to late 90s, it just had a really bad stretch of like 6 years or whatever. And so, people stopped trading it, right? But it actually, number one, it worked on the lower time frames, but everyone was doing daily back then. And so, that's the classic. I've seen articles on that where people actually look at it and go, okay, wait a minute. So this was working 70s, 80s, early 90s, and it kind of really went bad I don't know exactly when it was, around 93, 92, something like that, 94. And then it kind of kicked in again, like in the early 2000s. So it might've been like a 5 to 10 year, 8-year range where most traders would give up. And in fact, if you look back at Richard Dennis, so people forget Richard Dennis he was like the Warren Buffett of the 80s. Okay. He was the most famous dude. Not that I was a kid, right? But he was a famous guy. He was being interviewed like Buffett is today and Charlie Munger, right? Now they're investors, whereas Richard Dennis was more of a trend trader. And so everyone kind of piled in on his style of trading and his students, of course, and then his students taught other people, it kind of spread. And so the argument was that just too many people were trend following and it wasn't going to work anymore, right? That was the argument. In reality, trend trading still works. And I think those rules still work as well. Maybe they have 5-6 years of downtime, and he quit his fund. So Richard Dennis, the most famous trader in the world, who took whatever it was, $400 from his dad, and he went to the Chicago Mercantile Exchange, I believe, and took it up to whatever it was, 10 million or whatever, from $400. He quit his fund. A lot of his clients withdrew their money, and he lost a big chunk, like 50-60% of his money that was in his fund. And then he was like left with like, what do I do now? And he started looking at different time frames and stuff like that. So even he had that point that he wasn't really aware of until he got to it, and then it kind of collapsed. And that's I guess my main point here is to think of that. What is your point? Mm-hmm. Is it 20%? Is it 25? Is it 30? Is it 10? Where is that level where you're going to go, oh, this isn't working anymore? Because then you can work around that and backwards engineer around that so that you don't hit it, or you're unlikely to hit it. Not that you don't hit it, but that you're very unlikely to hit it.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's a good example, because I think from my impression of the trend trading method that he used, it's a very long-term. You have to look long-term, and you have to be able to stomach those big losses, right? Like there was going to be those big losses. So I could see where that still works. And I know somebody who still trend trades, and he has a fund and everything. So I think that's a really good example. But and you can. I'll put the rules. The rules used to be freely available online. If people are interested in the turtle trading rules, we'll link them up in the show notes for you guys. You can download the PDF. One of the turtles put it out there because another one of the turtles was like selling not the exact rules but similar rules, and so he thought that was ridiculous because apparently that was the one turtle that didn't make money. That's right. So he was like, I think that confidentiality agreement like expired or whatever. Yeah. So he put them out for free, and then somehow they disappeared again off the internet. So I'm sure you can find them, but I'll link them up in the show notes so you guys can download them if you're curious.
Yeah, cool. Well, I agree with you totally. And I think maybe I'll refine your idea a little bit more. I think when I was thinking about it, there's probably 3 different types of edges, right? There's the system, which you talk a lot about. There's the conceptual edge. So maybe like you're the type of person who likes to trend trade, like we're talking about. And maybe this one trading thing isn't working, but you can tweak it a little bit because you know how the system works and how the market's changing. And then you can conceptually stay with trend trading, but you have a different system, maybe. And then the third thing is, like you talked about, the personality edge. Some people, they, no matter how hard you beat them down, they always come back. And I think that is a huge edge in itself. We talked about persistence in the past, and if you can come back from losses, and I think, or knowing when to quit also, like you said, is a good one. So I think those 3 types of edges, like I think the personality edge will last forever as long as you stay with that personality. But if you, I don't know how long a system edge will last. I think that is the most likely to break. But the conceptual edge is, I think, kind of in the middle where, it could break, it might not break, but it's more likely to stay than just the system itself, I think.
And really, your view of the markets really must match your system. So that's why it's so hard to take a system out of the box that someone else teaches you. And it's better for you to kind of modify it and sort of mold it into, something that is like, almost feels like you built it, even though, we all pull from other ideas and stuff like that.
I think I mentioned before, I used to look at the new moons, like, and all this stuff. And then, so I was looking at new moon. This was like 2003, 2002.
So like
and I was
astrology.
Sorry?
Sort of like astrology, kind of.
Yeah, kind of like that. So it was like it would mark these points where it was a new moon and the euro was meant to have a reversal there. And I was like, wow, this is amazing, because I was kind of into GAN back then and stuff. And then after I wrote my book, I did a talk down in Melbourne, down in Victoria, in Australia. And afterwards, they these talks, they have a dinner or whatever. And so I was at dinner with like 10 traders. And one of the guys there is like, hey, I'd really like for you to look at my book. And I'm like, oh, your trading book? He goes, yeah. I go, well, what's it about? He's like, it's like financial astrology. And I'm like, dude, I'm like, I'm sorry, man. I'm the last guy you want, to look at that. I'm really sorry, but, so, I mean, I can see why people get into that. Cause like I said, I was totally into it, but that's not something I could trade today. It's just not, right? I think it's really critical, and it's understated in a lot of cases because people tell you, hey, buy this strategy, take it and make money. It doesn't work that way. You really need to know, like the turtle strategy. You could take the turtle strategy and ruin it by risking too much. And the turtles didn't risk a whole lot. Some of the best rules in that turtle strategy that you guys can download in the show notes are the rules around risk and how to avoid terrible drawdowns. And they talk about being fully loaded and have a maximum number of trades, which actually maps on pretty well to Forex traders now because of our reduced leverage. So before it wasn't really much of an issue because you were getting, 1,000 to 1, 500 to 1. And now that's changed. Even down here in Australia, we've now swapped over to what the States had for years and what Europe has had over the last couple of years. And then now we've got it as of 2 months ago here. So our leverage has really, really been reduced. So it means rules like that make a lot of sense. Like getting to the point where you're like fully loaded, you have the maximum number of trades on, you can't go any further. So I think I would encourage people to check those out. But yeah, it's absolutely true that, you are the edge in a way. I think that's kind of your point, right? Like, and so how do you maintain that? Well, that's a lot of what we're talking about here in this podcast, right? It's the psychology stuff. How do you maintain the edge? Like, how do you keep convincing yourself? Because that's the thing about trading. Like, I'm almost convinced that it's not really the traders that have the gangbuster strategies so much as it's the traders who are super resilient and able to keep with it even in the darkest hours. Like that almost to me is like the thing that, pulls people along and keeps them in. Because like I know plenty of traders that they're away from trading and now they're doing multi-level marketing or real estate or whatever, but like 5 years ago, they were fully into trading and reading every trading book they could get, but they hit a certain point and they had to give up. And so I think that resilience is so critical. So I think it's exactly what you're talking about. It's like you are the edge in a way. And the way that you interact with your drawdowns, the way you interact with your strategy. I like to for example, I like trading trend trading strategies, but I also like trading strategies where the market's consolidating and bouncing off like a consolidation box. Like those are my two favorite ways to trade right now. And so my biggest question, and they both make sense to me, right? Like, so it's not like I go, trend trading is the only way to go. No, sometimes the markets don't trend. So you got to get to that point as a trader. You have enough strategies in your tool belt, so to speak, that you can whip them out when the time is right, and you know that you're not going to push it so hard that you have that terrible drawdown that makes you rethink whether or not it's still working. So it's really an important point that you made.
Yeah, that's true. And I think sometimes we're afraid to step out of the box, right? We have to conform to these like trading systems that you see on the internet or you see on these courses or whatever. And going back to your point on astrology, like I totally blew that off also until maybe like a year ago. And then I had one of those like birth chart readings, and not that I would trade astrology necessarily, but it opened my mind more to it, because when I saw that birth chart and the woman told me the reading and everything, I was like, wow, this is actually kind of a science, right? It's not as out there as I thought it was. So, that's something that you look at, and some people actually trade stocks like that because they look at the chart of the stock, the birth of the company and stuff like that. So I don't know, something I might look into, but don't be afraid to, try something different and something that resonates with you.
Yeah. And that openness that you have, that some psychologists call it openness, the openness to new ideas and new inputs, that I think is something that plays into your ability to trade uncorrelated strategies. Like if you're not very open, and you're just locked in the idea that you must trade the trend, right? Or that you must risk 2% or whatever it is, I think it's going to be a little bit more difficult for you as a trader to have a diversified suite of trading strategies, right?
Yeah.
Because it's not enough to trade different markets. That's not going to work. It will not work. They're too correlated. They move in concert. It's not a good way to go. Feel free to try that, and go down 10 years down that path and get back to me and see what you think. But it really doesn't work. I can tell you that. And the correlations are there. So I would say, having that ability to be open to new ideas is great. And it is interesting to me, like astrology is one of those things that is so old. Like a lot of you think of Western medicine. Western medicine has changed so much. Like we don't do bloodletting anymore. You don't go into the hospital and they go, oh, what you need to do is let that blood out. Let's crack your skull. Yeah. Yeah. Whereas astrology, it's kind of been the same thing for a long time, and it's kind of like covered up and poo-pooed in science and whatever. And so I think it's something that you should definitely look into. If it's something that strikes you should definitely take a look at it, because there's a lot in the trading world related to it as well, and we've had presidents. Apparently Ronald Reagan, his wife was so into it and convinced him that he would only have certain meetings with the Russians when the stars were aligned and all this stuff. Like he had certain dates for his speeches and all that. Like it was all basically on Nancy Reagan's astrologer. So I don't know if people know that. So it's Reagan's not that long ago,
Yeah.
Yeah.
And
so yes,
it's been around for centuries or thousands of years, maybe, right? So
yeah.
Somebody has to use it, and it has to work for somebody. Otherwise, it wouldn't stay around. So
you would think so, yeah.
Yeah.
Yeah, exactly. Yeah.
All right. Cool. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I think it could be really easy to get infatuated with like a 1 hour pattern or something that you're looking at.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some trading psychology rules that you never break?
The biggest one that I have is to allow, when I take a trade, I need to allow myself to have a loss. So when I take a trade and I'm calculating out what the risk is on the different accounts, I always know, okay, this is money that could be gone. You know what I mean? Now, I didn't always do this, because I used to keep moving. One of my biggest things when I was early in my trading was I would move the stop over and over. So if my stop was at 121.00 and I saw it coming down, I would move it to 120.80. 120.65. I'd keep moving it and I'd stay up all night watching it, hoping that it would reverse, during the New York session or whatever. So when I go into a trade, my mindset, in fact, I'll calculate the risk as such. For example, if I have an open trade and then I have a new signal, I will calculate the risk of the open trade as a loss, so that the new trade is calculated on that balance, not on, what the equity, where it is now or whatever, right?
Yeah.
So I mark it as a loss. Open trades are marked as a loss before I do my new trade. So that's the biggest one, is that I count risk capital as goodbye. Now I hope for the best. I don't think the worst. I try to be as positive as possible. I try and envision scenarios where if I'm a drawdown, it'll go in my way and stuff like that. So that's definitely true. But I consider that goodbye money. Okay. And then it's a pleasant surprise if it goes the other way. The other one is that revenge trading was the other big one for me. So I would go, oh man, that bloody Euro yen took me out again. So I'm going to get back at the Euro yen and I'll double down or whatever, like martingale style trading or whatever. I used to do that sort of stuff. Not as bad as the moving the stop loss. It was there. It was definitely there. It was almost like I thought of each currency as like a person and I want to get back at it. I don't know if you've had that. So yeah, so those are the biggest ones. The other thing is really important for me is I don't want to trade drunk.
and I don't want to. Yeah, because I made that mistake too. Like, you know, coming home late on Thursday night. I used to actually drink quite a bit. Like in my 10 years ago or whatever, or 15 years ago. I hardly ever drink now. But so there was a problem where I would come home and I'd be like bored. I didn't have a TV or anything, so I just fire up the trading station and have a look and go, hey,
that looks good.
Yeah, that looks good. So that was terrible too. So don't trade under the influence. I don't move my stop losses. So related to the trading under the influence is to be in the right mindset. So you can use like meditation, hypnosis. You can use different devices. We talked about the neurophone. You can use binaural beats, you know, to get yourself into alpha or theta, so that when you're watching your charts, you're in a good mindset. I really don't like to be upset. You know, if I just got in an argument with somebody, or, you know, the kids are just driving me nuts or whatever, I don't want to sit down and start, you know, locking in trades into my platform at that stage. I really like to have more of a pattern of relaxing, going through my meditation, and then sitting down. And it's good because where I live, I don't really have to look at the charts until about 10:30 in the morning, really. I mean, it's just the Asian session. Not much is going on. You know, interbank market's over. So I kind of set my trades up in the morning by around noon, maybe, you know, depending on the time of year. The clocks change in Europe and the US. But basically, you know, early to late morning, like mid to late morning, so I have time. You know, I know it's not the case. Like some traders, if you live, for example, in California or Washington State or whatever, you might wake up and go, like I got to go see where my trade is, because New York is raging, right? Even if you get up at like 5:30 in the morning, New York is on, you know, and you got to go and see. And so I understand, like, might not necessarily have that luxury. It's really hard. Some traders, what they'll do is they'll just have a quick look, and then they'll go through like their meditation or whatever. So that could possibly work as well. But so those are the big 3 rules. I'm curious to hear what yours are, though.
Yeah, it's funny you bring up the trading drunk thing too. I had that a couple of times, and yeah, that's one of mine. And it's more about the mindset that you're in, right? Not necessarily drunk, but at least good mindsets, a little bit of meditation, using the Inner Balance app or whatever. Second one is like a 2 strikes rule. So I allow myself 2 strikes on one trading idea. If that blows up, then I stop doing that. And then the third one is, can we dig into that real quick? Can I just ask, so when you say 2 strikes for trading idea, is that like as simple as I'm going long the Swiss yen, and so I went long yesterday and I got stopped out, so I can go long today again on another? Is it like the same signal, or is it, I guess what I'm asking, is it different signals or the same, you know what I mean? Like, how does that work? Yeah, I guess it depends on the strategy, but it's more of like, the same direction on the same pair.
Oh, okay. Yeah. Okay.
Yeah.
Got it. Yep.
Yeah. And then the third one would be just taking a break when I feel burnt out.
That's a big one. That's a big one, man. Like, people who are listening, that's a really big one. I don't have that problem like I used to, but I did have that problem. And the biggest thing that got me was when like the smartphones came out. And yeah, man, I had this little, like, it was almost like a square phone, and it had like early MetaTrader on it. And like, I would be out to dinner with my wife and I would be looking at the phone, like checking my trades going, and then I would micromanage them, and it was a big one. And now it's even worse. Now you have even more abilities to take trades and manage trades than back then. Back then it was actually kind of a pain to do it. I'm talking about
all that stuff. Right?
Yeah, exactly. Yeah, like back in 2007. Yeah, like back in that area, 2006, 7, I think is when. Yeah, so now it's even worse, obviously. But yeah, and you like, what happens when you lose your stylus and all that stuff? Yeah, like that's crazy. Yeah, totally.
Yeah,
that's a big one.
Yeah, and sometimes I might take a break for like 2 weeks, a month, sometimes. But whatever it takes, right?
I have a question. Do you find that, like, if you're away, let's say you take a long weekend, well, actually, where you live, the markets close Friday morning, right? Or Friday afternoon, yeah. Friday afternoon, they're closed, right?
Yeah.
So 5 p.m. New York time, basically. So do you find, let's say that you had a long weekend and you're traveling and you don't see the charts. Let's say you leave Thursday, right? So you don't really see Friday, what London or New York did. And then you get back, say, Tuesday. So you don't see Sunday or Monday. So you're kind of missing like 2.5 days. what do you find when you get back and look at the charts on that Tuesday? Like if you have like a break, if you've had a break that long, we just didn't get a chance to see the charts. What do you find?
Either I'm in tune with it from last week, or I'm like totally out of tune. And then in that case, I might not trade for the whole week.
Right.
But
yeah,
it just depends.
Yeah, I find that the fresh eyes is a good thing. I just feel like you kind of get it's like you get these theories in your head about certain pairs where they're going and stuff, and then when you watch it, you can almost make it fit. Like you go like, oh, I think the euro's on a tear. It's going to keep going higher. And then like I wake up in the morning, oh, it's gone down. Well, that's just a pullback, right? You know, whereas like if I come back like 2 days, like a long weekend is the classic. Long weekend, come back, don't even check or anything. And then I look and I go, oh, that wasn't a pullback. That was a double top or whatever. You know what I mean? Like I just find that the fresh eyes, it's almost like the less time I have in front of the screen, the more obvious it becomes what the market's doing. And I don't know if other people have that or what. It's just really easy, I find, to get into that thing where you're using the evidence of the chart to fit your theory of what you think is happening. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. So I think it's good to have multiple theories. Like, well, it could be a pullback, but it could be a double top if it does this. Well, it could be going up, but it could have just actually reversed if it did that. Or, you know, it could be consolidating and it could be bouncing off the top of the box, but actually it could also be breaking out right now. So I don't know. I was just curious how you had, like, what that had done for you, because it really is obvious to me. If I spend time away from the charts, boy, it is such an advantage because I'm not stuck. I'm no longer stuck in the, in those ideas that I was a slave to before. So
yeah, no, I think it can be really easy to get infatuated with like a 1 hour pattern or something that you're looking at, and when you're really trading the daily chart, but you get stuck on that and you're like, oh, it has to go because this and this and this on the 1 hour, and then you step away and you come back and you're like, oh no, that's just noise. And
yeah.
So.
It's true, man. It's so true. Yeah.
Cool. All right. Thanks, Walter.
See ya.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Are you taking responsibility for yourself and your trading, or are you trying to shove it off on somebody else, or are you trying to get the quick answer, like that kid who copies off of you in class or whatever in elementary school?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Hugh, so I had this question from a trader who's saying, hey, Walter, where do you think the euro is headed? And so, sometimes people will ask this, and it's kind of funny to me because, and I understand, I used to be there. I used to actually, after work, call my buddy up on Skype, and we would look at the same charts on NinjaTrader. We look at the pound yen, and we would look at the 3-minute charts, and we would sit down and we would literally say, okay, are we buying or selling? Like it was just, we knew that we were going to take a trade. Like we just didn't know which direction, right? And like, I get it. And it's funny to you and it's funny to me because you can speak for yourself, but I'm pretty sure you don't look at trading like that anymore. It's more about sitting around waiting for the opportunity to present itself than it is to sit down and have to know, well, I'm a trader. Where's the market going? Like, that's not, you know what I mean? That's not your job. That's not necessarily your job. So it's one of the things I try to impress on traders is that you don't have to know where the market is going at any given time. In fact, I usually have no clue. It's only once in a while that I look at it and I say, I see what's going on here. This possibly could set up a really nice trade if it does A, or if it does B, but if it does C, then no, right? So it's almost like you're thinking of probabilities. Like, let's say, it's not like when you're driving. If you're driving and you see a car and he looked like he stopped and it looks like he's going to turn across your lane,
but he doesn't have his blinker on, so he doesn't have a signal on, so you don't really know if he's going to turn or not. You gotta like kind of anticipate. Go, well, he looks like he's slowing down, like he's going to turn, right? And it seems like he thinks he has enough space because I'm farther back, so he's just going to turn in front of me. So I got to kind of like pull back a bit and make sure that I don't slam into this guy, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And that's kind of the way I look at trading. It's like, I look at the charts, I go, no idea. Oh, okay, this one. Maybe if it does this or this, possibly a trade. But if it does that, then definitely no trade. Like, do you know what I mean? So it's kind of, you got to think of probabilistic thinking. And the false duality error strikes traders just as much as it strikes everyone else, which is this idea that if it didn't do this, then it must be this, right? So if I'm an NFL general manager and we draft a quarterback in the first round and that quarterback doesn't win a bunch of games in his first year, then we got to kick him to the curb or trade him or whatever. He's no good to us. You know what I mean? But it might not be that. It might be that your team sucks, right? It might be that your coach sucks. It could be that the quarterback sucks and maybe he's athletically gifted, but mentally, he doesn't have that resilience that you need as a quarterback because the world comes crashing down when you keep losing. Right. So there's a lot of things there. It's not just, that's why you have, like, here's a famous example. And I know I'm getting into the NFL world here, so a lot of people are going to tune out, but Steve Young was a quarterback. He played for the USFL, which was a rival league to the NFL for a few years, and then it folded. And then he went and played for the Tampa Bay Buccaneers, which at the time was one of the worst teams in the history of the league. Okay. And the San Francisco 49ers had Joe Montana, mostly considered probably the best quarterback or one of the top 3 quarterbacks of all time at the time. And they traded for Steve Young on this terrible team. And literally everyone except the coach, whose name's Bill Walsh, everyone thought he was loony. Everyone thought it was a waste to trade for this terrible quarterback. But Joe Walsh saw a really good quarterback just in a bad team. Right. And I feel like, as traders, that's something we got to do too. You know what I mean? Like, we got to look at it and it's not just an either or. It's not just, this guy, Steve Young, sucks or he's great. It's not that. There's other influences. So when we look at the charts, it's not just like we're going to buy or we're going to sell. It's more about, does it look like there's going to be a signal here or possibly a signal very soon? If there is, okay, I'm going to get on the edge of my seat and keep an eye on it. And that's all I am. So I'm just an opportunity seeker in the markets. I am not a person who will know whether the NASDAQ is going up or the S&P 500 or the euro. I don't know. I only know if it fits a certain pattern. Yeah. So what are your thoughts?
Yeah, no, totally. I mean, to unpack that a little bit more also, I think it shows that this person doesn't want to take responsibility sometimes. I mean, it's good to ask questions, obviously. You should do that if you're a beginner. And yeah, that's a beginner question. And this might not be the case for this guy or this person. But I think it also shows they don't want to take responsibility for their results, right? They kind of want to ask somebody, oh, what's the stock tip? What's the Forex tip? Which direction is the NASDAQ going, right? And then they want to take a trade based on that. At least that's the way I read it when I get these emails. Yeah. So if that's the case, then I'll just hit delete because they're just looking for a simple answer. But if they ask, hey, how can I, learn a certain pattern? How can I backtest something? Then I'll answer them and say, oh, this is how you do it. This is how you get started or whatever. But I think that's a big part of it. It's are you taking responsibility for yourself and your trading, or are you trying to shove it off on somebody else, or are you trying to get the quick answer, like that kid who copies off of you in class or whatever in elementary school. So I think that's a big part of it also to consider.
Yeah, and to your point, the way trading is set up now, you can just copy other. If that's what you're doing, there's plenty of platforms out there like eToro or whatever where you can just link up your account to the other traders, and when they take the trades, you will. So you don't have to worry about it. It's like Signals on steroids, where you don't. So if that's your thing, you can go ahead and do that. That's fine. But if you want to learn how to trade, I think one of the big aha moments is when you get to that point where you're like, I don't have to take a trade, right? Yeah. Even traders who specialize in one market. I'll tell you a quick story. So there was this guy in Africa, best trader I've ever seen in my life. Amazing, right? And every year he would sit down and go, which pair am I going to trade? And he traded the pound yen for the whole year. And that's all he would do is either buy or sell the pound yen all year long. So he was a market specialist. He made so much money that his country didn't want to let him out. They wanted to take his money and like tax him and all this stuff because, you know, he could have been a significant contributor to the economy, and he wanted to get out of Africa and go up to Europe and take his family. So they were playing games with him, not allowing visas for his family and stuff. You know, it was a big mess. But yeah, so that's, you know, and so even him, my point is, circle back around. My point is, even this dude who just traded the pound yen still had days where he sat down, fired up his computer, he looked at it and he said, I don't know. Yeah, I don't know. It's okay to say that. It's totally cool. You know, you don't have to know. You don't have to know as a trader where it's going to go. It's totally cool to, in fact, that is my most common response when I look at the charts is, don't know. You know, I just don't know. So that's cool. That's totally cool, man. So yeah.
Quick question on that. How did he determine which pair he wanted to trade?
I don't know. Like he would just like, I don't know if he was reading the news or he just had a feeling like, I think the pound yen's going to kind of, you know, skyrocket this year. Yeah. You know, he was a guy I met through Colin. Do you remember Colin Jessup?
Yeah.
Who sadly passed.
Yeah.
Awesome Canadian trader. Really cool guy. Traded for 3 hedge funds. Amazing dude. He was like, I met this dude in Africa through Colin. So it wasn't really, you know what I mean? And he was like totally legit, totally kind human, all that stuff. And they had worked out that they were trying to get, I think, from Africa, instead of going straight to Europe, they're going to go to Dubai or something to try and get out of town. But it was like I said, like the government was like holding back family members and stuff and making it really tough on him because they wanted a piece of the pie. You know, they saw what was coming through his account, which is crazy when you think about it. But I mean, it just points out, like, you don't have to be a trader that trades, 35 markets like I do. You can just trade one. You can be a market specialist. It's totally cool, man. Mm-hmm. Totally cool to do that. If that's your thing. Yeah.
Yeah. I mean, there's a wide range of ways to be successful. So find yours. Yeah. All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I need to grow my account faster.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, how's it going?
Hey, good.
Pretty good? Yeah. So I had a question from a trader, and he was working on his back testing, and he was like, how many trades should I get in a certain amount of time, right? Because he was doing daily trades. And so one of the things I think, like, I know I get a lot of people, like when I post videos on YouTube and stuff, people will say things like, oh, yeah, but you only had one trade in the last 6 months. I'm like, yeah, well, it was like one pair, you know what I mean? And that's something that I feel like is misunderstood. The relationship between how frequently you trade and the trading system, it really depends on how many markets you're following. But more than that, you have to actually have the data for those. So I'll give you an example. Like I used to trade a lot of reversals back, before I wrote the Naked Forex book. I was mostly doing reversals, right? Mm-hmm. And I was trading a lot of dailies, a lot of daily charts before I moved to 8-hour and 12-hour and stuff. One of the things I realized was that I thought in my mind that these are simple strategies. They work across the board. And to some degree, that's true. But actually, things like daily kangaroo tails, reversal kangaroo tails on the yen didn't work. And the big shadow, my friend Colin, he texted me or emailed me or whatever years ago, and he was like, dude, I've been trading the Canadian dollar and the big shadows have been wiping me out this year. You know what I mean? Mm-hmm. I think that was just kind of like a yearly, like an aberration, like, over the year. I just want to talk a little bit about the relationship between the number of trades, how the frequency of trading a system, and your back testing. Because sometimes people will go, well, I back tested these kangaroo tails on the Euro daily, so I'm going to trade it on the Euro pound, the pound yen, the New Zealand CAD and so forth. And you really need to get the data from the other markets, don't you? Like you really do need that data. And you also need to realize that you can easily bump up the number of trades you take simply by adding more markets, provided that it works on those markets, right?
Yeah.
So is there anything that you can, add to that or your experience in terms of back testing versus number of trades per week, per month, or whatever?
Yeah, I mean, you know a lot more than I do, but just from personal experience, it's like I just backtest until I feel that I'm confident that the strategy works, and it doesn't necessarily have to hit a certain number. Because if you do like a daily chart or a weekly chart, it's going to be way less trades than like a 1 hour chart, right? So for me, that's just what it is. But you obviously know more about this. So what do you say about like minimum number of trades?
Well, see, the underlying question really is it's a veiled question, isn't it? What they're saying is I'm not getting enough trades. What they're really saying is I need to grow my account faster. You know what I mean? Like that's
okay.
Do you know what I'm saying? Like that's how I read that. Like when people say like that's not enough trades. So like when these people come in and they say things like, "Hey, that's really great that you have these kangaroo tails, but dude, you only have a certain number per week or per month or whatever. That's not going to work for me. You need to trade the 1 hour charts or whatever." What they're really saying is I need to increase my returns. That's what they're saying. They're not really like, they want action. And I understand that. I was the same way when I first started trading. Like I used to sit down and think, where's the market going? Instead of sitting down to look at and asking the question, is the market offering a trade? Like now when I look at the charts, I just think, is there a trade or not? And usually the answer is no. But what I used to think was, well, I'm a trader. I have to sit down and I have to know where the market is going, right? So I think there's a mind shift there as you get more experience. But I also think that you might want to look at other ways of increasing your returns if that's what you're really asking, which I think is mostly the case. Not always, but a lot of times that's what traders are saying. They're saying, I need to grow my account faster. This is going to take too long. What's going on here? I don't like this sort of thing. So money management is a way to do that. Changing your exits is a way to do that. So looking at risk and exits and how those interact with your equity curve is probably a much more fruitful area than trying to multiply the number of trades you take by trading the 5-minute charts or whatever. Like to me, that's what I mean. Like
it rarely works.
Yeah, exactly. I mean, there's a lot of things working against you. We've talked about that in other podcasts, but so those are kind of my thoughts.
Yeah, no, totally. I mean, some people could think also about like pyramiding, right? I used to trade this one thing where if it got close to the target, then I would have like 3 orders, and then I'd have the alert on my phone, and I'd wake up in the middle of the night, which was not good. But it did multiply the account. It's just that I couldn't handle the swings. But if you did that in a more measured way, then that's another way that you could make more money out of each trade, right?
I used to do that too, and I wrote articles about that because it's the opposite of what most people do. Yeah. Most people take more trades when the market goes against them because they think, oh, it's an even better deal now, right? Like stock traders are famous for that, averaging down or dollar cost averaging, I think is what they call it. But where you just keep buying no matter what, assuming it's going to go up. It's kind of similar to the idea of you're buying the euro, you think it's going to go up 300 pips and it falls 100 pips, so you buy some more, right? But most traders don't do the opposite, where you keep stacking orders as it gets closer to your target. That's a great way to do that. You can automate that too. I used to do the same thing, get up in the middle of the night and have to manage it because it's scary when you have, let's say you have 3 lots on, and then once it gets halfway to your target, and then you've added 2 more, and then it gets a little bit more, you get 2 more, and then 2 more, and then before you know it, you got 9 lots on a trade where it was 3 lots, and then it's like, so it can get a bit scary like that, but it can work too, and you can automate it, and there's lots of tools out there for that sort of thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
But I think overall, this idea of I don't have enough trades could be related to where you're at as a trader, you know, in your development. It could be really a veiled question of how do I increase my account size faster? And again, there are other ways to do that other than taking more trades. But I would definitely, if I were a new trader, I would definitely want to stay away from trading the lower time frames. To me, that is the tricky thing to do. To try and add, you know, more trades by trading the lower, like the 15-minute charts or whatever, to me there's a lot working against you there. So I would definitely steer clear from that.
Yeah, I mean, there's so many things like the rollover and, you know, just the spread can vary so much, all that kind of stuff, right?
Yep. Yeah, exactly. Yeah.
Okay,
News, cool. All the commissions, all that stuff. Yeah.
Yeah, exactly.
Yeah. All right.
Thanks, Walter.
See you.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If we look at the success rate of traders, you know, there's a lot of places say like 90% of them fail, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this might be kind of a weird one for most people, but I got to thinking about a person's sense of identity and how that relates to trading. So do you think that a strong sense of identity, personal identity, makes a better trader?
It depends. Like most thing in life, I would say like a lot of times you'll see these gurus and they're like really strong personality, especially if they come from the institutional background. Like a lot of the guys that were on the floor, they're physically imposing people.
Yeah.
Like they're used to being kind of dominating, and like in the floor, that was important, right? Because you had to, like, you wouldn't be heard. You wouldn't get your orders filled if you didn't catch someone's attention, right? So some of those guys can be, and then also just when you trade a lot of money, there's a lot of ego involved. There's a guy actually right around the corner from me, and he had a big, huge fund. And I don't know if you heard about it, but there was somebody in January of 2020 that was putting in a lot of orders, a lot of short orders. He went short the CAD yen, like short the indices and stuff like that, like put on huge orders, a lot of options and stuff, assuming that the market was going to tank. This was in January 2020, where most of these orders, and people were like, who is it? Like, there's a lot of noise, like, who's putting in this mystery trader or whatever. Well, it turns out it's like my neighbor, not my neighbor, but, you know, he's around the block. He's literally like a block away, right? Yeah. And a much nicer house. And anyway, he and his wife both run hedge funds, and apparently he had he bought a bunch of mask companies too. Did all this in January 2020, assuming that that we were going to have the big crash, right, from the virus. And so I found that fascinating, right? That he was like, he basically went all in, you know, with his fund. And he was like, and it cashed out, and he made like 2,400% or something like that. It was extraordinary, right? Because obviously the market did fall in February and March in 2020. So after, you know, all the news came out and the markets finally kind of panicked. So, you know, that kind of thing, and George Soros is famous for that, you know, taking these really strong positions against. So when you do that, that's an ego feed. You know what I mean? Like that can really mess with you. And what that means is later on, you might get to a position where you're just completely convinced that that's the right side, and maybe you're not on the right side, and maybe you go full bore like Soros and Andrew Barry, I think that's his name, the guy from The Big Short, and my neighbor guy. Like these people can get really, you know, that I think that can be a problem when the ego gets involved. I'm not saying that those people have that. I'm just saying that's definitely potential, right? That's definitely a potential for that when you have these big, huge wins. It's like the old adage, they say the worst thing that ever happened to me when I was a trader is the first trade I took, or the first week, or the first month, or whatever, the first time period, I made a bunch of money. That was the worst thing that could have happened to me, right? You know, because then I think it's easy. I think I know what I'm doing, and blah, 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 and it was all downhill from there. Like you hear stories about traders where that sort of thing happened. It kind of happened to me, where it wasn't really me. It was my friend who tripled our account the first night or the second night that we were trading. But but then we lost it on Fridays by the end of the week. But that kind of thing is true. But what I think, the other thing that I think you might be getting at, I'm not sure. So there's that ego part of it, but there's also a sense of confidence that's needed, right? You can be overconfident and you can really go for it because you think you know what's going on and other people don't, right? Like you're the mind that understands the markets and all that stuff. Especially if you're into fundamentals, like fundamentals get really into that. People that are into fundamentals, I think, can get really into that. But the other side of it is having the confidence that you need as a trader to pull out of those terrible drawdowns. Mm-hmm. And that to me is discretionary, systematic traders. That's a real big deal because that's when you're at your weakest. So you and I both know that when we're in drawdowns, that's when you're at your weakest. That's when you are most susceptible to making the big mistake. Mm-hmm. The big mistake could be doubling down, taking a big, huge position to make back those last 7 losers. It could be trading, changing your strategy and modifying it and saying, oh, well, if I had done this instead, I would have lost, would have avoided all those losers. Or it could be that, thinking that the markets have changed, all these algorithms and robotic traders and institutions have changed the market, so my system doesn't work anymore. Like all of those things that creep up in the moment of doubt, you need to be able to have the ability to squash those. Mm-hmm. It's true that those things could be true, but in most cases, it's not. In most cases, it's just the demons that are creeping up and scaring you. Mm-hmm. That's how I see it. So I think you do need that confidence. You do need that ability to rebound from poor periods of trading. But you don't want to swing so far that you think you are like Mr. Market and you know exactly where things are going to go. So that's my take on it, is that resilience and confidence is really important. So that aspect of your personality is key. But also, being open to new ideas is good too. Like being open to, like, for example, if you just trade trend following strategies and you never take reversion to the mean strategies, that's a missed opportunity to diversify. So being open to new ideas and stuff like that and build strategies that are complementary, that can also be like a personality fault too. But yeah, so those are sorts of things that I think about when I'm thinking of that. What about you? What are your thoughts?
Oh, yeah, no, I was talking more about like having the confidence to come back. And I think if we look at the success rate of traders, there's a lot of places say like 90% of them fail, right? I think that's really indicative of how people think in the general public. Like you see a lot of people following whatever's on the news, or they're following this guru, or they like to follow this guy or whatever, right? And they don't really develop that sense of their own personality. And I think that's really important to having that confidence to go forward in trading, especially when most people don't know anything about trading, right? So that's kind of more what I was getting at, but you have a good point there. You can really get overboard and you can start to think you're the man and you're going to just make all this money.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, you'll see it with these guys that are veterans, especially in the institutional world, like in the reason why I say this, because I hear people talk about it. They go to like trader groups because they have these trader groups in Australia. It's called the Australian Technical Analysis Association, ATAA. Okay. And so they'll have these talks, and I've done a few of them or whatever, but like people will come to me that had gone to the talks, and they're like, dude, that guy's crazy, man. He's got so much ego and stuff. And they tell me, you know what I mean?
Yeah.
But now I think what's happened is some of these chapters, not all of them, the Melbourne one's really good and stuff, but some of these chapters, what happens is they have like, I don't even know if they meet anymore, but when they did, they had free drinks. So people would go there, and that like a lot of alcoholic traders would show up. Because of the free drinks, that totally went downhill from there. But yeah, so you'll hear things about, oh yeah, so and so came, like a famous trader, and they'll be like, dude, that guy's so much ego, and stuff like that. So it's interesting. Yeah, it really is interesting. And I think what you were saying about the 85% or 90% of traders that fail, what's interesting about that is Like I think of other markets. Like people say that about like what you and I do, trading the markets. But there are other markets that people just assume that like everyone makes money. For example, like real estate.
Yeah.
Everyone just assumes that if you get into real estate, like it's always going to go up. Like to me, that's so funny because I look back at my life and like what happened with my parents. Every time they sold the house, it was at the bottom, and every time they bought, it was when they were getting really expensive. Like it was like it's like magic. Like it really is amazing to me. And I don't think that's a unique thing. I think there are a lot of people that pile in when there's a frenzy right before the top, and a lot of people that go, "Oh my gosh, this this neighborhood or this city or whatever, it's done now," and they sell literally at the bottom. And I saw that close up. I mean, looking back now, I see what happened. I didn't kind of realize it at the time as a kid, when we were moving around, because I moved around quite a bit as a kid. But yeah, it is interesting to me that like everyone says that the markets are so hard to trade, but then some markets like real estate apparently is just like, everyone has the golden touch, whatever. I don't know. It's crazy to me.
Yeah, no, I saw this story, this news story about houses in East Bay, San Francisco, Berkeley, Oakland, and all that. And some people are offering like $1 million over the asking price. And that just like blew my mind. Yeah. But that's a perfect example of like, people think it's going to go up forever, and it probably won't.
Yeah. It's so true, man. It's so true. Well, we have over here in Australia, we have interesting. They have off market, so you can buy a house that's off market. And so I always ask the agents, I'm like, how is it that they're selling it and it gets sold, but it's not on the market? Doesn't that mean it was on the market? And so I guess what it is, it's like people that are like they're going to sell their house at a certain time, because over here in Australia, everyone wants to sell their house in the spring, because in the spring is when everything's nice, and apparently the prices go up every spring. I don't know. That's the theory, right? You don't want to sell in the winter, which as we're recording this, we're going right into winter right now. So everyone wants to wait until springtime to sell their house. So you have these off-market places that are not for sale. No one knows that they're for sale. But if you go to an agent and the agent knows someone, and they knows the owner or whatever, then you could actually buy it. But the thing is, you have to pay the price,
spring price,
for the spring price, the October price, the September October price, which is spring over here in Australia. You can't pay the winter price. It's so funny. The whole thing is funny to me. I just think it's hilarious. But yeah, whatever. Yeah, it's the way things are, right?
Yeah. All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
This is Dave Thomas from Utah, reading Chapter 1 of The Count of Monte Cristo. And then it's like, then you get Anastasia from, Russia.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how did you optimize your sleep, or do you even optimize your sleep? And has that helped you in trading?
I did, and then I had kids. No, so yeah, actually, I'm thinking a lot about it. So these are the things I'll do. I'll give you guys quick. So yeah, so what I used to do before kids is I had a really good schedule where I would just wake up naturally, check the charts, because the New York candles close between 7 a.m. and 9 a.m. over here in Sydney, depending on the time of year. So here in winter, the New York candles close at 7 a.m. and then in summer it's like 9 a.m. right? And then there's like a month where it's actually 8 a.m. when there's between time changes in the States and in Australia. But anyway, so what I used to do is just wake up, I would check the charts, make sure everything's good, like there isn't anything that needs to be managed, like move to break even or whatever, and then I would go for a run and then come home, eat, and then maybe go for a surf in the afternoon or something like that, right? And then at night is when I would put my orders in, because around 6 o'clock or so is when 5 to 6, 7. That's when the markets open over in London, and that's where I wanted my orders get triggered, like London or New York. Well, and so, and then I would just go to sleep, and the next morning again, check, make sure, did I get stopped out? Did I not get stopped out? Should I move to break even, whatever. So it's pretty simple. It was pretty good. Not having an alarm clock is awesome, right? Not having to get up at a certain time. Well, so then you have kids and they're up in the middle of the night, blah, 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 and all that stuff happens. So now what I've learned to do is supplements and watch the diet. So the couple of things. What I like to do is I don't eat late at night. So after about 7, 8 o'clock is when I stop eating for sure. Like I don't want to be eating at 10 o'clock or whatever, right? The other thing I do is I take magnesium. It's actually magnesium and calcium and vitamin D mix, but I mix it up and it's like in a liquid thing and you drink, it's powder. It makes like liquid and drink it. What I found is that having the magnesium before you go to sleep, about 30 minutes or so before you go to sleep, is amazing. It makes it so much easier to sleep. The other thing that's really good, especially for traders, is you can get these blue light filters like on your phone, like these apps and stuff. I don't know if it works for Apple. I heard that it might not work for iPhone. I'm not sure, but what these things do, and they have the downloads too. And actually, we'll put some links in the show notes for people who are interested. So what that does is it cuts down the blue light. So the reality is, I went and saw a talk the other day, psychologist, and she was talking about how if you have blue light within an hour of the time that you go to sleep, which for most traders is going to be the case, actually. I mean, let's face it, you're probably going to check the charts right before you go to bed, right? Yeah. especially at where I am, because it's New York or in London, like the markets are raging, right? So she said the blue light from the screen, if you do that within an hour of going to bed, it actually impacts your REM sleep. The REM sleep is the deep sleep. It's the most important sleep of the night, right? It's what you get less and less of as you get older. When you're a baby, you almost go straight into REM sleep, which is the deep regenerative sleep. Your brain, it's good for everything, right? It's good for your body, your brain's connections, everything. So what she said was, if you have blue light and out within an hour of going to bed, that will drastically reduce your REM sleep. So I was like, well, how do I get around this? Well, blue light filter. So you can use these blue light filters that change your laptop or your monitor screen, definitely for your phone and that sort of thing, so that you're not getting that blue light right before you go to sleep. The other thing you can do is, if you get good at guided imagery, you can listen to some guided imagery stuff about, relaxing your whole body, or it's kind of like self-hypnosis. It's very similar. If you listen to those for a while, then you get really good at kind of relaxing your body. So when you're lying in bed and you can't go to sleep, just getting good at relaxing, from the toes up to the head, slowly, kind of each part of your body, you're putting it, to sleep, right? So that's another thing. So those are things I would say. You can look at supplements. Obviously, you don't want to have caffeine, right? Like, I'm off the caffeine, and definitely not before. Like, if you're going to go to bed, let's say you go to bed at 11 p.m., you don't want to have caffeine, at 6. Like, if you can not have it between 6 and 11, that's ideal, right? Within 5 hours. So if you go to bed at 9, you don't want to have it, at 4 or whatever. Like, it's really that's a killer too, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And vigorous exercise is good, but you don't necessarily want to do it right before bed either, right?
Yeah.
So like, vigorous exercise is really good in the morning or in the afternoons, but not so much, around the evening time. So those are the biggies that I've learned over time. What about you? What have you got going on?
Probably 3 or 4 things. Like, I found, I used to have an Oura ring, so it measures your heart rate and all that stuff while you're sleeping. So I tried that out for a while, and it basically said I need about 10 hours of sleep to really get a good night's sleep. So
can you tell me a bit about, well, is that like connected to an app or something? Is that how that works?
Yeah. It's Bluetooth. It connects to your phone, and then it gives you like a sleep score at the end of the night. So.
I thought it was like a mood ring. Like you said, Oura ring. I was thinking it was something you picked up from a hippie, but this is like technology, right? This is like a technology. Yeah, gotcha. Okay. Yeah.
It's actually pretty well built.
I believe it. Yeah.
Yeah. But yeah, I mean, it's 10 hours. So I kind of use that as my gauge. Like if I get 10 hours, I know I had a good night's sleep and I feel good. If I can't get 10 hours, then I know I kind of have to push through it. Another thing is, like you mentioned, the blue light stuff. I wear these blue light blocking glasses.
Yeah.
So these help
Gaming
a lot.
goggles. Yeah. You can get gaming glasses. Yeah, those are good too. Yeah.
Yeah, definitely. And then we tried recently this thing called Ned. It's like marijuana droplets. It's got marijuana and CBD in it, and then that helps me sleep if I can't sleep.
Right.
And then basically just earplugs and an eye mask has been huge for me. That's probably the biggest thing, and I just sleep all night when I do that.
Yeah, really interesting.
So that's about it.
Yeah. You could also, I just thought something. You could also use like a routine where you listen to subliminals, and so the sound of the ocean on the subliminals, like the inner talk subliminals, I'll link those up too in the show notes. That works. Like routines are really good with kids. Like they do a certain routine so they know, okay, now it's time for me to go to sleep, right?
Yeah.
But yeah, you can do that too. What was the other thing I was thinking? Oh, the other day, your ordering reminded me of this. The other day, I probably because they know I'm a sucker for this, I saw some ads because I love these sorts of things, kind of like the ordering stuff, you know?
Yeah.
I saw some ads where they said it's like a breathing analysis. You blow into a thing, okay?
Yeah.
And then it tells you like what your last, have you heard of it? Like you've seen it, right? It tells you like what so you blow, like it's like a breathalyzer, I think, similar to like what the cops have, but you blow into it and it'll tell you your last meal had too many carbs and this and that, and here's where your body metabolism, that like it basically gives you all this printout of information about your body based on just breathing into the thing. And I thought, whoa, that is insane. So, cause that's the kind of, I mean, it kind of reminded me of the Oura Ring, like kind of give you some feedback on where you're at and what you should be doing. I don't know if it tells you if you're sleep deprived or anything like that, or if, you know, like you need more sleep or this or that, but it was really fascinating. It sounded like it was more kind of like along the lines of diet. So, you know, like it kind of is kind of gauging, you know, where you're at now versus what you ate recently. It's telling you, you know, yeah, you probably shouldn't have ate, you know, that many calories, or you probably had too many carbs, or you probably, you know, needed more fat, or, you know, something like that. Like it sounded like that's kind of was the thing, but there might've been other stuff involved as well. I hope I see another ad for it because I want to check it out. I didn't really have time to check it out at the time, but I wanted to learn more about it. Yeah.
That sounds cool. That's super cool. I see.
Yeah. I was
going to try it out, right? Yeah.
Yeah, I know. Yeah, I know. I was like, wow, I've never like, you know, like all these things like that you and I are both kind of into, like Muse and the Oura Ring and the what's the thing with the two Neurophone and, yeah, all those things, you know, subliminals and stuff. Yeah, so I just thought it was pretty cool, and I wanted to mention that to you because I know, you know, you're like me, you know, you kind of like things like that.
Cool. Yeah,
it sounds really cool.
I'll check it out.
I'll look into it. Yeah. I'll see if
and one last thing on the when you're talking about music before going to sleep, I found that listening to audiobooks is probably one of the best ways to fall asleep. But then I always lose my place in the book, so it doesn't really work too well. Puts you to sleep.
Yeah, it's so true. It is true too, especially if they're monotonous. Like, have you ever heard of? Just as an aside, have you ever heard of LibriVox? So there's this is free. I'll put a link down there. But LibriVox basically is free Audible, like Audible, the Amazon one. It's like Audible, but you go there and you download these MP3s of books, and they're like a lot of classics and stuff. So like one time we were on this massive road trip. We listened to The Count of Monte Cristo, right? This long book. But here's the problem with LibriVox. Problem is you can volunteer, anyone can volunteer to read a chapter of a book. So what ends up happening, you're listening to The Count of Monte Cristo, right? And what ends up happening is you get like chapter 1 will have Dave from Utah reading the book, right? And sometimes they'll even say like, this is Dave Thomas from Utah reading chapter 1 of The Count of Monte Cristo. And then it's like, then you get Anastasia from, you know, Russia reading the next one. And like, it's kind of like a disconnect, you know what I mean? Like each chapter is and sometimes we were listening to it like on our road trip, my wife and I were like, and then it would be like, oh no, not Tim again. He's awful. You know what I mean? Like, cause sometimes people are really good. Like they give characters and stuff. There'll be like a little bit of like, you know, they'll kind of use a different voice or something for different characters. And then sometimes people are just like so monotonous. They just read the book like he busted down the door and then he, you know, you're just like, but it's really good for putting yourself to sleep. So
tip, if you like listening to books that you don't care about losing your place, you could download some really boring LibriVox chapters.
That sounds great.
That could work. Yeah, that could work. Just need to find a nice boring one.
I'm just picturing the Russian accent versus the the Southern drawl, and then like all in the same book.
yeah, it's terrible, man. It's so bad. It's like literally it's like Russian roulette when you're listening to it, because it's like every chapter you don't know what you're gonna get. You're like, oh, chapter 13 is Dave again. No, it's just crazy, and you just keep wishing that. If you have a good reader on a chapter, you keep wishing, please do the next one. Please do the next chapter. It is kind of funny. Yeah. But that's LibriVox. Yeah,
Awesome.
LibriVox. Yeah.
All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Number one, knowing your personality. And then number two, what's the goal for your trading? Is it to build this huge account, or is it to have steady gains, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I got a question from a trader this morning, actually. And he was talking about backtesting. And he said, what can I do? Like, I know that backtesting is really important. I spend a lot of time in Forex Test and all that sort of thing. But where should I be focusing on? That was his main question. And so we were just chatting a minute ago, right before this call. And I recommended that he spend a lot of time, and I'm curious to see how you do this. So I asked him to, really dig deep into exits. The reason why this is important is because that's where I've found a lot of sort of the easiest ways to improve trading systems. So for example, let's just assume that you have a signal that's pretty good, like your entry rules are pretty good at identifying whatever type of move that you're trying to capture, whether it's an end of a trend or a reversal or a trend continuation or a breakout or whatever sort of thing you're trying to catch. And then but you're not happy with it for whatever reason, like the bottom line is it's not making enough or whatever. Typically what I've found is that by tweaking the exit, it makes a drastic difference. So for example, there are some exits that kind of follow price along and are really tight. Those exits are really good at allowing you to first of all, this is a psychology podcast, right? Yeah. So you got to think about what kind of trader you are, right? Like, are you okay having a trade go 200 pips in your favor, and then you have to give back 75 pips so that you only end up with 125, right? Are you okay with that? Is that okay? Or are you the kind of trader that is happy if you have a trade where you make 125 pips and you get out, you're done, and then you watch and it goes another 75 pips. It goes a total of 200 pips in your favor if you had just held on.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Right? Those are two different kinds of scenarios. It's the same result, but of course, there's two different kinds of scenarios for different types of people. One of those is going to be more stressful, more difficult to deal with. And so, you got to kind of have to know that. So when I was talking about with exits, you have different types where you have some that are really tight. Those are really good at increasing your win rate. Those are really good at getting you out of bad trades. Those are really good at making you feel like a winner because it's so easy for you to capture a little bit of profit if it would have been otherwise like a loss, for example, right? Like those really tight exits that hug price as it moves are good at that. However, they're typically terrible at capturing the large move. Yeah. And the reason why is every little sort of retracement move against your expected direction, whether it be up or down, those little jigs are more likely to pop you out of the trade with those really tight
trailing exits. Now the looser, the wider exits, those are bad in terms of keeping your win rate up because they will reduce your win rate. Historically, we've seen this. And then they'll also, trades that go a little bit in your favor, they often don't make any money at all, and they end up as a full loss or a partial loss. They're really good at capturing the lion moves, the big moves, the moves that make your year sort of thing. So those are two different types of traders that would be better with those types of exits. So the trader that's okay with the move that goes 200 pips, right? And then it retraces and goes 75 pips against you and you get out 125 pips. The trader that's okay with that is going to be the kind of trader that's okay with the looser exit, the one that's kind of trying to make that, bag that 600, 700, 800 pip move. And then the trader who's more comfortable taking the 125 pip profit and then later on seeing the market go another 75 pips in your favor, that trader is probably more suited to the tighter exit. So that's kind of the thing I was explaining to this guy. And he's a really good trader. He just kind of, he's at that stage now where he's getting comfortable with his strategies. He just wants to improve his, his bottom line. And so exits is a really good spot for that. But again, you kind of map what you believe, what you're comfortable with, what you like to deal with in trading versus those things that are going to be really stressful for you.
Yeah, no, totally. I agree. And I think you really have to go in with a goal in mind, right? Like, number one, knowing your personality. And then number two, what's the goal for your trading? Is it to build this huge account or is it to have steady gains, right? And I think also there's a tendency to try to optimize the entry also at the same time, which usually leads to disaster. So a lot of people try to tighten up the entry, try to tighten up the stop loss. But I think in general, it's just a better idea, like you said, to try and tweak the exit. And then maybe you could get some gains in the entry, but generally the exit is going to be the thing that really makes or breaks the trade, at least from what I've seen.
Yeah, absolutely. So exits, stop placement, and your risk rules, those are the big ones, I would say. Entry, as long as you know it works, like as long as you know it identifies the type of market you're trying to get in. And it's funny because that's where I spend all my time. And most traders actually, we spend all of our time on entries, especially when you first get into trading. Like you try, like, I don't know what was like for you, but like I would find a system or create a system, kind of read a book. Like there was a book by, I don't know if his name was Carter or something. Anyway, it had all these entries and stuff in it. And there was another book by The Complete Trader by Jake Bernstein. There's all these books that I was reading, right? Yeah. And I started getting these ideas. And so I would try the system. And then I did point and figure charts where I wrote them out on graph paper.
Yeah.
All that stuff. And then I would just go, oh, this sucks. This doesn't work. And I'd throw it away. And in hindsight, what I really should have been doing is keeping that front end part of it and just tweak the back end. And that probably would have given me more systems that I would have, enjoyed trading and probably could have stuck with. But, it's like anything, wisdom is great. It's like right when you figure out life, then you die. You know what I mean? It's that sort of thing, isn't it? Same with trading. Like right as soon as you figure out trading, it's like, oh man, I don't have many more years to trade. So yeah.
I can't even imagine how many great systems have been thrown away just because, you didn't tweak the exit for your personality, right?
Yeah, it's so true. Yeah, it's so true. Yeah.
Cool.
So we agree on that. So exits is definitely a spot to check out. Yeah.
Yeah. All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Whereas now yoga is no different than a triathlon or whatever. And it's like half men, half women, like everyone's doing it. You know what I mean?
Yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, how do you use meditation in your trading, and how have you seen other traders use it?
So I like to use meditation, or what I call self-hypnosis. I like to use that in a couple of different ways. One is before I look at the charts, I like to get into a nice mindset. So where I live, that's a morning time thing. So what usually happens around our house is it's a frantic morning, getting the kids ready for school. And then as soon as the kids and everyone leaves the house and I have the place to myself, then it's like, then I can kind of relax. I can plug into hypnosis. Actually, I'll give you guys a link. If you're interested in a Forex hypnosis, I worked with a company called Hypnosis Downloads, and we created a one for Forex traders, because the one that they had for traders was pretty crap. But you guys can, it's really cheap, and you can check that out. The link in down there if you guys want it. So that's one way to do it. You can listen to binaural. What is it called? Hemisync or whatever. What are the ones that you use? Hemisync or binaural beats or whatever. They're quite similar. Also, that's another way to get you in the right mindset. What I'm trying to do with that is to use the meditative state so that when I look at the charts, I don't have baggage, right? Like I want to see it as clearly as possible.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
The other way to do that, of course, is just to go away from the charts and don't look at them for several days. That's another way to see them really clearly, right? Go on holiday. But so that's how I use it. The other way I use it is for solutions. So let's say that, for example, you're trying to come up with, and it doesn't have to be even trading related. It can be anything in your life where you're like, you have this issue and you know that you can figure it out, but you don't know what to do. You can do this, get into like a meditative state as you're falling asleep. It's called the hypnagogic state. And like one way to do this is make a tight fist. And as you're falling asleep, what you want to do is you're telling yourself that you're going to find the solution. So what you're trying to do, it's almost like a mantra as you're falling asleep. So you make this tight fist. You're in bed, you're falling asleep. It could even be just falling asleep for a nap. It doesn't have to be like, nighttime or whatever when you can go to sleep normally. And you're telling yourself that when you wake, you're going to have the solution to whatever the issue is. I'm going to come up with a solution tonight and I'll have it in the morning. I'll come up with a solution tonight, I'll have it in the morning, right? And as you're falling asleep, what will happen is your fist will relax a bit, right? And that's when you know that you're in that hypnagogic state, right? And this is the spot where historically a lot of inventors like Benjamin Franklin, a lot of people that have been really good with the creative side of life, they've used this hypnagogic state to come up with solutions. Sometimes what will happen is as your fist is relaxing, you will get the solution right then and there, right? You've probably had the experience, Hugh, where in the morning, you're kind of waking up, but kind of falling asleep sort of thing, I mean, it's kind of the same, but it's when you're falling asleep. And sometimes, I don't know, like I keep a notepad next to my bed because when I'm falling asleep and I'm going in hypnagogic, sometimes I get my best ideas for training during that time. So I want to be able to record them. But if you're trying to come up with a solution, you can definitely bag it then or possibly in the morning when you wake up. And you're in that hypnopompic state as you're waking up, and you can write it down. So it's kind of like seeding your subconscious while you're in a meditative state to work on something, and it kind of does it in the background for you. So that's something that I would definitely recommend if you haven't used that before. And like I said, I think Benjamin Franklin did a similar thing where he would kind of fall asleep with a bowling ball or a cannonball in his hand. So he would tilt his chair back, so he's kind of like balancing on his chair on two legs. And he'd hold this cannonball, and when he dropped it, then he knew he was falling asleep, and then he dropped the cannonball, and that would wake him up. And then he would like write down whatever he was, whatever the solution was he was working on, right? That sort of thing. So so that's one. Those are the two main areas: is sort of problem solving / goal setting, and getting into the right mindset for my charts. I know other people have used it for other things, like if you have anxiety about pulling the trigger or those sorts of things, like if you have like trading related mechanical issues, that's another thing where it can help, especially something like the hypnosis download that I'll put in the show notes for you guys. But those sorts of things would be what I use it for. What about you? How do you approach it? How do you you obviously use meditation, right?
Yeah. I mean, it's kind of similar. Like, yeah, like you said, number one, to calm myself down before trading or making any decisions. And then number two, to help solve problems or to, just come up with creative ideas. And the thing that works best for me is just to get into that meditative state and then set an intention and say you want to, like you said, figure out this problem or whatever. So you set the intention and then you just let your mind go blank. And then you don't think about the idea or the solution you want to see, and you just like listen to what comes in. And many times you can start to get ideas. You'll get like situations in the past that will help you figure out what's going on now. If you have a problem that you're trying to fix, a lot of times you'll find this little like cord that goes back to the source, and you can kind of trace it there, and then you can figure out what the solution is based on where it came from. So I think that's another way to figure these things out and to get some creative ideas.
So how do you do that? How do you do that? Like, how do you pull the cord or whatever, as you say? Like, how does that work? Like for you, or
yeah, that's kind of it's hard to explain if you don't do it. But like one thing I've done is like this thing called CAP. It's like a Kundalini awakening process or something, right? So you basically lie on the ground, and they play this really loud music. And it's all different types of music, and that's just to distract your conscious mind. So that allows you to let go and let everything else come in that wants to come in, right? So it's kind of the same thing. You just want to like put your conscious mind aside, and then all these ideas and things will start coming in based on the intention that you set in the beginning. So it's not really like pulling at it, but it'll just kind of start to float into your consciousness, and then you can kind of process it there.
Interesting. Wow, that's fascinating. And where did you learn? Where did you hear about this or whatever? I've never heard of it.
It's kind of just like trial and error.
Like, yeah.
You know, I realized that all these things like meditation and breath work and these, plant medicines like mushrooms and ayahuasca, they're all kind of the same thing. They just get you to that state. And then from there, you can start to do some work, and you get these ideas and things coming in.
Right.
As long as you set that intention in the beginning.
Yeah. It's interesting because I can imagine some people listening to this or watching on YouTube, whatever, they might be thinking that like some of the things you like when you start talking about like mushrooms or yoga or whatever, some of these things are like emotionally, they can be charged. You know what I mean? Like we're bringing like our experience into the equation, right?
Yeah.
There are certain words or things like I remember. When I was a kid, I was a magician. I did magic tricks and magic shows and stuff. That's what I did every weekend. I was always working at some kid's birthday, even when I was a kid. I was like 7-year-old magician going around doing, 6-year-old birthdays or whatever. Like, it was crazy, man. It was wild. But all the way until I was like 19, I did that. So anyway, there was a kid that came over, right? When I was a kid, when I was, probably 12. Mm-hmm. And he was like, I wanted to show him some magic tricks. He was asking about it. And then he said his parent, I think he was a Seventh-day Adventist, right? And his parents said that he came over one day and he's like, I can't play with you anymore. I'm like, what do you mean? He goes, my parents said I can't play with you anymore. I go, why? He said, because you do magic. I said, dude, these are like tricks. They're illusions, bro. I'm not doing like black magic or anything. You know what I mean? But it was like in their sort of culture that they grew up, magic meant something. You know what I mean? Mm-hmm. And really, it was better to be call it sleight of hand or you know what I mean, or whatever. Yeah, illusions. Like it wasn't really magic. That was all just like the stuff that you talk about to make it look cool. So it blew me away really. But it's the same thing with like yoga. Mm-hmm. Like I remember when I first took yoga class in like the 90s, early 90s or whatever, it was like all women, right? And it was almost like for some people, it was like there's like this spiritual attachment to it. Whereas now yoga is no different than like, a triathlon or whatever. And it's like half men, half women, like everyone's doing it. You know what I mean?
Yeah.
It's just, so I think when you say meditation or you say hypnosis or you say mushrooms or you say, Kundalini or source or thing. Sometimes those things get a little bit charged. Yeah. And so what I want to just make sure that people understand from my point of view, meditation and self-hypnosis is the same thing, right? Mm-hmm. I just think that sometimes we can close doors to things that might help us out just because of the
the emotional charged words that we use to describe them. So sometimes you can just, describe them in a different way. You know what I mean?
Yeah.
Especially if you're sharing it with somebody else.
Yeah. So it's more palatable, right? And we really do bring in our past, like programming, our past culture, our past whatever, from our parents, from our friends. So it's really important to be aware of that. And same thing goes in trading, right? Like I hear a lot of people writing off a trading system before they even like test it or try it. And like, dude, really? I mean, like, at least give it a try and see if it's going to work or not. And it might work. So it's the same thing.
Yeah. Yeah, it's exactly the same thing. Like the people say, well, you can only make money if you trade the trend, or did you notice that the only traders make money are the ones that have gone through this course, or like all these things.
Trade for a bank or trade like a bank, right?
Yeah. Oh, that is so funny. Yeah, it's true. It's true. Yeah, there's a lot to that. Yeah.
Cool. All right. Thanks, Walter.
Okay. Thanks.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Even if you have a 60% win rate, that's really good still. You just have to either get more trades or just, wait for the right setups or whatever it is. But
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question from a trader, and this trader is wondering, I'm working on becoming more consistently profitable, and I'm putting all of my time into this. How do I become more consistent? And so my thoughts are, if this is what you're looking at, I'm going to read between the lines here and say that this could be, well, it's hard to say. This could be a break-even trader, or it could be a trader that's actually making money. So one thing that I would say is you probably need to widen your scope. So when people say I want to be more consistent, that usually, it could mean that like Monday I make money, Tuesday I lose money, Wednesday and Thursday I make money, and then Friday I lose a lot. Like that sort of thing where it's kind of in and out. Mm-hmm. And so my thoughts on that are that you probably want to set up your goals so that you're looking at more of a wider scope. So instead of looking at making money every day, if you're trading the 4-hour charts, you're probably not going to make money every day. If you're trading the 5-minute charts, you're still probably not going to make money every day, but maybe it's possible to have more, many more profitable days than not. So the idea here is that you want to put a measuring stick at the spot where it's easily achieved, but also you can probably improve on it a little bit. So for example, the goal of making money every single day with a 60% win rate strategy isn't going to work, right? Mm-hmm. It's just not going to work.
Yeah.
If that's what I'm reading here in terms of like, this is my goal to be more consistent, it's like, I want to cut out all my losers, because if I cut out all my losers, then I'll be profitable, or I'll be more profitable. That's not really what you want to do here, is get to a point where the risk that you're taking, you're okay losing that, and that the rewards that you're pulling from the markets are in terms of like a weekly or a monthly goal rather than a daily or an hourly goal, right? So just stretch it out a bit further. That's what I would recommend this trader do. Again, I'm not sure if you're actually making money or not. If you're not making money, like you're kind of in that break-even stage, then I would look to, we've done other podcasts about, how do you use risk? How do you tweak your exits? Those sorts of things. But that's more down that path, most likely for you if you're break-even. But if you're at the point where you're making money, but it's just kind of not enough, then it's probably going to be more along the lines of changing what your goals are. And once you change those goals and you go, okay, I want to make a certain percentage every week or every month, that makes it easier for you to then adjust your risk to a point where those losing periods don't hurt as much, right? Mm-hmm. So you kind of need to know where you want to go. And then from there you can, and I'll put the risk calculator in the show notes for you guys can check that out and use that to kind of fine tune that. But really, I think it sounds like what is happening with this trader, it's really common too, by the way, that your losing streaks are so painful that you feel like you need to change something to get to a point where you're more comfortable with your trading. And it's probably just adjusting that risk based on the parameters of your strategy, and your goals are going to be a little bit further off than they are right now. That's the best guess. What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, no, I totally agree. I think it's just a matter of either zooming out, like you said, zooming out to a weekly or a monthly, usually a monthly for most traders, I think. And then, or just, having this expectation. I think there's a lot of marketing in the Forex education world about scalping or whatever, and you're going to make money every day just by doing this one thing at 5 o'clock or whatever. And I think that leads to people thinking that they need to be perfect, like they need to have like a 99% win rate or something like that, or 90% win rate, when in reality you don't, obviously, right? So I think there's that like perfection bias with a lot of people. And I think if you can overcome that and just understand, okay, even if you have a 60% win rate, that's really good still. You just have to either get more trades or wait for the right setups or whatever it is. But it's not necessarily about improving consistency. It's being comfortable with what you're trading, I guess.
Yeah, totally. Yeah. And you're right about the marketing thing. Like, that's so true. Like, people trying to, like, there was a trader yesterday and he was contacting me about, I need to qualify for some, LTS or whatever. And I'm like, I don't even know what that is, dude. And I said, the forum is not for you. I told him, I said, I'm sorry, but it's not, like, cause he was like, I really need someone to help me qualify. But it sounded like it was one of those things where like they have to, make so much money and they can't hold positions over the weekend, all that kind of stuff. Like, I don't know, but it's what it sounded like. I never heard of whatever he was talking about, but I just said, look, that style of trading it's possible, but it's for the vast majority of traders, especially new traders, trading those lower time frames and trying to make the, like you say, like the 80% win rate or whatever, that is going to be so frustrating for so many traders to try and go down that path. It is so much easier to go the other way and start at the dailies and work your way down. And it's like, like in sports where they say like focus on the fundamentals, like on volleyball or whatever, I guess they would focus on serving and digging or whatever. And, and then gridiron, they focus on tackling, and soccer, they focus on, kicking, passing.
Have you read the John Wooden book?
No, but I've heard about it. It's so funny that you said that. I heard about it this week. The coach? You mean the coach from UCLA, right?
Yeah. I mean, he was like national champion for 10 years in a row.
10 years in a row, yeah.
Amazing. Yeah. And I read the book, and he said, like what you're saying, the first thing he taught all his players was how to tie their shoelaces. And then really? The kids walked in there like, what the heck is this guy talking about? Tie your shoelaces, right? But he's like, no, if your socks are not on correctly, you'll be uncomfortable and you can't play. If your shoelaces keep coming off, your mind's going to be off the ball and on your shoelaces. So you got to learn how to do these two things first. And I think that's exactly what you're talking about, right?
That's awesome. That's someone just was talking about that book. Actually, my friend in high school, who was really good at a good friend. He's excellent at basketball. Mm-hmm. He actually played basketball in college. He went to the John Wooden camp when he was a kid, and he had a picture with him. I'm like, dude, that's John Wooden. Like, no way, man. He's a legend. Because he like coached Kareem Abdul-Jabbar, right? I think he was, all those guys, like they won like 10 years in a row or 11 years in a row. They won the championship. Yeah.
Yeah, it's amazing.
But it's so true, isn't it? It's like when you talk to these really good coaches, like in the athletics world, it's just focus on the fundamentals. And it's the same in trading. It's exactly the same in trading. Focus on the fundamentals. Yeah. Focus on, the biggest thing you can do as a trader to get better is to have eyes on how well you're doing right now in terms of execution, which means a journal of your execution. Like, that's the best thing, and have somebody else's eyes on your execution. Because if you have a strategy that works and you're not making money, then either the strategy stopped working, the market stopped, changed somehow, or most likely, it's your execution of that really good strategy. So it's so true. It just comes down to fundamentals: entries, risk management, exits. It's all rinse, wash, repeat, or whatever they say. It's just keep doing it over again. Yeah.
It's actually usually quite mundane, right? The things that make you successful. And I have this one thing that always blows my mind, but like I was at the golf driving range and I was terrible, still terrible nowadays. But this one guy was in the stall next to me, this older guy, and I guess he was a coach. So like he said, I am in pain watching you hit that ball, so I'm going to help you out. So he coached me for about half an hour, and he went through these very simple steps, right? And at the end of that, I was hitting the ball like straight and, you know, up in the air instead of hitting on the ground and killing all the worms. And, you know,
worm burner.
to this day, I can still hit the ball decently, like better than most people. But like, I was just amazed that, you know, those fundamentals in that half an hour got me to where I couldn't get to in like 2 years before that, right? So it really is about the mundane fundamentals.
Yeah, it's so true.
Yeah,
so true.
All right, cool. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Most of what we do is on autopilot.
Mm-hmm.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some trading psychology affirmations or things you can tell yourself or ways that you can implant those affirmations in your mind that can help you improve your trading?
Right. So there's sort of, the way I look at it is there's sort of two levels. There's subconscious and there's conscious. So subconscious would be putting those in without your awareness. So subconscious is by definition something that is outside of your awareness. So that could be as simple as having subliminal recordings going on in the background, like in your office or whatever, or while you're sleeping. We've talked about those before. You can also get into a state of meditation or hypnosis and then have those sort of programs, you know, seeded into your mind, those suggestions. They call them suggestions in hypnotherapy. You can also do it, we've talked about this before, like you can do it where you have like some things that you want to accomplish and you kind of see those as you're falling asleep in the hypnagogic state, right? Then there's the other side of it, which is interesting. Like one of my friends in high school, his dad wrote a book about this, which is weird. I never knew that his dad was even into that. But I did find one time I went to his house and they had these little sticky notes everywhere and it had all these positive messages like everywhere in the kitchen and everything. And I was like, dude, what's going on with this? He goes, oh, my dad wrote a book about, you know, positive affirmations. So that's a different thing. Like there's a book, actually, we'll put the link in the show notes. I think it's by T. Harv Eker, and I think it's called Secrets of the Millionaire Mind or something like that. Anyway, and he has like these 1 or 2 day events that you can go to, and I went to those and stuff like that. And what that is that's more a conscious seeding, right? So there's a whole, like if you go into like the coaches in the coaching realm, like coaching is this huge thing now, right? Mm-hmm. And a lot of coaches, one of the main messages that a lot of coaches have is this idea of congruency. So like, you know, in psychology, they talk about cognitive dissonance, where you believe something, but then, you know, you do something else. And it's kind of weird. Like why, if I'm not racist, why do I keep using these rude terms every time I see someone who doesn't look different to me or what, you know what I mean? Or what, you know, those sorts of things. In the coaching world, they talk about, you say things like, I am a profitable trader. Mm-hmm. I make money trading every month. You say things like that. And so the idea is that if it doesn't fit, then there's friction there and you do whatever it takes to kind of get to that point. Right. So that's a different sort of a thing to what I think those things, while they may work, I think the evidence is pretty clear. Most of what we do is on autopilot. Mm-hmm. And so where does that come from? Well, the best research we have today is that autopilot is your subconscious. And so I think that's where the main program is, and that's where we should really be focusing our energies on. So that's basically my take. What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, no, totally agree. And one thing I would add to that is the actual like saying of some sort of affirmation maybe before you start trading or something. Like you said, I am a profitable trader, or I make money every month. And I think sometimes the act of saying that is more powerful than the like some woman's voice in your earbuds, like saying, "Oh, I'm a profitable trader." I think it depends on the person, obviously, but I think that your subconscious is more likely to believe that as opposed to maybe another voice. But it varies by person, obviously. But
yeah, that's right.
Yeah.
And it's interesting you say that, because like sometimes, like in the Harv Eker book, you know, he talks about like saying things like that in the mirror and looking at yourself, and then like touching and doing all these things, like, and it's kind of like emotional freedom therapy, or
the freedom technique,
that one, right? The engineer came up with. So like it kind of reminds me of that, like some of the stuff in the T. Harv Eker book. But yeah, so what you're saying is, that's exactly right. That's one of the arguments for, you know, for that approach, is that it's like you, and like especially if you like look at yourself in the mirror and say it, you know.
Did you know that some emotion behind it, right? Like
yes,
just say, "Oh, I'm a profitable trader."
Yeah, you have to be like, like T. Harv Eker talks a lot about like just going overboard, so that if someone walked in the door, they go, "This guy's nuts," you know, like getting to that point. Yeah. But did you hear? And it's interesting. I always think about this when like I read something about what T. Harv Eker wrote. I always think of the research that you probably heard this too. A lot of when it's funny, I always get pegged as a shoplifter. Like just yesterday, I went to the mall. Right? It's so weird. Like people look at me, think I'm dodgy or something, and like I went to the mall, and I swear, like I can tell, because I actually had a friend in high school, and when I was in high school, my mom's friend was a undercover shopper. At a place, I don't even know if it exists anymore in the States, but it was called J.C. Penney. Like stores that they had.
Around.
Yeah, I don't think they're around anymore. But anyway, so she was a J.C. Penney fake shopper, and she went to work and she acted like she shopped all day long. That was her job. And what she was doing is she was looking for dodgy characters that were stealing stuff out of the store, right? And so, because back then they only put those big white tags on like only the real expensive stuff, right? So anyway, so that was her job. Anyway, I know a couple of things about shoplifting because I worked at a place called Marshall's when I was in high school. It's like where they have seconds clothes, like all these really cheap clothes. Anyway, it's kind of like Ross. Ross is kind of the same thing nowadays, I guess. But they taught us all this stuff about how to identify shoplifters. And they say, like, you always greet them and look them in the eye. See, how are you doing today? Is there anything I can help you with? Like, that's the first thing. Because shoplifters, a lot of times, if they have intent to steal, they won't look you directly in the eye. So every time I go into these stores, because I know what they're doing, I walk in and I look them in the eye and go, "Oh, I'm fine. You know, everything's cool. How about you? How was your weekend?" You know, because then I try and throw them off their thing because they think that I'm dodgy. But the other thing they do is they put mirrors up. Apparently, if you have a mirror in an area like where you're going to steal or do something bad, you're less likely to do it because you have to like consider yourself.
Look yourself in the face.
Look yourself in the face as you start stealing money out of the cash register or whatever, you know, or stealing clothes out of the shop or whatever. So those are the two things, like the mirror and, you know, looking someone in the eye. And that's kind of what we're saying with these positive affirmations. You kind of look yourself in the eye in the mirror, and it's like you're saying this is true, you know. You don't want to be lying to yourself. Like that's so incongruous with what most of us think. We think of ourselves as being consistent. That's one of our biases. We think we're always the same, even though we totally change over our ideas and everything over life. But, you know, that's the thing, is to look yourself in the mirror and say that. So I just find that fascinating that that's kind of an element of this. And then it also kind of relates to, you know, being honest in a retail setting. Yeah, I just find that.
Yeah, no, it makes a lot of sense. Yeah. All right, thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That's what I saw on YouTube today. Yeah. The people were saying, "I'm going to buy a bunch at 25. Maybe that's where they got it from. Maybe they got it from Kiyosaki.
Maybe.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter. So every market has its own separate psychology, I guess you could say, in order to trade it. So what do you think the psychology behind the crypto market is in order to trade that market successfully?
Trade it successfully.
Yeah.
Well, one thing I would definitely want to look at is leverage. Like if I was trading cryptos, I don't know what it is now, but when 5 years ago or whatever, when I was, back in 2016 or whatever, when I was looking at it, because there were enough brokers that had it, but the leverage was all messed up, or like it wasn't really like it was hard. Yeah, it was super low, and it was kind of like, why would I trade this? I mean, on one end, I think it's just like the stock traders. I really do. Like, to me, the guys who trade shares like Apple and Tesla and whatever the darling stock of the time, Amazon or whatever, like those traders who trade those and they just buy and then when it goes down, they buy some more. To me, that's kind of the mindset. Is it's always going to go up? That like I've actually seen these guys on Twitter and they say things like, rule number 1, buy. Rule number 2, if it goes down, buy more. Rule number 3, see rules 1 and 2. So they're just in then perpetual uptrend, right? Which has served people well. There was a big crash, I think, when cryptos hit Bitcoin hit 19,000. And then I believe this was the second leg. So if you look at things through the Elliott wave theory, right? Which I don't necessarily look at, right? But I am aware of it and I find it interesting. I would argue that just look at Bitcoin against the US dollar. That first wave that we had up to 19,000, just under 20,000, I believe, that was the first leg. So that was wave 1. Then you have the retrace, right? A, B, C. And then you had the third leg, which I think we've probably just completed, which is usually like one of the longest ones and takes a long time. And then I think we're in the ABC retracement there. And then you have the fifth one, which is the really, it goes super sharp, right? And then it collapses from there and then has to, eventually restart another trend, right? Like another move. That's what I think we're at. I think we just went off of wave 3. That's like long term. That's what I think. And I think that the people that trade cryptos are kind of like stock traders in that you just assume it's always going to go up. And that usually works, in a bull market. But in a market like this, like I just saw today, some people posting on YouTube, like, I'm going to buy some more Bitcoin when it hits 25 grand and stuff like that. And that's cool. But like, you just have to remember that, like, I think it would be really hard to be a trader. Like if, let's say you're 22 years old and everything you've seen in your whole life basically has been the markets go up. Because when 2008 happened, you were 8 years old, right? So you didn't really see that. So your whole life, all you've seen is basically free money, and every market has gone to the moon. So I think that's a difficult, and I was kind of like that too. Like as a child of the 80s, I had that same perspective. The only thing is different that I was aware of the 1987 crash. That was a big deal back then. So I was aware of that. But again, all my friends said when we were kids, like, I would just be buying right now, man, blah, blah, blah. It's just, and so, and it would have worked out, right? So same thing in buying at 2008. Warren Buffett basically bought Goldman Sachs in 2008. He said, it's on sale. I'm going to buy it. These are good people. This is a good business with excellent people. So I think the mindset of most crypto traders, now, again, there are going to be some technical traders out there that buy and sell, right, and do it on lower time frame. But most of them have almost like an investor mindset where they're just kind of buying on the breakouts, buying on the pullbacks. That's what I've seen most of. So that's my thought on that. But I could be wrong, but that seems to be like, you don't find a whole lot of people saying, cryptos are going to go into the bin. The people that say that are usually the older ones who don't think crypto is like a real asset,
like Peter Schiff,
Peter Schiff, like Peter Schiff, people like that. Yeah, exactly. Yeah.
Okay, cool. Yeah, no, I totally agree. I think it has a lot of potential and it's a very young market, so I think it's going to go up in the long term. You just kind of gotta like buy and hold. A lot of them are like penny stocks, also, right? Like these people are kind of gambling on the pop, right? But the bigger ones like Bitcoin and Ethereum or whatever are like you say, the stocks. You just hold them. You look for the fundamentals. Is it a good project? Is it a good technology? And then you just kind of buy in and then average up, right? Yeah, no, I totally agree. And I think that to be successful, you really have to have a strong stomach. I think be willing to weather the drawdowns and just understand the long-term potential of the cryptos, right?
Yeah, I mean, exactly. And
like with any new technology, I remember when they had these little robot vacuums that came out, and we got like the first one, right? Because we were like, oh, we don't want a vacuum or anything, and we had a little kid and stuff, but the thing is, like, the next generation that came out was just like, same with iPhones or whatever. Like, the next generation that comes out is so much better. It's the same with internet browsers. The best internet browser was Netscape, and that was the darling stock in the 90s. And actually, Gateway 2000. People don't remember Gateway 2000 was basically Dell. That was Dell computers before Dell, before Michael Dell. So, the first thing, so Bitcoin was like the first thing. That doesn't necessarily mean it's going to be the best one long term. It could be something like Ether that ends up being the backbone of everything, because like we had I wasn't on them, but they had AOL message boards or whatever, right?
Yeah.
And so now you have things like Instagram and Facebook and YouTube, and it's all kind of like fractured. It's like, and there's really, like, you used to go on like AOL message boards and you could find any sort of topic that you're into, if you're into dogs or stocks or whatever. And then now the internet's so fractured, it's like you have to kind of really dig down and go into the forum that's about Doberman pinchers or whatever. You know what I mean? Do you know what I mean? It's so like specialized now and so deep. So to me, I find it really fascinating that, when people say things like Bitcoin is going to, because when we talked about it before, I said, I think, Bitcoin probably will go to 40,000. But I think in 2017, we talked about it. I said, I think Bitcoin will go to 40,000, but it has to go back down first, right? And that was when we had that first wave up to 19,000. And people just forget that there are ebbs and flows to it. And as a trader, like, if you trade the 4-hour charts, you understand that. If you trade currencies, you understand that. It's one of the advantages we have over stock traders, where the majority of them are only just buying. They're not thinking of the downside. I mean, they do think of the downside, but they don't ride the downside. Whereas we can ride both sides of it. So that is, in some ways, an advantage for us. In other ways, it's a disadvantage, because all they have to ever consider is, when should I buy? And when should I sell, right? Whereas we have to think, should I buy or should I sell? Or, it's
the number of opportunities to shoot yourself in the foot, right?
Exactly. Yeah. We have way more opportunities. So it's a bit tricky.
I'd be interested to hear your thoughts on Bitcoin. Do you think it's like a outdated, I think it's going to go up still, but do you think it's an outdated technology, or?
It's a great question. I don't know enough about it. I know just enough to be dangerous. And what I would say is, it seems like the people who are smart are pointing out that it's a bit clunky. It seems like it takes a lot to manage it and all that. Like, in terms of like accepting it. Like, if I was an online store and I accepted Bitcoin, it seems like it's not the best version of blockchain technology.
It's not for
and
that.
And maybe something like Ether is. But the other side of that is, people say, well, you can store it. It's value, because there are not unlimited. There's only 20 million of them, and a lot of them have been lost or whatever. So there isn't really ever going to be 20 million once they mine it all out. And so, the other side of it is, it could be a store of value. So I don't know. I think it will go up. I think it needs to go down again, like the first leg. I think this third leg needs to go down probably a bit further than it is now. I don't even know what it is now. Do you know what it's at? Is it like 30 grand or
30,000 or something like that?
30,000. Yeah, I think it's around 30,000 as we record this.
Yeah.
So my guess is it'll probably fall to 20 or something like that, 22 or whatever. But before we see that fifth leg kick in.
Interesting. Yeah, I never thought about that. I think Kiyosaki's mentioning like 25 is his buying point. So
yes, that's what I saw on YouTube today.
Yeah.
The people were saying, I'm going to buy a bunch at 25. Maybe that's where they got it from. Maybe they got it from Kiyosaki.
Maybe.
Yeah. But like, if you follow the if it's true, like what I say about the Elliott wave, it shouldn't go lower than the first leg's high. Do you know what I mean? And actually, if you look back at the first leg where it went up to 19 grand, and then it came back down, I was thinking it would go down to like 1,100 or something like that, or 1,000, which was kind of like the first breakout on the micro scale, but it never did. I think it only went down to like 3,000 or something.
Yeah.
So it didn't take out that previous high at 1,000 or 1,100 or whatever you want to call it. If you look at the first birth of it, in theory, if I'm right about this being the third leg, I think the rules of Elliott wave would say, at least as written by Robert Prechter in the famous book, is that it shouldn't take out that 19,000 high that it made before. I think it made a high at 19,700, 800, somewhere around there, right? Like right below 20 grand, I think, if I remember correctly. So it shouldn't really take that out. It should bottom out above that. So 25 would fit if that were true, you know?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. If that were the case. And then, of course, then it would take out the high that it made, whichever, I don't know, was it at 60 or 65? Yeah. It would take that out on the fifth leg and really like it would just be acceleration, like unbelievable. Like everyone would go, oh, it's over. We're going to 200 grand, you know? And then of course it would collapse again.
No, I think this dip during this summer is maybe like a good time for the institutions to get in. They're kind of bringing the price down, get the institutions in, and boom, right? So
yeah, we'll see.
We'll see. Yeah. All right. Thanks, Walter.
Cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I used to get nervous like when I was younger talking to people. And at a certain point, I just discovered, just ask about them.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you know about game theory and how it applies to trading?
Okay. So this is really interesting. Actually, I'll put a link in the show notes to some people who want to see this because there's a good example of this. I think you can play along with it. So I won't go down that rabbit hole. I'll let you guys click on the show notes and go down that one. But the way I think of it is because I've read some books on it that are really complex, and I kind of think of game theory maybe differently to most in two ways. I think of it as in probabilities. So in terms of probabilistic thinking, which is really good for traders, obviously. And then the other side of it is like perception, right? And awareness of what other people are thinking. So kind of like if you're in a situation, Hugh, where you're at a party and you're talking to some people and, you'll notice some people aren't very perceptive of what other people are thinking, and that maybe they just go on and keep talking about themselves and everyone else is just sitting there going, oh my God, like, you know what I mean? But the person doesn't realize that they're like turning everyone off by sitting there and just rabbiting on about themselves. That's a person that has like low interpersonal intelligence, we would say, right? Mm-hmm. And so with game theory, I think part of it is being aware of what the other participants in the game are doing. So poker is a great example of this, where like if you bluff, or you think someone else might be bluffing, you're trying to figure out what's going on, right? That's one element of game theory, which is sort of almost like psychology and interpersonal relations and understanding that. In trading, it could be looking at where all the orders are. So you can look on websites and brokers will show you where all the buy orders, where all the sell orders are, right? Mm-hmm. Same thing with open position ratio. You can see what is the crowd doing? Are most traders buying or selling, or what's going on? So that's one element, as I see it, of game theory. And I really love the open position ratios. If you guys are interested in that, I've got plenty of videos on YouTube all about that stuff, and I can put those in the link down there if you guys want to go down that rabbit hole. I don't want to get into that right now, but that's part of it. Understanding what are the other participants doing. So orders, where the order placements are, and where the open positions ratios are at is really important in that sense. But the other side of it is probabilities. And it's really fascinating to me that a lot of traders don't understand it. Right. Mm-hmm. So probabilities come into a lot of places. Like probabilities come in when you're trying to decide, is my trading system in a drawdown that is normal or not normal? And another one is my reward to risk ratio sufficient to make profit given my win rate? Mm-hmm. That's another thing, right? So all of these elements of probabilities are very important. And so, like, for example, let's say you like to trade trendy kangaroo tails, which is just a pullback after the market's been going up, right? Mm-hmm. And it pulls, let's say it's good or down, either way, it goes up after the market's been going up. And it's a signal that says, okay, the pullback's over, right? Now, let's say you like trading those, you've back tested them, you get a certain win percentage, it's 58% or whatever. But you find that if you add another element to that, which is understanding where the orders are placed on the charts to your kangaroo tails, trending kangaroo tails, you actually really improve that strategy. And that probably would be the case. Like if you saw a whole lot of people who had their orders on the were basically on the other side of your kangaroo tail, right? Then that means that you would know that there's a lot of people thinking that it's going to break out and it's going to go the other way, right? Or if there's a lot of orders down where your order is going to be, right? Or if there's a lot of orders where where you take profit is going to be, that'll be like a magnet in the market. Well, if it gets closer, it'll really want to get there, right? So all of those things I think are really important in terms of game theory. So to me, game theory is thinking about what are the probabilities, right? That this is going to go this way or that way. And so what should I do for, my overall, I'm trying to make profit here. And the other thing is, what are the other people doing? And trading is so different because it's not like a closed system like a poker game where you only have 5 people, and there are a limited number of possibilities, although there are many, with all the different hands and everything. It still is limited. Whereas with a trading, it's kind of like an open system, and these things can come in and impact the markets in really drastic ways that sometimes we're not even aware of. But I think just understanding what your other market participants are doing and what they're thinking, and understanding where the probabilities lie, is probably the most important thing in terms of thinking of trading like a game. What are your thoughts about this?
I actually don't have too much input on this one. I haven't really looked into game theory that much, so I just wanted to get your ideas on this one.
Well, yeah, the thing is, like, if you get in some of these books, they're like super mathematical, right? And they don't. And really, a lot of game theory is just thinking, what is my opponent or what are the other participants doing? And if I do this, what are they going to do? It's really just that. Like, and so I think you can really simplify. I'm a big fan of the 80-20 thing, right? Where you just cut it down and go, just do this much to get maximum. You know what I mean? And that's sort of. I like that approach, and some people won't. They'll want to get deep into it and whatever, and that's fine. But I think just thinking in terms of what are the other people doing, that's a big part of game theory.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
You can map it out and make charts and everything and choice charts and all that stuff, but it really comes down to thinking about, where do the best probabilities lie, what is likely to happen versus unlikely. Which is not always the way we think. Like a lot of times we think that what's likely to happen is what happened last time, And that's not true. That's not necessarily true at all. So so we're not really set up to think mathematically. We're more emotional creatures in general, and reactionary. So I think if people just start, like, just a real simple task would be, if you have a trade and you go, okay, I'm going to buy here. What are the people thinking that are going to sell? In the exact same situation, what do they see? Just trying to break out of your filter and the way you see the market. That's a really big part of it, I think. Just
a lot of crowd psychology, you think?
Yeah. And just going, okay, like I look at, sometimes what will happen is a kangaroo tail will print and I don't take it. And I explain in my videos, the reason I'm not taking it, because let's say there's a resistance level right here, right? And the kangaroo tail goes through it like this. Okay, so you have a big kangaroo tail. Well, there's a big difference between having a kangaroo tail that like starts here and goes across that level, that resistance level, versus one that's kind of on top of it and sitting on top of it. Because the one that's on top of it is a breakthrough and a bounce, and it's going to go higher. But the one that's sitting below it just penetrates it and it's going to go lower. You know what I mean? And it's sometimes hard to see the difference, but like understanding that the people that see that kangaroo tail on top of the support resistance, they think it's a reversal. And then I'm the guy that thinks it's a trend continuation pattern. You know what I mean? Like thinking in terms of that and knowing the difference between the two is, I think, really important, because it just helps you out in life. Just thinking about other perspectives. You'll be a better conversationalist. You know what I mean? If you can get in the head of somebody else
people like it when you ask questions about themselves, you know, like as you've noticed, you know, yeah, like they do, they really do. It's a great way for people to go, oh, I really like that Hugh, you know, he's a good guy. Oh, really? What'd you like about him? Well, he just seems like a real friendly guy, you know. Well, what does Hugh do? Oh, we didn't really talk about that. Yeah, because the whole time Hugh was letting you talk about yourself, you know, and that sort of thing. You know what I mean? That's
I used to get nervous like when I was younger talking to people, and at a certain point I just discovered, just ask about them, and then they'll do all the talking, and it's all good.
Yeah.
So
I was the same. Yeah, I was the same. I would always like deflect off into you know. Like they would say something, oh yeah, blah blah. What about you? You know, like I would always do that. And now I'm so old, I'm just like, whatever. Like I don't even like. I can see, you know, when people start doing that to me, I can see it a mile away, and I'm like, yeah, okay, man, yeah, all right. You know, like I'm just whatever. Yeah, I don't even care. But like when I was younger, I was really aware of it, like you say, and I would always just kind of like shift it back because I didn't want the spotlight on me. You know.
Yeah. All right, cool. Thanks, Walter.
Thanks. See
ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Experiment with different things and figure out what works for you.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, people talk a lot about like the flow state and how that contributes to success in a lot of different areas, especially trading. How do you get into the flow state? What do you think about how people should get into the flow state? And I just want to hear your experience with that.
For traders, I think it's probably that analogous situation like with like an athlete getting ready to run the 100 meters. So I used to do that in high school, and I always did a lot of work on getting in the right state of mind, you know, to get the right start, you know, and stuff like that. So like basketball players, you know, anyone who's done athletics like that, even at like the high school or college level, you would have some thoughts definitely around there, probably, or at least a routine to do. And so you can certainly do that when you're looking at the charts. If you're like a longer term chart trader like me, you would just want to be in that state of mind when you look at the charts. However, I think it more applies to like the lower time frame sort of in and out scalping type traders, where they really need to be on point in terms of what they would say is a flow state, I think. However, having said that, I think that when it comes to trading, there are some things that come up that you probably don't think about when you first get into trading. I'll give you an example. The fear of pulling the trigger. So if you're trading a system that has a lower win rate, let's say it's a 39% win rate, and you're going to have a lot of losing streaks. And so you might get into a state of thinking, gosh, I've had 9 losers in a row. I don't want to have a 10th loser sort of thing. I don't really want to take my next trade. Of course, you don't take it, and then that's the big winner, right, for the month or whatever. So yeah, that's the typical. So I think one way to kind of get into the right mindset for trading, it doesn't really matter what style of trading you have. Essentially, like, there's a really good story about this guy who wrote a book about risk. He hung around traders and professional poker players and stuff like that. And there's some really good insights from that. And what he was saying was that the traders, or actually the gamblers, it's funny that I would mix that up, but the gamblers were saying they kind of look at themselves as having like an infinite lifespan. If you think about it, what happens when you do that is you would see the world differently. If you knew that you were going to live, 1,000, 2,000 years, you would make different decisions in your life. And that's what he said about these people. The way they saw risk is they'd have these little tiny edges, but of course they saw that and that they were so valuable over the long term. And so any one individual trade, you can just kind of throw it out. Who cares, right? In fact, 10, 20, 30 trades, who cares? Because it's the long-term gains. And as Einstein said, right, I don't know if he actually said it, but people say that he said it. It's attributed to him. It says that compounding is the 8th wonder of the world. Well, that's really true when you look at risk from like a long-term point of view. So I think probably one of the easiest ways to get into a pro trading mindset is for any trader to think of yourself as living a long, long time. And what would that mean for you and your trading system if that were the case? What would you do?
because you would not take giant risks, would you? Right? You would not put 10% of your account on any given trade if you knew that you had an edge, and then the edge was going to play out over thousands and thousands and thousands of trades. So I think that's a really valuable way to look at trading. Is almost like you just live forever, and that you want to be around. You want to have your trading account around to live through those good times, right? So that's kind of, and I know it's not exactly what you're talking about, because flow state is more kind of like in the now sort of thing, like feeling the market and understanding where it's going to go and stuff. That's kind of sort of like the shorter term traders world or whatever. How do you see that when you're looking at flow state?
Yeah, no, first of all, I think it's really important that you have some sort of a routine, I guess, like you said. Like in high school, I didn't understand why we did the same exercises over and over before a game. And that's all it is, getting you in the right mindset, right? And so I think if you could do some sort of meditation, or you have an app that can calm you down, I think that's a good start. But yeah, what you're saying makes a lot of sense. And I guess I never really thought of it that way.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
In that, if you know that you have this edge, even if you aren't in the flow state in that one session, like it really won't matter, right? Because you're like, okay, I'm factoring in a bad day into my system, into my numbers, and I'll just learn from this and go on to the next one. So yeah, that makes a lot of sense to me. And yeah, I think you're right in that the flow state really is more important in like day trading or whatever. Instead of like if you're swing trading, then it's not so much, in my opinion. But yeah, I think you have to just kind of experiment with different things and figure out what works for you. And it might be meditation for some people. Some people might need to take a nap before or something like that. So just try a bunch of different things and see what works.
Yeah, and you really want to be in a situation where it's like it's hard to shake your confidence, right? Yeah. And so that's preparation. Preparation is the key there. Yeah. I talked about that before, but yeah, that's critical. So what's the app that you use? Because you were saying, I know you use Muse, right? That device that links up to like the app. Is there anything else that you use in terms of that meditation stuff? Because I know you're big into the meditation.
Yeah, it was the let's see, Inner Balance by HeartMath.
Inner Balance, right?
So they have a little thing where you stick it in your ear, and then you do the breathing, and then if you're in a certain zone in terms of heart rate variability, once you're in that zone for a little bit, then I consider that calm and collected, and then I'll take it off and then go into trading or whatever.
Right, that makes sense. Yeah, I keep getting these ads for because I think they know that I'm into this stuff. I keep getting these ads for an app called Headspace. I don't know if you've seen that one, but that's
that's pretty popular. Yeah, Headspace.
Yeah, I keep getting that ad, like this week especially. So they must know. You know how they follow you around? They know what's going on. Like yeah.
All right, cool. Yeah. Thanks, Walter.
Okay, see you.
Yeah.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
My neighbors keep putting their rubbish in my rubbish bin. I keep looking out the window and go, why are you putting your rubbish in my rubbish bin? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I'd be interested to hear your experience with hypnosis and hypnotic therapy.
Mm-hmm. Yeah, sure. So, when I was a freshman in college, first year of college, I decided that I was going to learn about stuff that I was interested in. So my textbooks, spent a little bit of time on those. But what I really did is I went to the library and I read about a lot of interesting things that I was interested in. And then I ordered some books, and one of the books was on hypnosis. And so then I became known, and I lived in the dorms, right, at school, at college, and I was kind of known as the hypnosis guy. So
people would come and ask me to hypnotize them. Like, it's totally not like, this is not cool, right? Like, but I didn't know what I was doing, but I just knew enough to be dangerous. And I knew how to, I would get a candle and I'd light the candle, and then I'd have the person stare at the candle and their eye would get tired. Their optic nerve would get tired. I knew that was one way to get someone to relax and stuff. And so I did that. And a lot of times, like, girls would be like, oh, I want to eat vegetables, you know, or whatever. So I would like hypnotize them and to put these suggestions in, you know, for them to eat more vegetables or whatever. So that was kind of my introduction to it. And then, you know, I did it for myself too, for different things. Like I wanted to improve my surfing, or I wanted whatever, you know, whatever I wanted, whatever sort of thing I was working on. And then when I came to Australia, I found a hypnotherapist too. And I wanted her to help me with my surfing too. And it was interesting because she asked me, have I had experience with hypnosis? And I said, yes, I've hypnotized people. She said, oh, really? What did you do? And I told her the story I just told you, right? Well, then she goes, oh, there's much more efficient ways than looking at a candle or whatever. I'm like, oh, this is going to be good, you know?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So then she recorded this session and she gave me like a CD of her voice, and so that you could use it, you know what I mean, for any goals. You would just think of the goal and then listen to the hypnosis thing. And I thought that was really fascinating. And I used it quite a bit. And then I got into the more tailored ones for like trading, and I got one of those, and it was pretty bad because it didn't really apply to Forex traders. So then I wrote the guy. Actually, we had a mutual friend, and I said, can you please like make one for Forex traders, because your one for traders sucks for Forex traders. It's like, it's no good, you know. It's just the way that the suggestions aren't quite right for Forex. And he goes, okay, well, do you want to write it? And I go, yeah. So I helped them write it out, and that one's at Hypnosis Download. So it's Hypnosis for Currency Traders, I think is the name of it. I'll put a link. You guys can get it through, you know, it's cheaper if you get it through us or whatever. But anyway, the point is, that's another good one too, right? That's a way for you to encourage the habits and the approach that you want in your trading. So I think hypnosis is pretty cool. And what's interesting about it to me is that they talk about like hypnosis and meditation as if it's different, but really I think it's pretty similar. Like in meditation, you have a mantra. One of my mentors was really into it, and he got into it in the 70s, and he was saying that he would have this mantra that he would use. And that's kind of like, you can kind of do a similar thing with hypnosis, where you're in a meditative state and your mantra is kind of like the goal that you're working on, right? So to me, they're really similar. And if you look at the brain during them, they should be similar too, especially if someone's a little bit practiced in it and they're not a newbie and they don't know what they're doing. They would get into a similar brain state. So I think it's really good for using it to get into a nice state of mind for doing some work that you want to do, whether it's writing or looking at charts or whatever. And it's also really good if you want to work on an outcome, right? So for example, my thing when I first started trading was moving stop losses when I shouldn't. I should just leave them, let the market hit it or not. And so that would have been a good candidate for hypnosis, is for me to consider that and think about that. If you have problems pulling the trigger, that's a really good candidate for hypnosis. If you're trading like a lower win rate strategy, or you trade too often, like you're really compulsive, that's another good one. You know, that's a good candidate for hypnosis. All those sorts of things would work really well. I mean, hypnosis works really well with things like overeating and smoking and, you know, breaking habits and things like that. So it certainly does work well with trading habits as well. So that's kind of how I see it. I put it kind of in the category of like fixing your issues, you know. Sorry, the reason why I keep getting distracted looking outside is because my neighbors keep putting their rubbish in my rubbish bin. I keep looking out the window and go, why are you putting your rubbish in my rubbish bin? Like, you know what I mean? It's like today was rubbish day, you know what I mean? In the morning, the trucks come and everything. And so we've got a nice empty rubbish bin out there. And I just watched 3 people walk by. And I think sometimes they're just like walking by. Yeah, but one of them's the neighbor for sure. I was like, what's going on? Yeah, sorry. So if I keep looking over, it's because I'm thinking, what are you doing? Yeah. Anyway,
No worries.
so
Well,
yeah,
for people who are new to hypnosis, like some people think it's like an office space thing, right? Like you do one session and then now you're totally different. So maybe you can walk people through like how gradual that is, and how it's not like a one-shot deal, right?
Yeah, in fact, when I was in the dorms as a kid, as a 18-year-old kid or whatever in college, they had one of those hypnosis shows come, where they do.
Oh yeah, the shows, yeah.
You're a chicken, and I was one of the guys. Like he got me up there, and I remember him saying, he said it will last 30 days or whatever, or you know what I mean? Like you kind of have to. Yeah, it kind of wears off or whatever. But and one of the first hypnosis CDs that I bought, they would say you got to listen to it every day for like 30 to 60 days. Mm-hmm. It's kind of like it's sort of like when you're a kid and you keep hearing money doesn't grow on trees, money doesn't grow on trees, money doesn't. Your parents say that's repeated over and over again, and then you get that in your head. It's kind of the same thing with hypnosis, where you get these suggestions. You can't just say to someone, oh, it's rare. It's rare that you would meet someone one time, they would say something to you, Hugh, and you would remember it for your life. It does happen, but it's pretty rare, right? The things that you usually remember are the things that are kind of repeated over and over, and those become like, committed to memory, and you rely on it. It's your programming. It's your programming, basically. So yeah.
It'd actually be a little scary, right? If somebody told you to do something once and then you start doing it.
Imagine that, yeah. Imagine if that were the case. We would be a mess, right? We would be a mess. Literally every time we went to like the DMV or to like a restaurant or whatever, someone says, go sit in the corner, and you're like, oh, then every time you go into, you go sit in the corner or whatever, you know what I mean? Like, imagine if that kind of thing happened, it would be a mess. So yeah. So it's good that we don't take direction well. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All right.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You're not going to get shot. You're not going to be attacked by a lion or whatever it is, right? You're just going to lose some money. So,
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I was talking to a trader today, just before we got on. He was asking about fear and how do you deal with fear? If you've got a lot of fear in your trading, what do you do about it? And I guess kind of the question was, where does it come from? So I kind of equated it to one thing, but I'd like to hear about what you think about fear. Like, what does fear mean in trading? How do you deal with it? What are some techniques to wrap yourself around the fear of taking trades and trading in general? So I'm interested.
Yeah, sure. Well, in reality, there's nothing to be afraid of in trading, right? You're just going to lose some money. You're not going to get shot. You're not going to be attacked by a lion or whatever it is, right? You're just going to lose some money. So any type of fear is irrational. So you have to ask yourself, okay, where does that come from? Is it fear of losing all your money? Or is it fear of being wrong? Or is it fear of your ego being bruised? Those are kind of the biggest ones that I think a lot of traders run into. Once you can identify that, then you can start working on it. But then if you're still afraid, then you have to figure out what the source is. Otherwise, you're kind of just like going to be afraid all the time. And once you identify it, then you can start to work on it. That's what I think, at least. What do you think?
Yeah, I agree. Yeah, so I think about like these coaches in the NFL, right? These gridiron coaches, right? So that what they do is they have these stories, and they wear the stories like a patch on their sleeve. Oh, I slept in the office. I get up every day at 3:30 in the morning and go and watch film. And they have these big, this is their thing, right? Well, thinking about it, why do they do that? Why do they spend so much time watching film of their opponent? The reason why is preparation. Because when come game day, if they feel like they've prepared their team to the point of where they can kind of expect anything and they know what to do in any situation, they've prepared the other coaches so they know what to deal with it, and they have a plan for what's likely to unfold, all that preparation reduces the anxiety. The more prepared you are, and it's the same with trading, right? The more prepared you are, the more you've seen your system through different types of markets, through your back testing or demo trading or whatever, or live trading, if you've been trading for decades, then
the more likely you are to be able to sit through it and be able to feel like, yeah, you know, I can do this. Like, I've got it. Now, here's the thing. So fear comes from uncertainty. So I had this experience where I was surfing back home in California in December. I think it was the day before Christmas. Might have been Christmas Eve, right? And it was, you know, rainy. The water was brown from all the dirt rush, you know, in the rivers rushing into the. And I was surfing this reef, and it was pretty big. The waves were pretty big. Got held down, held down onto the reef. Kelp everywhere, right? This thick Northern California nasty kelp. Held down onto the reef. It's black down there, and I couldn't get up. And the next wave came and held me down. Okay, so you know it's the dreaded 2-wave hold down, right? Mm-hmm. You don't want to have like multiple wave hold down because you start running out of air, you start panicking. And so finally, I came up, and then I let the waves wash me in, and I was kind of shaken. And I was sitting on the beach, and I was thinking, I really should go back out there, because if I let this fear kind of fester for a while, then I'm going to have that in the back of my head when I go surfing, especially if I go surfing at this place again, right? Mm-hmm. So I forced myself to go back out there and paddle back out there and at least get one wave and then come in, you know what I mean? So I could say that I did it. And really, I think that's where it comes from. I think the fear of the uncertainty, not knowing what's going to happen. But as you said, you're absolutely right. What's going to happen in trading? You're going to lose some money, you're going to make some money, or ain't nothing going to happen, and you ain't going to lose money or make money. That's it. That's it. Now, might you get gapped? Might the market move fast and get you out beyond where your stop loss was, and you lose a little bit more than you're expecting? Absolutely. But the same thing, if you use like a trailing exit or something, the same thing can happen. You get more than you expected if you allow that for yourself at the other end. So to me, I think this idea of being fearful, it can come from a lack of preparation or a misunderstanding of the unknown. I mean, in a lot of ways, the unknown is what makes life so exciting. Imagine, Hugh, if you got up and every single day you knew what was going to happen. It was Groundhog Day, right? Like that Groundhog Day movie with Bill Murray. So every day you have the same thing for breakfast. The people say the same things. You go to work, the same things happen. That would be so boring. So being alive means embracing uncertainty. And being a trader means getting paid for embracing uncertainty. You don't go and exchange your 10 hours in the day for a pile of money at the end of the month like most people do. What you do is you exchange the risk that you're taking in face of uncertainty for a potential payoff, right? So it's a totally different world for traders, and that's why you were made to be a trader, because you see the world a little bit differently. And so that's what I would say to everyone listening. That's really part of what makes trading so great, is that we get paid for uncertainty. We get paid for doing that. And I think it's great. If, however, that really scares you and you don't like the uncertainty, then maybe trading's not for you. Maybe you need to exchange time for money, or find out, or sell widgets, or whatever you can do to make money, because that's really the heart of what trading is. Yeah,
it's totally not for everybody. And I think you bring up a good point about facing your fear again, because I actually have the opposite experience that you had. So I went to the North Shore after being on the mainland for a while, and you have to get used to those waves, right? And I got drilled like right in the middle of my back, came out like throwing up, all this kind of stuff. So I never went back there. But like you said, in reality, I probably should have gone maybe like the next week and then just face that again, so that I didn't have that issue. But I think it's the same thing in trading, right? You maybe have a bad week or whatever, then you just get back up on the horse. Maybe you do a demo account or something, but just get back in there and not be afraid just because of that one experience.
Yeah. I mean, I agree. I mean, you just don't want it to control you, right? You don't want it to dictate your life. And in trading, that's really important. Like, I don't really think of it this way anymore, but sometimes traders will get they want to get back at a currency pair. Like, the USD CAD really got me last week, so I'm gonna get my, fill or whatever. I guess I used to actually think that way. I don't even remember where the last loss was from anymore. I don't even care. I just think of it as a roll of the dice, right? Mm-hmm. But I used to think that way, and I used to be, all right, Looney, I'm going to get you, let's see what we can do to the Looney today, because the Looney stole a bunch of money from me last week. So it's revenge trading, isn't it? I mean, that's not very productive.
Yeah, or the bigger issue is like, I won't not trade the US yen just because I lost a bunch of money. And I think that's going to hurt you like in the long run.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. It's like saying I'm never going to talk to a girl with blonde hair because the last girl with blonde hair slapped me or whatever. You know what I mean? Like what? Exactly. Like that's not, doesn't make sense. Yeah, exactly.
Yeah.
Cool.
Cool. Thanks, Walter.
See ya.
Technically, brilliant people are notoriously bad at explaining how something works.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, from a psychological standpoint, do you think that traders should start with a demo account?
Yeah, I think so. I mean, I actually think you should start with a simulator first because you can get more trades and you can get more data. So my preference would be to start with a simulator like Forex Tester or something similar. There's lots of them out there now. And that way what you can do is you get your data first. The demo helps. Demo, I think, is a good next stage, like because then you see the trades kind of unfold in like real time as they would in a real account. I don't think you can get the experience as fast in a demo account, right? So the advantage of a demo account is that it teaches you the patience that you need in real life, right? Waiting for the setup to unfold and all that, and then waiting for it to come to a resolution, good or bad. And then also it feels more real, I guess, when you have, even when you have a demo account, it feels like it's, so I always say, like, you do a simulator, then you do the demo, then you do a small money account, and then you can graduate to a larger account and stuff like that. But yeah, I mean, there are the disadvantages of a simulator is that sometimes you're just not trading as you would with a demo or a real account. The advantages are you get a lot of trades under your belt. So what you have to do is kind of time parse, like make sure that you're not dumping like all of this data into your simulator account, over 2 hours. You gotta break it up and be more vigilant with the way that you approach it. That's my opinion. What about you? What do you think about that?
Yeah, I think a demo account is definitely useful, but I think a lot of people have the tendency to not take a demo account too seriously. So I think it's probably actually more beneficial to throw like $100 into a nano lot account and then just trade that for like a penny a pip or whatever. But I think the demo account is necessary because you should understand the mechanics of it, how to enter, exit trades, how to place pending orders and stuff like that. But I think at that point, it's really up to you.
Yeah.
Is your personality such where you can take the demo account seriously, or do you need at least a little bit of money on the line?
Yeah, no, it's true. It makes a big difference, doesn't it? When you even if it's like $5, on the trade or whatever. I feel like a lot of traders just don't see the value in the bulk trade data that you get from a simulator. You know what I mean? Like it's kind of like they think demo or they think demo or live. They think that's the question. And I don't think that's the starting place. You know what I mean? The other thing that happens, I think, is that you get really excited about a system when you first demo it or first run it through Forex Tester, and you kind of need a cooling off period, I think. To sort of put it aside and then come back to it. There's lots of issues when you get into that. So for example, like if I said to Hugh, here's a system, what do you think? And you go, wow, I really like that one. And you started demoing it. If you're trading on the 4 hours, I don't know how long it would take you to get 300 trades or 400 trades. I don't know. I mean, it depends on how many markets you're trading and all that. But, if you're trading a system like that on the 4 hour charts, it might take you 9 months to get the same amount of data that you could get in 2 or 3 weeks if you were using a simulator. So, but again, like we said, it's a very different experience, live versus demo versus simulator. So,
Oh, another thing to consider is also if you're doing like automated EAs or whatever, then I think a demo account is absolutely necessary. Like, because there's a little bit of psychology, like we talked about before, where you have to turn the thing on and off. But I think that the demo account really gives you like a live, real-time assessment of how well that EA works. Whereas if you just jump straight into live trading, there could be issues with like the spread and certain things with the broker. And I have a buddy who blew out like a big portion of his retirement account because he just jumped in with the EAs, and he didn't realize that there are all these things that you had to check out. So I think that's one case where a demo account is absolutely necessary for sure. And back testing also, right? You want to run that through the simulator and see what kind of numbers you get.
Yeah, definitely. Yeah. And there's a reason why when you connect to a server, like in MetaTrader, for example, it will say like you're connecting to the live server versus the demo server. That's a very different experience. If anyone's ever seen that, like my friends and I, we were running a strategy where it was like a grid system where you were taking profit every 3 pips. Like on demo, that was great. That was awesome. And then it was only about 3.5, 4 weeks into it on live account when everything fell apart and we started getting slipped like crazy. And if you're taking 3 pips profit and you get slipped a pip, then you're losing a third of your profit, right? So it's unsustainable. Yeah. But anyway, it was just really interesting, seeing that. And a lot of traders have seen that, right? You see the different experience on live versus demo. So it's tricky. But yeah, for EAs, you need to know exactly how it works. And a lot of times I think people like they'll get an EA and they think they know how it works, and then they don't actually test it on, like they think they know the settings or whatever. Like if you have someone code it for you and they explain it to you, you go, yeah. Or if someone gives it to you or whatever, and then you just don't know. Like I always say, why not just put it on a 1-minute chart and test it out and see if you know what it does? You know what I mean? Like it's ridiculous. On a demo, 1 minute, that's all you have to do. Like it doesn't matter if you're going to trade it on the daily. Put it on a 1-minute demo account and see what it does, and if it does what you think it's going to do. So
no,
that's
totally.
a big
Like
one,
I think
sure.
Technically, brilliant people are notoriously bad at explaining how something works. So I think you really have to not take their instructions for granted and just like you said, test it out and see if it really works the way you think it does.
Yeah, that's right. It's very rare to find someone who knows a lot and can explain it very well. And that there's actually a thing and it's not their fault really. It's more, it's not like their verbal skills are lacking. It's that their unconscious competence is so high. And that's something that for you as a trader, you can talk it out. You can literally talk it out. Like when you can record, now it's so easy. I used to print it out and scroll and write on my charts that I printed out when I took trades. But you can actually talk it out now. You can just record it on your computer or whatever and talk about why you're taking a trade, and then why later on why you get out or why you manage move to break even or whatever you do. That can really help because that brings out what's happening in the background in your head. That brings it out. And that's why I find it really useful for me to talk about charts, to an audience, because things that I'm thinking about, I don't realize that I'm thinking about them unless I actually say it out loud. You know what I mean? They go, oh, that's what I'm. Do you know what I mean? It's really weird. It's so bizarre. But they have, like, that's a known thing in cognitive psychology. It's a known thing where they say, like, the best teachers are those people that are not quite at expert level. So they're not novice. They're kind of in that intermediate area where they kind of they learned it, but they've only learned it recently, and they're pretty, they're good at what they do, but they're not at unconscious expertise level, because then it's just almost like automatic. And same thing with driving. Think about it. Think about how hard it was for you to drive when you were younger, because everything was conscious. So, okay, I got to look in my mirror, I got to do this and that, turn on the signal and do this and that, all that. And then, but now, if you try to teach someone how to drive, you'd really have a trouble because you'd have to think about what you're doing all the time,
Yeah.
It's tough. It's really tough to think about all the calculations, like, okay, that's an idiot over there. I got to slow down because he might, you know what I mean? Like, you're like all these hazards and stuff going on in your head. And it's just like totally like you're almost unaware of it, really. It's just happening. So anyway, I find it in trading, I think, is similar, like all skills, really. Yeah,
totally. I mean, when I learned to drive, I think it was my mom who said, line that side of the car up with the line. So the whole time I was like concentrating on that side of the car, lining it up with the center line. And then I wasn't like paying attention to other stuff. So, but now you can do it just, without looking, right? So,
yeah, exactly. Exactly. Yeah.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
the obvious answer is you jump in late and you try and catch the end of it, right? No, I'm just joking.
That's funny. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so here's a question. How do you deal with missing out on a really excellent opportunity? So you knew it was coming, it shows up, and then you miss it, right? So I've had a few of these the last couple of weeks, actually, more than a few, where, like I was going to sell the UST Swissy. I was sitting in front of the chart waiting for it to happen, and it didn't retrace quite enough to where I wanted it to go. And then it just went, you know what I mean? Just like, and that happened like 3 days in a row, right? Where that happened. And it's kind of really frustrating. So what do you do when, because you're, it's like, there's no moral victories in trading, right? Like, it's like you missed the trade. Okay. Doesn't matter if you knew what was going to happen. Doesn't matter if you were ready, you missed it. Okay. So how do you deal with that? What do you do?
Well, the obvious answer is you jump in late and you try and catch the end of it, right? No, I'm just joking.
That's funny.
Well, I mean, like, that's what we tend to do, and that's what I've done in the past. We've all done that in the past, right? So,
yeah.
But yeah, I think it's just not getting too down on yourself. I think number one, I think once you start beating yourself up, that's really the slippery slope that leads to other like over trading and stuff like that. Number two, just realizing that there are other opportunities coming up, so just be aware of those. And then number three, I would say, review why you missed it. Were you distracted? Were you doing other things? Maybe you should keep your chart up on a separate screen or something so that you can watch it. And those are the three things that I would say. How about you?
Yeah, I mean, journaling, like writing out your emotions and stuff can really help. Obviously, we all have things that we need to work on, like you said, like chasing a trade or revenge trading or failing to pull the trigger. Like there's certain things that we all need to work on as traders. And one of the things that happens with the fear of missing out is a big one, right? Yeah, that's a huge one. And that actually is, I think, if you look at it, that's a big driver in the markets themselves. Like if you look at the big macro picture, a big reason why you have things like blow off tops, right? That's what we would call it in a charting sense, a blow off top, where the market just kind of makes this parabolic move. I'll draw it the other way. So parabolic move like this, and then it keeps getting steeper, and then it just collapses. The reason why you get those sorts of things is because the last group of people who are getting in on that trade, who are buying that asset or whatever it is, that stock, or getting in on that trade in currencies or what have you, those people are the ones that have the fear of missing out. And this is universal. This is like a psychological cycle that you can see in any market, where it gets really, I mean, Bitcoin is probably one of the easiest ones to see this at, just because it's so pervasive in our culture. Like it's always kind of in the news sort of thing. Well, I guess you do overseas. If you're in the States, it may not be as obvious, but when you're in other countries, like they're always talking about the exchange rate, the pound versus the dollar, the Aussie dollar versus the US dollar. So that this is kind of part of the nightly news or whatever. You know what I mean? It's always out there. Whereas I don't remember. I mean, it's been a long time since I lived in the US, but I don't remember that being a major thing, even in the financial papers. Like it was maybe buried somewhere, but it wasn't like a prominent thing. So, so the reason I want to bring this up, to make the point, the reason I want to bring this up is that you don't see like in the news, like in the States, usually when they have that financial segment of the news, what they'll say is they go, oh, the biggest movers and the biggest losers or something in the stock market. Or they might not even have that and just say the Dow was up today, or the S&P was up, or the NASDAQ was up, or whatever, 2% or whatever. And that's it. That's all you get, right? They don't say like, oh, Facebook went up. They rarely would, like if it's an IPO or something, they say, oh, Facebook had their IPO today and it went up, 300% or whatever. But they don't usually talk about individual stock. Whereas Bitcoin is kind of one of those things that's always kind of, seems to me anyway, it's always kind of in the news. And I think I think that's reflective of everyone's kind of interested in it. Even if they don't buy it or sell it or trade it, they're aware of it. You know what I mean? It's like this kind of like this new thing or whatever.
Yeah, it's a new thing.
And that, cool. And though, yeah. And that's exactly right. And that's like those are the type of markets that are most susceptible to the crowd and the fear of missing out, right? You don't have a whole lot of traders, a whole lot of people have this fear of missing out of some, stock in Hungary, right? Or whatever, or like, like some like IPO in New Zealand or whatever. Like that's not a thing, right? This is like a global thing. And, I hear people tell me things like, oh, well, Elon Musk said that, 6 months ago, or whatever, that Tesla Motors is going to start taking Bitcoin payments. So Bitcoin's, spiked up or whatever. It's just like always so I think the fear of missing out, which we're talking about in an individual trade level, that's also in the big macro level. And you'll see that repeatedly in the markets play out. And it's most pervasive in those markets that everyone knows about, right? So the more people that know about a market, the more likely you